And so what we have here is the, obviously I'm now recording our session, so that'll be something, as I mentioned, you'll be able to recover that. So just a little bit of a quick, I guess, understanding of how the online mechanism works here. I'll be using a PowerPoint presentation. I'll also be using Profit Source to obviously illustrate our points and our work that we're looking to undertake. Generally speaking, when I jump into Profit Source, what I often do, because it's pretty resource intensive on our internet connections, what I'll often do is just pause the camera. And I mean by that, I'll pause the video feed as opposed to the audio feed. So you'll hear me obviously talking over the top, and you'll see Profit Source come up on the screen, and you'll be able to, I guess, engage the information that way. So I tend to do that as a matter of course, just to assist everybody getting the information that they need. I guess I'll point out to you using, I don't think I can actually get my pointer all the way across here, which I can't. It sort of misses and goes off the screen here. But in the little window there, which is underneath the camera and voice box, you'll see that there's a little chat window there. And that chat window is designed to, I guess, for you to ask any questions. So I can't see you, but you can see me. So that's the first and foremost thing. That's probably made a lot of you a bit more happy. So if you have any questions along the way, just type them in the chat window. So you can type a question in there. There's actually a little drop-down box underneath. So you can actually type a question just to me if you'd like to keep it just between you and me, or you can actually broadcast it to everybody. That's up to you as to how you want to do it. Just keep in mind that if they all start flying thick and fast as far as all the questions are concerned, I'll just answer them in order, and I'll get to them as we progress along. If the question's not exactly relevant to what we're doing at the time, I might ask you to we'll put that on the shelf and we'll pick it up a little bit later on. One other thing that I'll point out to you with this technology is at the moment I'm actually interstate. I'm in Darwin at the moment doing some work up here, and therefore I don't have a second computer. So generally when I'm at home, I'll be using obviously two computers just to obviously see what's going on and have some redundancy. The challenge with it lies with this technology is when I go into Profit Source, it doesn't actually do it on your side, but when I go into Profit Source on my side, it actually takes up the whole window, or the whole screen. So what that means is that I can't actually see your chats. I can when I have two computers, but obviously when I'm only running off one computer, what it means is, thanks Adam, thanks for giving me the update. What tends to happen is that I can't see your question. So if I'm in Profit Source and I happen to be driving Profit Source at the time and we're making a point and we're talking about something and you've got a question, it may not automatically pop up for me. So what will happen is when I jump out of Profit Source, I'll see the question and I'll answer the question. If necessary, I'll go back into Profit Source and I'll explain it further. So just, I guess, a little bit of patience if I don't instantaneously respond to your question. It's not that I'm ignoring you, it's just because I may not have picked it up at that stage. So just keep that in the back of your mind going forward. And obviously I'll pick up those questions along the way. So the other final thing, I guess, that I really sort of want to talk about as far as the technology is concerned is if for whatever reason your internet drops out or you have a problem at your end, best advice I can give you is to log out and log back in and see if that resolves the issue. The other part of the puzzle is that if my end drops out, which is not common, it's only happened to me once in a lot of training sessions where the internet just manages to kick me off. You can still stay in the room, but I'll just disappear for a minute or two, and then I'll log back in. So if for whatever reason it all goes blank at my end, don't panic. I'm still here, but it might mean that I just have to log out and log back in again. So just rest assured that that might take a little bit of time, but I will come back and let you know exactly what's going on. So don't panic too much if that happens. So I guess that's the logistics, you might argue or suggest, of being in this environment. It's a good environment, I guess, to share information, and obviously a little bit different to our live environments, whereby we're a scenario. It's obviously a different learning mechanism. So my plan for you guys who've done the advanced trader coaching with me before, some nights obviously we were sort of doing 3-hour sessions only because of the amount of trading opportunities that I guess existed in the market when you're running a scan for ABC trades. My intention is certainly not to run 3 hours every Tuesday night. Is that I've made a plan, and I'll talk to you about that plan tonight as to how we're going to pull apart the Ultimate Gann course over the 12 weeks that we have together. So that'll most likely end up being 12 sessions. It won't be 12 consecutive weeks every week, because I've programmed in on some odd occasions just a little bit of a break so we can digest some of the information. But I guess following on from what I discussed with a number of you, and also the survey that I sent out. So I really appreciate everybody coming back and answering that survey. Whilst I'd love to sort of share all the results with you, it'd take sort of a half an hour to explain everybody's answers. But let me sort of paraphrase what I got from that survey. And what I was really ultimately trying to aim for was to get a sense of the experience base, what you were looking to achieve out of the 12 weeks, what sort of markets we were going to play around with, and obviously how we're going to specialise and get the most from our time. So let me share with you, I guess, what I learned from that survey is that most of you are, there's a bit of a mixture as far as the level of the room. There's a lot of people who've done a bit of work with the Ultimate Gann course and quite competent. There's some people who are starting out, and that's fine. I guess what my aim is to really nail the concepts from the Ultimate Gann course, similar in how we do that on at Gann Mastery. But I guess choosing some markets that are not markets that are new, or sort of that are new to me, and maybe in many cases new to you guys. So I asked the question about what sort of markets you were trading and where your level of skill was, and particularly with profit source as well. And I think most people are at a good standard. No one clicked on the response, which was I thought I put in there. I was hoping to get one person that said, I know the buttons are there somewhere. So everybody clicked that they were pretty confident with profit source, which is good. So I guess I'm going to run it at a level which is designed to challenge you. And that being said, I don't want to leave anybody behind, but I'm going to assume some knowledge when it comes to a lot of information, particularly to do with starter pack and number one trading plan level information. I'm going to do some work from that, but not so much as a lesson. We're going to use it in a practical sense. So a lot of questions I've had from people are we going to try and trade throughout our time together? And the answer to that is absolutely yes. But the reality is that I want to get a market and a couple of markets actually to set up and to run with. So what I did when I sent out the survey was just to get a sense of what markets you were predominantly trading. Now, most people came back as saying that they were trading futures and CFDs, which doesn't surprise me. Most people said that the futures market was going to be their environment that they were looking to trade the most in the next 12 months, which once again I was expecting. There was a fair few foreign exchange people in there as well, which I thought was also positive. And obviously there was a lot of people who sort of said that CFDs were also going to be a part of what they were doing. So what I wanted to do was select markets that we could bring up from scratch, because reading through the final question in the survey, which was what are you expecting, or what would you like to get out of our time together, is that most people were saying, I need help in trading the market, which was fine. So actually how to get in and turn your analysis into some dollars, and we'll spend a fair amount of time on that, particularly tonight. The other part to the puzzle was, how do I set up a market? So how do I actually sort of approach a market for the very first time? What sort of order can I tackle that in, and how would I see the tools coming up to speed? So I'm the first to admit, when you come to a Gann mastery, and even when you're studying the Ultimate Gann course, you're getting David's interpretation of, in many cases, the SPY or the share price index. And that comes from after many years of distillation. So it's not a fresh look at that market for him. It's certainly got a, one second, some people trying to get into the room. So as I said, that's that trying to log in as a guest. So good evening, Glenn. Welcome aboard. But just if you watch back the video, just make sure you're logging in using the details as opposed to the guest function. So as I was saying, the realities is that I could give you a 12-week lesson like a Gann mastery on oil, but the problem with that is that it comes with all the biases that I already have, which is I know what timeframes work, and I know what squares work, and I know what sort of timeframes on a swing chart work, and I know what ranges work. And so what I thought a challenge for you guys would be, but also for me, was to show you how to run up a market from scratch. So what my plan of attack is to really look at maybe definitely two, if not three markets over the space of our 12 weeks, and just pull apart the Ultimate Gann course, literally section by section, and apply those techniques to our 1 or 2 or 3 markets. Now, I haven't done all of the work, so I don't actually know whether or not we're going to come to the end of our 12 weeks and find that the techniques, maybe some work better than others, and maybe certain aspects don't work on a particular market. But that's the journey that we're going to take together, and you're going to do a lot of the work for me between sessions. So I'm going to set you some homework each week, and I guess that's part of the, this deal is that for people who know how I run the online stuff, is that there's certainly going to be a commitment from your end, and that's to make sure that you're doing the work. So it's not just going to be me saying, here's like Gann Mastery, here's 161 days on oil, and here's all the places where it works. I guess what most people were saying to me in the survey was, how did you come up with that number? What sort of work did you have to do to get that? How did you know that it was going to work going forward? So that's my plan of attack, is to really ensure that we can run up some markets from scratch and get a real sort of framework to trade. So I would hope by the end of these 12 sessions that we're going to have together that you'd be in a position where you could essentially write a trading plan for these individual markets. So what I've tried to do is pick some things that are obviously liquid, big enough for us to all trade and not have too many worries about, that meet everybody's sort of criteria for what they were looking for, but not be the share price index, not be the oil market, not be the Swiss franc, not be soybeans, not be the euro. So taking markets that none of the other instructors have actually traded before. And then Darren's just asked me a question which I'm happy to answer, which is, are we going to look at putting a roadmap together? Well, my aim would be by the end of our time, we'd be able to start putting some practical forecasts together. So using the skills from the Ultimate Gann course, and I'll put it out there for you guys who do have the Master Forecasting course. Obviously, I've got to respect that intellectual property, and I'm not going to bring some of those techniques into the time that we're going to spend together. So we're going to focus everything from the Ultimate Gann course, but I'm very happy to pick up our discussion on these markets with some of the MFC stuff in the dedicated forum that you guys have for that as well. So that could be a benefit. But I guess the question is, are we going to look to trade these markets? Absolutely. And are we going to maybe, depending on how much good work we, and that'll come back onto you and me, is that let's put a roadmap together as to where we might see this market going. And if we could put together a practical forecast together based upon all of our work, I'd consider that a huge success. So that's my real sort of plan of attack. And now's your time to speak up if that doesn't sit well with you. I'm happy to take feedback. But as I said, I read between the lines between all the things that were put into that survey, and I think that will suit best most people's expectations, because most of you don't have a good idea of how to run up a market from scratch, and so therefore I'm going to show you how I do it. The best way I can do that is to do a market that I've never done before, because otherwise you end up with all of the preconceptions and all of the biases and all of the things that you come to the market, or you bring to the table when you've been trading a market for a while. So I wanted to do something that was fresh for me as well. I guess just to keep me happy and interested as well, because running through oil again doesn't really excite me, because I can do that at any seminar. So this is meant to be a little bit different. Debbie's saying you didn't get the survey. Okay, Debbie, I'll do my best to make sure that comes out to you. So I'll just make a note of that. I've got a little page here where I keep some notes on any outcomes that we need to. So it's not particularly, I actually don't have the individuals. When you filled that in, I actually don't know who wrote what. So it wasn't tagged as being I don't know who provided what responses. All I have is the responses. So I'm happy to make sure that we get you a copy and take a look at what you put down. But just, I guess, to paraphrase everything that we've just talked about, we're going to run up a couple of markets together. We're going to look to swing trade that very effectively. We're going to look to practice all of our techniques on that market. And that means that we're going to get an idea, do squares work well, do boxes work well, do angles work well, do master time cycles work well? What are the top 3 or 4 or 5 time frames that work best on that market? Is it better to trade it on a 1-day chart or a 2-day chart? Is it better to trade it off a weekly setup? Does position of the market work well? Does sections of the market work well? And all those sorts of things. So I've got a question which is, I'll come in on the side. So we'll be looking both a future and a stock market, because some of you don't have a futures account. So that's exactly what I planned on doing. I don't want to tell you the markets just yet. So in the presentation, in the PowerPoint, you'll get a sense of what markets I'm looking at. But there is one stock which we'll look to trade via a CFD, and there's also a futures contract as well. And there's a third market that I'm sort of looking to potentially introduce down the track, but I'm just a little bit on the sidelines there as to what I'm going to do. So there'll definitely be 2, potentially a third market. Okay. Final thing I guess I also want to share with you as well is, if you've never done online coaching before, you guys won't be able to see this yet, and I need to explain how this works. So it takes me a minute or 2 to explain, and if there's any questions, make sure you jump in and ask me. What I'm going to do is I'm just going to quickly jump into, not that, the wrong button, there we go. What I'm going to do is quickly jump in and show you my forum, the Safety in the Market forum. So what I'm actually going to do is jump in and show you the online forum after. That's what I think I'm after. Nope, there we go. I think that's, you should all be seeing now the Safety in the Market forum. Okay, so if you go down the screen here, you'll be seeing that there's an Ultimate Gann Coaching private forum there, and you'll see that there's a thread here that says Ultimate Gann Coaching, the Tuesday night group. There's actually 2 groups, Tuesday night and a Wednesday night group. You guys are in the Tuesday night group. So I'll just come out of that now. So you'll see there that it's listed in the forums. Okay, now it's a private forum, so it means that only people in our class can actually see it. So you'll be only chatting with people who are as part of our Tuesday night group. Now, how it works is pretty simple. You've got to be registered to use the forum, because I have to add you individually to permission you to come into that forum. Now, if you don't yet have a forum login and password, you will need to go and create one if you want to participate. Now, if you don't create a login and a password, I'm not going to chase you. Simple as that. You guys who've done coaching with me before know it's a very valuable resource, but I'm not going to hound you to get organised and get in there and use it. Okay, so it's a resource that I'm going to make available to you guys to get the maximum from the time together. Going forward, though, there's one very important thing that you need to do for me, which is that when you create or use your forum login, you need to register the same email address that you registered or that you used to get into this class, okay? Because you might have 3 or 4 different email addresses, and I have to search by email address as opposed to by name, because some people don't put their real name for the forum logins. They give themselves an alias, and that's fine. So what I'd like you to do is to use the email address that you used to get into the Ultimate Gann Coaching online class, which we're in now, as your forum email address. And then it means I can tie the 2 together and I can get you permission. So what I'm going to do is I'm going to give you about 24 hours, 48 hours to get in there and log in and register to use the forum if you're not already doing so. If you're already registered, I'll go through and start adding you, probably tonight or tomorrow, so you can start getting access to that forum. So I haven't added anybody yet, so if you're looking, you can't see it, that's the reason. But understand that I'll start adding that over the next day or two. And if you haven't utilized or logged in to use the forum, now's a good time to do it. And as I said, I'll give you about a fortnight, or sorry, not a fortnight, about 48 hours. And if you haven't done so, you'll have to contact me individually once you've done it if you want me to get you set up, because I'm not going to chase you. Okay. So if there's any questions on that, I'm more than happy to deal with those now. Otherwise, I'm pretty comfortable that we'll get stuck into our content for tonight and move forward. But I guess putting it into a paraphrase, one of the other nice little parts of I can do a number of polls, and I can share files, and if I create charts, I'll happily share those with you, and any information and spreadsheets, I can share all of those by this technology, which is quite nice. What I'm going to do is ask you a question now, so I just got to get that set up. Let me just type that in. All right, so what I'm going to sort of do is just get you to answer yes or no to the following question. So I guess getting back to what I was saying, just to give you an idea of how we're going to run these 12 weeks, is that we're actually going to do pretty much the same sessions that we do at Gann Mastery, but we're actually going to do them, we're going to flesh them out over a longer period of time. So instead of Gann Mastery is pretty compressed as far as time's concerned, and we don't get a lot of time to really click buttons and spend time pulling apart and really go and show you, well, that top didn't work and didn't give us a time frame, or we run it off this bottom for this particular reason. So you'll find that each week we'll have a theoretical component to the extent of saying, okay, well, let's quickly review balancing time. And then what we'll do is we'll go into our couple of markets, and we'll spend half an hour balancing time over every major range, working out what major timeframes are working, what stuff's been historically good, what we can chuck out. We're going to do that on a couple of markets, so I don't want to spread our gaze too far. If we focus on a couple of markets and try and specialise in those, we'll get the benefit from the lessons, and we'll actually end up getting some half-decent trades with any luck, and getting a roadmap as Darren's chasing, which is good. And going through and really discussing every single concept from the Ultimate Gann course specific to those markets that we're going to pick on. So I guess that's my plan of attack. So if that's the plan, all I want to get you to tell me, does that sound like a plan, yes or no? And if it sounds like the right track, click on yes. If it sounds like it's not on the right track, let me know by clicking no, and I'll track you down. I can't see who's clicking yes and who's clicking no, but at this stage, everyone said yes, so that's making me feel good. All right, fantastic. So it's a unanimous yes. So that's my plan, to spend a lot of time each week pulling apart a couple of markets, and then between our weeks together, you'll be able to go away, do some more work, and let's, I guess, have it as a plan of attack to share our results. So if someone finds a time frame that's working really well, I'd love you to come back to the table or the forum or here and say, look, we didn't look at this particular time frame, but when I went and analysed it, it looked fantastic, and can you have a look at it? And we'll take a look at it as a group. So I guess I want us to, yes, Elizabeth, I'm recording. So that means that we'll basically be able to share from the collective knowledge. So I'll let you know there's about 20 odd people in each group for we've got a Tuesday night and a Wednesday night version of the Ultimate Gann Coaching. So in understanding that, really what I want is the collective intelligence of each of the groups to be able to pull apart markets and to add, I guess, their views of how that market might work and bring that to the table. So you're all in agreement to that, which I think is fantastic. I'm happy to take feedback along the way. So if you want things to speed up, slow down, all of those sorts of things, just drop me a line, send me a private message, send me an email via the office, put something on the forum. Really, the whole access, the whole point of me running these classes is to give you, I guess, a little bit more access to myself and obviously the material that we're using. So I'm sort of opening the door for you guys. It's going to be up to you guys to make it work. So what I'm going to do now is run through the PowerPoint presentation. It's obviously got a few things that I want to talk about, and guess, once again, sort of rehashing a little bit about the Ultimate Gann course, putting it into a context of what we're trying to achieve, and then we're going to start getting stuck into some market stuff. So I know we probably, just spent, the best part of, half an hour discussing, just some admin and things like that, and we won't need to do that each week, but it's important we get this set off in the right direction. And as I said, I'll be looking to, probably run about 90 minutes each week, and, give or take a little bit. I'd say it'll be more give rather than take. As far as extra time, I've never run less than 90 minutes, but you never know. We could have a first, all right? So one thing that I need to do each and every week, and I'll be doing this as a normal course of action, is to basically tell you that, remind you of our licensing requirements. So Safety in the Market is part of a company called Investment Educators Australia. They are the holders of our financial services license, so they're certainly part of our business, but they're sort of our umbrella, you might say, as far as the top echelon. They hold our license, and they create Safety in the Market as an authorised representative of that license. In doing that, I'll need to change that where I've said Advanced Trader Coaching, so sub that out where it says Ultimate Gann Coaching. I apologise, I'll fix that. So in putting together the Ultimate Gann Coaching, we've not put into consideration any of your personal financial objectives. So what that generally means is we haven't sat down and worked out individually what is tailored best for you and suitable for you. I will advise you that we are looking to create trading opportunities over our time together. You will need to assess whether or not those trading opportunities are suitable for you. Certainly in cases where you don't have the requisite account or balances or those sorts of things, you really will need to assess whether or not the trading opportunities are for you. Hence, I've come up with a stock trading example whereby you can use a CFD and therefore you can set your position size. And I'm also talking about using a futures contract whereby obviously you'll need to have a futures account and those sorts of things open. You'll certainly be able to trade the stock using the stock itself if that was suitable for you, but I'd be a bit more comfortable if we're looking to use leverage as part of our pursuit in I guess, tackling the market. If there are any questions that relate to our licensing, I'm all ears and always happy to take you through that. Okay? So in tonight's session, what we're going to cover is, I guess, a review of the Ultimate Gann course. Now, this isn't going to be a page by page, but one of the things that I guess I'm very passionate about where I am currently with the work I do with education is to not just teach techniques and just to say, well, we measured from this bottom to this top and it was this many days and that many points. It's very much about the philosophy of what we're trying to achieve. So the tools and the techniques are just that. They're just tools and techniques that are tradesman-like when you apply them, but it's about having the skill and the understanding to know why you are going to apply them and under what conditions. So one of the questions I've just got is, will I give us a view of the current market each week? As part of the review that we'll do each and every week is we'll have a look on a swing chart and see if there's any trading opportunities. If an ABC trade happens to come up, then we'll check that out as well and we'll talk about its merits. We'll see where it sits on the bigger picture. So every single week we will do a review of our markets just to see where they are as far as trading opportunities, if we're in any trades, all of those sorts of things. So that will be a weekly part of what we do on top of the theory that and the practical that we tackle each week. So as I was mentioning, though, just getting the philosophy of why we're doing what we're doing. So under what conditions would we use certain tools? Why do we use one over another? What makes that stronger, that top, than the other, top that's only a week prior? So it's really about getting the philosophy and the understanding behind the tools and the techniques. So if I sat down and asked all of you individually, what was David's major aim out of putting the Ultimate Gann course together in the video series, what was the aim that he had as far as the construction of these methodologies? Some of you, I'm sure, would have the answer, but some probably don't quite know what David's aim was in putting it all together. So I want to have a quick review about that and just talk about what the Ultimate Gann course in context is. I guess talking about why we're here, well, I guess I've already sort of done that. The reason I think you're here and you've already sort of agreed with me in my hypothesis is that you struggle to put markets together from scratch. You probably can apply the things that you learn at a Gann Mastery if you're given the keys as far as, this time frame works, use a square of 144 instead of a square of 168, run Gann angles using a point size of 0.05 instead of 0.01, trade it off a 2-day swing chart, a 50% pullback works well. But when it comes to actually finding those things on a new market, you feel a bit lost at sea. So that's part of the reason why we're going to spend time on a new market that I'm not familiar with that enables you to pull apart and feel more comfortable with it. So we're here obviously to ground your knowledge in the Ultimate Gann course material, so to take you that extra step and to know how to use the tools with confidence, and also that's the tradesman-like approach, so knowing how to use profit source, how to be able to left click here, right click there and apply the tools, but also knowing how to, when to apply the tools and under what conditions, when it's not important to use a square, for example, when something takes precedence. So I guess that's how I see why we're all here, and being able to, I guess, do it over a 12-session agenda or 12-session process. What that really enables us to do is to take a week between sessions and just process the information. When you do a 3-day class back-to-back, it's sort of rapid fire and you get a lot of information thrown at you in a short period, and you probably don't retain as much as we'd all like. You learn a lot, but also there's a lot that slips through. So by doing it over an elongated period, we'll find that our retention of information will be a whole lot better. What I will encourage you to do, though, is that retention of information is only a really powerful way to learn is if you go away and actually do some work with it. So if we talk about some stuff tonight, if you don't do anything with that information until next Tuesday night, your retention of that information will not be as sharp as it should be. And I guess watching the recordings and making sure that you're getting questions answered if you have them, and going back and just reviewing the material. I guess what's expected from you and me. So, I'm going to put in as much, 1,000% effort to run up these markets and turn some analysis into dollars. I guess what's expected from you is to be here as often as you can. As far as a live environment, it's always better when the classes are full and we get some interaction. What's expected from you is to participate and, try not to sit back. If you've got questions, throw them in. There's no silly questions, just silly instructors. And so I'm happy to answer anything. If it's relevant, we'll deal with it. If it's not relevant, we'll answer it, later. And if it's really not relevant and it's really something that, is concerning in the sense of, there's a big gap in your knowledge, I'll work with you offline to get your knowledge up to speed if that's what it's going to take, or give you access to some resources that can. So participation is a big thing, and just trying to maintain a habit and a routine of being here. So trying to commit. I know people have timing issues. I'm a classic example of that, where Last week I couldn't be here, so I accept that for some weeks you won't be here. But if you can't be at a session live, make sure you watch the recording and get the most from it, during our time together. And I guess really importantly, I can't stress how important I think the forums are to get in and get using them and to make them work for you, to get your questions answered. This is an opportunity to work with me in a far more, I guess, one-on-one basis than you probably ever would get, including workshops. So make the most of it and answer and get your questions answered and all of those things. That's really critical. And I'll bring my best to the table each and every week. So that's my commitment to you guys. So what markets are we going to focus on? Well, I mentioned to you already that we're going to focus on a stock, and we're also going to focus on a futures contract. So I won't tell you just what they are just yet. I'll leave you in a little bit of suspense. I'm sure you all can't wait. And I guess ultimately what our aim is how we're going to set up a market. So what makes me want to pursue a market? What makes me think it's got some legs, so to speak? What do I see early on that encourages me? What would give me confidence to continue? So that's the sort of thing that we're going to talk about as we get stuck into tonight. So I guess what I wanted to do is, paraphrase some of the information that David gives us from the Ultimate Gann course. So before we begin, I guess straight out of the Gann Mastery Manual and also your Ultimate Gann course, David says, I don't think I've done exceptional things in my trading and study. I believe I've done ordinary things extraordinarily well. So it's not about trying to jump to the end of the Ultimate Gann course and trying to apply boxes and sections of the market and squares all in the first 5 minutes. Let's do some of the simple things really well, and that's going to mean each week taking a look at the swing chart and seeing what the opportunities are, being able to determine trend really accurately, being able to focus on where we think ABC trades might pop up. I'll also be very, aggressive on entries and those sorts of things where it's warranted, using things like openers rules, using things like, breaking multiple bar chart tops and bottoms, first high bottom that doesn't happen to be an ABC trade. So all of those things from the #1 trading plan are going to come into this as well. On that note as well, we're also going to set up some resistance cards on these markets. So price is going to be a big part of it as well. So it's not just going to be time stuff. I also want to set up lows and highs resistance cards and ranges and all of those sorts of things. And I expect you guys to set up some charts at home on Profit Source, and you'll have them stored ready to work with. So following on from what David said, obviously a focus or an attention to detail, that's an imperative for Gann traders. Some focused study time, which I think many of you already have in place, and if you haven't, I know it's hard to organise. It's one of those things that if you do have it in place, you find that it's a lot easier to keep the momentum rolling. If you don't have a focused study time and it feels like dragging your feet through the water type stuff, it's very, very hard to get started. So really at the end of the day, you just got to make a choice and you've got to commit to it and set yourself a bit of a program of what you want to do and how you want to achieve it. One of the things I've been talking about a lot, particularly with the guys I've been working at seminars, is it's no point having 6 hours of work if there's no quality. I guess a lot of people focus on the quantity rather than the quality. So I would much rather you spend 20 minutes of quality time when you can, as opposed to 3 hours of quantity, but not really getting anything done. So what I often suggest to people is that they get just have an outcome that they want to achieve and set themselves a time limit and say, in the next half an hour, I'm going to achieve this. And that's all you do. And you don't get distracted going off into other parts, okay, which is very easy to do. Applying absolute concentration makes pretty much perfect sense. Watching the market, I guess, is always important. You miss trades when you don't take a look at it. You've got to show some patience, which is not the easiest thing to do all the time. And then finally, you've got to act decisively. So we're going to be obviously together on a Tuesday night, but that means that potentially we're going to have things coming up on a Wednesday night or a Thursday night or a Friday or a Monday. So that's where the discussion boards are going to be a great opportunity for people to communicate their trading ideas. If there's a setup on the table that's come in, whether we like it, whether we don't like it, that's where that forum is going to come into play. Now, because of my time commitments, I'm not always going to be able to respond to that 5 seconds after you post. So what I'd say is that if you need some confirmation or you want to talk to somebody about trading, it's important to talk to each other as well. So support each other in that regard, and I'll make sure that I can be as close as possible to that as well. All right, so one of Gann's favourite quotes was from Faraday, the physicist, and I was only talking about this to some guys in Darwin today. There's nothing in the universe except mathematical points of force. It's a pretty big call to make, and it's one of those things that a lot of people sort of go, yeah, okay, that's great, thanks very much. But I think markets are just numbers, and it's about understanding the sequence of those numbers that enables you to make better decisions. So I firmly believe that all markets have a code of some description. You could argue it's a Da Vinci code, it's a DNA. It's something about that market that makes it unique. And if you can find what makes a market unique and you can harness that, I guess you're in a really strong position to make trading not easy, but a lot easier. Trading's never easy in the sense of, just sit back and the money just rolls in. There's always an active approach you need to take. But what I'll say to you is that if you understand where it's likely to turn as far as tops and bottoms, whether you can recognize strong support and resistance in price and time, they're going to give you a lot better opportunities to make some money along the way. Now, the other thing as well is also knowing how to manage a trade, and I've talked a lot about trade management to many of you in the past. So what I mean by that is that I can give you a good example of Commonwealth Bank. If you can take a look at the Commonwealth Bank long trade, this week. It hit 100% today, and we had a lot of intraday volatility around 50%. So the trade went on to the final target of 100%, but depending on how you manage that trade, you could have walked away with a small profit, which is better than a slap around the head, but you could have walked away with substantially larger profits depending on how you manage that trade. So always I want to be thinking, and I'll throw it to you guys, is we might come up with a trading opportunity, and then I'm going to ask you, well, how will you trade it? Keep in mind, I'm open to, at this level, to a lot of, I guess, more adventurous strategies. 3 contract rules is something that we should also be looking at on a regular basis. Yeah, so there's a lot of Darren said you stopped out at entry plus commission. Yeah, there was a fair amount of volatility on CBA intraday, and that just made it a little bit painful. So it was a very hard one to hang on to. But if you were very aggressive with your stops and were happy to put yourself at a bit of risk, you could have held on. But I'm suggesting that most people were probably stopped out, as you say, for a small profit or entry plus commission. And it's disappointing when you see it run on. Now, the setup itself was very good. It was in a good position of the market. But what I will tell you is that just unfortunately the management side of it was a little bit hard. And sometimes you're going to find that is that you're going to pick tops or bottoms, but you're going to find that you're not going to be able to I guess trade them and make a huge amount of money out of them because something happens in the trade management side. So that's another flavour that I want to be able to talk about over the time that we spend together, is to get you guys thinking about trade management over and above the techniques. Because once you've got the techniques, then you just got to turn it into action. So obviously we can talk about the 3 dimensions of Gann analysis. We all know about price. We're not going to be drawing any swing charts manually, but we are going to obviously do some work on price. So we're going to take a look at tonight things like swing charts and ranges, know exactly what that market's doing for us. So all-time highs, all-time lows, those sorts of things are obviously important. The first probably third or half of our 12-week program is that we'll probably spend a lot of that on time. So my plan of attack is to do separate sessions on things like balancing time and interim time frames and those sorts of things, because when you get them set up well, they really do hold you in good stead for the life of that market. So I want to be able to get, for our individual opportunities to trade, I want to know what the major timeframes are. So I want to be able to crunch the raw data, and I want you to be able to help me find what timeframes are working best. We also need to spend a fair amount of time on things like Gann angles. We're going to do squares. We're going to do some work on boxes as well. So all of that sort of stuff is very, very imperative. We're also going to do work on things like master time cycles. We're going to do all of those things from very, very big picture down to very, very small picture to set up our markets. So just to remind you, what we're chasing, I guess, by doing all of this work is trading opportunities, but we're chasing the quality of opportunity. Okay, so we have methods already to trade swing charts, and we have methods to make money from the market. But by going to this level with David's Ultimate Gann course, you're suggesting to me that you're really looking to really pinpoint the places you want to be trading. So it's the quality of the opportunity that you're after as opposed to the quantity. So what we're really looking for, as David calls it, is a classic Gann setup. So to get a classic Gann setup in the market, the first thing we're going to look for is some time pressure in the market. So we want to see a number of time frames running out, to terminate it around about the same area. Now, I guess just putting that into context, one of the things that's in the back of my head, just using some of the big picture work, we're in the end of September right now, and obviously being a student of David's, it's very hard not to remember his 1989 call. So using master time cycles, using the big picture analysis, we know that in 1987, in October, we had a top. 20 years later, we saw in the US market, the market's top in the middle of October in the US and the 1st of November in Australia. So the 20-year cycle was working very, very well. The 10-year cycle also was working well, because in 97 in October, we had the Asian financial crisis. So that all lined up with our top that we saw, obviously, the markets break down from in 2007. Now, being a pretty good student of David, his most, I guess, the call that really made him and brought him to the fore was the 89 top. So the 1855 top on the 4th of October. So we're now end of September, and we're running into what you'd consider is to be a bit of a time pressure date. Now, I'm not suggesting it has to be the top in the market, and I'm not calling it as being a major area to watch, but I would definitely, being a student of David's, be watching that 20-year anniversary around that early part of October, just as a matter of course, because it was such a big call for David. And 20-year cycles are obviously important. 20-year cycles relate to obviously 240 months. Okay, so 240 months, you could argue, is 240 degrees. So using master time cycles as a yearly approach, turning it into the months, gives you the numbers that I guess that are important to watch. So we're talking 240 months from the 89 top. Now, the market did make a low and very similar, ran out about 50% of the 87 to 88 fall, 87 to 88 fall, and then ran out about 50% and then went again. Now, a lot of pundits out there are calling for maybe a correction in the market, maybe a retest of the March lows. I think all of those things are possible. I don't know if we're going to, some people are calling the market down to 2,800 points. I'd suggest that that's absolutely doable. The first thing it's got to do, though, is break the March lows of this year. So that's 31.11 on the SPY. So we're currently trading around, let's see where we closed today, 40 something Apologise, I should have checked before, but it's getting organised. So we closed today at record highs for the year, but we closed at 47.58. So it's coming back to where we are. So 47.58 down to 3,100. You know, there's about 1,600 points in it, so I wouldn't worry about it getting past 3,100 until it gets to 3,100, and then we can make some decisions on what's about to happen. For you guys who are at the MF Summit, obviously David had some views on the market, and I think they're pretty spot on. I'm pretty happy with the things he shared with us there. So I guess having that as a view, I'm not sold straight up and down. I'm not sold on the fact that we're you know, the Glenn Stevens came out on the Reserve Bank this week and said that everything looks good and the market's recovering and it's strong and they're going to have to put up interest rates and all these sorts of things. I guess the more I hear of that sort of stuff, the more bearish I tend to get. The more the economy's talked up, you know, we've heard all that before. So being good students of history, we won't get suckered into that. So we'll trade what's in front of us, and I'll just point out to you because it could be after that period that we actually get back together again. So around about early October, you know, I would just be, you know, on my guard as to seeing what the market might produce. So I've got a number of roadmaps that we could be following, but certainly that's the next area that I'm keen to be watching. I guess just some food for thought as well. The 29th of, I might show you some stuff on it, but the 29th of September was a key date I was watching for on the oil market as well. So we might see a little bit of a move on oil tonight. It's still the 28th in the US, but over the next 24 hours, we might see something happen on oil. But definitely having a time pressure point in the market is something that we should be watching. Obviously, we need a price, absolute and range. We need a position in the market. We're going to talk a little bit about that tonight. So David called that wave positions, and that relates to the position of the market or the Elliott wave discussion that some of us have. Some pattern and some form reading. So I'm not going to spend a lot of time on this, but for example, going back to the chapter 2 of your Ultimate Gann course, David talks a lot about gaps. He talks about V bottoms and U bottoms and triple tops and triple bottoms. We all know David's rules for trading double tops and double bottoms and the 200% retracement we might expect, not have to expect. So all of those things are very important as far as being able to gain an idea of markets making tops or bottoms, and that whole concept that David referred to as the position of the market. You need the market to be in the right position to give you a major top or a bottom. So I have one of these great opportunities to, I guess, give you a little document here. Oh, sorry, not give you a document, to draw you a little picture. So I can bring up a little whiteboard here, which is the fantastic part of technology. So if I draw, it's all okay. If I draw after, there we go. Go to another. All right, so let's assume that you've got it's meant to be a straight line, by the way. Let's say that's a date that you have in the market. We'll call it date X. Let's say that's early October even. And what we've seen is if you see a market that's making sort of higher tops and higher bottoms running into that date, well then I would argue that you do have position. If you're expecting a top in the market, you have position for a turn. One of the things we've got to be cautious about is, let's say we do have a pressure date in the market, still can't draw a straight line. We're seeing a market that's bouncing along very much in a sideways range. Often you can find that your date will move the market. It might skip out for one day before it moves back into a sideways period. And I remember that example very well because I made a call when I was in the US on Dell computers, and I was about 6-7 months out. And the thing was, it was still trending prior to my forecast. But what happened is that I had this forecast date. I'd given out this date to watch, but this was the area that I was obviously watching. But about a month after I gave that date, it just got caught in this sideways pattern. And it ran into the sideways pattern. It hit my date. It jumped out of the channel for 2 seconds, and then it stuck its nose back in. So it didn't have the hallmarks of a classic Gann setup. So what happened was that the date was solid, but the position of the market didn't support me. So if I was to, you know, ask you to, I guess, rate our position of the market currently, if I go into profit source, I'll just pause this camera. So hopefully you can still hear me. Yep. So that I can see that it's still working. So let me share profit source with you. So what you'll see now is obviously profit source coming up. I'll move that around. I'll make it a weekly chart just to make it easier. If we're in a situation where, you know, we are looking for a date, and I'm not suggesting this is any particular date, I'm just going to shove a vertical line on there. That'll do as far as an area to be watching. So let's say you've got that as your time pressure. You might argue that you have some price pressure. So very, very simple stuff. I'm just going to put a Gann retracement tool on our market and just understand where we might be sitting. Well, we've broken through the 37.5, and that 5,000 level is something that's coming up. If I quickly go back to 87, we're in that situation where there was our correction from the 87 top down to the low in 88, and the market basically travelled pretty sideways, and then it got up close to the 4th of October. So that's that area in the market that I was mentioning to you before. So it's somewhere between the 50 and the 60 2.5% area, probably very close to 61.8. I haven't got that on exactly, by the way. So, as far as tops and bottoms are concerned, off because it's a bit confusing. But what we've got is a market that's retraced a certain amount, and we got the 4th of October top, which was 1855, and from that point, the market basically had a fall away and came back and tested, not quite tested the 88 low, but certainly sold off considerably before we had a return to good times. So what we've seen is the market do something similar, where we've seen the market run out. I'll get this one set up exactly. We know the all-time high is 68.80, the all-time low, well, not the all-time low, but the low is 31.11. We've got about that 5,000 points. So let's assume we've got some time in the form of that orange line. We've got some price in the form of that retracement. Pattern in the market, well, we'd probably be looking at a bit of a double top scenario there. Maybe you get an island reversal or something along those times. Position of the market, well, we're sort of one section, two sections. We'll talk about sections. And then volatility. So do we have volatility moving into play? And I think all of those things are met. So do we have right now, if I throw it back to you, I'll bring the camera back on, do we have the position of the market to pretty much give us a change in trend? And I think the answer to that question would be yes. So that's the sort of thing that you've got to be comfortable looking for. Now, I'm not going to do a lesson on it because it's certainly work that you should have already done. But I want you to be very, very strong on things like signal tops and signal bottoms. So island reversals, hook reversals, key reversals, some of the candlestick patterns I'm open for as well. But really what I want to do is combine all of those things together to form that classic Gann setup that is obviously the thing that we're all interested in tracking down. Remembering that we're after a quality of setup as opposed to a quantity of setup. You're not going to get 10 of these a year in any of our markets, but if we get 2 or 3 or even 4, we're pretty happy. We've got to have the right position of the market. We've got to have the right pattern. So would I love an island reversal on 50% on the share price index, in early August or early November, somewhere around there? Absolutely. And finally, and I apologise, sometimes when I put things into slides, they look fine, but then when I load them into Adobe, it just it skews them a little bit. So volatility being overbought or oversold. So would most of you consider the recent few weeks and even the last sort of since March, we've been in a pretty overbought situation. The market's run very, very quickly. Now, a lot of people think that's fantastic if they took their medicine through the crash of 07. But I guess a lot of people are sort of questioning whether or not the economy is as strong as everyone's talking it up and whether or not it's sustainable. So I think given where we are basically on the share price index market, I think if we can come up with some times and prices, not that the SPY is going to be a market, but I will do some work on it because I know many of you are tracking it. As I said, I wanted to do a market that that's foreign. Time, price, pattern, position, volatility, all of those things are a requirement of a classic Gann setup, and we're going to crave those and hunt those down. So really getting back to the philosophy, I guess, of what David was trying to achieve, the Ultimate Gann course was about giving you techniques that enabled you to capture 50% of a major move. So I put that in because that's really critical. That was a big part of my development, was saying, okay, what am I really trying to achieve? I can't get every top or bottom. That's just wishful thinking if you're trying to do that. If you can actually get every top or bottom, I'm not suggesting that you shouldn't. I'm just suggesting the practicalities of that are a little bit more challenging than they sound. So in other words, trading every major top or bottom, identifying that there's a range to be had, and then trying to make at least half of that. So David put this in the Ultimate Gann course, and I'll continue to quote David as often as I can, only because it was very refreshing to see him at the Master Forecasting Summit. And obviously just hearing David speak always gets me thinking and always gets me back to the basics and also the things that were successful for him. So he said the way I kept fighting the main trend was the primary reason for about 50% of his losses. So he said he just wasn't quick to identify that a change in trend had come in, and all of his major losses came from the fact that he was fighting against a major move. So we want to be able to identify changes in trend and go with them as opposed to against them. And he said, I came to the conclusion that I had to pull 50% out of each major trend to be profitable. And this is, I think, the bit that I think really brings the context. I used both price and time to meet this objective. So it wasn't just about trading an ABC between the run, from the low to the high or vice versa. It was about timing the low or timing the high as best as possible and then trading it as effectively. So be comfortable with the fact that if we find some good changes in trend, we're going to maybe look to hold them for as long as we possibly can. So vanilla ABC rules won't be the only way that we'll tackle them. We might get in set on an intraday chart if that's going to help us, and then we might try and step out and trade it off a 2-day swing chart or something along those lines. I want to be trying to be aggressive as possible when we come up with something that I'm confident with. So I want to give you the confidence to be able to identify these moves and then trade them accordingly. So that's a big part of what we're going to do. So I guess when you talk about the Ultimate Gann course, I'll just put the topics or the sections of that. So key form reading concepts, some swing chart work, which we'll talk about. Time by degrees is a chapter. Squaring time and price. Now, I think the time by degrees work and the squaring time and price work, they're single chapters in the Ultimate Gann course, and they're actually single lessons at Gann Mastery, but they're probably a week and a half each as far as being able to practically pull them apart. So you'll find that squaring time and price, you know, angles might be one section, and then squaring ranges, highs and lows might be another week that we spend. So whilst I appreciate that they're single sections of the Ultimate Gann course or single topics at Gann Mastery, they're actually a little bit more work to do them properly. So you'll find that we break each of these sections out into bigger pieces. Now, squares as well. Well, that's going to, you know, squares I can tell you is definitely not going to be one session. A new way of looking at things, obviously, to get some work from the ephemeris, some trading plans. So I want to spend some time constructing a trading plan that relates to these specific markets. Some trading mastery. So we'll go back and look at how we could have best traded this market. What insights can we learn from that? If we pick on a particular stock and it's better to trade it using the currency style of stop loss on a 2-day swing chart, we need to know that. And the only way we do that is by actually getting in and doing some work. There's some trading psychology stuff, which I won't go too deeply into. I guess at this level, everybody finds their own feet with psychology. I'll constantly refer to things that have helped me, but at the end of the day, the psychology part is not my expertise, and I've suffered, I think, as bad as anybody has with regards to getting on top of that. And obviously, each time I'm in the market, I'm still fighting that. I'm not a perfectionist when it comes to psychology. I don't have any key secrets or answers for you. You just got to get comfortable with your analysis, and that gives you the confidence to pull through. Obviously, there's some conclusions there, and David also gives you 16 rules to trade by. So that's looks small. I guess when I look at it like that, I go, hang on a sec, that looks pretty thin. But there's also some sections from Gann Mastery that we're going to pull in, like master time cycles, and do a couple of things there as well. So I guess David talked about classic Gann setups, and we just mentioned that time, price, pattern, position, and volatility. They should be things that you are comfortable with already in as far as concepts. How to achieve those, that's the work that we're going to bring together. When I sort of read David's work on classic Gann setups, I guess the following statement really rung true, which he said, form reading, position of the market and swing charts are the basis from which I determine if conditions are right for trading decisions around my key times and prices. So form reading, position of the markets and swing charts. So here he's really talking about the trading smarts of how he trades around time and price alignments. And it's got nothing to do with guessing. It's got nothing to do with just blindly following a signal into the market. So assessing the form of the market, assessing the position of the market, is it in the right place for a top? Form reading the major patterns, island reversals, double tops, double bottoms, U-shaped bottoms, T reversals, hook reversals, outside reversal days, outside continuation days, lots of things like that. And then finally backing it all up with the swing charts, a very important thing. All right, so tonight's focus, I guess, is to really pull apart Chapter 2. And there's a lot of things in Chapter 2. It's not just a simple little overview. There's actually probably a good couple of weeks work in it, but I know most of us are keen to get into some of the time-based stuff. So, and there's a lot of work there as well. So I don't want to labour on this, but I do suggest that you go back and do a lot of work in this area, only to make sure that you're up to speed and that your revision is good. Obviously, David talks about time counts in Chapter 2. We're not actually going to talk about that tonight. I'm going to roll that into the work we do specifically around timeframes in the market. Obviously, he talks a lot about calendar day versus trading day discussion. We're going to do both, so accept that that's going to be a normal part. I guess we tell people if you can only do one, probably calendar days, but I'm going to assume that you guys are comfortable to do both, which is calendar and trading days. We're going to do some work on balancing time, which is obviously very important, but we'll put that into our time work. Double tops and double bottoms, that really comes down to that form reading. David also gives you some insights into accumulation distribution, so please review that material. I'm not going to give you a lesson on it, but there's certainly a good lesson in there from David where he talks about periods in the market where the smart money's coming in through accumulation and the distribution's occurring where, you know, mum and dad are jumping in at the end of the run and obviously the smart money's leaving. So just do a quick review on that. Signal tops and bottoms, as I said, I'm going to assume that you've done the work there. It's, you know, things like ITWs, Gann jumpstarts, deal with that sort of stuff. Number one, trading plan work as well. But, you know, I'll be fishing for you guys to help me. If I see a pattern that stands out, like an island reversal, you guys should be able to jump on that and tell me exactly what's going on. So continuing on in Chapter 2, David does a huge discussion on position of the market, and that's something that I want to talk about tonight. When he talks about the sections of the market and he relates them to Elliott wave counts, that's one of the most subjective discussions you're ever going to have in trading. It's a hard one to be able to know exactly what section the market's in and be confident with it. But really what we're going to do is make sure, is our market trending? That's going to be a first question. Is it running out in neat sections? Does it have a history of doing that? So should we expect sections of the market to work because they've worked on numerous times in the past? Now, if sections of the market don't work on the markets we've chosen, guess what? Well, we're not going to rely on those as a crutch and say, well, we can't trade because we don't have sections of the market. What we're going to do is identify whether these techniques work well, and that will form part of our trading plan. So the Elliott wave structure is another one. I'm not going to get into the highlights of Elliott wave as far as profit source is concerned. If you're using that already, we can maybe look to combine it together, but you're not going to get I'm not going to do a full lesson on Elliott wave counts. Really what David talked about was the Gann sections and Elliott's counts or wave counts were pretty similar. We're just looking for market structure. We're looking for the geometry of the market to line up with our time and price alignments. And if we're in the right place and time and price are aligning, we should hopefully get a change in trend. And finally, David finished off in this chapter with some third dimension work, which was speed angles. So here he's really just using a very, very quick tool to rate the strength of the market. So if I threw that into, if I come out of this PowerPoint and go into to profit source, let me just give you a quick overview on the SPY, and then we can obviously tackle it when we look at our markets of choice. I'm just going to jump into profit source. So just grabbing a drink there. So one of the first things we could be doing is saying, well, is this market running out in clear sections? So look, on the way down, probably it's easier to find it on a weekly chart. I'd probably argue that there was 3 sections on the way down. I'd probably call that section 1. Orange is not a great colour. Second, I'd probably say that no, that's section 2. And that's bigger than the obviously the first section, which is normal. And then I guess we have that final section in where we saw the market fail. Now, there could be a couple of other ways we could have looked at this. We could have said maybe, well, that's section 2, and then we had section 3 on the way down, or that run there. I'm kind of happy either way. It doesn't really phase me, but I think we do have a bit of an underlying structure there. If you're calling, particularly the November low, I think you had some cases for saying you had position of the market, but also that March low, given the history of the market and the fact that it's been turning early in the month, that early March area was definitely a good place to be watching. So here's where we get some conjecture in the markets, because we have on our weekly chart, we could argue easily here we've got 1 section, and what I'm going to do is make this accurate, because I'm going to turn this into a speed angle. So we've got 3100 as our bottom, and the top here is 4084. So if I copy and paste that and place that on the market as a speed angle, we can see that at the moment we're actually running quicker and we're running far steeper than what we did in the initial run up. So the whole move out of July has actually been above that speed angle. So if you're going to say, well, you've got 2 clear sections there, we're basically running a lot quicker than what we were the first time. So that sort of tends to suggest maybe there's some strength in this market, and maybe we're going to have a 3rd section up. So to get a 3rd section up, what we're going to need is a pullback of some description before we push into higher prices. Now, one of the things that David always tells us to have a look at with sections of the market and speed angles is just to measure their equality in terms of time and price. So we've actually run more than 100% of the previous range. So that's obviously a strong sign for this market. And I guess if you talk about under what sort of time frame it's done it, well, the first run out was about 90 days, or give or take. And the current move out, well, we're seeing 81 days. So we've actually run further in terms of time, in price, in less time. So we've this second movement here is far stronger than the first one. So it starts to get to a point where you've got to ask yourself a question. So I'll just come out of profit source. Market is running above that speed angle. It's run out further in terms of price in a shorter period of time. So is that a sign of strength, or is it saying that the market's a little bit overbought? Well, if it's running into, I'm always looking for a market to be overbought or oversold running into my key date. So if you came up with a date that had strong time and price pressure, the fact that it's running faster than the previous move means that it could be particularly overbought, and we might see a strong reaction, but then again, we might see a strong reaction before it quickly captures itself and takes off for a 3rd section up. So Gann did talk about the fact that markets of less than, or bull or bear campaigns of less than 12 months duration can actually run out in 2 sections. All right, so that might actually just be the 2 sections we need before the market goes further, because we've seen a run that's less than 12 months. But the problem with sections of the market is you're generally very good at identifying them, often after they've confirmed. But all we're saying here is, do you have position of the market for a major top or a bottom? And do we have 2 clear sections on the share price index at the moment? I think we do. And it will be, time will tell whether or not it's the 2 sections before it capitulates and runs down, or maybe it's just going to fall back, give us a small retracement before we get a 3rd section. Either way, we'll be able to trade it accordingly. But I don't have a specific answer for you in that regard as to, should we expect 3 sections? Well, Gann says we should get them, but he also gives himself an out, which he says in markets that are less than 12 months duration, we'll get 2 sections. So he's covered his bases both ways, which is classic Gann work. Always got an answer for everything. So I'm going to go with the fact that if he can have an answer for everything, I'm going to do my best to have one as well. So getting back into that PowerPoint presentation, what the scenario is that we've got obviously a number of parts in that chapter 2. Okay, so position of the market, all of those sorts of things, Elliott wave counts. I guess I want to spend just 5 minutes talking about the key form reading techniques that David used. One of the things that we focus on in the #1 trading plan is an overbalancing price. So a lot of us would know. So I've got a question here. 1989 was a double top. Could this be expected in 2009? Well, let's jump in and take a look. So we've got some context. I'll just pause this camera again. I'll just jump into profit source. So the question is, 1989 was a double top. Could we expect the same again? So the answer to that is, of course. But that doesn't mean we have to see the same thing again, but it's definitely going to give us a roadmap to take into consideration. I'm looking here at your question there, saying, well, that's, I guess what I'm trying to work out is, are you considering that a double top? I struggle to say, all right, that's not exactly the clearest double top you'll find, and it's certainly over a small time frame, so it's only over a few weeks, which makes it less useful. Obviously, that lower top there was one of those things that you know, gave you a way to get some of that run out of there if you missed that first bid. I guess one of the things to be watching, you know, would have been running into that top, seeing what the percentage movement up was. So you've got basically the market failing at about 50% there, and that would be something to take into consideration. So let me just come back out because I can't see the chat window. So Ashley asked that question to me. Is that the double top you're referring to? So, because I'm not really seeing the 89 top as a classic double top. It's probably the first thing I'd say with regards to that. But that being said, you know, it's got some double top characteristics, but it's not what I'd consider a classic double top. Yeah, loosely, yeah, it is. I'll happily with that, but I'm not calling it a classic double top pattern. I guess knowing where we are right now, one of the things we might be watching for is, you know, we know that it's run out about 100% of the previous range or a little bit more. We haven't had a pullback of sorts, so the only range that we can have working on here is, let's just open up another chart there. The only range that we have that's we could be using to do some price forecasting on is that one there. So we've actually run past the 50% point. So I guess the next major level for us, it would be that 75% point. So we're not seeing the exact similar pattern of what we are to 89, particularly when it comes to that last little run up. So maybe we need a pullback before we do get a 50% run up if we're going to get a similar pattern as far as that's concerned. But we're not necessarily seeing that this time around. But that doesn't faze me per se. That's not the end of the world for me. It would be great if it followed the 89 roadmap exactly, but it may not be doing that, and I'm pretty confident it's not. So time will tell. So getting back to what we were talking about there, we're sort of talking about this concept of overbalancing. If I was to sort of share with you what David's trying to give you there as far as an overbalance in time is concerned, what he's looking at there is to get a guide on, you know, when the market's giving you a suggestion that it's time to go the other way. So what I'll do is I'll jump into profit source again, and what we'll do is we'll talk about this current run on the share price index, and we'll just see what it's telling us, because the overbalance in time is one of these things that this run since March and also July, you can see that David's saying if the market's not been doing, you know, it's only been doing 1 or 2 days back, it really hasn't given you a suggestion that it's time to think about going the other way. As you can see here, 1 day down, 1 day down, 2 days down, 2 days down, 2 days down. It hasn't really done more than 2 days down at any particular time. But even through here, it was sideways. It was still giving you the suggestion that we should be long. So what you've got is 1, 2, 3, 4 days down. That was really the suggestion that it was time to maybe cut your longs and go short. So David's really calling that section there where the market gave you 4 days down. We haven't seen 4 days down through the whole period there, and then we suddenly did. So that's what he's referring to as an overbalance in time. So I'll just write that on the chart there to, I guess, highlight what we're talking about. Now, if you go and take a look, we then saw another 4 days down through there, and then this run out of July, well, we've got 1 day down, 1 day down, 2 days down, 2 days down, 2 days down, 1 day down, 1 day down, 1 day down, 1 day down. At the moment, this market is really, really strong. It's really powering to the upside. So I've tried to the long side of the market because that's really what it's trying to suggest. So can I get you guys on red alert, so to speak, and be watching the share price index market? The first time you see the market maybe give you 2 days has been pretty consistent. There's been a lot of 2 day pullbacks. The first time it gives you 3 days back, so 3 down days in a row, that would be a time for me to really start suggesting that maybe the trend is coming to an end. So, or at least having a pause. So looking for that overbalance in time is something that you should really, really be carefully watching on all the markets that are trending strongly. And if it's generally speaking doing 2 days down, 2 days down, 2 days down before it powers on, you've got to stick with that, and that's where the money's going to be made. When you get that first overbalance in time, that could be an area to watch for, as I said, as far as a change in trend's concerned, or at least a pause in that rally. So just to give some context to that, that's really what David's talking about in terms of overbalance in time. All right, let's keep moving. Double tops and double bottoms, we talked about those, signal tops and signal bottoms, gaps. David does some great discussion in section 2 on gaps and how important they are. Now, obviously the share price index is a market that can gap when you're tracking the day only session. Obviously stocks like BHP, because they're dual listed, gaps are an important thing for those. So we've got a couple of markets that, one that I've chosen on the stock side that does gap a little bit. So knowing how to handle gaps is going to be part of your review or revision on that market. So that's obviously going to be an element that we need to be aware of. And this is all, I guess, coming to David's discussion that he needed to know the right position of the market to be trading from. So that's always something that I want you to be measuring, is the position of the market. Where does it sit? Are we strong or are we weak in the trend? Some of you may have heard me talk about the concept that where I'll say a trend is intact. And what I mean by that is it's not giving me any signs that it's going to stop moving the way that it's moving. So I want you to be able to work out if a trend's intact and whether it's comfortable to continue to go with that. All right, so Gann sections and LE wave counts, we had a little bit of a chat about that, and obviously we talked about speed angles. So I guess we get to the good part of the evening. So I could run a raffle here and make a market, and you guys can all have a guess as to what markets we're going to pick on. But I'm going to basically share with you the markets that I've chosen. Now, I know that not everybody's going to be happy about it, but I've got to sort of work on the best spread that I can possibly get. And it's I'd like you to throw yourself into these markets because I think they've got good opportunity coming over the next few months, and you'll see why. I've chosen Newcrest Mining as a stock to play with, only because it's in the top 20 and it's the largest gold stock that we have on the Australian market. So I undenied whether I choose gold as a futures contract to play with, but there's obviously been a lot of work done on that by some of the other guys, and there's obviously a lot of perception about that stock or that contract. So that means that people come with biases. So I thought Newcrest Mining as a proxy to trading gold could be something that would keep us interested. And I've done a little bit of work over the years on it, and there is some very, very good time frame harmonies that enable us to make some good calls and turns in the market. So I think gold's going to be an area that's got a lot of movement over the next window of time. So I think Newcrest Mining should produce some opportunities. And obviously the Aussie dollar I thought would be another one that we could play around with. So it's the hottest currency at this time. And what that does is it enables us to get some work on the futures market. And what it also means is that Aussie dollar can be traded as a spot FX market. So some of you guys are trading spot FX or foreign exchange, and that's cool. Obviously, you can trade the US dollar versus the Aussie dollar, so to speak, or the Aussie dollar versus something else. So it gives, I guess, a spread for everybody to play around with. One of the other markets that I'm sitting on the fence with, and I'll explain why, is that the other commodity that I was going to play with was actual natural gas, which is NG spot V. But there's just a little data anomaly today that I wasn't real happy about, and I didn't want to talk about it tonight until I sorted that out. So that might be the third market that I'll introduce, which is the natural gas futures contract, which is NG spot V, traded on NYMEX. If you take a look at the Aussie dollar as well as natural gas, both of those contracts trade 15,000, 20,000 contracts a day, so the liquidity is good. Newcrest Mining, the spreads are good, and the depth of that market is good. So being able to trade that as a CFD per se, obviously long and short, is something that we can definitely take advantage of. So I don't know how to quite take your silence. No one's cheering, so I don't know if that's a good thing or a bad thing. I don't know if you're in tears at the moment thinking we're going to tackle these two markets or whether or not they work. Any feedback I'm happy to take. I'm not in love with these, but I just thought they would be they'd be good. They would be good markets to pick on. A couple of you have sending me a few messages privately. You're happy, which is good. Darren and Glenn are good, which is great. So if you've got good responses, just keep typing. Jose's good. Fantastic. That's awesome. All right, guys. Well, I think we can push ahead with those markets. Yeah, happy. Good people are happy. That's great. So Richardson, okay. I'll take that. Fantastic. So I guess now what we have to, Blake's been looking at gold stocks, which is good. So I guess what we're going to want to talk about now, and we're basically, I've got to work out the time difference because we're up to about an hour and a half now already. So what we're going to do for the remainder of our okay, so Annie's been looking at the British pound Aussie dollar, which you've been tracking, which is just past the all-time low double bottom. Okay, there you go, fantastic. So I've done all right there, which is good. So small win. I forecasted the right markets for us to pick on. I guess what I want to play around with now is how to set up a market. So we've talked about Newcrest Mining, we've talked about the Aussie dollar. We'll probably do some work on natural gas as well. And it'll be a case of, all right, well, let's approach them as if we've never heard of them before, and what do they really tell us about a market, and what can we do? So some of you are already following Newcrest Mining, which is great. That's good. Where you can give us all your insights, so it makes my job easier. And as I said, look, I've done some work on both Aussie dollar and Newcrest, but they're not. I don't have the same level of depth of knowledge that I do on, say, oil. So it's a bit of a challenge for me as well, which I'm looking forward to. So I guess the first thing I want to do is say, how do I set up a market? So we'll do some work in profit source in just a second, and I guess what I'm going to talk about is, okay, well, we've got these brand new markets. How do I set them up? Well, first thing we're going to do is go and understand what the all-time low and the all-time high are. We need to know what the birth of the contract is for time by degrees reasons. We need to know about swing charts. Now, the swing charts bit is not something that I'm going to be able to do in detail tonight. I'm actually going to give you some homework that you guys can do for all of us and pull apart some information. So when I look at a market with swing charts, I want to know straight away, what does it look like? What gives me the clearest patterns? Does a one-day chart look okay? Is it choppy? Is it terrible? Does it just, false break everywhere? So maybe the two-day chart's got to be something I'm going to work on. What's a three-day chart look like? What's the success rate of ABC trades over the last, say, 12 months, 18 months? Can I make money just ABC trading it? If I can make money ABC trading it, then I'm far more likely to be able to make money trading all of the other techniques as well. I want to set up some resistance cards tonight. So I'm going to set up a highs resistance card, a lows resistance card, and a ranges resistance card as safe charts. And happily, I'll share those with you so you guys can get them set up as well. But that's the sort of basics that we need to have in place. So I want you to always have an awareness of where we sit in terms of a low and a high and a ranges resistance card. I also want to discuss the position of the market, put some speed angles on, see if we can see some sections of the market tonight. So they're the 5 things, I guess, that I want to pull apart and do, tonight as far as the setup's concerned. Then I'm going to throw you to your own devices, and then next week we'll start doing some time frame analysis and all of those sorts of things. So let me jump back out of our camera, and I will put that to the side, and I'll just bring up profit source. Not that one, it's that one. All right, so let's get started with Newcrest mining. So I guess pulling a chart apart, making it we've had a bit of a sideways period in recent times, so we've been range trading from $30 to $35. But generally speaking, it does have some good trends associated with it. If you go back and take a look at the history of this stock from back in '98, it's pretty much strongly trended. In recent times, as we said, a little bit sideways, but we could be due for a breakout one way or the other. We'll work that out going forward. So I guess starting all the way back, as far as the all-time low is concerned, it's a bit of a problem because you've got to do it off a daily chart because otherwise you won't find the correct dates. So I'm going to put in here the 17th of the 7th. So I'm going to put some text on my chart. So the 17th of July 1987 is the BOC, birth of contract. Put it up here just so we have it. I'll just put a circle around that date. Not really, because won't let me go backwards, but you get the drift. The all-time low is hiding down here in 97, so 5th of the 12th, so about 10 years between the birth of the contract and the all-time low, which I'm right, yep. So let's just note that on our chart, so I'll put a circle around there. And we've got the 5th of December, 1997, and the low price is 122. And then I'll go and find the all-time high. And that looks about it there. So that's the 7th of March, 2008 at $40.50. Oops. Just make sure I've got the right figures, which I look like I have. All right. I'm just going to all-time high, all-time low. I'll make that a monthly chart now, just so I can drag as much in as I possibly can. All right. What I'd probably put in at this stage, just to help myself out, is the range from the all-time low to the all-time high. So I've just got to do some quick mathematics. Stand by. Be able to do this one without a calculator, but I'll make sure I'm right. So the range is 39.28 from all-time low to all-time high. Okay. What I'm going to do is I'm going to save that as NCM1. Now, just as a GIF file, I'm just going to pop it on my desktop, and I'm just going to pop out of here. Thanks, Darren. I just got your message then. I'm actually going to share that file with you. So I just have to get this set up. So this is one of the things that we'll do is I just have to upload that file, and you guys can actually get that as a GIF file. Okay. So if you just click on that and then click on Save to your computer, you can actually pull that file in. and get that set up. So I'll share these files with you just so you've got a reference point to play around with. Just going to jump back into Profit Source. That window should stay up. If you can't see it, actually I best come out of there. I'll leave that up for about 10 more seconds, and if you can grab that and pull it in, and if you're having problems getting it, let me know. But you just have to click on it, click on Save to My Computer. It'll open up a web browser, and then you just click to download, and you'll be able to save that. It's all pretty simple stuff. All right, about 5 more seconds. 4, 3, 2, 1. Fantastic. I'll just pull that down. I'll bring it back up later if you didn't get it. So I'll jump back into Profit Source. So automatically, I'm looking at sort of some dates: 17th of July, 5th of December, 7th of March. It's interesting. You've got all-time low as a turn early in the month, all-time high turn early in the month. So that's obviously something that's already getting filed away into my, I guess, my brain space, just to remember that. Hang on a sec. Turns early in the month might be turns early in the month might be you know, the place to be looking. That's fine, Blake. No problem. So let me just get something organised here. Two seconds. All right, so let me jump back in. There we go. So in pulling this apart, what we're looking at is all right. Okay, hopefully you can all see my Profit Source screen. I guess first things we'd be keen to work out here is obviously setting up a resistance card. So using the all-time low, using a highs resistance card, doing a ranges resistance card. We'll do that in just a second. Well, actually, we'll probably do that now, actually. So next part to setting up this market is just getting these cards put together. So doing an all-time low to all-time high ranges resistance card, that's going to be the first thing. Keeping in mind that it helps to remember these prices. So you guys should start to now be able to just put these prices together. So $1.22 is the low and $40.50 was the high. And I guess what I'm going to look at first and foremost to see how this market's been working is does it relate and respect the ranges resistance card. So obviously that's going to be more pertinent to where we are right now. I'd say that that's not a bad use of the resistance card. As you can see, island reversal top here. There's a top there, and there's also done an island reversal on that top as well. So that was a great place to go short from, and there's your first ABC short out the other side. So that was a cracking ABC short. That's passed through 100%, and I think got a fair bit further to go. So I'd say that using a ranges resistance card automatically has got some things for me to be interested in. So $30.68 would obviously be an area to be watching going forward as being the next resistance level, even 37.5, etc., etc., etc. So I'm just sort of looking at places just to get some confidence about how this market responds to resistance cards. I guess if I just draw a few of these on here, there's some places that are jumping out to me as sort of being areas that act as support and resistance. Probably the major ones, but a little island reversal back out there went the other way. As you can see, this market tends to gap a little bit. We'll play around with that as we go along. Next thing I'm going to do is set up a highs resistance card. So $40.50 is the all-time high. And what you'll find is that the highs resistance card and the ranges resistance card is basically the same sort of setup. So seeing once again, I'm now using the all-time high and 0 as the reference point there. I can probably turn off some of these settings that are sort of running out to about that level there. There's no point cluttering up your chart if I move it, which is always locked it. So I'll set that up again, and I'm going to lock it. Now, important, we want to save these chart pages. So straight away, I'll be clicking on Action, Save Chart Page As. I'll make a chart pages file. I'm going to click on my Newcrest Mining Ultimate Gann Coaching Class charts. So I'm going to go and set up a NCM highs resistance card. So that's now saved. So we've seen a little bit of a sideways movement. We've seen a little bit of a trend starting to form. So we've got a ranges resistance card, which I'll set up and save as well. I'll save that. Action, save chart page as. We'll call that a NCM ranges resistance card. So all-time high to all-time low. Doesn't like dashes. There we go. And third thing I want to set up is a lows resistance card. So throwing it out to you guys, I'll just come back to camera for just a second. So throwing it out to you guys, if you had to run one resistance card, where do you reckon we're going to run it off? Sorry, a lows resistance card. If we're going to run one lows resistance card, where would we pull it from? Yep, Glenn's absolutely on the money. So the all-time low resistance card would, which is $1.22. Now, Robert, fantastic, thank you. Now, I guess what? Yeah, Ashley's on the money as well. So this is where I'm already starting to think about things that I need to be aware of when I'm seeing numbers come from the market. So I know the all-time low is $1.22. Now, taking David's lesson where he looks at the share price index, the 458 low, well, he runs an all-time low resistance card. He runs a square of 458, and he also looks at 458 days as far as the time frame is concerned. So if you look at $1.22, I'm already thinking about that as a $1.22 is an all-time low resistance card. I'm thinking about it as a square. So I'd be doing a square of $1.22, and I'd also be watching 122 days. So just as a precursor to some work next week, just go and take a look and see if you're seeing any 122-day time frames repeating. And I'd also be doing some work on half of $1.22. So that ends up being about 61 cents. So 61 cents, well, that's 61 days, 60 degrees, 122 days, about 120 degrees. So it'd be interesting to see whether this market likes to work within the triangle, and I already know a bit about that, so we'll do some work on that over the weeks ahead. But every time the market gives you a number, let's pull it apart and do some more work with it. So let's set up a lows resistance card at $1.22, and already starting to think about what we can do with that other number. So if you're not quite sure how to set up a lows resistance card in the software, what I'm going to do here is something that we've probably shown you at some classes, is that I'm actually going to set up a lows resistance card by using a preset Gann square. So there's no lows resistance card button. What I'm going to do is use this preset Gann square, which is under Gann tab number 2. Just going to left click, get it on the chart, and I'm going to make sure that I'm pinning it right on the place. So it's the 5th of December, 97, $1.22 is the start value. My point size I leave as 1 cent, and my box size is going to be 122. So just to recap, we want our box size multiplied by our point size to equal the start value. Okay? I'll click on OK. Now, $1.22 as a movement is actually going to be pretty small. To cover this whole market, I'm going to need a lot of columns and a lot of rows, and I'm not quite sure if I've got enough. Yes, I do. So I guess what I'd be looking for is how often does that orange line of $1.22 come into play. And you know what? It's probably a little bit too much. $1.22 is not going to give me what I'm after in the initial stage anyway. There's a bit of overkill using this amount of information. So what I'm going to do is I'm actually going to modify our point size. I'm actually going to run it 10 cents a day and see whether that gives me something that's a little bit more effective to work with. Well, that's giving me something that's a little bit more workable. As you can see, those tops there came in double top, basically on the multiple of the all-time low, and I'd be interested. Things are already jumping out at me. I'd want to look at that as a double top and see how far it ran. Run close to 150%, so that's obviously a good sign. Does it use as active support and resistance in other places? Well, there you go, double bottom. That's a screamer. Got strong in the square there. You could argue. Here you have a fantastic double bottom. It's not quite classic double bottom because obviously they're within tolerance. I fancy about 1%, ran out 200%, and obviously retraced. So this market obviously doesn't mind David's double top and double bottom rule. All right, so there's a green line, which is a percentage of the all-time low, acting where we are. There's another double top that's sitting right on. Didn't run 200% though. Let's see where we sit. So I'm pretty happy that the lows resistance card's given us a few things to play with. And all right, let's see where we are right now. So as it sits there, we should maybe be expecting a little bit of support. That top's coming right on the green line. So all I know is that's 100%, that's 125, 150, that's 175%, or a multiple of something 75% of the all-time low. There should actually be a little bit of support for this at the moment. That's a little double bottom there. There's a little double top there. So I guess if I come back to you guys, just come back to camera for 2 seconds. All we've done is we've found the all-time low, the all-time high. We've set up a ranges resistance card, a highs resistance card, and then done some work on a lows resistance card. Let me put it out to you guys at this stage. Is there anything are you encouraged by the results so far? Okay, so would you be comfortable at this stage to continue some further investigation of this market based upon what we've already discovered? And if you think it's no, I don't care. I want to get your honest view. But in just doing that simple little bit of work, for me, there's absolutely some merit in this market. There's definitely, it relates to Gann in a nice way. So we've only done some simple stuff, but this is already encouraging me. And I'm not pre-prepared this. I'll put my hand up and absolute, Gann is my witness. I haven't set all of these things up and just chosen them because I know they're going to work. All right. So there are a couple of things that are working quite well. So now it's going to be up to you guys to go and set that up tonight, or not tonight, but whenever you choose to do it, between now and next week. And I just want to get some observations from you. So we've just done a lows resistance cards from an all-time low. Will we do other lows resistance cards? Absolutely. But right now, we're just going to set up our market, do the all-time low, the all-time high, the range, using 122 as days and weeks. And so I think we've got something to work with here, which is, I guess, what I'm glad you're seeing as well. All right, so next thing I said we were going to do was to take a look at we've done some resistance cards. We'll take look at some swing charts as well as position of the market. So I'm going to basically get out. I'll save that as a chart page, I should argue. So save that as a lows resistance card off the all-time low. It's going to open up a new chart. So first thing I'm going to do is turn this into a one-day swing chart. And what's the trend on the one-day swing chart? The one-day trend is down. There's $1.44, so I wonder where 122 sits on as a percentage of 144. What I'm looking for here is that we've got a expanding downside swing and a contracting upside swing. So the one-day trend is clearly down. Looking at the swing ranges, well, generally, I'd be getting an idea of the sort of number that it likes to do: $1, $1, $8 ranges it doesn't mind doing, $1.90. So we're starting to see some expansion. We're seeing the biggest sort of swings to the downside that we've seen in a while. On the one-day swing, the 1 week swing chart, is we're in an uncertain trend. We've got a higher top and a lower bottom. And looking at that pattern, there's certainly some good tradable ranges there on a one-day chart, but it can be a little bit choppy. So I'm going to change it to a 2-day chart and just see whether that tidies a few things up for me. So can I tell you that's far more impressive, those sort of ranges on a 2-day chart. So already I'm thinking, well, maybe if we can trade this on a 2-day range or a 2-day chart, we're going to maybe be in a better position. So looking at where we are, we're in an uncertain trend on the 2-day chart, okay? And we're probably going to we're uncertain on the weekly, uncertain on the 2-day. We're uncertain on the 3-day because we've got a lower bottom, higher top, lower bottom, higher top. We're seeing expanding ranges on the downside on the 3-day chart. We have seen expansion on the upside, but 411 is bigger than 324. And we'll see whether or not we get a confirmed, if we can get a lower top, we'll definitely have a downtrend. So just catching up with some of your comments here. So hang on 2 seconds. Darren said $1.44 divided by 1.22. Okay, it should be 1.18. Okay. I was just trying to see 122 as a percentage. That's about, okay, 84%. So it's not exactly what I was after. All right. Thanks for doing that, Darren. So let's just talk about where we are on our swing chart. So doing a very basic synopsis, we're in a confirmed daily downtrend. So on a 1-day swing chart, we're down. On the 2-day, the 3-day, and the weekly chart, we're all uncertain. So for me at the moment, there's only really one direction you want to be trading this stock, and that's probably looking on the short side as far as that's concerned. So we've got our swing charts are pointing down on the 1-day. There was a good ABC short that we've just been in. We've seen some resistance on the resistance card from the all-time low. Maybe we're due for a little bit of a bounce. So let me throw it out to you at the moment. If you're not already short right now, I wouldn't be looking to jump in just right now. I'd be looking for maybe the next lower swing top as a good opportunity to short. I think it needs to get back into a little bit of balance as far as time and price is concerned, and then it might be ready to go again, depending on what the bigger picture on gold does. So let's talk quickly about sections of the market, and then we'll do the same thing with the Aussie dollar, and then that'll probably have us done for tonight. So let me pause this again. All right, so getting back into profit source, I just want to do a quick discussion on sections of the market. So how we do that is probably to go to a bar chart and do it on a weekly chart. Monthly's probably a bit big. Looking through this area here, can I tell you that that's just one of the best places in the world to ever want to trade. That's just got time and price harmony all the way through it. I'm sort of looking at that sort of section of the market, and once again, this is subjective, as I've pointed out to you. You probably sort of got maybe we could call that one section, 2 sections, and then finally a 3rd section down, something along those lines. You could argue that there's a few in there that you could pull apart. So position of the market at the moment is relatively sideways. So if we go back out the other way, what we've got is not a huge amount of clarity. We've had one section up. Since then, we've had very much a sideways move. Now, not trying to bring too much time analysis into the equation at this stage. I'd be keen to know by balance time. Well, the market took about 120 days on the way up. Well, that's interesting. We've never seen that number before. In doing that, it ran out about another 120 days. We didn't really get a turn. So the initial run up was, as I said, 120 days thereabout, and we've nearly run out 2 full cycles. So we've nearly done 100% of time up, and now we've spent nearly 200% of that time sideways. So what that tells me is that something's going to have to give through here. All right, it can't continue to go that way. You know, we're talking 200% of the time. Around about the 16th of next month might be an area to watch if it ran into, you know, there's our first date that we could keep a little bit of an eye on. But I tend to know that if a market's spent that amount of time going up and then goes sideways, particularly big stock like this, you're going to find eventually we should get some breaking of time. So just to put that into context, we're trying to identify some sections of the market. How we get the best identification of sections of the market is, if they're clearly trending, is to measure them in time and price. Now, that first section up from the lows of last year gave us about 120 days from bottom to top, and then we moved into a sideways pattern. So when's that sideways pattern going to end? Well, one of the easiest ways we can do to project that is to look at the previous section in terms of time, and then look at percentages of. So it ran out 100% and it continued to go sideways. So I'd be looking at 150%. Well, it's continued to pass that. So 200% of that time frame might give me an idea of when it might bounce out of this trend. So, or about a sideways movement. So we don't have clear sections of the market right now. So therefore, calling tops and bottoms will be a little bit harder because we don't have time, price, pattern, position, and volatility. So this will be a tougher market for us to work with. But if we do get something happening, I think we're going to get a strong trend that will eventually get into play. So that's all a bit of food for thought as we start to pull apart this market. We need to combine that with other time frames and other bigger picture stuff. But at the moment, I'm just trying to get some basic flavour for what this market's capable of doing, where it's currently sitting, and what I might expect from it in the near future. All right, so that's about all I want to do on Newcrest mining tonight. What I want to do now is do some work on the Aussie dollar. So we'll do birth of the contract, all-time high, all-time low, set up some resistance cards, do exactly what we've done, and then I'll take questions and we'll wrap up. All right, so back into profit source. So we're going to play with the Aussie dollar, which is on the CME, Chicago Mercantile Exchange. So remember, that is an overseas contract. We've got a fair amount of history on the Aussie dollar, which is nice. So if we run back to the birth of the contract, we're talking here about the 13th of January 1987. That's the birth of the contract. And step this out. We'll try and locate our all-time low and our all-time high. So our all-time low was the double bottoms back in 2nd of April 2001, and we were at about, you know, some ridiculous 48 cents or something along those lines from memory. So 2nd of April 2001, and the price we were trading at, I've got that in the way, 4 decimal places, remember, so the low was 0.4774. So that's the all-time low, and the all-time high was in 2007, which was the 15th of July. Sorry, 2008. The other 2007, and the all-time high was 97.0, so that's all-time high. All right, so what I'll do is I'll share that chart with you in just a second. I want to let me move that across for some reason. Do it that way. And the other thing we wanted to work out was is the range. All right, so the range from all-time low to all-time high. Let's do the maths. I'm sure some of you are doing it probably already, but I'll just play catch up as well. So remember, we've got to work to 4 decimal places here. is 0.4996. So there we have it. All right, so let's save that as a GIF. So we'll call this the Aussie dollar 1. Throw that up there. Oops. There we go. Thanks, Debbie. And thanks, Steve. Guys, a bit too quick for me. So I'll just upload this other file. I'll throw that one up there, and you can get the Newcrest one too if you need it. So what I want you to do is these numbers should start to, sink in, okay, and start to become part of the fabric of this market for you. You should start to be able to recall these numbers. They're going to become very, very important parts of our work over the coming weeks. All right, I'll just pull that down. If you haven't got it already, let me know, and I'll put it back up at the end. So let me jump back into Profit Source. Just save that as a chart page. NCM, better make an Aussie dollar one too. All right, so there we go. I'll save that as a chart page. Now what I want to do is go and set up some of the cards that we talked about. So let's just set up a Gann retracement tool. So 0.4774, and it was 0.9770. And I'll just extend that left and right, unlock it. There we have it. So what we've got now is a resistance card. So got to take a look at that since the all-time high, because obviously we wouldn't have known that that was there until the market formed its all-time high. So are we seeing some places where this has proved to be support and resistance? I think the answer to that is comfortably yes. So we've got that as some support, that is a bit of a resistance, got some resistance there. And if we take a look at where we are in the current market, we're currently hovering around that 25% level, and we could be arguing that maybe support resistance is becoming a little bit of support. So while ever it holds above 85.21, I think you've got some more, you've got better of a case of being a bull than a bear. If it breaks down through there, you might suggest it's got a little way to travel lower. So we'll set that up. So that's a ranges resistance card. We'll do a highs resistance card. So we need to click on that as a 0 point. Oh, there you go. Nothing like a cluster. So we'll call that a all-time high resistance card. And we'll go and do the same thing. I'll set up a new chart on the Aussie dollar, and I'll go and set up a preset Gann square. So once again, this is where having the numbers already in your head is a handy little thing. Oops, not what I wanted to do. So let's scoot that down there. So all-time preset Gann square, all-time lows back down here. I know it's 0.4774. Better make sure the date's right. So the date was the 2nd of April. Now we're square. So just getting the right setup here. We're using a point size of a minimum. I don't want a box size of 0.975. Looks to be working okay. 4774. So when I set that up, generally it disappears. So that's obviously as a lows resistance card. It's been not too bad as far as the work's concerned. So basically 100% of the low called the high, came back and sat down on 25% of the low. You could argue that maybe that's not enough engagement with the market, so I could not do that. Won't muck around with that this week, but we might have to play around with that number, or we might have to pull apart some other lows to utilise as part of our construction. So I'll just save that as a chart page at this stage. So that's going to be Aussie dollar lows resistance card, all-time low. All right, so we've got that in play, and I'll pop out of here, make sure. Okay, no one's asked me any questions, so I'll pop back in. All right, so we've set up some resistance cards. We've done the all-time low, all-time high, birth of contract. We've done resistance cards. So let's do some position of the market and some swing charts. So if I just jump in to the current market, take a look at what a swing chart's telling us. We've got some lots of numbers now that we're going to have to play with. I'm just going to open up a new chart actually because got that lows resistance card on, so it's just sort of slowing me down a bit. Yeah. I'll just tidy up that swing chart. I don't want too many parameters on there. All right, so at the moment we've got an uncertain trend. We've got a higher top and a fractionally lower bottom. We've just got it contracting ranges to the upside, expanding ranges to the downside. So maybe we could be stalking a first lower top entry to jump into this market. We noted that there was a little bit of support around about our current level on the highs resistance card and the ranges resistance card. I'd be going back over here and thinking, well, is there any old tops that I might be sitting on, which there doesn't look to be. But around about 85, there's been some support on a bottom stuff around there as well. So harder one to trade at the moment because we're in an uncertain trend. So if you're waiting purely for some swing chart work, you're going to have to wait for the trends to catch up a little bit and get a little bit more certain. The weekly trend is clearly up. Interesting though that we do have a contracting range to the upside and at the moment contracting downside. So we've seen a little bit of a shrinking range to the upside, but it likes to do about 7-cent moves. So you've got your 7, 8, 7, 8. So there's been obviously some consistencies there, about an 8-cent move. So we can play around with those numbers, particularly we're getting some good repetition. So at the moment there is an ABC long on the weekly chart, and we've had an ABC long on the previous one. So we've actually run it to about exactly 75% of that previous range. So I'm not surprised we've seen a little bit of resistance. So we need to check the other timeframes as well. So we've got a 2-day chart. Our 2-day chart's actually up, or is it not? No, it's uncertain. So we've got a higher top, lower bottom. So the 1-day chart's uncertain, the 2-day chart's uncertain, weekly chart's up, and the 3-day chart's up as well. So what we've got is the big time frames pointing to an uptrend, the smaller 1- and 2-day charts pointing to potential uncertainty as far as the trend's concerned. We are seeing some expansion to the upside, also some expansion to the downside. So some food for thought in that market, but we've definitely seen a little bit of sideways movement in recent times. Okay, so since that middle of September, that could be possibly because the US dollar starting to show a bit of strength. I guess if we finish up with a bit of a sections or a position of the market discussion, that's the ultimate low in October last year. You'd have to argue that's one section out. And market pullback healthily in time and price. We're sort of in a second section there. And we're now potentially seeing ourselves shaping up into the third section there. So doing some price forecasting work just using milestones, I'd be very keen to see how that sits on the bigger picture. And that's what I was seeing, was it's sitting right on that 50%. So what I know is that if sections are likely to fail, failing around the 50% point's a good place to be watching it. 1, 2, third section. If we had some time and price reasons for the Aussie dollar to be maybe topping out, we do have position of the market for that to be in play. So let me just jump out of here, come back to camera. So something that we're going to need to do is take a look at the contract specifications as we get a little bit closer to wanting to do something in this market. Okay. Caution, obviously, with the sections discussion, sitting at 50% of the previous range. If it can break through that, I guess we have some potential for some further upside. I guess on the economic data, I don't want to become a currency economist, okay, but you do have obviously a potential for a strengthening US dollar at the moment. That would obviously be bearish for the Australian dollar, and obviously currency gets affected by interest rates. So our Reserve Bank's pretty keen, as far as I can read it, to get interest rates a little bit higher, and if they can do that, that'll obviously be buoyant for the currency. So there's a few things that we're going to keep an eye on as far as the fundamental factors, and I'm not talking about book value and PE ratios, but just general things that affect currency, because they are obviously going to be a part to play in our challenge to get to know this market, pretty well, so we can do some damage with it. So that being said, we've got position of the market which is far clearer than what we do on the Newcrest mining, so that's something to be aware of. I'm not suggesting it's topping out, but if we did have some time and price reasons, we certainly have sections that are backing that up at this stage. Uncertainty on the 1- and the 2-day swing chart as being uncertain trends. The 3-day and the weekly trends are clearly up, so we might be waiting for those to give us a little bit of a change as far as that's concerned, or waiting to see what's going on. I'm just taking a look quickly because I won't bring it back up on screen, but I'm just taking a look here, and we've had sort of 3 days down, 1 day down, 1 day down, 2 days down, 2 days down, and then a strong reaction. So I'd be keeping a very close eye on that if it can do an overbalance in time. So Richard said new crest, 3rd of the 12th, 1997, all-time lows at $1.1255. Let me check that. Yep, just let me get that up. I've got the 3rd of the 12th, so just let me see what you've written there. All right, I think, okay, so you're saying 3rd of the 12th, 97 at $1.12. All right, so just make sure I'm checking my data here. We've got the date right. I've got a low of 122 and you've got a low of 112. All right. Let me work out what's wrong here or where the differences lie. So just let me, I'm going to do a data on demand for the complete history of it, just to make sure that I have what I meant to have. So just let me get 25 years. And I'll just see if I get a change there. Mine still looks like it's holding at $1.22, but I've requested a lot of data, so it's just going to chew on it for a little second. All right, it's done the data on demand. And alrighty. $1.1255, there we go. So originally I had it as $1.22. All right, what I'm going to do is I labeled the 5th of December on the chart, did I? Okay. Yeah, so it's obviously moved that data. All right, do you know what I'm going to do is I'll check. See, $1.1250, 1.1255 doesn't get me excited because obviously I don't think stocks traded at 0.55 cent increments. So Stephen, you've got the birth of the contract at 4th of the 6th, 87. All right. What I'm going to do is I'll check the discrepancies on that. I'll go to some other sources and I'll play around with it. I'll post on the discussion board and we can have a chat about it next week if you're not on there. Could be a share split potentially. Yeah, it's a bit odd at this stage. I would have been a bit happier with the $1.22. But anyway, I'll have to play around with that. Is probably the best description. So between us all, we'll come up with the right answer. But rather than spending the time tonight trying to just go to all of the Debbie's is at $1.13. Okay, so we'll play around with that, and I guarantee you next week I'll have the all the correct figures, and we'll know exactly what's going on. So we'll have a bit of a play around with that. Okay, so I'm just going to take a look at the birth of the contract. All right, so 4th of the 687, I agree with you there, Stephen. So whatever I had earlier, I've pulled in obviously some more information and it's added on some bars. So I'll check the data, guys, tomorrow, and I'll do some investigations there. So whatever we end up coming up with, we'll just have to reset our yeah. So whatever we get set with, we'll have to yeah, readjust all of our calculations, which is fine. So just do the work on what you've got there, do a full data on demand refresh, and I'll go and check some other sources just to make sure which one is accurate. Okay. All right, so what I want to do is finish up with just a quick discussion on what I'd like to do. Yeah, 4 decimal places is starting to stretch the friendship with me too as well. All right, we talked about obviously setting up there. I've got a little bit of homework for you. So what I'd like to do is get you guys just to review Chapter 2 of the Ultimate Gann course, which I'm sure you've done before. And I guess what I get you to do on our markets is to commence an assessment of the ABC trades of the last sort of 12 to 24 months. So what I'm really looking for there is there's some consistencies in trading ABCs on this market that are going to get us, into the more profitable side of the curve. So do some backtesting is really what I'm suggesting there. Can we establish any patterns in this market that are going to help us make some money? And are there a better time frame to trade on? So is a 2-day ABC is going to give us more profit than say a 3-day or a 1-day ABC? and just review some basic price and time work for next week. So we're going to start to pull apart some time counts and just firm up any of the information that we need to. So that's my my homework for you. So I'll leave that up there. I'll bring back up those file shares if you need to grab those as well. What I'm happy to do at this stage, I'm going to need to do two things. Is that obviously I'm going to have to do some revision work for you just to make sure the prices are okay. Obviously there's some discrepancies there, and I will get to the bottom of that. The other problem I've got at this stage is that I don't know whether we'll actually be meeting next Tuesday night. A lot of that will depend upon how my son goes. So my intention at this stage is to, but you'll be advised accordingly, depending on how his surgery is scheduled, etc. I'll have to make a bit of a running call on that. So you'll be notified with plenty of notice. So at this stage, plan for next Tuesday to be on, and obviously you'll receive any notification as quickly as I can make it to you if anything needs to change. So for that, I apologise, but I think I know most of you are considerate of me and my needs, and I appreciate that. I'm not trying to stretch out our time together any longer than it needs to be and make it disjointed, but you probably wouldn't get a great product out of me anyway if I'm a bit distracted and focused elsewhere. So I appreciate you. I'll thank you in advance if we can't get together next week, and we'll make sure that we catch up straight away after that. So what I'll do is I'll let you know regarding how that's going to work. So rest assured you'll get an update. So Richard's saying 4th of the 687 is the birth of the contract. Thanks, Annie. With any luck, we'll all be good. So we'll take all the luck we can get. Let's just check that Newcrest 4th of the 687. Yep, that's what we've got. So we're in agreement on that. And yeah, thank you, Darren, for that. So happy to open it to you guys now for any questions, comments, or queries. Also happy to say, we've had a good start for tonight, and thanks, Lynn. And we'll pick it up from there. But we've got some work to do between now and when we next meet. We've got some food for thought. But that's the sort of work that we're going to be doing on a week-by-week basis to really tear this market apart. So I hope you're excited. I'm actually really excited about how tonight's gone, and I think we've got some good markets to work with. So with that in mind, I'll throw it open to you guys. Any questions, throw it to me now. Otherwise, I will bid you all farewell, and obviously the recording and etc. will be sent out to you, or the link to the recording, I should say, will be sent out so you can take it apart as needed. Thanks, Richard. I'm glad you enjoyed tonight. I thought, as I said, I'm happy with how it's gone. So thanks, Stephen. Appreciate that. And I'll be in touch, I guess, with the Newcrest stuff. I'll solve all of our Newcrest data dramas. Right. It's a bit like a late auction. I'm sort of going once, going twice. Thanks, Jose. Thanks, Elizabeth. Thanks, Debbie. Appreciate that. Can I move the file share box? Absolutely. That's the easiest thing I'll do all night. I'll bring that down. Thanks, Robert. Thanks, Gerald. Thanks, Key. Thanks, Ashley. And yeah, everyone have a great week, and I look forward to catching up with you when we next catch up. Thanks, Graham. Thanks, Steve. Darren's saying, is that enough to possibly change the NCM to another share? I don't think so, depending on just making sure we get the right data. So I'll make a judgment call on that. I'll involve all of us in that process. If it's a 50-50, we can all make a decision together, but I don't think we'll have too many issues there. So Stephen's saying, birth the contract for the Aussie dollar 10 to the 686. Well, I'll check all the figures and make sure that we've got both for the Newcrest and Aussie dollar. So I'll take that on as my mission, and we'll get that sorted out. But we'll pick all of that up when we next meet. All right, everybody. Well, thanks for everything. Thanks, Glenn. And I appreciate everybody being here tonight. I look forward to catching up with you, and I'll see you on the flip side, as they say. So thanks, everybody. Have a good night. Officially a good evening and a welcome to session 2 of our time together. So obviously a couple of things I want to kick off with today and give you an idea of how they're all going to work. So a couple of things, just I guess it goes to the recording for the people who aren't with us here tonight. When you do log into the rooms, just attempt to log in using your username and password as opposed to logging in as a guest, and that will just help us obviously with making sure everybody's in the room in a timely fashion. And obviously there's been a lot of questions with regards to getting access to the forum. So I guess I wanted to cover off on that initially. So some people I got your email there, Adam, so thanks for that. I understand. Obviously, thanks for your concerns in that area, Darren, and just looking through your other list. So I'm just going to clear this chat window, and I guess first and foremost, if there's been questions already asked on the board, so there's already a little bit of what we call traffic moving backwards and forwards. So I know they're up and running, and I know they're working. I guess one of the things that's it's important to realise is that if you weren't registered, say, a week ago, I'll have to go through and do another sweep and catch up anybody who's not enabled for the forum. But the thing to remember is that the forums are obviously up and running, but you need to actually log into the forum. So what I thought I might do is I'll actually bring this down. I'll actually load up the Safety in the Market forum. So I'll just show you pretty simply what it should look like. Page I have open there, so that's not what I'm after. There we go, that's what I'm after. So I'm actually just loading up the Safety in the Market web page for you to take a look at. So I'll just log in using my login and password. So the first thing you're going to see is when you log in, as you normally would to the website, you'll see a number of pages here. Obviously, the one we're most interested in here is the one that says Discussion Forum. So I'll click on the Discussion Forum, and it loads in. Now, the important thing to remember here is that this is where we're looking here, the Ultimate Gann Coaching Private Forum. You've got a Wednesday night group and a Tuesday night group. So obviously, there's a little bit of work that's already been done there. The interesting thing, though, is if you're not logging in, so you've got to go and create a profile. So you've got to go and register here where the button says Register. You've got to go and create yourself a profile and a name, and that's a separate login and a separate ID. Then you actually have to click in here on Login. So if I just log out for a second, you'll see up in the top right-hand corner here, it says Logged In as a Guest, and that's a problem. So if you're logged in as a guest, that means you're just part of the general population of Safety in the Market. You're not going to see, obviously, these specific forums, which are obviously designed for you guys in your class alone. So what you actually need to do is register. Okay, so create yourself a profile online, click on Login, and then what we're going to do is obviously log into the forum. A second or two. There we go. So I'm just going to put my my username and login in. So obviously mine's already saved in there. So I click on OK. Comes back with my login's been successful. So I'm now actually logged in as me. If you look in the top right-hand corner there, it says logged in as myself. And now I can see the Tuesday night and Wednesday night private threads there. The guys who've done the advanced trader coaching forums before or program, obviously that's where their forums are located. Those guys with the MFC, that's where your super trader master forecasting course is in there. So okay, so Richard, you're asking me should my name in the registered by the email address. If you just want to, what I'll get you to do is if just rather than getting everybody to type down, you know, I think I'm registered, etc., and I can't see it. What I'd get you to do is if you can't see these private forums, okay, but you are logged in and you do have a name here, okay, so you've logged in as yourself, okay, what I'll get you to do is just come down to myself, so come down to the Ask Aaron Lynch thread, and all I need you to do is just say, okay, go in here and put a new post up and just say, hi Aaron, I think I should be part of the Ultimate Gann thread. I can't see it. Here's my, and I'll get up straight away. I'll get your username because obviously you'll be posting me a question, so I'll know to have a look for that, and I'll see whether or not it's a problem this end or whether you just haven't been switched on yet. So if you want to do that after tonight's session, I'll make sure that we get that action straight away. Okay. So with any luck, that makes a bit of sense. And what I want to do is I'll just jump out of there, and I'll come back to obviously PowerPoint screen. But if that makes sense, that's great. If it doesn't, can you ask me any questions now that you might see fit? Because obviously I want you to be able to have access to that. So it's important that we are able to go and take a look at that. So pretty simply, it's not that difficult. You go and create yourself a name and login, and sorry, you register for the forum, which you should already be with your software username and login. You need to create a separate profile through the forums, and then you need to log in using that profile, and then you should be able to see the coaching forum. So if that's not the case, then all means I want to make that work for you. And if you think it should be working your end, just drop me a line in your in your thread, or in my thread, sorry, in your thread, the Ask Aaron Lynch thread, and just say, look, Aaron, I think I should be able to see it. I'll take a look at it as soon as we finish tonight, and I'll make sure that all gets updated. So can I throw it back to you guys at this stage? Any comments or queries or questions on that? Now's a good time to shoot and to let me know. But other than that, I think we can move in to what we're here to discuss tonight. All right, well, it seems like most people are relatively happy, so that you're not flooding me with questions. So so from that perspective, I'll assume that we're all understanding what we need to do, and we'll pick it up from there. That's okay, Des. Glad to have you on board. So hopefully you're all able to access the recordings from last week. I guess I just want to cover this off particularly for those people who are new to this coaching environment. So just making sure that you guys know how to access that. You would have received an email and you would have been able to go back over what we discussed. So I guess to quickly review what we talked about last week, very quickly I'll do the official bit. And I've made the same mistake I made last week, but I will make myself a note to solve that. So obviously I need to let you know about our financial services guide or license, so to speak. Safety in the Market does hold a financial services license. So what that means is we need to advise you that we've not taken into consideration your personal circumstances or financial objectives. So in providing the ultimate Gann coaching, obviously I've not looked at your individual needs, etc. We are going to look at real current market environments. We have to weigh up, you'll have to weigh up, whether or not they are suitable for your own personal financial objectives. Obviously you should seek licensed financial advice if that is applicable to you. I need to let you know as well that I hold a qualification that enables me to act as what's called an authorised representative under our financial services license 241060. Any details or questions you want on that, by all means let me know. But I think you get the drill, but it is a requirement that I take you through that. So just making sure we are recording. All right, fantastic. So as I was going to say, we're going to doing a sort of quick review of last week. We really just laid the foundation for the work that we're going to do over the coming 11 sessions. So we talked about obviously what the Ultimate Gann course was all about. We spoke about the sections and we broke down into the individual parts. We referred to obviously the 3 dimensions of Gann's analysis. So obviously talking about price, which we're going to do a bit of work on tonight. Obviously talking about some time frame analysis, which we'll also do some tonight. And then obviously the 3rd dimension of squaring time and price. Obviously questions came about, will we try and obviously create some setups along the way, and I'm all for that. So what I want to do at the start of each of our sessions is to review the 2 markets that obviously we picked on. So for those who've already managed to forget, we're looking at Newcrest mining, and we're also looking at the Aussie dollar. They've had some interesting movements in the last week since we last met. So what I want to do is each and every week is review whether or not there's been a trade, whether there's been a setup, is there a setup coming, and it might mean jumping forward a little bit to obviously covering off some information that we may not have talked about yet. But I don't want to miss out on any setups, and if we can, I guess, set some, find some setups along the way, that's obviously the outcome that I'm after. I guess the underlying, driver for this is being able to build a trading plan around an individual market, and I guess being able to understand an individual market particularly well. I thought Newcrest mining wouldn't be a bad proxy for gold, and obviously gold's sort of the headline act in the financial markets at the moment. And that being said as well, the Aussie dollar has been a fantastic performer and continues to be relatively strong. So all of these, I think, offer a little bit of something for everybody. I would state though that they're probably not they're great forecasting markets. So in other words, there's a lot of really easy tops and bottoms to pick on these markets. I would say though that it's actually I'm glad I picked them, because having done some work, over the last week and in the past, they're relatively challenging as far as the trading market's concerned. They're not your vanilla, just sit back and take every ABC trade market. But I've got some results tonight that I want to share with you based upon what we discussed last week. I want to thank the people who went away and did some work. I think I know Linda, you did some work, and I know Des, you did some work and put it on the forums. And I'm going to continue to grow that. I'm not going to do it all for you. I guess what I want to be able to do is not only give you the answers, but also to sort of get you to do the work, because one of the work parts of tonight that we're going to talk about is doing the making the most money out of the market lesson that David did using swing charts, which is I think DVD 2 or 3. Take it out of my CD player. There you go, DVD 2. All right, I just had to remind myself. I actually watched it again today. Yeah, so Blake, by all means, guys, you can post your questions privately, but that's fine. But I'll also, feel free to have them out there for everybody, keeping in mind that little tab where it says to everybody or just to myself. Blake just asked me a question, a good one. So will we have to keep an eye on gold if we're looking at Newcrest mining? So I'll throw that back to you guys. What do you reckon? If I'm a Woodside petroleum trader, do you think I'd take a look at oil? Absolutely. So it goes hand in hand, is that if we're going to trade a gold stock, we're going to need to take a look at gold. But I wanted to make it approachable to those guys who are CFD traders, who aren't just futures traders. So of course we're going to take a look at the gold market, and we did actually have a look at that last week. And I think Newcrest mining's really broken down the same sort of way that the gold market has done, and we'll have assess whether or not there's some strength returning to that market and how we see that going. We might do a little bit of intermarket analysis by looking at the strength of the US dollar. I've just actually written an article for Your Trading Edge, and I'll give you guys that article, so to speak. I'll give you the content of that article without even before it hits the stands, because it won't hit the stand till November. So I've actually written it this week, and that's actually a little bit late. It generally should have been in about 2-3 weeks ago. So unfortunately, when you read those sorts of articles, they've sort of been written 6 weeks before you read them. So what I want to do is I'll show you some of the things I'm watching on the US dollar market as well, as far as that's concerned. And I can go into a little bit more detail there. So of course we need to take a look at gold, see what it's doing. And I guess looking at David's, so getting back to the point I was making, which was getting back to David's lesson on making the most out of the market. So obviously we know swing charts are absolutely critical to making money, but when we get to the Ultimate Gann course, it can sometimes get shelved as being a, oh, well, you know, it's all about the forecasting, forget the ability to make the money. Now, David said if you've got the skill to be able to call every top or bottom there, well, look, swing charts become a secondary thing. So if you're that good at it, well, then, don't worry about a swing chart. But he says that most of us, he said it'll work, when forecasting markets should work all the time. He said, but sometimes only 60 or 70% of the time we're on it, we're watching it, and we're in the right place to do something about it. So he said swing charts in many ways are your backstop to be able to make sure that when you are right, you can hang on to the move, but more importantly, to make sure that you're absolutely getting out of the market when you're wrong. So they're all things that are coming through when I watched that lesson again from David. Can I ask? And excuse me, I really want to have some discussions here. But has anybody recently watched that session from David from the Ultimate Gann course on how to make the most money from the market on swing charts? Has anybody recently sort of? I'll drag this out here so we can have a bigger chat. Right, so there's a little bit more room to type in. So has anyone recently maybe rewatched that or watched that for the very first time? I'd just be interested to ask you a few questions about it. So as soon as I said ask you questions, everybody stop typing. Okay, so Linda, you said you've watched it over the last couple of weeks. Graham's not yet, and Robert's about 6 weeks ago. I guess for Linda and Robert and Darren and Key, what did you take away? Yeah, Annie's saying a long time ago. Can I ask you this? Did anybody find it an easy lesson? Particularly for you guys who've watched it, in recent times, and that's okay if you haven't watched it in the last, 2 weeks. But did anybody find it a really simple lesson from David? Okay, Glenn's saying he's watched it about a dozen times, but not for a recent time. Did anyone find it was just sort of, crystal clear, that 85 to 87 trading that David was talking about, or did you find it was a little bit, of hard work? Darren said none of them are easy, but they seem to get easier the more you watch it. Well, I've got something I'm going to add to that as well. But I think Darren's hit the nail on the head. I rewatched it again today just to prepare myself to talk about tonight. And can I tell you, I still find it confusing. Like I still find it not confusing, but I still find it harder to follow. And Debbie's saying some bits were clear, other bits were not. And can I tell you that the number one thing that I'll tell you as to why I think it's still challenging for me to watch at this stage, even though I've watched it plenty of times. The great challenge for me is that it's not my stuff. It's not my trading through 85 to 87. It's not me drawing the swing chart. It's not me actually putting pen to paper. So my whole creative process when putting together the idea of the Ultimate Gann coaching was for us to do things together so that we could obviously build a process and I guess really sort of tackle the what the market is doing, because it's always going to be somebody else's until you get in there and do the work. And so that's what I found. Yeah, Annie's saying what a relief. That's what the great thing that I find to this day with David's stuff is that because it's not mine, and I'll be upfront and say that the share price index is not my market of choice anymore, and it hasn't been for some time. And whilst I keep a pretty good eye on it, I don't feel like I know that market as well as David does. He's talking about the price ranges running up here and into that top and back down there, and it's clear as crystal that we should have gone short here and gone long there. But it's only because he's lived and breathed and owned that market through that period that he's able to actually talk with that level of authority. And then if you're watching it and you don't know the tops, you don't know the bottoms, it really does become a bit of a challenge to follow along. So once again, I guess it all comes back to this concept of ownership. In a perfect world, I'll just drop this chat window back over here. In a perfect world, what would be fantastic is that you'd actually start and you'd run up a hand-drawn chart on not only Newcrest Mining, but also the Aussie dollar. So maybe for you CFD guys, you could probably pick on Newcrest Mining. For the futures guys, you might pick on the Aussie dollar. But the thing is that until you get in there and actually do it, and it's some work I've actually started to do. I haven't run up a hand-drawn chart on those markets yet, but I do have the intent of doing so. Worst case scenario, I'll probably print something out of the software in the wall chart wizard, and I'll actually just keep updating it by hand just to start to get that greater feel for it. Now, I'm not suggesting that I'm going to bin oil and some of the other things I do, but I think to get serious about this, I think we need to spend some time actually putting pen to paper. So that's part of tonight's process, is to actually talk about what it is that this market or these two markets are capable of doing. And what I've done is I've actually gone back and I've only done one market, and I'll finish the work off on both, and I'll share my work with you when it's done. But what I didn't want to do is just give you the answers. I do want you to have to go and do a little bit of digging yourself, because it will feel more like yourself, more like your own work if you can do some of it. Because it's not just about the answer, it's actually about the process. Because keep in mind, I fully accept that not everybody in this classroom is going to want to trade Newcrest Mining and the Aussie dollar for the rest of their trading career. So these are just learning examples and learning environments for you to get a process going as to how to tackle the market that you're working on. So keep that in the back of your mind. Whatever you can do as far as some work's concerned, the better will be. So in our session tonight, we're going to talk about a quick market update. So what I want to do is I actually will probably cover off the majors as well. I think it's important for us to know, what our share price index is doing and certainly what the gold market's doing, S&P 500 in the US. We'll take a look at oil. So we'll spend some time each week just doing a quick update on what's going on there. We'll do a market update on our markets, which are Newcrest Mining and the Aussie dollar. We'll talk a little bit about obviously making the most out of the market using swing charts. Okay, so just as a refresher, some of the concepts, the things that you need to be aware of. We're going to do some basic time frame work, so I don't want to get started into tearing apart the time frame analysis. And one of the things I noted is that some of you have already gone to there. I know Key, you posted some stuff on a primes resistance card that's working as a square. Sounds fantastic, but I must admit I've not even looked at it yet. Only because I don't want to. I just want to do things in a methodical manner where we just sort of, I just want to guide my process in the way that I do it and show you sort of the way that I tackle a market. So whilst I'm glad you've done that work, we'll pick that up when it becomes relevant. I did note, interestingly enough, on Newcrest Mining, Key, you mentioned that there was like a 60-day cycle and a 118-day cycle and 120-something. So it all seems to me that this market likes to work in the triangle, all right, but in Newcrest Mining's case. But once again, we're going to get to that. I want to focus on some of the really big time frames as a starting point, and I guess that'll get us moving forward. But keeping a flow from the Ultimate Gann course and what we do at Gann Mastery, we'll jump into that at a slower pace, because I want to make sure that we can start to build a framework of what we'd actually do to trade this market if we do get a setup based upon timeframes. If we do get a classic Gann setup, what's the personality of this market like? What's it better to trade on, a 1 day, a 2 day, a 3 day swing chart? Those things are all important. I also want to start looking at a swing chart in time. So this is really time trend analysis. But in that section of David talking about how to make the most money out of the market, he actually does talk about, but he doesn't really get into any detail, but he actually talks about how you can create a swing chart in time. Now, if anybody's been to a Gann Jumpstart workshop, which is the one that I sort of wrote from scratch, one of the lessons we do in time trend analysis is to actually draw a freehand swing chart in time. Now, it doesn't have the same rules per se as a price swing chart. So, and starting to use David's terminologies, we're talking the everyday swing chart, where it's essentially a 1 day swing chart. So we don't have rules for like an inside day and an outside day as far as time's concerned, but we can actually draw a swing chart in time, and it gives us a very good lead in as to what we should be looking for in the market. So I want to get those set up on the Newcrest Mining and the Aussie dollar market. And obviously, I don't want to jump to the, sorry. I thought I was jumping to the homework, but it wasn't quite that. This was the homework from last week. So I asked you to review Chapter 2 of the Ultimate Gann course, commence your assessment of the ABC trades over the last 12 to 24 months on our markets, and some of you did that. Obviously starting to establish some patterns, and we'll talk about those, and is there a better time frame to trade on, so 2 or 3 day swing charts, okay? And I said review some basic price work. So I think some of you have done that. As I said at the start of our process, I'm not really phased whether or not you don't do any. I'm going to ask you to do work each week, and if you don't do it, I really can't jump down the internet connection and force you to do it. I have no power over you to make you do things that you don't want to do. But I've designed this in such a way that if you do the work, the doors will open, and by doing that work, that ownership will take you that next step forward. And I'm confident that analysis will turn into dollars. Now, I'm also very aware that people are time poor, and me adding extra hours of work on top of what we do, and doing this coaching plus your 9 to 5 plus your other stuff you're trying to study for trading. So I'm aware of that as well. But I'm going to be very upfront. I'm not going to do all the work here. I'm not going to set up this market absolutely and just hand it to you on a plate. There is going to be something that you guys need to do, and so the more work you can do that helps me bring this all together and helps us as a group, the better we're going to be at the end of this program when it comes to writing a trading plan for these individual markets. So that's my hope, and I think you guys are doing a good job already. So what I want to do is do a quick review on the broader markets as well as Newcrest Mining and the Aussie dollar. So what I'm going to do is I'm going to pause the camera, and I'm going to jump into Profit Source, and we'll have a quick chat about where these markets are up to. Okay, so what you're seeing now is a screen of Profit Source. Just going to get myself organised here. All right, so first and foremost, well, one thing I always want to check, considering it is how to make the most money out of the market, is to probably take a look at something like the share price index. And if we spoke about this last week, if you've sort of found the markets a bit challenging, I guess if you take a look at that as a picture, we've got a couple of inside bars, we've got a big outside bar there, we've really got a few gaps going on. This is on the day chart, so we've got gap ups, gap downs, but really what we're seeing is the market's moved out of its sideways range. So it's only on a very small scale, so I'm not clearly calling this a massive change in trend, but up until the 2nd of this month, we saw the scenario where the market had been moving in a sideways band, and oops, if I get this set up. So you could probably call the top end of that range, 47.79. The bottom end of that range would have been around the low of the outside day, 46.49. So we're talking about 120, 130 points. And at this stage, the trend was, all right, so just let me pop back out again. I've just seen your question pop up, Debbie. So when assessing the ABC trades, are these the ones you create yourself, or or the pre-computed ABC trades? When I'm talking about backtesting a market, I'm really just going to well, actually, it should be both really, but I'm just looking for the ones that the software flags based upon the algorithm, but then also there should be ones that we're looking for. But I'll address that. Good question, and when we get to the ABC bit, I'll actually address that, and so we're all clear on what we're doing. So let's just take a quick look at what the markets are doing. So the share price index we've seen moving relatively sideways, obviously volatile through here. One of the parts of volatility that I always look at as being an interesting one to watch is that during that sideways movement, we've also seen a continuation, or we've seen a increase in the average daily ranges. Now, we're not talking a massive amount here, but we're talking, a sort of a 54 up to now about a 56 point range. So if you take a look at those average ranges, they are actually at their highest since about the July low. So we're sort of getting back up to that peak in August. We saw the average ranges fall away, and it's only a couple of points. I guess if we took a look at what the average ranges are doing over the last 2009, you can see that we have seen our weekly ranges falling away from sort of over 300 points down to down to sort of 240. So about an extra 60 points less each week as far as the movement's concerned. So what we saw, and coming back to a daily chart, it takes footprints off. So what we saw is the market moving sideways. I'm trying to remember when we caught up. So it would have been that would have been Tuesday night there. So we were sort of looking more breaking to the upside potentially rather than the downside. We saw an inside bar, a little red bar, and then we saw the Dow get hammered by a couple of hundred. So the market's actually fallen out to the downside. So it's broken out of that little sideways movement. We've now got another down day, and we've had a little update today. So that's, I guess, an interesting little pattern. If I take a look at what the market's actually giving me, it's actually signaling an ABC short. There's a lot of merit in that trade, I fancy, considering that you've got a big gap from A to B. If you're form reading the point C bar, it's a 40% retracement. Form reading the point C bar, you've got and obviously an open close reversal. It is holding that close. Now, what's the, I guess if I come out of my profit source and I come back to camera, one of the things we talked about last week was obviously the anniversary of David's, 20-year call for the 89 top. Now, I wasn't particularly phased. It would have been interesting if it was a top on around the 4th to the 6th or 3rd or 4th of October. Obviously, that was the weekend. We had the long weekend here as well. So the market's opened up after the long weekend. The Dow was up strong last night, over 100 points from memory, but our market really hasn't seen that follow through today. So I was expecting when I looked at that, maybe after seeing the markets push overnight in Wall Street, that maybe yesterday's market might have been the low. Now, I know we obviously still traded yesterday. Monday was a public holiday in some states, but the volumes were quite thin because New South Wales and I think, I forget which other states, but obviously a lot of the main brokering firms were obviously they're working, but a lot of people had the day off, so not huge trading volumes. The market obviously opened quite strongly, but then, yeah, the ACT was out as well. I think Queensland and Victoria were as well. I forget which states, but there was a few of us who all had a bit of a holiday. Don't have too many of them as far as I'm concerned. But all I'll say is that not Queensland. Okay, well, yeah, they've got to get out and drive the nation's economy. I'm always told by Noel that it's those Queenslanders who make the economy turn in Australia, so I'm glad all the Queenslanders went to work and remained productive. So pointing out that we should have a strong lead from Wall Street. Well, we did have a strong lead. We might have seen that move, the market a little bit more strongly today, close that gap, but we didn't get anywhere close. It stuck its nose into the gap and fallen away. So getting back into profit source and sort of talking you through what I'm seeing here is that we've got a scenario where we do actually have an ABC short. If I go and take a look at the trend on the swing chart, and this is obviously what we're going to talk about tonight, making the most amount of money off a swing chart, we've got about a 200-point range down, which is definitely expanding, 80 points up, which is obviously contracting compared to the previous upside swing. The trend is still uncertain, but if we get a lower top confirmed tomorrow, then obviously we are officially in a one-day downtrend. Now, that's been some time since we've had a one-day downtrend. It's actually sort of through August here and back through, I guess, the latter part of July. Now, the thing that we spoke about last week was an overbalance in time. So if I go back to my bar chart, one of the things that I've been watching for in this market, here we had 3 red bars. Today is an up day, okay, so it is a green bar. Obviously looking, we've got 2 down days, couple of down days here, and maybe this is the pattern we're seeing, couple of down days, an up day, couple of down days, maybe we'll then find some strength and head higher. But when we see maybe 4 in a row, being 1, 2, 3, 4, that's when this market will have overbalanced in time. So at this stage, we haven't quite got that. but we could be getting a little bit closer to that. So looking at the charts, would low of 4580 be a concern for a short trade? Absolutely. I guess, putting that in there, yep, 4574, that's going to make that pretty strong. Now, if you also argue, and that's what I was saying today, is the fact that that was, the 5th of October, that could be lining up 20-year anniversary. Now, that could be telling us that, sitting strong in the square, that's the 5th of October, 20-year anniversary. We could be looking for that sort of move, okay? So I'm not suggesting it's necessarily the best short trade ever. There'd be cases for and against, but just keeping it simple, we're going to take a look at what a swing chart's telling me. And at this stage, well, we're higher tops, lower bottoms on the daily. We're still a weekly uptrend, okay? And 205 points, well, I'll start to get, I guess, a little bit more convinced that this market wants to go, lower. If it can start doing so 250, 264, if it can do a greater amount of points movement than the last two sort of downswings, then maybe this market's got some more potential for downside. I'm more of a view that we've got a bit more up before we've got down, but that being said, I've been right, I've been wrong, so I'll keep, let's keep it to the analysis. So it's interesting, 205, 202, so that's the first range out. The first pullback that we saw off the March low was about 202 points, so we've sort of seen that same sort of magnitude in recent times. So it's interesting where we're positioned, okay? So the 2 and the 3 day charts are obviously going to give us some insight. David talks a lot about the 3 day chart when he's talking about the 1 day chart and how his super traders like to hold on the bigger picture and obviously try and trade the market. So we saw this last week. We've got a big upside swing. You could definitely argue that that's overbought compared to previous upsides, but we're really not seeing a massive sell-off in terms of the other ranges yet. So it might be time to start sharpening your pencil for the short side, but whether it is right now or not, I'm yet to be convinced, so to speak. So we have seen a lot of turns, as I mentioned to you last week, in the early part of the month. So, the 6s and 7s of the month. So the fact that we've got a low here on the 5th of October, 20-year anniversary, the challenge here is going to be, can it close that gap? But if this market's anywhere near as strong as it has been in recent times, there's every chance that it will. So always watching for pullbacks. We're only sitting on about a 37.5% pullback. The Fibonacci guys will think that's 38.2, which is, they're welcome to it. It's sitting on about 50% of that range there to there. It's sitting on about 75%. So the fact that, as you mentioned, Linda, it's sitting on, what would be a strong area in the square, there's probably some cases for that. And I still don't think we've overbalanced in time, but that's not to say that, there won't be some money to be made to the short side. But I think we've still got some, potential for some more upside if this market gets its act together, and we'll see where it takes us. Now, sitting on about 2/3, if we can get back above that 50% point, maybe we'll have some more upside potential. All right, so that's just one way, I guess, of looking at the market and keeping it simple, always thinking, what's the swing chart telling me? I guess one of our leaders is always going to be what the S&P 500 is doing. And it's obviously had a strong night last night, and we'll see whether that could be carried through to Tuesday session for them in the US time. It would also have, I guess, a short trade. No, it doesn't actually. That short trade's already been signaled. It's run down about 125%, and now it's heading back up again. So it is obviously potential for the next lower swing top, but like we have seen on the other charts, if I get my swing chart set up correctly, we do have expanding downside ranges. We're still contracting to the upside, but we've certainly done more than 23.7. That'll be another test here, just reading the swing chart. If this market can't give me more than 30 points to the upside, and if it can give me 35, 36 points to the upside, give me a higher bottom, maybe we've got some potential for some upside. But at this stage, the swing chart is pointing down. It's in a confirmed downtrend, unlike the share price index. Like the share price index, but it was confirmed a little bit earlier. The weekly swing chart, well, it's guiding us in a similar sort of way. That's the concern on this weekly swing. We've sort of seen 63 points back against what has been the predominant trend, but when you take a look at it, it's done 62.7. That number's pretty similar. So it hasn't done an outrageous range to the downside. And I guess doing our work on overbalance in time. Here goes my phone. So I apologise while somebody answers that. There we go. So what was I saying there? So looking at it, yeah, lost my train of thought. That's easily done. All right, so I was talking about, the market's obviously hasn't done an outrageous range to the downside. It's only done 3 days down. I'm really watching for when this market can give us 4 days down and overbalance in time. All right, that's going to be a real key for, I think, when we do see a major range or a major top come in on this market. And the 3 day swing chart, as David says, one of our broader indicators, is still obviously confidently in an uptrend. Obviously, we do have some contracting ranges there as well. So these are just ways that we can obviously tackle the S&P 500 market, the share price index market. That's a very, very different day to obviously what we've seen here today. So strong open, strong close. We've seen a very different reversal. I guess we can go back to the share price index and measure the volume on that day, and that might be a bit of a guide to us as to what's really going on. And you can actually see that today we did see a little bit of an increase in volume, 27,000 contracts. That's certainly been similar to this movement through here. You'd say that was weak volume. Yesterday's trade on the Monday session, obviously back to normal. If we'd seen a volume that was somewhere along the lines of, draw one on, let's say we saw a volume bar that looked something like that on today's figure, that would probably get me a lot more interested that there was some real conviction. But I'm sort of reading that volume as being pretty neutral. Obviously not a great pattern, but if we see the market kick along, I'd be a little bit cautious just taking that short trade as it's positioned at the moment. So. But we'll have to wait and see. Strong date early in the month. We've seen lots of turns on around the 4 to 7 mark, and obviously 20-year anniversary. And you'd want to see big volume as it busts through that low for you to be really convinced that the shorts were up. All right. Obviously, getting into the stuff that we're taking a look at. Obviously, the gold market is obviously one that's particularly important based upon the work of Newcrest Mining. I think we did a little bit of work on this last week. We're seeing this double top in play. This bullish range from, I just marked this out for you. If the bullish run from our major low to our major high, add it to where we are now, as you can see, we're sitting on about 100% of that move. So until we can get a strong breakout to the upside, I think we could continue to keep bashing around that 1,026 mark. We talked a little bit about how these double tops were about 540 degrees apart. So as far as time by degrees is concerned, that's obviously got some harmony to it. So about 540 degrees apart. The other thing as well is the is using the run out as far as the major run here. Find it, there we go. So picking on our price forecasting work, major bottom, major top, we're sitting on about that 50% point. So at this stage, we're coming back to flirt with that top, and we'll see whether or not it's strong enough to actually break through. So looking at last night's recovery, it was interesting that we saw a big upside move, okay, even though the US dollar went up as well. So if I quickly take a look at the US dollar, actually told you a lie, the US dollar was down last night. I kept thinking that bar. So, all right, I'll just come back to this picture here. How's that, Graham? Are we back? Seeing out if you're having any technical issues. Graham's saying that we've lost some sound. Looking okay to me here. I'll just fire up. All right. Yeah, Graham, maybe you want to try logging back in again and log out and log back in. I'm sort of not, if you're having problems, it's hard to ask. If you're having problems hearing me, just type. But if it's, yep, Debbie can hear me fine. Thanks, Debbie. That's what I was fishing for. So obviously it's yep, Blake's all good. Fantastic. Thank you. So maybe log back out and log back in again, Graham. That might solve that. All right, let me jump back into profit source. Thanks, Des. So the US dollar was down last night. Obviously, maybe that being a relatively seasonal date low there, something to consider. We did get a higher bottom confirmed on the US dollar. If I'm looking at a one-day swing chart, so we did get a higher bottom, but a little bit of resistance there. Maybe a retest coming back to that market, or to that low, I should say. So obviously we've had a series of lower tops, lower bottoms on the gold market. Really strong night. You'd have to be a brave person in my mind to be really trying to eke out any sort of long profits through here. I had been short through here. Obviously, I'm still not short. Obviously, stops have taken me out for some profit, but trying to make some money in that little area there as it runs into that top, that'll be a real critical part to this. Okay, so we have seen some lower tops on the. Oops, not a short trade. We have seen some lower tops on the oil market. Sorry, gold, the other oil market. Some lower tops. You'd expect this market, I guess. Thanks, Graham. I really would have expected this market to kick along a little bit more strongly and really get going off that first lower top. Now, it hasn't done that. Now, that's not to say that it's got to bust through this top and go higher, but I thought the turn had a little bit more merit to it. But at this stage, it's a bit of a patience game and just a wait and see. As you can see on Newcrest Mining, we did have a recent short trade that made us some dough, and we'll just wait and see what gold is going to do over the coming sessions. So 29.36. So we're now in actually an uptrend. So we've got a higher bottom, higher top pattern. So we've gone back to being what was a one-day swing chart being down to now being back up. The weekly trend is obviously up and expanding upsides, contracting on the downside. So that picture tells you that there's definitely more potential to the upside at the moment. I still think that top's pretty strong. So until it's taken out, I'll have a bet each way. And we'll just have to see what that market produces. So at this stage, it's a hard case to want to be short gold at the moment, but whether or not it's a case of automatically wanting to be long, I think I'll just sit that one out and just wait for a bit of confirmation. I think you could definitely have a view that if it does break out through those tops, I'm a little worried of a false break. All right, so maybe it does just enough to suck everybody in. I reckon there's a lot of buy orders sitting above those tops, and if we can get a little breakout, you could get a good little run, but I'd have stops tight. But I'd say maybe that first high bottom above those tops would be a place to maybe start looking for an entry. So time will tell. I don't actually have my live pricing open, so I don't actually know where it's trading at the moment. I'll actually get that up and running whilst I'm talking to you in the background. So the screen will go a little bit funny. I just want to get that up and running just so I can talk about the figures. All right, and then what we're going to do is we'll take a look at Newcrest Mining, and we'll also take a look at the Aussie dollar. All right, so let's take a quick look at Newcrest Mining. It's been very, very sideways through this whole movement here. So a couple of signal days, obviously it likes to gap around, so it obviously gaps around based upon the gold pricing. We did note that obviously last week there was an ABC short trade, and it ran down to about 125%. We then got another signal, so I wouldn't be 50% retracement. That's a nice part to be looking to get short in the market. Lower top, second lower top off a double top. And it did just enough to get you in. If you'd left your orders on, it gapped out past your limit, and it just stuck its nose back in. Didn't do a nice enough part to hit 50%. Came back yesterday, closed the gap with some strength, and obviously you would have been stopped out on a short trade today for a loss had you been short this market. Now, that's a bit of a rude signal. Generally, when I get islands on point C that are about 50%, they're generally pretty good signs that you're going the right way. But it has failed or double bottomed, you could argue, here at 50%. So I think we do need to be on red alert here for the first higher bottom out the other way, depending on what the gold market does. As I mentioned to you last week, I will interchangeably use terms gold and oil. You'll just have to roll with me. I just have, unfortunately, oil on the brain. So today's volume was obviously, considerably higher than yesterday's. Not quite the average yet, but certainly, moving the right way. So that's of note for us when just viewing purely our swing chart. So if I went and took a look at Newcrest Mining, just doing a very quick check, take a look at a one-day swing chart. So the one-day swing chart is uncertain. We do have expanding upside ranges, contracting downside ranges. The weekly chart, well, it's actually got a higher bottom and also a higher top. So higher tops, higher bottoms, we're in a confirmed uptrend. We did have expanding downside ranges. We don't yet have 722, so 166 is all we've managed to pull back at this stage. Taking a look at the 2 and the 3 day swing chart as well, because obviously they're important for us to get an idea on. So the 1 day is up, the 1 week's up. The 2 day chart, well, you've got a higher top and a higher bottom, so the 2 day swing chart's up. And if we go and take a look at our 3 day swing chart as well, we've got a higher top and a lower bottom. So just to come back and clarify where we're up to there, picking on our market of choice, which is obviously Newcrest Mining, we've got our 4 trends that we can identify using swing charts. So we've got a 1 day, 2 day, 3 day, 1 week. 3 out of the 4 are up and 1 is uncertain. So you have to argue that if you're going to be in this market purely based on swing chart work, forgetting time and price reasons at this stage, long would have to be the way that you'd be looking. Now keep in mind that gold does have some concerns breaking through those tops, and if it does, this market's got every chance of moving strongly through them. Obviously we need things like the US dollar to continue to fail, obviously for gold to push higher, but don't worry too much about that. The gold movement alone would be enough to give you a real lead as to what you should be doing with Newcrest Mining. So if you had to nail me to a wall right now and say choose whether you want to be long or short, I think you'd have to, if you're forced into taking a position, you'd have to be long Newcrest right now. But there is a little bit of obviously concern there as to where those tops sit. So that's the approach that I want to have on a week by week basis, is just to go through there to recover that information to know where we should be looking. If I jump back into profit source, we can obviously take a look at it is in a broader sideways movement, and we can pick that up by looking at a 3 day swing chart. We've seen some not bad trends through here, but really since the start of 2009, we've really seen a pretty classic sideways pattern on a sideways picture, on a 3 day picture, and it's been hard work to pull a lot of return out of that market. So I'm hoping that we're going to get a breakout one way or the other and obviously get some nice clear trends. History says that when this market trends, it trends pretty strongly, and it's obviously a nice one to be involved in. Okay, but that's sort of how we're seeing that market at the moment. Now, obviously, we did some work on Lowe's resistance cards and those sorts of things last week, some standard ranges resistance cards. I think you'd be smart to know where the position of the market was in terms of that sort of range. So we're sitting on the 62.5% point there. And the other thing as well is that we could do the same work by looking at this most recent run and taking a look at where we're sitting there. So we've actually climbed back above that 50%, and obviously that's important. I'm just going to clean up a lot of these little retracement levels. So that's approximately where we are. We've got this little gap down here, which the market hasn't even got close to testing. So if I sort of put a little bubble in there, that's a gap. So one of the things that David would be getting us to take a look at here would be also not just, and something we'll look at later, is a trend in time. So if you're expecting this market to have some sort of low around about here, we pick on that as being our lowest point. Sure of that. Low of that day there is 31.58, 31.53 I should say. So I'd be very keen to note how many days up and how many days down in terms of whether or not we've got a setup of some note. So if I go and get just a time extension tool, you know, we've got 27 days up. And just measuring our run back down. Well, 15. Is anyone happy you're going to call that about 50%? Well, don't hit the help menu, so we're going to call that 15 days. Now, I reckon if 15 is a percentage of 27, I've got a spreadsheet open here, so I'm going to do some numbers. Hang on 2 seconds, I'm just turning off this. So 15 is a percentage of 27. It's about 56%. So 56% down in terms of price now, sorry, down in time. Now, if I get that exact range, which I'm going to do now, so that A to B range is 722. So 722 is the up range, and getting the down range. $4.16. I do the percentages of the two. I like how the numbers always tend to add up. I'm just going to jump out of here, jump out of there, and come back and talk to you guys. So what I've done there is obviously I'm always looking for, and I'm doing some work on this on the US dollar at the moment, and that's that article that I wrote, is that I always look for a run. Obviously, perfect market harmony is A to B is $10 and 10 days, B to C is $5 and 5 days, but it doesn't always work like that. It'd be great if it was, but as long as time and price balance, it may be 50%, it may be 62.5%. They're the numbers that we're trained to look for, but I'm quite happy with any number as long as the two balance together. So if I just put up a whiteboard, what I've just done some work on there is, there we go. So we've got a run up from A to B, and it's come back from A to B was 27 days up and 722, and B to C was X amount of period back. So in terms of price, I'll just get the exact numbers. In terms of time, sorry, we've retraced 55, sorry for the drawing, 55.6%. That's in time. And in price, we've actually retraced 57.6%. Now, I don't know about you, but I know 50% would be perfect, but they're pretty close to me as far as time and price relationships are concerned. So whilst we have certain numbers that we're trained to look for, one of the things I'd always get you to look at is you measure A to B in terms of time, A to B in terms of price, B to C in terms of time, B to C in terms of price, and what you're looking for is do the numbers even out. So even if it's, it's pretty balanced, as Elizabeth said, I'm happy to call that pretty much on the money. So sure, you're not going to give it 20% tolerance, but time and price in my mind have actually, come together to give us what could be a pretty strong area to watch. Okay, so that's just something extra to take a look at. Is that we're taught to see certain numbers, but also looking for, just a straight one-for-one match. Time and price being equal is something that I'm always keen to take a look at. So I'll jump back into profit source, and I'll turn off that camera. I forgot to pause our camera. There we go. So if I jump back into profit source, 27 days up, 15 days down, sitting on 50%. We're pretty much balanced out in terms of time and price. What we'd be waiting for here is a way to obviously trade it and make some money out the other side. So looking at it, we're not going to get a simple AB, well, we could, sorry, get a simple ABC point. I've just pushed the symbol tree button, so it's obviously taking a couple of seconds to load. There we go. So if that is our low point, well, we've seen the market close that gap. We've actually made a little gap here today. I think the first high swing bottom would be certainly what happens. Okay, so Graham's asked me what happens if it's trading days. Good question. We can take a look at the same relationship in terms of trading days. I think we'll probably get a similar sort of outcome, but I'll do the math for you anyway, just to make sure that we're being consistent. As I said, I always tend to have a preference to work in calendar days, but that being said, I'm also open to trading bars as well. So on the way up, it's 19. And on the way down, is 11. If I can spell, yep, trading days. All right, so what I'm going to do is quickly work out what 11 as a percentage of 19 is. It's 57.8%, Graham. So compared to price at 55.6, as a trading day, as a calendar day relationship, it's 57.6%, and as a trading day relationship, it's 57.8. So are we happy? A valid point that Graham's raised. Are we happy that calendar day and the trading day, for all intents and purposes, have actually given us the same outcome? They're pretty much balanced in terms of time and price, and it's worthwhile to take a look at both. So what I'll probably do, fantastic, Graham's happy. What I might do is I might actually save that chart. And do a file share. Wrong one. Oops, wrong button. Do a new file share. And I'll just give you that chart. So we've got something to play with. I just grabbed that file. Annie, you said, I thought price was 57.6 and time. All right, I've got, sorry, you are right. I've got price as being 57.6 and time as being 55.6. Sorry, you are right. So when I use trading bars, it actually, the trading bar, yeah, Annie's right. I've got the numbers mixed up. When you use trading bars, you actually get a very, very close scenario. You got 57.6% in price, 57.8% in trading bars. So what you've got there is you've got basically two numbers lining up. So what we're yet to investigate is whether or not trading bars work better or calendar bars work better on Newcrest mining. But we'll spend some time working that out. We'll have a chat about that tonight. But that's something that's all in front of us. Okay, so these are just observations I'm making at the moment. I'm trying to build a case in my head, and because I haven't got all the answers, I guess I'm just sort of mulling them over as we're working on them and talking about them, and hopefully we'll come up with the answers together. So I guess all I'm looking at that is that gives me some confidence that this market is a market that responds to the style of analysis that we'd like to apply, which is essentially looking for time and price relationships to repeat in percentages, proportions, and extensions and retracements, and that's pretty much what we do as Gann traders. So hopefully you've been able to grab that file. That's just a GIF file that you guys can have a wee look at, and obviously have it on your computer so you can recreate that or do whatever you'd like to do with that. I'll just bring that down. If you've got any problems, let me know, and I'll bring that back up later. All right, so we've got the Aussie dollar to do, and then some stuff I want to take you through on swing trading. So let me bring up my profit source again. We'll do the Aussie dollar. It seems to be the forgotten cousin. So I best make sure we do plenty of work on that. So let me just bring up the Aussie dollar. So at this stage, as I said, if I had to force you to take a trade in this market, obviously you'd be looking for it to be most likely to the long side, and we'd be wanting to see volume confirming on the way up. Could you have taken, I guess if we're looking at time and price relationships, could you have maybe taken that as along the openness? All right, so if I go back in here and looking at a way to trade that, that's pretty clear along the openness signal there. Not sure what volume was telling us. It was reduced, but had you taken, along the openness position there, tucked your stops in behind that swing bottom, at this stage you're looking at what is a pretty nice reward to risk ratio. So I just use the reward to risk tool or risk to reward tool. So let's say we got in somewhere, even if it was up there, stops in behind. Based upon today's close, you're already at about a 2-to-1 reward to risk ratio. So, certainly not a bad place to be in the market. But that's assuming that's a pretty aggressive entry and you had lots of reasons for that October bottom, which I'm not suggesting is the case. But had you traded out of it, you would have already seen some good return on that. While I'm thinking about it, I just want to go in and check where the gold market's trading. So there you go. Gold is at 1,020.70 according to my data. So if I go and just quickly take a look at the gold chart. So we're trading around that top. So we're at about 1,020.70. So it's actually higher than yesterday's close. So that's moving higher. All right. So the Aussie dollar is the forgotten market. 1 second. All right. So the Aussie dollar as it's pushing higher. So just checking our swing chart, obviously we had a strong movement up last night in line with the fact that the US dollar fell away. Our currency is really sort of moving, inversely to what the US dollar is doing. Taking a look at the swing chart, we've still got a higher top, lower bottom, so we've got expanding downside ranges, nearly got neutral upside ranges. The bigger picture is obviously pointing to the upside, so we're uncertain on the daily chart. We're definitely up on the weekly chart. If I go back to the 2- and 3-day swing charts, be able to get some trend determination from them. So the 2-day chart's actually uncertain, higher tops, lower bottoms, and the 3-day chart is obviously uptrend as well. So the broader time frames, the 3-day and the weekly are pointing up, and the 1-day and the 2-day are still uncertain, and that was similar to where we were last week. So we don't really have any clear signals to be trading here. There hasn't been any ABC longs or shorts since the early part. It did actually get up to about 75%. The current top, though, if you're form reading that top, obviously it's a strong outside reversal day, so that'll help the dollar absolutely. So the interest rates did go up today. So obviously using some of that intermarket stuff. I must admit I missed the announcement. I've been a little bit busy today on some other things. But obviously, thanks for letting me know that, Elizabeth, that the interest rates are heading higher. Not surprising, I don't think. And just doing some of that work that we talked about with our Gann retracement, sort of getting a sense of where we're heading. We're getting close to that 75% point. So all of those things, I guess, are helping us build a case for trading the Aussie dollar, as well as Newcrest mining. We've seen some strong trends. I guess looking at the recent sort of move, we're sort of between that 85 to 88 cent range. We've still got to do some contract specs and those sorts of things, which we'll probably do next week on the Aussie dollar. Yeah. Oh, thanks, Elizabeth. 25 basis points. Fantastic. All right. So a little bit of an overview on what our markets are doing. So let me catch up with some of the other things I wanted to share with you. PowerPoint presentation again. So yeah, so obviously using interest rates as a guide. New high today on the Aussie dollar. Yep. Let me go and check where it's trading. I've got to just go and plug the numbers in for that one. I'm just taking a look at that at the moment. So we are at fresh high. So if I just go and look at the intraday chart here, I know you can't see what I'm looking at, but I'm just trying to get an update for myself. Yeah, so we're trading now at about a high of 88.27. So if we look at our chart, 88.27, big top back on the high is 88.08. So yeah, so we've broken out through that high there. So absolutely, things are looking up and up on the Aussie dollar. All right, let me get back to my PowerPoint presentation. So what I wanted to focus on tonight was building a view around what the swing charts are telling us in our markets, and obviously what we can take away from it. So the most achievable way to turn some analysis into dollars is through the use of a swing chart, and I guess that's what David's really stressing to us in chapter 2, and really what we would hope that by this stage you've already done, a serious amount of work in the understanding of swing charts. But it does seem to be something, and David says it actually in the DVDs, that people tend to jump over to get to some of the higher level material, and maybe sort of suggest that they'll play catch up with that. And whilst you can do that, it's certainly it's always going to be catch up until you get in and really sort of swing trade the market. We call it swing trading mastery, and it's a fantastic way to do well out of the market. Obviously, it's outlined in all of David's courses, so everything from the starter pack, the #1 trading plan, the ultimate Gann course, and even the master forecasting course, all have chapters and work on swing trading. So if you think swing trading is just for starter pack traders, forget it. David says with that alone and some basic time frame material, double tops, double bottoms, some form reading, pattern recognition, you can do well out of the market. But obviously, it's a really defined skill that you've got to work at. You're not going to become a good swing trader by hoping you're going to become a good swing trader. You do it by doing and getting in and understanding your market. I thought I'd put this in as well as the commodities course is another area that where Gann talks about the rules for swing chart construction. So that's chapter 3, which is something to keep an eye on. Now, one of the points that David really hammers out is you've got to rely on risk management for when you're going to be wrong, because that certainly does happen, by always using stops. Okay, so even with a swing chart, even with all the best time and price reasons to be trading, you've got to trade with a stop loss. Simple as that. If you need me to, I guess, tell you that at this stage, you probably haven't taken a trade just yet, or you haven't done it to the extent whereby the market's kicked you out and given you a bloody nose over it. So everything we're going to do is with a framework to mitigate or manage risk as best as we can. And David obviously talks about understanding the risk and reward characteristics of your market. So he often talks about, yeah, look, it's safe to place your stop back here behind that top or that bottom, and it's only a $1,000 risk he talks about. And he sort of jokes, he said, oh, he said, I raised my eyes, he said, because some of you think that's a lot of money, and with the people that were in the room. And, he said, but when you're making $10,000 out of the move, he said $1,000 risk is nothing. So always have a view. What's my market capable of? What's the average swing range that I can take away? And what's the capacity of this market to give me a return? And what risk do I have to take on board to get that? So placing stops behind swing tops and swing bottoms, David says, is probably the safest place. Now, is it the perfect place? Absolutely not. Plenty of us have seen us being stopped out underneath swing bottoms by 1 cent, 2 cents. So what I'd say is that we're going to start to build some rules with a framework that says, okay, where can we tuck out, if we've got time and price reasons for a trade, even a legitimate ABC trade, maybe running stops at C-1 or C+1 may not be the way that we'll manage it. Maybe we should look for better ways. And what we'll do is we'll see how often point C gets false broken before it takes off the other way. And I guess swing charts have many different time frames. Okay, so David actually talks about bringing into play things like the 4-minute swing chart to be able to really keep your risk nice and small. So it's interesting that here he is talking what were the video series tapes that became the ultimate Gann course early on in for his traders. He is talking about using intraday entries to manage that risk. So you need to start to become comfortable with that. It's not always needed, but it is something nice to have in the toolbox when you need it. Obviously, he talks a lot about the everyday swings, which is the 1-day swing chart and the 3-day swing charts. Now, keep in mind the 2-day swing chart and the weekly swing chart are also very important for us as well. All right, so quickly to cover off the benefits of our swing chart. So going back to what we like about swing charts, it removes the noise, makes measuring ranges very simple, identifies support and resistance, and makes trend determination much easier. So all of those things are built in around why we use swing charts. I know you know that, but it's important to know the philosophy, as I've always spoken to people about. It's good to know why we use a particular tool, how to use a particular tool, but why we should use it, under what circumstances. I think all of those things are also very, very important for us going forward. All right, so I like this quote from the commodities course. This is from Gann. He said, you'll always make the most profit from following the main trend and playing the long swing. You can never make much money jumping in and out of the markets trying to scalp it. If you will put in time and study to determine the main trend and then follow it the length of time that it should run and not get out until you get a definite indication of a change in trend, you'll make big profits. Now, it's much better to make 3 to 4 trades each year and make large profits than it is to try and make 100 to 200 trades a year and be wrong half the time and finally wind up with a net loss. Now, obviously, that's cherry picking from Gann's work, because I can find your quotes where he says, pull from the shorter moves and pull from the longer moves. Once again, it's really coming down to your philosophy and personality. David sort of said you could make lots of money trading off a 60-minute bar chart or a 4-minute bar chart, but he said, look, you could make a whole lot more off a bigger chart. By this stage of your development, hopefully you're starting to see it's more about being in the market for a bigger run versus sort of trading every sort of small swing, trying to hold in for the bigger swings, calculating good time and price turns, and getting the confidence to hang in around them. And that's where I guess the big runs are made, and obviously they're the bigger profits that we're all chasing. But that goes between the trade management aspect as well as analysing where that's good places to kick off from. So some more from the commodities course. Obviously, Gann said, let the rule be to go with the main trend and to never buck it. Now, if I go back a slide there, I guess what I find interesting is he says, don't get out until you have a definite indication of a change in trend. Obviously, he talks about that in a lot of areas, but there's no one hard and fast rule. So for some people, a definite indication of a change in trend is enough to, it could just be an outside, reversal day, for example, and that might get you out of the trade. But other people might be able to tolerate a, 2 or 3 days against them. David's 2-day pullback rule in the context of a major trend. Those things, I guess, are pretty interesting they're a little bit different for everybody, I guess is what I'm trying to say. So Gann says, go with the main trend. If you don't know what the trend is, don't get into the market. Pretty simple. Obviously, you know, it goes without saying, it's one of those cliches, but it is very, very true. I thought I'd just put a list up here out of the Ultimate Gann course of some swing trading methods. Now, I don't have an example for each and every one of these, and nor would I bore you to tears by taking you through that. But on the market of Newcrest and the Aussie dollar, I guess what I want to really start to focus on is what does ABC swing trading mean to that market? If we get into some advanced swing trading, how profitable is the first high bottom, first lower top? Do outside continuation trades produce? Do breaking of equal bar chart tops produce? Overbalancing price trades, ignoring outside days, outside reversal days, openers and closers rule. I can tell you that I think the openers rule is going to have a big part to play in trading Newcrest mining. I don't know how much of a play it will have on the Aussie dollar because it's obviously a market that trades predominantly 24 hours. So to show you, I guess, a highlight of that, I'll jump into profit source. And I'll just bring up a chart on both those markets, and I'll do it in split screen because I guess that's probably not a bad way to highlight what we're talking about. Get that chart up for you. All right, so let me get a split screen up. If I put the Aussie dollar on top, and then I can put the day-only session of the Aussie dollar. All right, so obviously it's split into daytime, a 24-hour session, and the day-only session. As you can see, the day-only session of the Aussie dollar seems to be pretty thinly traded. Obviously, those figures look a little bit scary as far as that's concerned. So it's certainly going to be a far more beneficial take on us trading the 24-hour session. Now, if I just drag that chart down. Looking around there, look, there's a few places where I'm seeing that it sort of opens on its low and trades up, and opens on its high and trades down. So that being said, we might want to use the openers rule, but I think it's going to probably be less of a take than it would be if I bring up, say, Newcrest Mining down the bottom, because of the nature of it being a stock that tracks things like gold, and it doesn't trade 24 hours a day. You can see here, opening on its high, closing on its low. I'm just picking certain days, opening on its high, closing on its low. I know they're against the trend, but on a pretty regular basis, it will open low and trade higher, open low, trade higher. So I think that's something we've got to be prepared to accept, that we're going to use the openers rule and potentially the closers rule so much more significantly in, say, the Newcrest mining market as opposed to the Aussie dollar market. All right, so let's keep moving through our list. All right, so we've got here, you know, trading close time frames with swing charts. So maybe moving in and thinking about knowing what an intraday chart can do for you, multi-day swing charts, etc. They're all the methods that I guess I'm going to remind you of to get us focused. So what I was going to do at this stage, as I jump out of there, is to bring up two different things, and I'll just bring up the camera to talk. One of the things I asked you to do is go back and take a look at the last, say, 12 to 24 months of ABC trades, not only on Newcrest Mining, but also on the Aussie dollar. Now, obviously, some of you got onto the discussion boards and posted your results. So for the benefit of the others, what I might do is actually just jump into that now and take you through what's been written there. And then I'm going to share some of the results that I've put together. But I'm going to be, I guess, clever to tell you that what I've done is I've only done a couple of years, but I've done a couple of years sort of nearly 10 years ago. Just to give you, without giving you the current market stuff, just to give you an idea of what you're trying to achieve when you go through that exercise. So it's actually not so much about the answer yet, but more about the process. So what I want to do is jump into the Safety in the Market website, which I'll do that way. All right, I'm just going to pause that camera. Okay, so you can still hear me, which is great. I'm going to jump in here. I'm just going to log back in because I logged out earlier. I'm going to go to our discussion forum. I'm going to go to the Tuesday night discussion, and obviously Linda had given us some work on Newcrest Mining. So Linda said, yep, you came up with 21 long trades, 4 successful, 10 break even, or a small profit, and 7 are unsuccessful, so 26 short trades. Also did some work on the 2-day swing chart, on the 3-day swing chart, on the weekly swing chart, so that's fantastic work. Annie went in and did some work, talking about here of the 32 ABCs, 8 were profitable, 18 were losers, and 6 were break even. So obviously several overnight gaps which expanded the losses considerably. And so you said there, obviously putting the market into a channel that might have helped us. So at this stage, you know, we're sort of using some basic work here, overbalancing price, limits of 33%, and also using the weekly trend filter. So that was obviously some of the work that Linda had done, and that's fantastic. Thank you for doing that. Obviously, the same thing was done with the Aussie dollar. So Linda had done some work on there, and obviously taking a look at those results. You know, on straight away, just looking at the basics of it, you know, maybe the percentages weren't so fantastic. So, you know, Des went in and did some work as well. Said it was an interesting exercise, and I'm glad you did it. So you compiled an Excel spreadsheet, which is fantastic. Just sort of scanning through there. I'm just trying to pick up what was written there. Okay, so there's been a good discussion there. So let me just pop out of here because I'll stop sharing. There we go. So Blake said, I asked to look at timeframes for both. Yep, and you looked at 122 and 61, both in calendar days and degrees. Okay, we'll get to some timeframe stuff in just a second. So yeah, was that for Newcrest or for the Aussie dollar, Blake? Just if you can jot that down. NCM, yep, fantastic. So yeah, that was something that I've picked up on that market as well. It does tend to work quite well within the triangle. We'll do some work on that tonight. So what I wanted to share with you is some of the extra work that I've done. And I'm going to put this together completely, and then I'll send it out to everybody when it's completely done. But it's not finished just yet, and I've left it unfinished for a reason, because I want to see what you guys can come up with. All right. Yeah, sure, we can do that, Annie. I'll do that in just a second. All right. That's not the one I'm after. All right, so just let me got a couple of things open here, so I just want to all right, now this should work. All right, hopefully that's coming up. All right. For some reason it's not. I don't know why. So I'm tracking on my other machine here, and I can see that all I'm getting is a blank is the crosshatches. Can you guys confirm that that's what you're seeing? You're not actually seeing a spreadsheet that has colours and lots of fun things on it? Yeah, okay, no problem. I thought as much. All right, so let me try one more time. Yep, you're seeing crosses, fantastic. All right, there we go. Let's try that one. There we go. If I click on the right screen, you never know what will happen. Okay, so yeah, I just clicked on the right thing. That'll always help us. So what I've gone and done is I've actually listed from the 98 bear market low. So I went back and, sorry to do this, I'll jump out of here really quickly. I'll show you from profit source. I went and actually picked on where I thought would be a better place to run some calculations from. I actually asked you to do the last 12 to 18 months, which is, if you picked on the last 12 to 18 months, you're going to capture an environment that's obviously through there. You could expect 2009 to give you some pretty average results as far as ABC trading is concerned, only because that's been pretty sideways. One would have hoped that through the start of 2008 in particular, you would have had some decent short trades, okay? But if you got set in the right spots, if you can have a look, the ABC trades weren't picking up the big runs. They were picking up quite late as far as that's concerned. So that was always going to be a little bit of a challenge trading through there. But what I've got for you is I actually want to show you some stuff through that movement area tonight that actually would have made that area really easy to trade. But what I went and did is I said, all right, well, let's go back to where this market really kicked off from. So I actually picked on the area here, which was the December 1997 low. And that's really where this bull market commenced from. So this is where we're seeing Newcrest at about $1.20, okay? So I've sort of picked on that area and started my work on ABC trading out of that low and whether or not we had any harmony. So I've only sort of covered off this sort of section of the market. It's actually only 2 years that I'm going to share with you tonight. But then what I'll do is I'll go and do the rest of the work and give that tour the next time that we meet. But I just wanted to show you the sort of work that I'm trying to achieve when I'm putting this stuff together. Now, while we're on Newcrest mining, what I wanted to do was to go and confirm for Annie, because she did ask the question, the all-time low. Now, we did have a problem on when I did a data on demand, and I found that the price has changed. I've actually been back to our data people and also to Newcrest mining, and so for our benefits, we're actually going to call the 3rd of December 1997 at $1.13 the all-time low. So the all-time low is $1.13, and we're going to put that on the 3rd of December 1997 as the all-time low. So we can clear that up. That has been confirmed with the data guys and all the other sources I can find. What had actually happened was that Newcrest had obviously undergone some sort of capital reconstruction, and I hadn't actually reloaded all the data back to the start. So that's the all-time low that we're going to deal with. So let me bring back up that other document I had. So what I went through and did is I didn't go to the detail of working out the profit and loss of each individual trade, and that would be something that you would make sense in doing. Now, I wanted to get a broader benchmark than, say, the last 18 months. I just wanted to see what the market did as far as ABC trades were concerned. So I've gone through and I've put in here, and I'll share this spreadsheet once it's complete. I went through and I picked on all of the longs and short trades. I didn't take trades against the weekly trend. I took trades to 33%, overbalancing price trades, the whole lot. And I started to go through and actually document what the trade direction was, the profit on the currency stock and stock index, and all I put in here is that and the ones I've marked in yellow are the ones that were the most profitable strategy. So in this particular case, the stock index, well, I fancy it moved past 100%, for example, where the currency guys might have got out, the stock guys might have got out at 75%. But in most cases, the most profitable strategy is the one that's marked in yellow. Obviously, the ones where you have loss, 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 that's when you stopped out at your initial stop of C+1, C-1. In this case, you've got currency and stock guys getting a break even. You've got a stock index people getting a profitable trade. Oh, Blake, the spreadsheet's hardly awesome. It's basic stuff. If you've done a class with me, you know that I'm an Excel useless. All I try and do is go in and do the work. Now, it's not automated. I actually have to calculate how many longs and how many shorts, but I just like to color code things. So what I want to do is I'm going to jump out of here, come back to the camera for just... Rest assured, I'm going to share the results with you, and we're all going to have a chat about them. At this stage, what I want to make clear to you is that I'm going to take you through what I've done maybe over the last 12 months and just fill in the spreadsheet. I'm going to do the whole market from 98 to where we are today. But it's important that you can look at data, and you can have all the data in the world, and there's some software packages that could even automate much of this for you. I think still doing it by hand is really critical. What I'm trying to learn is I'm trying to learn the personality of this stock. So at this stage, the actual result is really not of that much interest to me. The process is really what's the important thing. So what I've done is I've said, okay, measure all the trades based on my criteria. Now you need to define that criteria because that will mean that, like Linda and some of the other guys found, some trades will be included, some trade will be excluded. What I'm really trying to do at this stage, though, is look at all the vanilla ABCs. I have yet to apply any filters to them. So I'm talking about, I haven't looked at is A to B expanding, B to C contracting. I'm trying to get a guide as to whether this market is a Gann friendly market, if it's an ABC friendly market. There's one other very important thing that I want to get you guys to help me work out, or what also could we learn from this information. So I'm going to drag the chat window out because I want to have a bit of a chat about this. What would you learn by looking at a sequence of trades, ABC trades in the market? You'll learn simple things like profit and loss, all right? So, or win-loss ratio. What you really need to understand in this market is what your average profit is and what your average loss is. And if I'm that committed, I'll do that for you. But what I want to point out to you is that what could you learn from this market over and above just how many winners and how many losers and what strategy works best, be it stock, index or currency. You guys throw some other things out that we might learn by looking at this data. There's a couple of really important things that I want you to hopefully pick up. And if you don't pick them up, I'll give them to you anyway. But I just want to push you guys to have a bit of a think about it. Probably more to do with the psychology side, less to do with the bit of money management thrown in there as well. So I'll give you the fact that there's win-loss ratios geared in one way or the other. That's great. Risk and reward ratios we could calculate. Is the stock, currency or index the most profitable? There's one very important thing, though, that most people don't realise until they actually start trading. That is that there's a certain sequence, you could say, to a market, and knowing that sequence is important. So what could we learn from this data? Now, it could be, obviously, it's going to change when we take a look at the current market, but what could we learn from this data? Fantastic, Darren. That's exactly what I was after. The number of winning trades and the number of losing trades in a row. So it's interesting that when you look at, frequency of small losses being offset by large profits, absolutely. And that's what I found. Yeah, the rhythm, Des, absolutely. I can tell you in this market up until, and I'll show you the data in a second, but up until I got towards the end of the testing, you never actually took more than 2 losing trades in a row. And that's pretty good to know that the normal sequence of losses is only about 2 losing trades in a row. Do you know some markets can give you a normal sequence of losses being 3 or 4 trades in a row, 5 trades in a row, and you still make really good money out of it. But knowing that stuff gives you confidence to hang into those trades and know that it's just about to turn. It's just around the corner. You know that a normal sequence of losses is about 2 or 3 in a row. If you've just seen 2 or 3 ABC trades lose, and you know statistically that you get the longest sequence of losses is probably 2 to 3, 4 trades, you know you're getting a lot closer to maybe that next winning trade. And that gives you confidence because you can then get in and hit it. I'll put it to you guys. Has anyone ever maybe been in a market, taken a couple of losses in a row, been in a sequence of losses, another setup comes along, and you don't take that setup because your confidence is a bit knocked around, and what does that trade go on and do? That one ends up being the winning trade of the year, all right? And the reason that you didn't take it was because you didn't know the sequence. You didn't know its rhythm, as Des puts it, and I think that's a really important discussion. So what I'm going to do is jump back in and grab that data out for you, show you some of the things that I've learned about this market. Keeping in mind, though, that it's not complete, and if, you know, I'll share it with you guys when it is, but I'd really like you guys to go and maybe do some of this work as well. All right, so let me just bring that back up. All right, so I've gone through and I've picked out the trades, and what I found was that obviously, you know, back in the early stages in '98, well, we did have a lot of long trades, but more short trades. Now, I picked on which style was obviously going to be the most profitable. I haven't actually tallied those up yet. If I go through, one of the other things actually that I want to show you is I started to note whether or not there were certain dates to look at. And it was interesting that some of our seasonal dates started to produce some changes in trend for us. Okay, there's a late March season, 16th to the 29th. They're both on either side of the seasonal dates, 17th to the 24th. These are things I was starting to pick up. There was a losing trade there on the 23rd on December. Well, it was because we were trading against the seasonal date. That one there is also the case. We traded against the seasonal date. So I was picking on these dates as well just to see if there you go, there's another seasonal date coming up. So I wanted to work out along the way whether the seasonal dates were of importance. Now, I made a few notes along the way saying, well, that one failed at 50%. That one was an overbought range. So I was highlighting the fact that that trade there, which was number 48 in that cell, we probably wouldn't have taken using an overbought, oversold range or filter. So that was probably one we could avoid losing or taking. Now, I put in here that the 3 contract rule would have been good use in that regard. I put in here that that trade was against a double top. So you probably would have avoided taking that trade as well because there was a double top in play. There was another one where a double top was in play. So here we were trying to go long against a double top, and here we were trying to go short against what was a double bottom. All right, so here I've got some notes along the way that's just guiding me. Now, once I get this all completely populated, and I guess I'll show you through here. Sorry if I keep scrolling up and down, it's just to make sure you're not dyslexic. As you can see, we've got a sequence of a loss, a loss, a loss, loss, a loss, a loss, one loss, and then we're back into profits. Here we got a stage of 2 losses in a row, okay, before we've got it back into 2 profits. But we come off profit, 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 loss, depending on what strategy, break even, profit, loss, loss. Now, all of these obviously sequences are just programming us to an idea. Now, here you've got 3 losing trades in a row. So, no, they're not. Let me come, Debbie. I want to ask you the question. What do you mean by pre-computed scans? So they're not found just running down the left-hand side of the screen. No, in that pre-computed window. I've actually gone through and put highlights on my chart, and I've actually put the footprints mode, and I'll show you how I've done it. And then I've just stepped through each and every time, and I've updated that chart accordingly. I'll actually show you how I've done it. So visually, it'll probably make more sense. So rather than trying to explain it, I'll talk you through it then. All right. So let's talk about the results to date. Sorry, before we do that, I'll get down to this bit here. The market got really sideways in June of 2001, and through to the November seasonal date, we had 1, 2, 3, 4, 5, 6, about 6 or 7 losing trades in a row. This one was a problem because it actually false broke C+1 or C+1, and then went to 225%. So that one would have just broken your heart getting stopped out about that. That's not a great run, and so obviously the market was telling you something through there based upon a swing chart. So I'll take you through that market in just a second. You'll see what I mean. But even including all of those results for the first 2 years, from 98 through to the end of, 98, 99. So from the start of 98 to the end of 2001, so that's actually 3 years, we saw about a 61% profit on the long side and a 61% win-loss ratio on the long side and a 52% win-loss ratio on the short side. Now, obviously, that's without filtering any of those trades. That's just vanilla ABCs, and many of them would have gone on to at least sort of 75 or 100%. So I can tell you that with that sort of win-loss ratio, any of these strategies, currency, stock, or stock index, should have seen you walk away with probably what would have been a relatively good profit. Now, I haven't tallied up just yet which of the currency, stock, or stock index strategies are working best, but if I just move down that list, you can see where the majority of the profits have come from. They've come from a currency and a stock index. There's been obviously some profits to be made using the stock style, but the major profits, the one that made the most, is obviously currency or stock index. So let me come back and I'll explain what I've concluded. The thing that I wanted to do from my conclusions there was to say, okay, well, based upon that, would it be worthwhile, not maybe so much doing a 3-contract system, but for every time I trade an ABC, why don't I split my position in 2 and run half of my position currency style and run half of my position stock index style? And that's going to enable me to get the best of both worlds on my half and half positions, okay? So it's kind of like a hybrid 3-contract rule. So how did I see that that might be worthwhile? Well, I had to break it out and say, well, what's 2 strategies out of the 3 are giving me the best result? And I picked those 2 and I said, well, why don't I run half? If I took 1,000 CFDs every time I traded, why don't I run 500 stock index style and run 500 currency style? And that's going to give me, the best of both worlds. Now, I could obviously optimize it to the nth degree. One's going to produce a better result than others. You might say overall currency is produced, but that's only going to be through a certain block in the market. So what I might say is that always trying to cover bases is it might be worthwhile running half a position one way, half a position the other way. So I'm already learning a little bit about the characteristics of the market just by doing that system test. So what I'm going to do is I want to show you how I've done that, just obviously so you can put that together. How long did I take to do the analysis? You don't want to know. It took me, for that, it probably took me about an hour and a bit. Okay, but I'm pretty quick. It would take you guys considerably longer. Now, I eyeball a lot of things, and it's probably the only errors it would be in that spreadsheet would be whether or not, not whether it was a profitable trade or a losing trade. The only errors in that would be whether or not, say, index or currency made the most money. Because I've eyeballed it, I didn't calculate 1/3 of the average range for every single trade and apply it. To do that would obviously take an extreme amount of time. Very worthwhile, but for the purpose of this exercise, I just wanted to get a feeling, and so therefore I did that probably in about an hour and a bit. But the whole market would take probably the best part of a day to do that manually, or probably half a day, I should say. And when I do that, I'll be happy to share that with you. All right, so let me jump into Profit Source, and I'll show you how I put that work together. So what I wanted to do is bring you up to speed with the current market. So let me just open up a new chart, full stop. So if I said we could start this in 2009, all right, what I'll do is I'll just do a couple just to give you a feel, because I'm looking at the time already, and it's my adventurous case of what I can discuss in a relative period of time. I don't want to make every week 3 hours. I'm putting a weekly swing chart over the daily just to give me a filter. So at the moment I've got high tops and high bottoms, so I'm not going to take short trades in that environment. I've got a long trade, I did have a long trade signal there. Obviously we had more down days, it wasn't filled. I've now got a short trade, but that would be against, but higher tops and higher bottoms, so I'm not going to take that short trade, so that would not make it into my spreadsheet, right? Because obviously I'm going against a weekly trend, which was good because it actually would have got us in and cost us some money before it fell away. Definitely we don't want to be short this market at the moment, so we've got another short signal. So I've now got a long trade that's come along, little gap from A to B, 40%. We couldn't take that trade because we couldn't get in within limits, but you could now argue, well, had I took that trade, could I have maybe used a long the openers? Well, it's open past 50%. Did it go on to make money? Well, it got back down the next day and would have stopped us out. So good reason to not be in that trade. Then you find yourself back up there. So it's jumping around everywhere. So that would have been a bit rude to go long the openers there, only to be stopped out the next day. So because it wasn't a legitimate ABC trade, it wouldn't have made it into the spreadsheet. So let's just find one trade. As you can see, my weekly swing chart now has got a lower top, higher bottom. So now I'm open to take long and short trades. Now we've got a confirmed uptrend, so we've got higher tops, higher bottoms. So now I might be looking at that trade saying, okay, can't get in within limits in that one, so there's another trade that we would have loved to have been in, but we couldn't actually jump in, didn't give us a signal, so we can't take that one either. But 2009 has been pretty easy to test. We haven't got, we're a bit bored. Oh, here we go. Okay, now we've got a losing trade. There we go. That'll give me something to put into my spreadsheet. So I'm going to quickly update this spreadsheet and I'll show you what I've done. I'll just put an extra line in. So what I'll do is I'll take a look at the point C date. The point C date was the 16th of March. There we go. Very similar, very close to our seasonal date. It was a long trade. And could I get in within limits just? Because you'd have to argue whether you did get filled there. So we are in the trade. Did it touch 50%? 32.67, the high of the day is 32.66. How rude. So we wouldn't have moved stops, and the next day we got stopped out. So what I'll put in here is I put in loss, 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 then color code that accordingly. So jumping out of profit source, just opening up that spreadsheet again. What I've done is I've recorded the date, the direction, and the fact that it lost on all three strategies being C+1. And I might put in there, narrowly missed 50% by 1 cent. That would be the note in the trade. So I'd go back and fill all of those in. As I said, we'll flesh that out more and and that would obviously change the number of long trades, the win-loss ratio, all of those sorts of things, okay? So that's something that you'll need to do for this market and find a format that suits you. The format that I use may not be the one, but I definitely want some more intelligence on what this market's capable of doing. So that's the sort of thing that I want to flesh out and give you the results, and then obviously we can have a great chat about it. But what I'd really love you to do, if you can, is to go back and do that if you haven't done so already for the last couple of years, and just get an idea of what the what strategy was working best, stock, currency, or stock index. Okay, and that would obviously give me a guide. Now, if I look at the last couple of years, got 1, 2, 3, 4, 5, 6 long trades, 7, about 6 long trades for 2009, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, about 12 short trades, okay? And then what we would have to do is go and apply some filters to that and get a sense for what this market's all about. So that's how serious you've got to get if you want to learn how to swing trade your market most appropriately. But don't be too deterred by the results of the simple ABCs. It's not a case of saying, well, shall we persevere with this market if the ABCs are no good? It's just giving me a framework to work from. Have a look at what this year's been, and you'd have to expect that it's not been a great ABC trading market when you consider that ABCs are a little bit of a lag. But if we can learn methods and ways to calculate that as a top, if we can trade the turns more effectively, so if we could happily call that a top, we're good enough to call that a bottom, we're good enough to call that a top, if we're good enough to call that a bottom, there's 3 or 4 trades, 1, 2, 3, 4, and that's more than enough to make us plenty of dough without having to worry about ABC. So that's where we're going to get to, but at this stage I just want to see what this market's producing in terms of normal ABC trades. All right, let me quickly just bring up the next part of our discussion. So what I wanted to do at this point was to bring together some basic time work, so the calendar and the trading day debate, measuring swings in terms of time as well as price, and start on some major time frames and get comfortable with balancing time. So these are just some basic ways that I want us to get into the work of time. Okay, so one thing that always we get asked a discussion about calendar days and trading days and which one works best. So I don't know which one works best in every market that I look at. You're going to have to do some work in that area and always be running a calendar day and a trading day count. Now, we're not going to do a lesson on calendar and trading days in terms of the tools that are in the software. I think most of us are comfortable with that. People ask me, though, what are the major time frames that I should start to work on when I first get started? So I'm talking about breaking down a market in terms of time. So we know to look for 60, 90, and you guys actually found 122 and 61 and those sorts of things working quite well. There's one that I'll give you straight off the bat, which is about 55 days, which is something that you might have picked up through 2008. But there's actually, to get the very big calls in the market, we've got to really get the big time frame. So I want to get us sort of focused on that and going forward with that. So a couple of ways that I guess, and the most simple way to sort of get time working for you is to expect time to just balance out. So what I want to do is just do a quick discussion, do a quick little setup on Aussie dollar and Newcrest mining in line with what we talked about here, and then throw it open to you guys for some discussion, and then maybe think about some setups on our market. So I think it's safe to say that checking on gold, I'll go and see what the gold price has done. Going to get another quote on that. Change charts. So it's at 1,024. So we're getting quite close to breaking that top. So we may not be too far away from seeing that happen. So that might even happen while we're on the session. So what I want to do is jump back into Profit Source and just give you an idea of how to set up some of these major timeframes, and also run that time swing chart that we mentioned. All right, so let me jump out of here, back into Profit Source. All right, so one of the simplest ways to get some big timeframes working is to go in, and we'll start with, why don't we start with the Aussie dollar, just to mix it up a little bit. First thing I do is generally go and set us up from a weekly or a monthly, or sorry, a quarterly, sorry, not a, let's go from a monthly, that's better. So all I'm going to do here is put the turning points filters on, and I want to go and get a 1 month. I'm sorry, I probably don't want a 1 month. One's going to be too small. 2, that's probably too many. 3, that's still too many. And 4, that's probably the perfect number that I'm after. So what I want to do is I want to start to get an idea of the time frames between all of these major tops and all of these major bottoms. So not only do I want to know these things in terms of calendar days, but I also would like to know them in terms of trading days. So simplest thing that I want to do is just talk about balancing time and expecting big time frames to come in. So most of you would know that if we were balancing time using the software, we'd pick from one major top to one major bottom. The software is going to count out days, so that ends up being about 104 days between the 08 top and the 08 low there. And all we're expecting is that time frame to continue to run out, and maybe in percentages or proportions. So there's 100%, there's 200%, there's 300%, etc. What I'm interested though is to get some of the bigger time frames, because that's going to help me with some of my long-term forecasting work. So all I do is I go and set up. I don't want too many on the chart, I guess, is the first and foremost thing. The fact that it misses that major range is a problem. So this is where you sometimes got to work these things out for yourself and just be comfortable with putting on your own ranges. I'm going to pull off that low to that high, 749 days. Probably seen Noel use these sorts of charts, and if you've done a Gann mastery with me, you'll see I do these on the markets that I'm watching. So I just put 749 days there. I'd also do the same for trading days. All right, so scenario is here that's about 512. So I do a separate one for trading days and a separate one for calendar days. So we'll just do a calendar day one first, and then you guys could go and fill in the rest, or I'll share those charts with you when we next meet. So we'll just do a calendar count. So getting all of these set up in the right spots, sometimes a bit of a challenge. All right, so let's start again. I'll just zoom right in just to see which is the highest of the two. So we've got the 1st of February 89 down to the low here. That's the 15th, and I've actually got the 14th set up there. So look, I'm not real happy about the fact that it's only 133 days. I want some bigger time frames here. I'm not trying to get stuck into the small stuff at this stage. I want to focus on big things. I just want to get a real sense of where this market is in terms of bigger numbers. So we've got 134 days. Then it steps out to our next top here. So 434. I think you get my drift. I'll go back and check all these numbers later. I haven't actually set this up yet, but I'll just keep moving. But you've got to make sure you're accurate with these numbers. Chart can get a little bit messy, so that's why I got to keep pulling off these counts as you finish up with them. That's the sort of number I'm more interested in, 1135. I'm sure that's not quite. It'll be a day either side. $11.64. I don't know about you, but if I tune that up, you've really got to say within an error of about, one that would be very, very livable, is that I could argue that we've balanced time from that bottom to that top. So when I balance time, just generally speaking, it gives me about the 7th of the 11th, and that top actually came in on exactly the early part in December. So within the space of a month, which is not startlingly accurate, but it's certainly giving me some food for thought. I'm just balancing time. I'm just expecting runs to move from one time count to the next. Once again, these aren't as accurate as I need them to be. 2nd of the 12th, so I'm a few days out there. That's a couple of days out there. It's the 27th. Did I get that right? 27th of the 8th. Yep, that's fine. So it's 633 days down. All right, I've got a few to go. So what I'm going to do is I'm going to ask you guys to do that work, okay? And we'll compare the results come next week. Now, when you get those numbers from the market, I'm just looking at the time, and I think most of you are comfortable to be able to go and do that work. We're not going to have any earth-shattering conclusions tonight. What do you think you'd do with those numbers? What would be the first thing? If I said to you, okay, you've got a list of numbers from tops to bottoms, bottoms to tops, what would be the first thing you're looking for with those numbers? This is where having an Excel spreadsheet works quite well. You just plug the numbers in, but what would you be looking for? Absolutely, Ashley's right. We're looking for ratios. We're looking for harmony. So keeping it back into Gann today, we're looking for 100% repeats, and then we'd be looking for 50%, 150% extensions, etc., etc. So if you could find some numbers that were 2/3, 3/4, halves, etc., that would get you pretty excited that you're looking in the right direction. So they're the things I'm going to get you to do, and we'll see what numbers come up. But I want big numbers to start playing with first, and then we can start to drill down in the smaller numbers. So we'd do the same thing for Newcrest mining. So I'll leave you guys to do that. But if I played around very simply with what we've got in the current market, we might be saying, oops, reset, there we go. Obviously, we're looking for some sort of top to come in. And if I was somebody who was just purely looking at timeframes moving in this market, once again, remembering this is the Aussie dollar, taking that bottom to top relationship and just extending that out. I want to get this accurate. No, I don't. I want to move it. So the top there is the 15th of July this year, 2008. And our low there is 29th of March. Gives me a relationship of 839 days. Okay, so that's giving me early November 2010. Yeah, that's a really good point. Des is with a really smart thing at this stage. So Des has said, when looking at a monthly chart for time ranges, is it worthwhile getting the actual tops and bottoms from the day chart? The answer to that is yes. Unfortunately, Profit Source will always, when looking at a weekly chart, it will always give you a day count or a monthly chart that's the end of the month or the start or the end of the week. So what it will do is it will give you the date that relates to the last trading bar in that week or the last trading bar in that month. So unfortunately, you have to set it up with your turning points on the big picture and then actually take it from the daily chart if you want to get your day counts absolutely accurate. Now, obviously, if you're doing it on a hand-drawn swing chart, that takes care of itself. But unfortunately, Profit Source is not clever enough to know that we want the date of the week that's the top as opposed to the Friday of that week or the last trading day of the month. So Des has made a really good point. You do need to set up the turning points on a daily chart and measure the ranges in time on a daily chart as well. So hopefully that makes sense. Thanks for asking that question, Des, because that's important. All right, let's finish up the little discussion I want to have on where we are right now on the Aussie dollar. So one of the things that I want to take a look at is, okay, well, 840 days. Straight away, I'd be looking for percentages of that. So that's actually going to give me about the 50% point would give me 7th of September. Well, we had a little bit of a top there, but not for long. All right. So obviously this market is pretty strong. It didn't actually turn on the 50% of that time frame. Not to say that it should. It may not be a particularly strong time frame. But if I wanted another date to be watching, well, I could also look in the early part of April and just to see what it did on the early part of February earlier this year, which it didn't give us too much. That low came in on the 2nd of February. Not much of a turn there. The next area we'd be watching somewhere there. So that's just purely expecting balancing time. But if you're a betting man and you just were confident in the time frames and this market was something that repeated on a regular basis, 1st of the 11th next year could be a date to watch. Something I'd be checking straight away with what happened 10 years ago. What happened in 2000? Did we get any sort of turn in 2000 on the? There's the 22nd of the 11th, so that's probably not quite as friendly as I'm after. And one of the things you can do here is, this is the sort of work we'll get busy on as our time increases. But the time cycle analysis tools are quite a clever one, so I can actually pin that to my date. I was doing this for some 0-date work, let's just say, and I wanted 1 calendar year. And I can just push that out. That's not too bad, is it? We saw the market make a low the late part of October. Not bad top there. There's a top there. Nothing really there, nothing really there, nothing really there, nothing really there. That's a good low. That's not a bad low. Bit of a low there. So we've certainly had some turns in that part of this particular market. So, oh, and I've moved it. There we go. It's always the case. So anyway, there's certainly some interest there. If I place out my balancing time tool and I'm running 1 year out, we know that the market turned in load on October in 2008, and we've got 2 years later a date to be watching using balancing time. So that's of interest to me and something I have in the back of my head. Anyway, that's a bit of a bonus. All right. Balancing time is something I'd like you to do on the major points in the market. Now, the next thing we talked about, you'd also want to do that in calendar days as well. So we're just getting our market set up still. We're still trying to find out some relationships in this market. So I said, obviously we wanted to measure some swings in terms of time as well as price. So what I'm talking about there is really just setting up a time trend analysis chart. So if I do that on Newcrest, sort of thing we could do now is take into consideration 2009. And we don't want as big a picture here. So we just want sort of more of the major trends. Or sorry, we still want the major trends, but obviously not a 4-month swing chart. We might take a look at a 1-month swing chart. And I guess what we could look at here, that might be a little bit big. So we might go to a weekly. Maybe set up a 2-week swing chart. That'll probably do. So what I'd be looking for here is to get an idea of the swings. Not now so much in terms of price, but in terms of time. So this is also going to help me balance time. I'd be doing the same sort of thing. I just want to get an idea of what the times up, times down between these points are. So I'm now going to a smaller picture. That one's not yet complete, so that one has to be marked with a question mark. So if I quickly go in and put this to play, really what I'm looking at is what's the trend in time. I probably should get an upswing here to get us started. All right, so in calendar days, we're seeing this market's moved up 16 days. This is now on the small scale. This is being able to draw a swing chart in time, like David's talking about in chapter 2. Running down, we've got 60 days. So I'm not surprised you guys were finding, oh, okay, gold's breaking. All right, let me go and have a look. Yeah, I've got 1,027 trading at currently. There we go. I'll just hang around until it all happens. That's my cunning plan, you see. All right, so we've now seen the market run up 44. Well, there you go. I'm already convinced that this is not a bad market. Running down 36. So 27. $16. $27 up. And at the moment, obviously this isn't confirmed yet as far as how far this has moved to the downside. At the moment, down to its lowest point, we've got 15 days down. All right, so if I take off the turning points tool, what we've seen, 27's twice, 27 twice, 16 twice, there you go. So markets don't do much, do they? They don't repeat in any sort of random way. And that's the only way you'd see this, is by actually putting a time count on this market. So I'd be interested if that's our run. It's run sort of 200%. So yeah, I think probably got some definite legs to the upside on Newcrest Mining, just in having done a little bit of work here. So what I'm going to do is I'm actually going to come out and I'm going to go to the whiteboard. And because I can't sort of do this two ways, maybe I can actually do it this way. I won't do it that way. So I'm just going to have to flick backwards and forwards from the screen, but that's okay. You guys won't see it. It'll just be me. So if I was using this as a starting point, we saw the market run up it's not going to work. Let me get a new one. We saw the market run up 16 days. Then it ran down 60. 16 days, ran down 60. Ran up 44. Now, I haven't drawn that as a higher top because it didn't take out the higher top in the market. It's run down 36 days. Now, none of this is to scale because it has no rules per se. It ran up 27. There's 36. 27. Down 36, up 27. Down 16. Up 27. Down 16. Well, it's down 15 at the moment. So if I drew a swing chart like that, and I've purely done it in terms of price, or sorry, in terms of time, as opposed to price, what could we argue that the swing chart in time is doing? Well, it's doing 60, 36, 16, 15. So obviously it's definitely reducing to the upside, or sorry, reducing on the downside. So we've got that sort of approach. Now, 16, 44, 27, 27. That's balanced out there, so it's coiling up, and I'd have to say that the trend in time is up. So it's doing more days up than it is doing down, and it's doing reduced down periods, and it's starting to coil up. Now, next thing I'm going to have to check is $27 as a percentage of 44 is about 61.8%. 61.3%, 61.4. So that's a Fibonacci ratio. They're about halves. All right, so that's all looking quite good for me. So having a chart, and I'll just get rid of this. Having a chart like we have here in Profit Source, where we're taking into consideration this sort of movement, is really important as far as keeping an eye on the market. So if I was expecting the market to balance time, well, 27 days. Well, the market's given us a top. If I balanced out time from there to there and projected it out, well, I'm seeing the market moving down in the same relationships here. Okay, so just balancing time has given us some definite things to watch, as well as looking at this as in terms of a trend in time. So let me give you this chart as well, just to have. And I'll share that. I'll share. There we go. I'll just bring up that new file. There we go. So you might be able to pull that in and have a play around with it, and just go and set yourself up one as well, just so you've got some reference to take a look at. But if I come back to the camera now, I guess we've got a pretty strong trend. We're sitting on 50% pullback, sitting on a gap. You know, gold's moving higher as we speak. 27 days up, 16 days down, 27 days up, 15 days down. I think if you're a betting man, I think we're odds on for a potential trade in the coming few days. So obviously now looking at all of that work, it would have made sense jumping long out of the low, which was on about the 2nd of this month. But that's obviously some great hindsight work, so we can't exactly claim that. But would it make sense to be on red alert for potentially a long trade in the market if you've got an ABC long coming up over the next few days? I think you definitely would be one to consider based upon time and price alignments. Now gold's sitting at about 1,026.30. We'll see whether or not it's got the strength to take out that top. And as I said, I'm not convinced unless we get a pretty strong close or something along those lines. But I think everything's shaping up to the long side, and we'll just have to evaluate that when it comes up. All right, so let me. Did everyone manage to get those charts? If they haven't, just drop me a line and I'll put them back up. So what we've talked about tonight is obviously still working up our market. We haven't got into really hardcore application of tools and techniques because we're still trying to work out what our markets are all about. So we've done a lot of work on Newcrest. What I'm going to try and do is balance that out with some work on the Aussie dollar for next week. All right. So I did have some homework for you, which was to obviously look for some more harmony on our markets with some smaller time frames. Some of you have begun that with your 60s and your 120s, which is great. And what I want to start to do for next week is start to see where seasonal dates. So I don't want to jump into time by degrees proper as far as measuring, top to top, bottom to bottom, tops to tops. So using it in a more intuitive sense. I just want to see how well seasonal dates work for changes in trend on our market. So that might be something to start having a look at. So Annie said it's helped enormously getting over the initial overwhelm. Where do I start feeling? Well, I'm really glad to hear that because my whole aim was to help you guys get a market set up because I know it's overwhelming. I know it's how do I take small bite-sized pieces? How do I get simple things working well? Because the huge challenge for us is that we've got all of this, if you look at the bookcase behind me, that's my trading bookcase. Every single book behind me is a trading book. So there's such a feeling and a need to apply all the knowledge of all of these books in one foul swoop. And you just get lost and overwhelmed. So what I'm going to try and do each week is use simple tools, break things down, and get us some confidence in tracking a market. So little things well, we don't have to jump into squares and boxes. We're going to do all of that. But you know what? When we get to that level, we're going to know so much about our market and we're going to be so much more confident in its application because we're not fishing for an answer. We've actually got most of the work we need to do. And there's still work to be done. So I want you to look for some harmony. I want you to do some more work on ABC testing. I want you to get into the detail. All right. I will share the results that I come up with. And I'll find a way that we can share the results that you guys have been doing in spreadsheets. We'll have a group communal, sharing exercise. But the thing is you won't get the benefit until you do it for yourself. Happy to share the work that I do, but it's there's no prizes because it's not a perfect system. It's just only the work that I've done that's helped me to get an idea of what these markets are all about. And if it helps you, great. But the work by doing it is really important. All right, I'm going to stop rabbiting because we're close to 2.5 hours. So what I'm going to do, I want to throw it back to you guys. There's a bit of piecemeal from tonight. I don't feel like I've given it to you exactly the way that I would have liked to, but I've tried to give you little individual concepts. I'm trying to keep them all boxed together in certain sort of fences to make sure that they don't spill over. I wanted to get a feel for the swing charts tonight. Fantastic, Lynn. I'm glad that helped. So I want to get a feel for what the swing charts are doing, what the ABCs are doing, how we might trade this market, swing charts in time, a little bit of an overview, and I guess away we go from there. So over to you guys if you've got any questions, and otherwise we'll wrap it up. Thanks, Des. You're always welcome with comments like that. No, we won't, Annie. We won't use the same time by degrees dates as we do for the SPY because we've got different markets, all right? So all I'd like you to do is to just take a look at seasonal dates. That's all I'm after. Thanks, Graham. Both Grahams. Can you say something about oil? I think we've got enough to keep us busy. But look, very quickly. Let me take a quick look. Yeah, look, I'm still seeing some congestion on oil. I don't see. I don't want to give too much away. I had a bit of a discussion at the end of the Master Forecasting Summit, but I don't want to give too much away because obviously there's some benefit for those guys. But I'm not a huge super bull on oil right now. I think we're going to see continued volatility, and we might get caught in this little sideways movement. About $75 is a pretty good, some pretty strong resistance. So we'll see how we go there. Fantastic, Glenn. So Debbie's saying, guess with some of my own walkthrough using swings and 86 estimate have made up to 86 of my own ABCs going through the trend. Fantastic. Well, that's great, Debbie. I'm glad that's given some insights, and I'm glad you're getting that sort of result. Thanks, Keith. Thanks, Richard. Before you all go, I guess I just need to prepare you again for next week. I guess, like last week, we'll operate on the assumption that I'll be here and you'll be here until otherwise notified. So, as I said, challenges lie for us, and I can't. If you'd seen me at 11 o'clock this morning, I was particularly frustrated and wasn't particularly kind in my terminology to the people I was talking to. So we are really in a bit of limbo as far as the direction for taking care of our son. So unfortunately, that limbo then translates to limbo to you guys, and I do really feel that upsets me that that's the case, that I can't give you some greater certainty, but it just happens to be the reality. And it's not like being able to go to there's not a lot of pediatric heart surgeons. There's not a lot of them out there, and and not the good ones, and so it's a bit hard to go shopping. It's not like sort of Coles and Woolies that you can always go somewhere else. So I'll just have to play it by ear. And look, I know you guys are the converted, so thank you, and I'll let you know how it's travelling. And remember, okay, so remember, if you can't get into the forum, thanks, Annie. If you can't get into the forum, thanks, Debbie. You know perfectly how the system works then. If you can't get into the forum, remember, go to my discussion board where it says Ask Aaron Lynch, and just put your name. You don't even put your name in there. Just say, Aaron, I can't get access to the boards. Can you help me out? And I'll take care of it. So I've got a couple of people, and I'll try and do my best. I'll make a note for those, and I'll try and get you guys taken care of. All right. Thanks, everybody. Thanks, Linda. Thanks, Lynn. And thanks, Debbie. Thanks, everybody. Good night again, I think. And yeah, I look forward to catching up with you when next we meet. But try and knock over as much as you can. And what I eventually want it to be is you guys telling me about this market, not the other way around. So that will be my success, I think, is if I can get you guys telling me more about this market than I can tell you. So that's my hope. Anyway, everybody, any final questions? Happy to deal with them. Otherwise, I will say good night to all, and I'll catch you when I catch you next. Thanks, Ashley. Cheers. All right, well, I'll take that as being done. So thanks, everybody, and I'll catch you soon. Thanks, Darren. Officially a welcome to session 3 of the Ultimate Gann coaching for all of our troops on Tuesday night. So obviously tonight we've got a fair bit to talk about. Actually, there's probably not a lot of necessarily new material or new content that I definitely sort of want to pull apart, so to speak. I want to obviously start by saying well done on the discussions that many of you are having online on the discussion boards, and you know, I know Des has done a little bit of work. I was desperate to get your Aussie dollar stuff, Des, but I was a little bit unsure how to put my email address on the forum. So I wouldn't mind obviously seeing the work that you guys come up with and vice versa, because I guess just that sharing of information that we talked about will just make our time together a whole lot easier. So I might contact you offline, so to speak, Des, and pick your brains on that. But there seems to be a good discussion going. There seems to be obviously some discussions about timeframes and what's working and what's not working. The other thing I'll point out is that there seems to be a problem with the forum with displaying pictures or images or charts. Sometimes it's when you first put it in, it's no problem, and then apparently when you come back later, it's not there. I'm having the same problem. So I do have the IT guys having a look at that, and I've actually posted a little link. There is a link to host pictures, so there's some instructions that are on the discussion board if you want to use like Photo Bucket or something like that, which is obviously where the image is hosted on another server and then obviously sort of mirrored onto ours. That seems to be a little bit more reliable, but once again, talking with the propeller heads about how we can make that all work. So rest assured that that's something that I'm looking to make as reliable as possible. So so that's obviously you know, on the agenda for tonight. So keep using those forums. I think the chats are fantastic. I apologise obviously with last week's shenanigans. I've been a little bit hard pressed to get in there and join the discussion, but rest assured that that I will be obviously, you know, getting there a little bit more regularly over the coming period. So let me find my PowerPoint presentation. I put my thinking cap on. There we go. Had a week off and I've forgotten how to do everything. All right, there we go. So that should be loading up as we speak, which looks okay. So just to quickly, obviously cover off the important bits and pieces. So I'll just remind you of our financial services licensing framework. We do hold a financial services license issued by the Australian Securities and Investment Commission. That enables us to provide the ultimate Gann coaching environment for you here tonight and obviously over our time together. We are looking at current market activity. We are looking at information. I'll even jump in and have a look at where the markets are live. So we'll basically be getting as close to the market as we can. Obviously, that's not designed to provide you direct financial advice related to your specific situation. It's purely designed from a general perspective to obviously provide guidance with regards to the financial markets, and education. And whether or not that's suitable for you, you need to obviously assess and make a decision going forward. So obviously, once again, to remind you of that, and just if there's ever any questions about that, I'm more than happy to answer those for you. I guess what I wanted to cover tonight, it might be a quicker one tonight. I didn't want to, there wasn't too many, quite a few things I wanted to break out a little bit and spend some time on. But as I said, there's not too many new concepts that I wanted to break out tonight. I really want to do a real good assessment of where we are in the market right now, because I think we do have some trading opportunities and have done over the last week. We've had ABC trading opportunities, depending on which market you're following a little bit closely. So obviously both the Aussie dollar and Newcrest mining have both had ABC long trading opportunities. I want to discuss the merits of those. I also want to discuss the framework of the bigger markets. Obviously oil's had a great surge this week, and obviously that's been a particularly powerful one. It was it's hovering around the $80 mark, which I actually thought might be probably the highest point that it might trade at for the year. I was actually thinking about $80 would be about as good as we get for this year, but I probably didn't factor in the weakness that's in the US dollar. But you guys that were at Summit, we got the date pretty close. We're sort of looking around the 25th to the 29th because we had that week in there. So 26th to the 29th, I should say. I think I said at the Summit, and I think the market lowered on the 25th. So certainly we've had some things to have a bit of a chat about, but I want to get close into that market and or both those markets and do a good little update and sort of just a ready reckoner of where we're up to. So quick market update. We do need to obviously keep in line with what the global market's doing. Obviously, gold's going to affect the value of Newcrest mining. The value of the indexes as a whole are obviously going to give you some guidance as to whether our market can continue to go up or not. And I know Noel's got some strong views on that, and he shared obviously that information with you guys on the weekend. And we're looking potentially into the very near future for some sort of reaction in the market and potentially into next year if that's not seen. So having a bit of a roadmap there, I think, is a very, very valuable one. So I want to do that quick roundup of what the markets have been doing. I obviously said I want to look at the position of Newcrest mining and the Aussie dollar. I'll be upfront with you. I'm obviously looking to get in behind these markets when opportunities do present themselves. I didn't like the long trade that was on Newcrest mining. I want to sort of go back and I posted a chart which sort of was there for a little while and it sort of vanishes and comes back. So using the concept of balancing time, I had just an area around sort of the 13th to the 15th of this month where that top is. It just looked like there was a bit of time pressure there. So the market obviously made a little 2-day snapback and obviously then gapped down. And today it's from memory it's gone back and filled that gap. But I think there's definitely some trading opportunities coming, but I was pretty happy not to be in that ABC trade that we've just seen roll on. The Aussie dollar obviously is, on the other hand, is quite different. It's looking quite strong. It had a really strong up day, had a couple of strong up days, had a reversal at the 50% and then gave us an outside reversal day back up the way that we were wanting it to. So I want to talk about the virtues of maybe how we could have held on to that trade. Certainly using normal ABC rules would have seen you stopped out, but being a little bit more creative, you might have had that as a trade you were still in. So the thing that we haven't done yet, which much to my lament, and I'm expecting many of you would have done it already, is to just review the contract specs for the Australian dollar. I'm not going to spend 2 hours on that, but I just want to make sure that when we talk about the Aussie dollar, you feel like there's some level of approachability for you guys with the futures account if we do get something come up that you can actually go and tackle it. So it's probably worthwhile that we talk about margin and risk and what contracts are traded and the times and all of that, because we certainly don't trade the Aussie dollar here on the Australian Stock Exchange or the Sydney Futures Exchange. It's over in Chicago. I asked you guys to start having a look at seasonal time, and I guess I'm really sort of looking broadly speaking, not getting into the nitty. I split time by degrees out in a variety of ways in my own head, and once again, we're only less than 3 out of 12, so we're still what I consider to be in the building phase of our time, and I don't want to get too into the detail of where certain things are, but I just want to start to get an awareness of, does this market turn on seasonal dates? Because if you're looking at watching dates each year, if it turns on the seasonal dates on a regular basis, then that's probably the easiest way that you can know where you need to be tackling the market on a regular basis. So I'm going to show you a really quick and easy, simple way to set that up. And I guess I want to give you a lesson as well built around that, which really relates to the birth of the contract. So I want to start setting up what are the important tops, what are the important bottoms that we can be running time by degrees from. You can then go away and set that up in an ephemeris. So like we have for, like Noel does for the share price index, he obviously gives us the middle of the month, the start of the month, middle of the month, end of the month dates as far as time by degrees is concerned. So your red dates, your green dates, your yellow dates. I think we should be able to start to set those sorts of things up in the market as well and have something to keep us busy. I want to revisit obviously some discussions on balancing time, just to start setting up some of the bigger time frames. I guess one of the things I noticed is that there's a lot of discussion about what time frames are out there, and without getting into the detail of it, because obviously I haven't looked at the individual work just yet and all the time frames, I guess what I did notice is that we've come up with a lot of time frames, and there's been some agreement on some and some disagreement on some, but we've got probably too many in my mind at this stage. Now, how do I validate whether or not these time frames are important? Is that while we can go and look at a major, one of the things we did, I think, when we last met was to set up like 4-month, 3-month major turning points and take the time frames between those. What I guess enables us to know whether or not they're important is to actually pick up those time frames and actually start to move them across the market and see whether they've worked more than once, because I'd have to say it's hard to get excited about a time frame if it's only ever worked once. So whilst it could be a major time frame, I want to get some data to know whether or not it's actually something that's on a repetition type basis or whether it's a one-off, because I can give you some time frames on oil that are one-offs. They're very, very big time frames, and I've never seen them repeat again. So whilst they're potentially important to know, because there's every chance that they might at some point in the future, if they're not working on some level of repetition, I do tend to struggle with the needs of why we're going to use them. So some of those time frames go out to the few thousands of days. Now, if they're not providing any assistance to us, they're just providing clutter, and they're just actually probably making our jobs a little bit harder. So I guess what I'll do is probably pick on a couple of major time frames, and you guys might be able to help me out with some of the ones that you're working on. And I guess I'll show you the ways that I would proof them in the market. So how do I validate the time frames? How do I come up with whether or not they're worthwhile watching going forward? So that sort of comes off that balancing time discussion, and that really relates to how I set up time counts. So there's a number of them. If you've ever done a Gann mastery with me, you'll know that there's a number of time frames that I watch. But how did I come up with those? Well, I just didn't, I did obviously run counts from tops to bottoms and bottoms to tops and come up with some numbers, but there's a refining process, you might argue, as to how to bring that stuff together. So that's my plan of attack tonight, and I think we'll probably be a bit closer to the 90 minutes rather than to the 2.5 hours. So with that being said, I've made that call. I've made that forecast many times in the future, and 2 hours rolls past. So in my mind, if we get our 90 minutes away, I think I'll be happy with that. But that being said, we might run longer already. So what I might do is obviously jump into profit source, and what I'd be interested to hear is obviously your feedback along the way. So obviously I've got my 2 computers running here, so any questions that you want to ask me along the way, please jump in, and I will stop and answer those at the time, particularly if it's relevant to what we're talking about. So that's how I kind of see tonight running. So if there's any questions at this stage or any comments you'd like to make before we jump in and do that, anything you'd like me to take a look at, for example, anything that you've got a question on that relates to sort of the concepts we're talking about here, obviously ask me at the right time, or if you want to throw them out now, it means I can start thinking about them and actually weave them into our discussion. I'll take silence as consent. So that means obviously you agree with me. So it's amazing, before the class starts, you all start getting chatty and all having a chat to each other and finding out how your week's been. And then obviously we start the class and everybody, it's good. You all become very conscientious, which is fantastic. But as I said, if there's any questions, flick them through and I'll make sure that we address them. So what I'm going to do is pause my camera at this stage, because obviously I'll jump into profit source. We'll take a look at the market update. So what I mean by that is we'll jump in, we'll look at the major indexes, we'll look at gold, we'll look at oil, we'll look at the US dollar. As I was flying back on the plane today, I heard some analysts talk about the Australian dollar reaching parity and all of those sorts of things. So at the moment we're about 92, 93 cents. So if fundamentally, and not that I'm a fundamentalist, but if the fundamentals are pointing to parity, obviously that should leave some opportunity for us to at least start to make some money along the way. So I'd be very keen to investigate, obviously through the specs, what that might mean to us if we're able to capture some of that move. So we'll have that discussion when we get to the Aussie dollar. Okay, so I'll bring down just the PowerPoint for a second, and I'll bring up profit source. All right, so kicking off with the discussion, I do actually have the Aussie dollar up, but I'll avoid hitting that just at this stage. So I might start with the S&P 500. Obviously, the global leader as far as the index market is concerned. We're starting to reach a point now where you can start to argue whether or not we've got completed sections of the market. So one of the discussions that we'll have along the way, and is with David's discussion on position of the market, which we've already talked about, is are we expecting sort of one, are we expecting a top or a bottom? Well, we can generally speaking look for sort of 3 clear sections. So if we sort of picked on, and I've hit the wrong button, so it'll take a second or two. I'm loading the symbol tree, so hit F9, and that's the problem. There we go. So If I make that a weekly chart on the way down, you could probably argue that, as far as sections were concerned on the S&P 500 market, well, we could probably argue that that's one section. You'd sort of, argue that that's probably two, and then we had a completion of a third section on the way down. Now, you could argue the subtleties of that, but that's pretty broadly speaking something that I'm pretty comfortable with. On the way back out, we've got our one section and we've got our second section running. So if it's, as Gann said, he covered himself to make sure that he had an answer for everything. He said the markets may run out in two sections in under 12 months, or it might take three sections. So maybe if we did get a pullback around that early November area, which is an area that Noel's been watching, and I'm certainly keen on as well, maybe we will get some sort of significant pullback before we get another section into next year. It's hard to say at this stage, and I don't particularly want to speculate on that. I just want to read the market for where it is at the moment. So really trying to get a position in the market so I can think about trading as opposed to forecasting the S&P 500. Obviously, the realities are is that we're, if we could get up to a 100% target around that pressure date of, say, the seasonal date, which is early November, obviously the market would have to do something pretty special to get there. But look, it's certainly doable. We are sort of the best part is sort of two and a bit weeks away. So if this market does get a wriggle on, we might see that run up into a 100% point. And if that was to occur, well, that would just give you, some price and time harmony to really get, you're thinking about maybe going short. But at this stage, we're comfortably up. We've got a nice little higher swing bottom there on the 50% of that range. So the market to me looks quite strong. So I'm not really in any real big great hurry to go short at the market. And obviously, if we are seeing a turn in the early part of next year, it might be worthwhile, going with that trend and trying to make some money along the way. So if I turn that into a swing chart, we can get an idea of whether or not we're seeing strength in the market. Clearly, we're in an uptrend on the weekly chart, 84.4, 84.6. We're pretty much seeing a repetition of range there. We did get a slight expansion on the most recent downswing, so it'll be interesting to see whether we can push on from there. I'm actually going to just quickly, your screen will go blank, but I'm actually just going to log into my online account just to get a live pricing on what the S&P 500 is doing. I know your screen's just going to go blank for a second. Just worry not about that. So I'm just getting an update. So it's trading at 109.7. So if I come back to there, 1090.7. So if I get that organised, it's trading at about that level there. So it's just come back fractionally underneath that weekly swing top. If I take a look on a daily chart, keeping in mind that it's quite early in the morning over there, so there's nothing particularly adventurous occurring in the market right now, but that's where we're trading at right now. So it's just underneath that top, but I don't think that's any necessary sign that it's about to fall out of bed. The one-day swing chart tells us that we're up, so we'll continue with that view. We've done about 50% of that move up, so that's always an area that we could be watching. We're seeing a repetition on the weekly chart of the weekly trend, and we're also seeing the market do 50% on the daily chart. So that would give me some caution as to whether or not this market could potentially kick on. You'd want to see a nice comfortable close or holding above that 50% if you weren't already long. The two-day chart, I'm sure, is going to point to being the market moving in the right way. If I get that set up. So the two-day chart, sorry, is uncertain. Higher tops, lower bottoms. Expanding upside ranges, contracting downside. That's a better picture on the two-day chart. Three-day chart will probably confirm for us what we see very similar on the weekly chart, which is an uptrend. So we're up on the one, we're up on the two, we're up on the three. Sorry, up on the one, up on the three, and up on the weekly, and then uncertain on the two-day. So at this stage, you'd have to argue that the trends are pretty consistent with the going long and sticking with that sort of view. So whilst that's great for general stocks, a commodity like gold's obviously going to have a big part to play in Newcrest. But if we can see the Newcrest market or the gold market push higher and the index markets push higher, then we could expect the same to follow through with Newcrest. So let's take a look at what our local market's doing just to keep the flow going with the indexes. That's the 20th, which is today. So we saw the market jump up today. There was a long trade on the cash market. There wasn't a long trade on the index market, but market's run up. It's run about 50%, but as you can see there, it's just struggling to hold that close. So it got up, and now it's spent one day, gap down, and then it has gapped up on the open this morning. But that weak close is probably not exactly a great sign. If you're holding long overnight, that sort of close doesn't sort of fill your heart with lots of warmth, but that's why you don't look at Psychom. And we'll have to just see what the overseas markets produce overnight to see what that'll do to our market. Get this swing chart set up right. So what we've got is an uptrend on our daily chart. So a one-day swing chart says we are pushing to higher prices. Slight contraction on the most recent confirmed upswing anyway, and we're seeing expansion to the downside. So similar picture to what we're seeing on the overseas market. Weekly trends are up, and I fancy the 2 days uncertain. It is lower tops, higher bottoms, and the 3-day chart is probably also confirmed as still being up. So we're seeing the I'll come to your question in 2 seconds, Darren. We're seeing the same balance of trends between the S&P 500 as well as the SPY. So the 1, the 3, and the weekly are up, and the 2-day trends, 2-day swing charts are uncertain. So we're seeing a mirror image, you could say, of those two markets, and obviously they seem to be moving in similar directions. So Darren's raised this question, which is that the SPY has already given you a long trade, where the cash market gave you a definitely different pattern. So that's the XJO, and from memory, I swore that had given me an ABC. What was I thinking? So yeah, so I guess if we were looking at the most recent day, and I know that bar looks a bit funny, but as you can see, the cash market had a, I might come back to camera here actually. So I'll get the camera fired up. So you're looking at the open close pattern for today's bar in comparison to the SPY. Yeah. Look, what that means to me is that obviously the cash market, as far as the physical buyers and sellers of the shares, obviously thought today was relatively bullish and followed through with that. The participants on the SPY, on the other hand, obviously had a different view, and without having access, I was actually in the air at the time when the market closed. But if anyone would happen to be watching the close today on the SPY for the floor, for the day session, did it have a late sell-off as far as that was concerned? So was it holding above that open and then sort of sold off late in the day, or had it already sort of made lows, fresh lows earlier in the afternoon? Because when I left it, it was actually comfortably above the open, and it was actually looking pretty consistent. So yeah, the last 20 minutes it sold off. Yeah, so that to me just gives me a bit of a view that the futures, yeah, late sell-off. Thanks, guys. Gives me the view that maybe the futures players are obviously pricing in, you know, some sentiment from overnight, and obviously they could be closing out their positions. But at the end of the day, you know, you've got to trade the SPY for what the SPY gives you. The cash market's obviously just a representation of what the physical shares did, and obviously it's a good law, it's a good guide. You've got to have that as a framework to what we're doing. But at the end of the day, you know, all I'd say with that, you could draw many conclusions, but the conclusion I draw is obviously that potentially some of the futures players were not comfortable to hold overnight. Now that could mean, for example, I don't know because I just don't care, only because I just don't get involved in it. But which would you pay more attention to for trading CFDs? What, as far as the equity markets are concerned, or index markets? So the individual shares, potentially the cash market, but the SPY for me is still the better leader, or the better, you know, guide, because when you consider it, the futures players are pricing in the future, hence they're referred to as the futures market. To me, the cash market always tends to follow the futures market. Now, that's not a direct rule, but that's a correlation study you could look at. I'd say that maybe some of the futures traders were not prepared to hold their positions overnight. And so what they did is they sold a few on the close, and obviously the price fell because people were tipping out their positions. Maybe there's some particular, you know, if you guys, you know, whilst you're listening away, if you've got the inkling, maybe Google it. I'm sure there's probably some announcement tonight. I reckon there's probably some jobs figures or earnings, or, oh, look, it could be anything. It could be the top 5 companies reporting. I'm only speculating, but it could be something like that would force the futures guys to close out their positions, not want to hold on SciComm, go to bed tonight, have a good sleep, and wake up tomorrow and deal with it. Now, these people are obviously very short-term position traders. Other than that, I'm just purely speculating. So, but if you're looking for an index lead, I definitely look to the futures. But if you're obviously looking for what the equities are potentially going to do, then obviously the cash market has its benefits there as well. So, but good question. So let me pop back into Profit Source and continue our discussion. All right, so moving along. So the cash market had a slightly different pattern, obviously had a very different close, but keep in mind the SPY trades are half an hour longer than the cash market. It shuts at 4, the SPY shuts at 4:30, so obviously a relatively late sell-off, as the guys were saying. So we've taken a look at the SPY, we've taken a look at the S&P 500. I guess the Dow is acting in one particular component at the moment. I was talking to some other traders who obviously focus very heavily on the US equity markets, and they're actually telling me that they were quite quietly bullish, contingent on the fact of the Dow Jones holding above 10,000. And I said, well, is it that big a deal? And they said, yeah, apparently to certain sections of the trading community, whether or not the Dow can hold above 10,000 or not is a real big deal. So if we can see a hold above 10,000 overnight and maybe a kick along from there, I think you'll find that that's some sort of omen or some sort of loose superstition. I think there's no science based on it. I think it's just pure gut feel. But we're seeing the Dow holding around that 10,000 level. And if you take a look at that in the context, we've sort of now getting back up to this gap here. That's something that I've sort of kept in the back of my head, is that there is this gap at approximately 10,185. That's not exact. Zoom in there. So the top of that day is 10165. So that gap there might have some, we might see this market run to there. And I'll just extend that out. Oh, that's not helpful. Why is that so? Draw that again. So if I look at that, that's going to sort of give me a reminder on my chart that we're getting up to that sort of area. And if we can push into that and close that gap really comfortably, then you know, there's potential for more upside. But it'd be interesting if we did see a top sort of form in that gap and give us a signal day or a reversal day or an island or something like that. That could be a smart area to watch and a bit of a guide on the US market. So they're just little things that I guess I'm watching in the setups at the moment. But it's got to get there first, so there's no point speculating until it gets there. And it's really not the gap of the century either. So it's not one of those ones that you'd argue is likely to stop the market. It's just one of those ones that you casually keep in the back of your head as you're setting up your markets and knowing where you need to be looking. So, but obviously we don't tend to put too much emphasis on the Dow because it's only 30 stocks. All right, so a couple other markets before we get into our two choices, or three actually. We'll look at the gold market, we'll look at oil, and we'll also look at the US dollar. So if we take a look at oil, gold, that on the brain again. We have got a little ABC long, so we've really just seen quite a minimal pullback here from B. So if we look at the most recent run up, you know, we're talking about 1, 2, 3, 4, 5, 6, 7, 8 trading days up, only 2 down. So that's a 25% retracement in time, a 33% retracement in price. Probably if I was really confident that this could continue to rocket, I probably would have liked a slightly more balanced retracement, but we haven't got that. Looking at our swing chart, that'll give us a guide as to trend. Well, there's no prizes to guess that the trend is up. So I don't think that's shocked anybody. That range there, though, is still one to me that looks a little sus. We've got an $85 range here. And that, if we're basing our calculations off that, that's pretty spectacular in comparison to what the market's been traditionally doing. So 25 bucks, repetition of ranges there. So you've got a slight expansion there, slight contraction. That's really the higher bottom that you want it to be on. You've got expansion to the upside in a very big way, but you know, you do have a slight expansion to the downside. So, as I said, a slightly better balanced retracement would have got me a bit happier with that. You're looking at about an $85 range, which has really no precedence. I'm looking for the time that it's last done that sort of upswing, and we've got back here in March. So around about the seasonal date in March, we did an 85. Yeah, I'd say 85 is overbought, Annie. It's done 74, but I guess what you've got to say is the last time it ran up and it did $85, it came up, made a lower top, and ran back hard the other way. 74. See, now we've got some even bigger ones. See, here's an interesting story. You've got $115 up, and it did continue going. So it's not to say that it's impossible, but it's certainly of some concern. You've got $142, $135. Now they're to me pretty spectacular. $97 ranges. Doesn't have a real good track record of after it does these really potentially overbought ranges of what it does after their 186. It's gone sideways. I guess what we want to learn how to do, and I guess the thought that comes into my head if I jump out of there and come back to you guys. Finish off my cup of tea. What comes to my mind when I'm thinking about that is that after it does these rather overbought or, you know, mid-range, 85 was obviously only in the middle of the range of overbought ranges when you look at some of the bigger ones. When it runs like that, I guess the question mark that needs to be in your head is that rather than watching that range repeat and then trying to tackle the next range that comes off that, is really what you want to be is in that $85 range. So the question mark that we need to have in the back of our heads, particularly with Newcrest, is if gold's going to do these particularly spectacular runs and then go sideways or fall away or just sort of get a little bit choppy, we've got to get smart at actually identifying those overbought ranges which are going to become overbought that we don't know at the time, and then jumping in and grabbing those. So that's really where our time frame analysis is going to help us. So I guess just to clarify that, I'll jump back in and tell you what I mean. When I jump into profit source, really the range that we wanted to be trading was that one there that's now marked in blue. I think what we're seeing here now is probably not going to give us an $85 move, to be honest, before we get another lower top. It gives us another top and maybe lower tops. If you're looking at which range you wanted to be on, it's made a higher bottom, but really as a trade there, that wasn't probably sticking out as a spectacular one purely off a swing chart, because you've got a lower top, a higher bottom. But I'm sort of looking at that area there as where it's coiled. It's making, I guess, a little spring before it takes off again. And I guess we're seeing the same thing down here. Goes into a period of consolidation, so that we're learning about how we might better trade Newcrest now. It goes into a period of consolidation after maybe some strong runs up. It tends to do pull back into, a fairly large pullback, you'd say, far greater than 50%. And then what it does is it shoots off, and there's that $65 range. So if you're arguing which of the trades that you wanted to be, or which of the ranges you wanted to be in, that $65 range is the one that you wanted to be in. Now, if I go back and pick on some more through here, probably that's pretty pristine as far as a place to trade. You've got pretty balanced ranges all the way through there, higher tops, higher bottoms. That's a bit of a gift, actually, a bit of a gift back through there as well. But we'll pick on, I guess, some places that are a little bit more relevant. If you wanted to be long anywhere through here, you wanted to be long in that blue range there. And if you're looking at other places, I guess that's a slightly different story. You didn't get too much of a pullback there before it did rally higher. 142.40 there, market's pulled back in, and then what it gives you is a little bit of drips and drabs afterwards. So I guess after we get these big pushes, we get a little bit of sideways rubbish that's a little bit harder to trade. We get a big push, we get some market that's a little bit hard to trade. We get a big push, and then we actually get a downtrend. We get a big push, and we get a sideways or a slightly down range to trade. So if we use that as a bit of a, as a pattern for where we are right now, what we might be suggesting is that we've got a big push here to $85. We've coiled through here. If I make another circle, change the color. So we've sort of built a little bit of a springboard through here. All right, and then what we've seen is that market really take off, give us an $85 range. If the market continues to run with this personality, you might find the next 3 or 4 swings that eventuate over the coming, X period of time might be a little bit harder to trade, because we've seen the big move, and now maybe this market does have to get back into balance a little bit. So I guess I want to come back and sort of, it's hard to take a poll, but across to you guys is that if we talk about gold for 2 seconds, now remembering why we're talking about gold is its relationship to Newcrest mining. We said from the beginning that we're going to have an awareness on gold. Can I get your takes? You're all independent, free-thinking traders as well. What I'm suggesting that isn't necessarily right, but are we of a view that maybe with the moves that we've seen, with the hype that we've seen, with the focus that we've seen on gold, would my assumption, and potentially you agree or disagree and let me know, the assumption that maybe we need this market to get back into a little bit of balance before we see any sort of really fantastic up move? Maybe we're going to see a lower top, lower bottom scenario in the interim, or if we do see this top breakout, maybe that's probably what people are waiting for, is if we see this top breakout trades on the cards. But if we can't take out the current top, do you think it would be a fair assessment that we might get some tighter ranges and we may not get those nice big sort of expansive ranges to trade? Is that a view you might share? Is that a view that you disagree with? So yeah, look, I think definitely if you were just buying that higher bottom, I think as Glenn says, it looks like a pretty low probability. So just buying that higher bottom after that $85 move, I think is pretty low probability. Obviously Blake and Robert are sort of agreeing, and you're always welcome when you agree with me. But I'll be interested as well if people disagree. If you're super bullish, like if you just think gold is going to $3,000 an ounce. So Lynn said you agree and would be the same for about 8 days in time. So are you alluding to, Lynn, there that have you got a pressure date that you're watching on gold that's due to come in say a week or so? Is that what you're potentially holding for, or is there? I'm always open to the secrets of why in 8 days' time we're expecting for something, but I just think we could be in a bit of a holding pattern of what David calls rats and mice. Yep, Elizabeth. Look, I'm quietly bullish as well, but it depends on what time frame I should say. Is whether or not we're Okay, so just sort of reading through here. So Blake's saying he's expecting to see some sideways movement after a big jump, but you could be wrong. Yeah, that's fine. Mark's saying the 1, 2, and 3 and the weekly are all up. Yeah, we'll check that in a second, Mark. So Lynn's saying no more, that's overbalancing time with 8 days up. Yeah, look, I think it's, yeah, Des is saying, and I think, Des, you probably said what I've been trying to say, but it takes me 5 times longer to say it, is that, yeah, we've had a steep rise and maybe it's time for a breather. And obviously Key's saying here, looking at the 30-year roadmap, we maybe have some bullishness. Now, all of those things make sense to me, but I'm trying to keep it in a, remember, we're going to do some forecasting work, but I guess I'm trying to keep it in the macro at the moment, in the micro, because we're looking for trading opportunities and assessing whether or not there's something on the cards. I think if you nail me to a wall and said, what do I think, do I think gold prices could be higher in 6 months, I think the answer to that is yes. But that's not the question that's going to help me make money today. So I hear where you're all coming from, but let's, as I'm trying to do, is just keep it focused on the here and now. I think we're going to see, after such a steep move like Des said, we probably need some level of rebalancing is probably what I'm interested in seeing. Big 8-day move up, only a 2-day move down. I'd really, we've then see sort of a couple of days up. We've only sort of seen about 50% of that time frame. I'd just be very keen to see where that all ends up and what sort of trading signal it might give us. So while we speak, I'm actually jumping out of that screen and I'm actually going to go and take a look and find out exactly where gold is trading. I'll make my mind up eventually what it's called. 1,063.50 is where we're at. If I just go and take a look quickly at my chart, 1,063.50. We're actually below that. I'll get that set up with a horizontal line. All right, so if I just share that screen with you, I'll just pause this camera again. If I share my screen with you, you'll see that source, there we go. That horizontal line is what we've got. So that's where we're trading right now. Now, once again, it's in the dead of the night. You could read into that as what you will, but that's that horizontal line is where we're trading at right now on the gold market. So we haven't broken those tops yet. I think there could be a lot of people waiting for that, and we'll just see how that pans out going forward. So just reading some of these other questions or comments. Blake said gold caused a gap in a few gold stocks I've been watching. I feel you're right for a rebalance, allowing the market to try and fill those gaps. Yeah, I agree. So Wayne's made a really good point, is that the December futures gold contract on the 16th of March was actually priced at 1060, so we're really not broken that resistance level. So a retraction is more likely, and 1069 high so far today. So I'll check that, David. I don't want to talk out of my hat, so I'm just sort of seeing where I'll just bring up a chart. I was actually just looking at a quote which is giving me current prices, so I'll just get a chart up and I'll see what the high for the day has been, or for this session anyway. Obviously, it's not the day session per se. S&P 500's creeped up fractionally. Just got to get this chart set up. So I'm looking at it in an intraday chart. So based upon so it has had a high of 1,069. So it has gone a little bit higher today, and that's still $3 under the top. All right, so we're trading under that high once again. So we've had a high of 1069 on the session so far. We haven't broken that top yet, so I think that'll be definitely one to keep an eye on. And just going on with what Wayne said, looking at the 2009 December contract, so GC 2009.Z, I'll replace that chart. We're in a situation where, well, even if you consider back in 2008, we were trading at that price. But obviously, as we've rolled over contracts, we have obviously seen that market continue up, but we haven't broken that high yet, which was made on the 14th. Okay. All right. So what we probably should do is make sure that we are getting a clear picture, just to confirm the comment earlier about all the trends being up. So I'll make that happen, and then what I'll do is we'll have a chat about what this all might mean. So daily's obviously clearly up. Weekly's clearly up as well. We're getting close to a repetition of that range. If we did see $95 go again, we would be broken through that top. Robert's right. There's been, many people have actually written the obituary for the US dollar, and look, I don't think they're far wrong, but whether or not it's now, I don't quite know. But it's interesting to see, I do get a little bit worried when everyone starts talking about it. I've sort of been saying the US dollar's had it for probably a year or two, and now everyone starts, talking about it. It's probably a bullish sign, actually, but should probably all go buy it. But we'll have a look at the US dollar as well. particularly when it hits mainstream media, I do tend to worry, and I think it's probably like the contrarian in me starts to worry. So, all right, our 2-day chart is actually uncertain. So when we were talking before about the trends being up, you've got a higher top, but you do have a lower bottom. If we do get a higher bottom confirmed tonight, or an update, I should say, confirmed, we're going to find that that'll be 1 day up, 2 days up. So if we get a higher, well, we're going to get some form of higher because 1,069 is already the high. So we are going to see, we might see an outside reversal day, but there's every chance that we're going to see a confirmation of the 2-day chart being up to when we wake up tomorrow morning. And then we've got the 3-day chart as well. So that's clearly up as well. So much like the weekly. All right. So all of those things, you know, are giving us some potential for upside, but maybe we need some sort of rebalancing, because if you look at all of the major pushes, and if I just go back to this year, major rally, and this is obviously on the bigger picture, major rally followed by a rebalancing in time. We then got another relatively strong move followed by a rebalancing in time. We've then got another strong move followed by a rebalancing in time. We've then got another strong move, but we're yet to see that rebalancing. You know what I might do, only because I know gold's not our market of choice, but I think it might be worthwhile just pull those sections apart and help us out with our view on gold. What we might do is just get a little bit of a time trend going, and then I can share this chart with you. What I'm trying to do here is that sort of swing chart in time mentality. So there's a number we don't often see, 47, approximately 45, 47 CDs, calendar days. We've then seen the market run down for, better make sure we're getting that right on the date. So the low there, 904. Yep, that low there is 8th of the 7th, so there's 35 days. Followed by 29-day run up. $11 days, I think that is, yep. $31. Yeah, hard to pick those bottoms because that's really where it got going from. That's actually where it lowered. But really where it took off from was probably about there. What's the low there? 987, 985. I'm more actually biased to pick on that one there because I think that's a truer reflection of where the market moved from and where the time actually needed to catch up. And when you look at that, 15 as a percentage of 31 is bang on 50%. So I'm a little bit more comfortable with picking that range. Now, I know it's technically, probably you could argue it's not the right thing to do, but I'd argue that it's there is a reason to do it. So there we go. So if I then zoom back out, and we probably should actually go all the way back to the low here. So I'll do this quickly just because I'm quick enough to get it done. And we've got a bit of a roadmap for this year. So that's 56 days down. And this is going to be a bit of a harder section to pull apart. You know, do we treat that as one major move up? Well, probably a bit hard because I don't think you'd be able to hold that move all the way through there. So I might call that one move, that down one. And then I might pick on that as being another up. You could probably even do, I won't do it, but you probably even do something similar through there, but I won't at this stage. That's 66 days up. $17 days down. $36. All right, so what do we got to play with? So that's a pretty smart way just to keep an idea of what our market's doing in, did I do that one or did I? That's 66. Yep. All right, so what I might do is I'll zoom in here. I'm going to save that. I'll call that UGC, GC, spot D, Tuesday. Right, I'm going to pop out of here, come back to you guys, and I'll share that file with you just so you've got it. I'd be interested to ask you a question. What could we do with this information? All right, now that we've worked this stuff out on gold, what could we now go and do that relates more to the markets we're following? Just clear out this chat window so I can see what we're talking about. So give me a couple of suggestions of what we could do with this information in relationship to Newcrest mining is really what I'm asking. Yeah, probably just fractionally more specific. So we can look at the gold trend to determine what we think NCM will do. Absolutely. I guess I'm trying to think here of a correlation study. Yeah, Robert's hit it there. Compare it to the NCM times. So absolutely, run a roadmap of gold over the top of Newcrest and look at the same turns, and are you getting the same day counts? So I would go and take a look, and you guys can do this. This is probably some homework for you. Go and take a look at Newcrest mining over the same period in time, and we know that Newcrest doesn't run like gold all the time because it hasn't had that straight line performance that we've seen from gold in 2009. We've had some sideways patterns. But remember when we watched last week, we had 27 days up 16, 27, 15. We saw the repetition of time was there, even though the pattern wasn't exactly the same in price. I'm purely picking the market apart in terms of time. So grab that file if you wouldn't mind, and you guys can have a look at that. We'll have a chat about it in just a sec. But grab that file and go and do the same work on Newcrest, and we'll see if we can pick up some similarities. All right, sing out if you can't get that file. I'll leave it up there for 10 more seconds or so. Yeah, it's not bad, is it, Richard? So Richard's picked up on something which I was going to, you've sort of stolen my thunder, but it's a good thunder to steal, which is Richard's taking a look at the time frames, and he's sort of saying, yeah, if I put the ranges together, 66 and 17's 83, 36, 56, 92, 47, 35, 82, and the other three ranges, they end up being 86. So that's great thinking. That's the sort of stuff that really sort of is where you need to take this, is that you're saying, okay, combining these ranges together, I'll just drag that down, I'll pop it back up later if you need. That really is enabling you to start to see breaking smaller sections down, then putting it into bigger sections, and are we seeing day counts and numbers that we're familiar with? So looking at that purely, 83, 82, there's a repetition. I think 92 calendar days would be probably smack bang on 90 degrees, and then you've got 86. So if you just squint a little bit, if you average 82, 83, and 86, you'll probably end up with about 84 and a bit days. Give it a day or two tolerance, and you've got a repetition there. So there's definitely some fun stuff there that we can pull apart on gold. What we need to do is translate that information into what we can do with Newcrest mining. So I'll leave that as a little challenge for you for the week. All right, let me pop back into profit source. But hats off to you, Richard. Well done. So, we're seeing at this stage, we're seeing 66, 17. And I guess what I start to think about here is 17 as a percentage of 66, 36 as a percentage of 66, 56 as an extension of 36, 47 as a percentage of that, 35 as a percentage of that. Now, are we seeing repetition of numbers? Well, 35, 36, we're seeing 15 and 17, so 15 days down, 17 days down. So we're seeing the standard sort of run 11, 15, 17, 56 days. I think is probably a little bit a larger one for us to pick on. But if we're looking for a smaller range, I'd really be looking for the market to do somewhere around the vicinity 15, maybe 11, somewhere an average of those numbers before we are, getting a balance of some point. Now, on the upside, 66, 36, 47, 29, 12. What are we seeing on the upside as far as timeframes are concerned? We're seeing contraction, aren't we? So that is obviously a potential for a little bit of concern. We're seeing, oops, I've lost a number in there. Sorry, we're seeing 29 to 31. That's pretty much a repetition for me. And, 15 is about half of that number. What would ideally make me happy with the gold market is if we saw this run up 12 days. 1, 2, 3. Actually, we've got counting calendar days here. So, yeah, the speed of the last section is absolutely greater. So we're sort of doing some pseudo speed angle work here. I'd tell you that one there, those two sections there are probably pretty similar in pitch, which they are. And obviously the most recent one has got a far greater run on it, and it's probably even steeper than that initial run out. So far steeper. So yeah, all of those things point to me to maybe we need a little bit of a pause. Really, what could we expect if we're expecting a time frame to give us an idea of how long this might go a little bit sideways for. Give me a number that would jump into your head. Well, I'll do it for you. If I was looking for this market to move a little bit sideways, I'd probably expect about 6 days, right? Because that's obviously going to give me 50% of that time frame. So on or around the 20th, if it broke out of this top on the 20th, that would make me particularly happy, all right? Because then we'd have 12 days up, 6 days, even if it's down or sideways, maybe we're then ready for a little bit of a kick along. So that'll be a number that I'm also watching. All right. So not a bad discussion there, guys. Thank you. We'll keep moving though, and we'll get stuck into the oil market, which, as I said, has been running really strongly. We had an area to be watching in the market was around about this date, these 2 dates here. So that's the 25th and that's the 28th. I was looking around 26th to the 29th, and since then the market has done fantastically well if you're a bull. And even in the last week, it's just been green bars, green bars, green bars, open low, close high, open low, close high, open lows, close high, open low, close high. It's been really monotonous in that regard. We've just stuck our nose above 80 based upon the overnight trades, etc. I'm just going to take a look at what the oil market's doing at the moment. And it's been actually as high as $80.40. So there's the egg on my face saying I thought it would hold $80. Hasn't been able to do. But as I said, I didn't factor in the US dollar weakness that we've seen. So that's certainly been a big part to play in this. No guesses as to what the trend is, but we'll do it anyway, just for the repetition of the process. So what we've got is higher tops, higher bottoms, 1 day swing charts up, 1 week swing chart is uncertain, and the 2 day chart, so the 3 day chart will be uncertain. The 2 day chart is clearly up. That was probably certainly the pick of the trades. Not quite an overbalancing price trade, but certainly one that I was watching. I don't think there was a signal because it's an overbalancing price here. If I really shrink my overbalancing price range down to 1, you'll probably, it should actually be coming up. Right. If I go back to the, not the candlestick chart, bar chart. Because you couldn't get in within limits. That's right. So there we go. All right, so the 1 day is up, the 2 day is up, the 3 day will be uncertain, and the weekly is also uncertain, but massively strong movement there. And we're getting certainly, that top there was about half the all-time high, so that's why I thought we were getting a lot of congestion there. It's since broken out there, and really the sky's the limit now, depending on what the US dollar does. We are at that old top there, and those old bottoms, but I don't know if that's going to necessarily hold this market up at this stage. You could well be looking into the mid 80s to the 90s now, as far as a price target if this gets going. So we know what our trends are there. Final thing we'll look at before we look at our individual markets, we'll take a look at the US dollar. So it's just continued to fall out of bed. It's sort of not moving at a great rate of knots, but it's just meandering down, and it's actually given a few short trades along the way. There's a short trade at the moment which has touched on that 75% level, and it's just looking weak, as Robert said. It's sort of dying a slow death. It hasn't actually got back to the lows of 2008 just yet. So I think if you're going to call a complete and final capitulation of the US dollar, I think what you need to see is it break through those lows. And there's certainly, if we saw the market move, so this maybe helps us a little bit with our Australian dollar view. Let's say we're here and the market does come down and contest those bottoms. If we see that sort of market move, that's pretty much going to be, a 4 or 5 point move. That'll bring that will bring the Aussie dollar very much into parity, if not even more so. So Des is saying it's broken the September 08 low. I'm assuming it's that one there, which is the seasonal date in September. So it's the fact that it's busted through that low there, certainly not a good sign. If you're looking for places of support, maybe those bottoms there and those old tops, and then you've got the all-time lows back here. So it is definitely a sad old story for the US dollar. And obviously, if they keep raising interest rates here in Australia, they're talking about doing it in the US, but if they keep raising interest rates, which is likely, that just continues to make our Australian dollar look very attractive, and we'll continue to see some upward movement there. So all kind of looking good if you're a bull in the Australian dollar. Not so good if you're hanging on to US dollars at the moment, though. So, but as I said, to really understand whether the US dollar's had it completely, we'll have to see whether it takes out those lows hiding in the market there. So trend, I think we could assume, and we know obviously the 1 day chart's going to be down as far as our swing chart's concerned. But lower tops, lower bottoms, we're clearly down on the 1 day chart. We're down on the weekly chart, so that's obviously a pretty sad story if you're a bull anyway. And taking a look at the 2-day chart, well, it's down as well, and the fancy the 3-day is going to be much the same. It is. That's a pretty clear trend there on the 3-day chart. We are seeing some shortening there in the ranges, but you know, at the end of the day, hard to be desperately going long at this particular stage. All right, so that gives us, I guess, a grounding for the markets. We've done a bit of work on gold. We see some weakness continuing here in the US dollar, so that'll be favourable for the Australian dollar. It's just a case now of what have our individual markets been doing. So if we take a look at Newcrest, we can see that we were watching this big gap up. So big gap here. Market hasn't even looked like it's going to come back and close that anytime soon. It gave us a higher bottom trade on that gap, but we've seen that on a 2-day chart there. We go back to a 1-day. So if we take a look, we were presented with an ABC long trade sitting on that old top. The challenge we had with that, though, is potentially around about this date running into that area. The trade has not yet reached 50%. So if you were still in that trade, if you had taken that trade, you certainly aren't stopped out. That A to B range did look a little bit overcooked, in line with what we saw on the gold market itself when it did the $85 range. So I found out what that range was. We could go back and measure it against previous ranges. So that's 471, a lot bigger than what we've previously seen. When we had 548, we had a lot of sideways after that. And so 471, it's definitely a range that looks significantly overbought. And obviously we've seen it really do struggle to get to that 50%. So 360. So yeah, it really is one of the sort of second largest range that we've seen in some time. So that would have given you some concerns what you might have been doing there. So the trend is at this stage is up. Okay, so I'll get rid of my ABC points. So the trend is up. We did see that shrinking range too, so we didn't get to 50%. We've actually seen an expansion in the ranges back on the downside, and obviously we're hovering around $1.25. Weekly trend's up. We haven't done a repeat yet of that 722 range, so we've still got about another $1.50 to go, if that's the case. Once again, nice, pretty big range compared to 828. We've seen pretty big weekly ranges in the last couple of major moves. And we can take a look at the 2-day and the 3-day. 2-day charts up. 3-day charts up as well. So what to do with all that information, I guess, is the next $1 million question. So we know all of our trends are clearly up and they're pointing up, but we know that based upon the gold market and what we've seen with our ranges is that we'd be a little bit hesitant just to jump in with vanilla ABC rules on those ranges. We'd want a better way to mitigate some risk, and obviously things like openers rules, placing stops behind gaps, all of those sorts of things I think probably present better opportunities. Now, if we were to, I guess, take a look at some time-based reasons on there as well, I said I'd leave you guys to pull apart the time trend chart that we just did on gold. One of the charts that I actually posted after we last got together, I'll show you what it relates to our balancing time studies. I put up on the forum, but I don't know if everybody's seen it, is that when we look at the time frames repeating, and I guess this relates very much to our harmonies with time by degrees, etc., because I tend to find that 60, 120, 180, they're numbers that seem to work really well in Newcrest as well as gold. So we could argue that this market's working a little bit better in the triangle. What I did when we were looking at that initial ABC trade was to go back and just do some balancing time on the original, on the most major recent range. So we're calling these our reference points. There were sort of 3 reference points I picked on. The major top here in February, the obviously major low in October. I also picked on that little area there in middle of April. So when we ran from bottom to top, we ended up giving about 118 days. It's good enough to 120 in my book. And then if we do a couple of extensions, we've got one extension or 200% gave us the 13th of the 10th. And then when I placed another balancing time, so I've gone from bottom to top there. Now what I'm going to do here is go from bottom to bottom. And it's not exactly where I need it to be. So that low's the 24th of the 10th, 1 day out. We get 178 days. So, expecting the bus runs 2 days 2 days early each time. I'm good enough to call that 120. I'm certainly good enough to call that time frame 180. We've run out to about the 13th to the 15th as a place, just purely with balancing time as an area to watch. And where we've got our top right now is currently sitting on the 15th. So the 14th and the 15th produced a little island, not a technically outstanding island reversal, but the market did gap up, gap down. It has closed that market today, so it has closed that gap today. But as we can see with the volume, a weak attempt to close the gap. I'd really want to see that day. If that was going to be the real deal and this market was set to rocket, I'd like to see that gap closed on a far stronger volume basis than what we've seen here. So if we call that little gap there, market's stuck its nose into it on pretty weak volume. And then what's happened today is the market's gapped open, and then it's found pretty much no support throughout the day. People haven't been buying it, and it's actually come down on higher volume. So whilst it's still an up day, and the thermometer would still read, close to close, that's +2, gap up, that's +1, so that's 3, and then obviously close. So it's actually giving me a temperature of 1. It's really not a fantastic sort of pattern for me to be really confident to be going long. That being said, though, if we can get some some action above that top, I think we've got something that we could be taking into consideration. But that's a swing top at the moment. Obviously, we've got a swing bottom where we are there. If you've got another down day, that actually would confirm that on a one-day chart as giving you a lower top. So what we're looking at here is, there's our top. That's the low of the outside day. And then if we actually got a down day tomorrow, you would actually be showing yourself the actual first lower top confirmed in this market. So something to keep an eye on potentially, because the last time it does these sorts of things, it does do a little rundown for maybe a week or so. We might expect some little rundown there, a little rebalancing before we move to higher prices. So I guess that's how I'm seeing this at this stage. And obviously the trends are all telling me that we want to be long right now based upon bigger picture, but I'm just finding reasons from a trading perspective that it's a little bit hard to go that particularly confident to just jump in. If you're not in that ABC already, well, you're going to have to manage that accordingly, but it's just not giving me super reasons to be long if I wasn't already in the market. Final thing we'll do quickly, and then I'll get some feedback from you guys. Take a look at the Aussie dollar. We've also had a long trade on that in recent times. A couple of ones there. It did actually get to 75% before it stopped us out on that day. I think we managed to hold there. 8481. Yep. So you would have been in on that day. You taken that ABC trade, held on that day, bounced around 50%. Hard to hold through there. It did make it as good as 75% before it came back and probably kicked you out on that day there. Did just enough to break the low. No, it didn't. It actually it held you in there. And since then we've seen the market come back. But what I liked about this ABC trade was you've got an ABC trade that's repeated 100% of the range. So when it's ran up there and given you a 100% repeat of that previous range, then giving you a little point to sort of sit the new point C on, little inside day, down day, sitting on 100%. Looking at that close though, it's open low, giving you a down day, and then it's closed quite high within the range. So all of those things, would have given you certainly some confidence maybe in that trade. You could argue maybe the A to B range is a little bit big, but I'm not advocating because I didn't take it, so I'm sort of using a bit of hindsight theory there. So here's what I was talking about earlier. The market, nice good entry on day 1, day 2 looking good, day 3 looking good. Day 4 gave you a big outside reversal day, did enough to get you into 50%, probably would have stopped you out there. Entry plus commission probably would have held you in. So if you're using index style, you'd be out. If you're trailing stops under swing bottoms, you probably may even be back underneath there. Big outside reversal day, back the other way. So that's a pretty clear indication to me what this market wants to do. It's had a crack at 50%. It's closed above. So 92.03 I think is going to be the staging ground for a move a little bit forward from here. And I'll find out what the Aussie dollar is doing at the moment. So it's trading at 92.23. So if I go back to profit source, 92.23. So it's holding just above that 50%. So I think that's a good line in the sand where we might see this move forward. But time will tell, as we say. So let's just quickly check the trends. Well, on a one-day chart, clearly up. On a weekly chart, it just doesn't get much better than that. It's just history looking back on it, looking at that as a trend on a weekly chart, you've really got, zoom in, get rid of that. Since March this year, higher bottoms. You've only had one false break on the weekly chart before it took off again, and then you're seeing just clear higher tops and higher bottoms. So we're talking a run here from 60 cents to 90 cents. So the currency's appreciated by, over 30% off its baseline. So, it's been a fantastic move. So, sorry, a third. So yeah, it's over 30%, 30, 40% move. So certainly a strong one. And so we'll take a look at our 2-day and our 3-day chart. There shouldn't be too many surprises there. You guys are probably keeping a track on all of this. Uncertain trend on the 2-day chart, and I'd say the 3-day chart's pretty clearly up as well. So we've got obviously, like our Newcrest and our gold market, pretty strongly guiding us to higher prices, much like it has done on the indexes as well. If you're not in that ABC trade, I guess how would you potentially trade it? Well, you just got to wait for an appropriate signal Potentially, you know, you are going to get a swing bottom on your swing chart there, so it's going to swing back up. So, you know, confirmation of a next bottom, maybe breaking out through those areas, could give us a signal setup. All right. We've had a good yarn over that. So 92.64 is today's session high. So thanks for David for that. All right, two things. So that's given us an update on where we see our markets currently, and you know, so much for my, you know, we'll keep it short tonight. I'm looking at the time already, knowing what I want to get done, and obviously we're going to beat our 90 minutes without any doubt. I keep reinforcing, I guess, the whole concept behind and having a group of traders in Brisbane this week who are getting stuck into time frame analysis. One of the things I want to keep you on the straight and narrow is that, you know, I don't yet want to unleash us into a forecasting mode on our markets. I really do want to get more of a sense of picking up its personality, learning a little bit more about it, just stalking it really to see what it's capable of doing, and getting comfortable with getting some trades away if they are presented. But we are going to get stuck into the forecasting elements of it, and I want to set some foundations for that tonight. But at this stage, we're in a situation where we know a lot more about these markets than what we did sort of 3 or 4 weeks ago. And we should be doing that on a regular basis, which is just going back and reviewing where the global markets are. And I'd be interested if that's part of your daily process. If it's not, you should definitely be doing that to get on top of what the current ABC trade is doing. Even if you're not in it, you should just know how it's progressing and what that's doing. But I fancy many of you are all over that. So what I'll put to you at this stage, if there's any questions that particularly relate to what we've just talked about there, and if you've got any comments, whether or not you're in the Aussie dollar on that ABC trade, or you're in the Newcrest mining trade, or you're thinking, should I be in them, or what if I'm not in them, or what might we do to trade them? I sort of want to promote that discussion just to get your feedback. And if you're not, that's okay as well. So, you know, if there's not much we need to pull apart at this stage, I'm comfortable with that. I guess the three things that are left for us to have a discussion about is we wanted to look at the contract specs for the Australian dollar. And I wanted to start to pull apart some balancing time ranges just to show you how I validate whether they work. And then just taking a look at the seasonal date work, and the quickest and easiest way that I've learned to know do seasonal dates work, and then marking them up on a chart. And then we'll touch on the birth of the contract work, and then I'm going to give you guys some homework to take away on the birth of the contract. One of the other things, I guess, that I thought I'd make mention is because we are looking at gold pricing, we are looking at the Aussie dollar pricing. If you don't have a futures account open, obviously getting access to live pricing can be a little bit difficult because Profit Source does have a delay. I'll put my chief strategist hat on for just a second. I will remind you that you can probably easily get this data the way that I do it, which is through an Options Express account. So you can actually go and set an Options Express account up online by going to optionsexpress.com.au, set up a futures account. You don't have to fund it, and they will give you real-time futures data, okay? So obviously down the track, I'm sure they'd like you to fund it, but they're not going to chase you for it. So if you want some real-time futures pricing, you'll be able to go and get that now. Some of you have already got platforms that do it, so be it, you're taken care of. But I think the offer of being able to get free futures data, real-time with volume, etc., is not a bad way. And it means that we can have a fair discussion and you guys are all on the same page. So what I might do is yeah, Future Source has data with 20-minute delay too, but you know, if you can get real time for free, I'd always go for that over 20-minute delay. But I hear what you're saying, Des. If you can't be bothered setting up an account, I'll quickly just show you what it looks like. So that's my Options Express platform, which should be popping up, and that should be on the screen now. It is now. There we go. So I don't want to be drawing a line. Yeah, IG markets as well. I just don't, what am I looking for here? Correct me if I'm wrong, Debbie, but are they providing, is IG markets providing the real-time futures data, or are they providing the real-time quote on the markets that they offer CFDs on? The two might be different, right? So just be careful with that. They may not be giving you the actual physical futures price. They might be giving you the market that they synthetically trade for you, because they don't, they're obviously not trading direct market access for commodities, because obviously the only way you can get direct market access to commodities is futures. So at the moment we're on a 60-minute bar chart. We're coming back to tackle yesterday's close. That's that little dotted line. So that's what the Aussie dollar's doing, and the gold market is trading at 1064.20. So that's what I'm using to get those prices comfortably above yesterday's close, all right, for the last session. So yeah, cool, Debbie, thanks for that. I just don't know, and I'm not trying to say that it's what I've said is absolutely correct, but I just checked that. So might make that point to camera. With a CFD provider, if you've got a CFD provider like IG or CMC or whoever, they'll give you pricing, okay? But you've got to ask yourself, if they're offering a CFD on, say, gold or the Aussie dollar, it may not actually be the physical futures pricing that they're giving you live data for. They'll be giving you live data on the bid and offer that they're offering, okay, for you to trade. That's part of my frustrations when they first all started offering CFD platforms in Australia. I said, I don't want your charting engine to tell me the bid price or the ask price, because that's what they chart. I want you to chart the traded prices, and they didn't want to do that because they were market makers, and that sort of made the prices a little bit more transparent. So just be careful with that. For true transparency on the Aussie dollar price and the gold price and the oil price and the Dow Jones futures and the S&P 500, if you want absolute transparency, you've got to look at the futures market for all of that. So that's just a point that you should be clear on. All right, so what I think is worthwhile doing now is doing 5 minutes on what the Aussie dollar specs are, and then what we'll do is I want to do some seasonal date discussion on Newcrest mining, and as well as on the Aussie dollar. I want to take a look at some balancing time, validating some of those bigger ranges, and then also want to take a look at both the contract stuff. So that's what we've got left. So what I'm going to do is I just need to get set up. I'll open up a web page to get to the CME. So cmegroup.com is the website for the Aussie dollar specs. So when we're talking about trading the Australian dollar futures contract, we are looking at using a dedicated futures contract, and that trades in Chicago. So if I give you the web address, which is up the top here, cmegroup.com, that tells you where you need to get going to. If you find the products that we're interested in, so we're looking for FX products, and because it's foreign exchange, and here we've got the Australian dollar, US dollar options product. Yeah, that's the one we want there, the currency pair. Obviously, it trades, you know, the Aussie dollar to the NZ dollar, or the Aussie dollar versus the Japanese yen. But the one that we're tracking as the futures contract is based against the US dollar. So I'll click on that one. There's actually some micro ones there too. So you might trade a micro contract, which is, I think, we'll have a look at it. I forget the scaling of it. I think it's 1/10 the size of the full contract. So up the top here, you'll see contract specifications, performance bond. You can get real time. Well, you can get delayed data here. If I go and get the contract specs, I'll point out the things we need to know. One contract controls 100,000 Australian dollars at face value, 6 months in the quarter, so March, June, September, December, and also March, June next year. So we'd be trading the December contract if we were looking to trade. It's physically delivered. You've got to have position accountability over up to 6,000 contracts or whatever. Not a problem for us, I don't think, at this stage. The ticker symbol is AD, which is the open outcry, so we know that's what we look at. Moves in 0.00001 cent per Australian dollar increment, and that actually relates to $10 a contract. So in other words, if it moves 0.0001, that moves $10 a contract. Trades electronically as well as in the pit. The open outcry sessions are from 7:20 a.m. Chicago time to 2 p.m. Chicago time, so that's Chicago time. We've got to remember that. The electronic session kicks in after that, and it expires on the second business day immediately preceding the third Wednesday of the contract month, which is usually a Monday. And obviously they're all listed with the exchange rules there. We need to know what our performance bonds are, so we need to know, they call it performance bond there, where we're really looking here at what's the margin requirement. I'm just bringing, I've got to click on another button, sorry. Just opening up the web page here. All right, so it's taken me to the whole product listing. All right, so I need the outright rates. So the Australian dollar, the initial margin is about 3,000 Australian dollars, $2,500 is the maintenance margin. And as you can see here, the micro, so that's the Australian dollar micro futures contract, it's obviously about 1/10. So a micro contract would control 10,000 Australian dollars, not 10,000, not 100,000 Australian dollars. So as you can see, $338 would be your initial margin to open that position. So if you're thinking, hang on a sec, how can I get into the access into the Australian dollar and I don't want to trade at that sort of margin level? Well, you can definitely use the micro as a way forward. So it's obviously 1/10. Okay. So a lot of this information can actually be found from Profit Source. So I'll just come out of our screen there. I'll jump into Profit Source and quickly show you where you can find this stuff out. But I'd really be important for you guys to go away and do that work just to make sure that you are comfortable with that. So if I go to action information for the Aussie dollar, so actions for Aussie dollar, go to information. We'll see here that it is traded on the CME. All of those. There's a little button here that says future specs, so I click on that one. And what we've got here is all the same information. So a 1 cent move is actually worth 10 US dollars to us. Okay, so even though it's valued in it's 100,000 Australian dollars, everything's valued in US dollars. So this contract is the Aussie dollar versus the US dollar. Okay, so if I look at last night's move, I'll type some numbers on the screen for you. So last night, or the last session, I should say, we had a range of, high was 92.46, and the low was 90.62. So between those two numbers, we've got how many little 1.001? 184, thanks Des. So there's 184 ticks in that bar, and that would actually equate to 184 multiplied by 10 US dollars, which would equal 1,840 USD. All right, so Gerald, you're saying no chart yet. All right, let me pop back out. I'll just fire that up again for us, Gerald. All right, hopefully that's better. Seem to be working my side, but I'll take your word for it. So what we were saying is the low point here. I can't draw a circle. I've zoomed too far in. So the lowest price of the day. No, I've zoomed too far in, so it won't let me add anything to that. Can you just confirm, Gerald, that you can actually see that? And then, Annie, I'm going to answer your questions. Just let me know, Gerald, if you've got that chart. All right. Not sure, maybe Gerald could have dropped out his end, so he looks like he's still connected, but I'm not sure what's happening. So just let me know what's going on there, Gerald, and I'll pick it up from there. So about 1,840 US dollars in that move in that range last night, and keeping in mind it was only about a $3,000 margin. So it's actually pretty good pound for pound reward to risk, or margin, you should say. All right, I just want to add Annie's question. So Annie, you've said here, where would I trade the FX BP Australian dollar? So British pound Australian dollar. So when you say where would you trade it, give me an idea of what you mean, as in what exchange, or because if you're trading the FX, the spot FX, well, it doesn't have an exchange. It trades around the globe. So that's the interbank market. We're trading on the Chicago Mercantile Exchange for currency products, but if you're trading spot FX, which you could do instead of trading the futures contract, you are actually not trading on a physical exchange. It's not a location that you can go to and visit. It's basically a series of computers that are worldwide, and they're all linked in together, and therefore you're transacting in that environment. So you're not actually trading on a physical exchange, if that makes sense. Still quite secure and safe and all those things. I don't have a problem with it, but I tend to tackle the currency futures contracts rather than the spot market, but each to their own. I would point you in the direction of Matt Barnes's discussions on the forum. You can do a search for them. The differences between currency futures and spot FX, he's listed a lot of good stuff there, so I won't reinvent the wheel. I'll get you guys to go and take a look at that. So is there any questions that I can help you with the futures contracts, or maybe I'll leave that to you as some work to go away and have a look at and let me know how that sits for next week. What I want to do is I want to jump into my PowerPoint presentation really quickly. So I'll just bring that up. And there we have it. So, I didn't put a lot of slides together tonight, but what I wanted to really just recap with you really quickly, I'll talk about that a little bit later. Actually, I've just put up a set of profit source tools slides there, which I don't need to worry about at this stage. I guess I'm just going to bring you back to the discussion here on seasonal dates. So what I wanted to work out with our markets tonight was how well does our markets relate to seasonal dates? So do they turn regularly on these dates? And obviously we know Gann talked about the 8 key dates per year, and you've got his discussion in your Ultimate Gann course. Your Gann Mastery manuals would have that seasonal discussion on stocks that he has, where he says in the March, the winter quarter begins on December 22nd, and 92 days later is the 21st of March. What you should be very comfortable with at this stage is that what we're dealing with here is a scenario of 8 key dates a year that we need to watch for. Now, we know the major four are obviously the quarters, so 22nd December, 21 March, 22 June, 23rd September. And really these 45-degree points are what you would call midpoints between the two. So we're talking about midpoints between the changing of seasons. So they're 45-degree points. So it does tend to throw people when you have 120 and 240 there. Okay, that's just they shouldn't actually be there as per se. That is the quarters, because that's where the triangle comes into meet. But that numbers does tend to give people some confusion. All I get you to do at this stage is follow the dates around the outside, and that's really all we need to be watching for. So what I want to know is, do these markets have some level of success turning on or around these dates, and how would I mark them up? So what I'm going to do is jump into Profit Source and give you my insight, and we'll have a bit of a chat about how well this is working. So there was some of you have done a little bit of work on what you've seen so far. So we might kick off with Newcrest Mining. So one of the things that you can actually go and do is get your cursor and or get a crosshair tool, and you could go back and say, all right, well, the 22nd of September, did it give me a change in trend? You know, did 8th of August give me a change in trend? It's a pretty cumbersome and labour-intensive process. What I get you to do is, one of the tools in the software is called the time cycle analysis tool. And if you bring that up, there is something that we can set up. Geez, I've done well there. I've nailed 22nd of March, just throwing it on the chart. You can go and set up with the intervals. We're going to look for the 8ths of the year. So that's approximately 45 degrees apart. And I can actually set this up as solar degrees. So setting it up as solar degrees, we'll find that each of those little runs there is a 45-degree movement within a tolerance of, you know, because it's not ephemeris accurate. So you can argue that this particular tool is only doing a calculation. It's not calculating direct correlation to an ephemeris table. But what we need to work out is, okay, if I plonk this on my starting date here, which would be the seasonal date in December, which as Gann says is the 22nd, if I run forward there, you can start to look in 2009, and then I move it. So in 2009, have we seen some correlation with seasonal dates? So I'll lock that just to begin with. So what I tend to do through here is if there's some sort of hit either side. Now, I'm going to argue that the 2nd of January is too far away, and obviously the 19th of the 12th, whilst there was a spike, didn't really stop the market. I would point out to you, well, was early February, 4th or 5th of February, a place to watch? Yep. So I'd go in and basically just put a little circle on that area. Was the 20th of March? Well, I'm going to say that in this case, just making sure that's the 19th. The 20th of March did actually present ourselves as being a top. All right, and we did see a sell-off from there. If I pick on the May seasonal date, that one's, you know, a top within a range. The market did run down, but I don't think you'd really call that a tradable range. It did give you a lower top entry. That one's a bit on the fence. I don't want to clutter our chart, so I'm going to sort of let that one as a no. This one here, whilst you'd say, you know, it's the 21st, there's the 23rd, the market did low on the 24th, and that was actually a little bit closer to the season date this year. Whilst it didn't give you a great long trade out the other side, it would have presented you a fantastic opportunity to lock in short profits out of this top here. So had you just run your profits down into that level, you know, where it did sort of give you a little bit of a double bottom and close out on or around your seasonal date, I think you'd be pretty happy. So I'm going to call that a hit. The 7th of August, you know, the market topped on the 5th of August. So, you know, within 2 or 3 days tolerance, I'm happy to call that one a hit. The September date, yeah, well, you've got I guess this one was a great trading opportunity because we actually spoke about this as an ABC trade, you know, when we first got started. Point A was an island, point C was nearly an island, and then your point C date happened to be the 23rd of September. So when you've got your point C date acting as a seasonal date, that one I'll tag, but is obviously not as relevant. But that really would have helped us getting short this market, and that ran down to about 125%. So our next date to watch is going to put us into early November. Now, if obviously you did some work with Noel on the weekend, early November, well, I'm not trying to pin a price on it. I'm just trying to say that's an area to watch. That's something that I definitely keep in the back of your mind as this is starting to unfold. One thing you may well see is if this was to get a little bit sideways or you know, even if it ran down, couldn't close the gap load on the 7th of November, what if it ran into a top somewhere above there? You know, all of those things are possibilities. That would be a date that I'm just definitely keen to watch. But based upon just a simple piece of analysis in 2009, who'd be comfortable that there's at least something to work with here? I'll come out of Profit Source. Come back to you guys. Who'd be comfortable that the seasonal dates, without getting into some of the really, you know, more intricate ways we can calculate time by degrees, I'm quite comfortable with that at this stage. You know, we've got 3 or 4 dates out of a year. Out of those 8 seasonal dates, fantastic. Everyone's sort of happy with that, which is good. What I want to do is go back and 1 year's not enough. All right, we've got to go back and do some more work, and I'll do a little bit tonight, and you guys can help me out with the rest. Keep this in the back of your head. If you've got 8 seasonal dates per year, and what if only 4 of them produce tradable changes? All right, you're going to need a signal, but let's just say that out of 8 seasonal dates per year, there was 4 signals that were produced. That's still a 50% success rate. So for me, that's still a very, very valuable assumption as to whether or not this is working. So Robert's asked me, how do you see where the date is? Both early or late? Well, that's what we need to get a bit of a sentiment indicator on. Is I want to share some of my science as far as working out are we running early or late. But at this stage, I'm just going to operate within a couple of days tolerance and see whether or not they're suitable. So I guess to back up or to continue what we've discussed here, I'll jump back into profit source and just sort of extend on the discussion with how you can go back and set this up really quickly and actually go through and sort of get a very quick historical check. Now, you could put this into a spreadsheet and record these things one by one. I've actually locked it. There we go. But what you can actually do is if you just drag this all the way back, you could apply it from the beginning. You could apply it in a different way if necessary. I'm just doing it a very manual way. I'm going to zoom into the start of the contract. It's interesting that it's not running all the way out. What I'm going to do is take a look at where the June. Well, there you go. The market load on June the 23rd in 1987. So what I would do is I'd start my discussions here, and I'd actually use this tool as a guide. So all I'm going to go and do is just pick on places where I've got pretty close changes in trend. So we've seen a 45-degree run there. The market topped on the 21st, 22nd of September before it fell into a 8th of November low. That as a little interim bottom, you could argue, but not really. At the moment, we're seeing some successes there. There's a success. And having the lines on the screen, you can pretty much just start to see, and you can move pretty quickly. You've got to get the scale stretched out to so you're not, missing certain ones. But it's interesting that if you, if you're watching for places to trade in or out of, the market wasn't much good after that date anyway. If it got out on the 8th of the 11th. Now, already, when I look at this, I'm starting to get a hit in my head. Well, early, November top. November didn't give us too much there. November top back here, definitely. Shrink that down again. So there we had a November top there. So I'm starting to think, well, we're running into the November seasonal date. Is there anything November-based that could help me? So through here, we had a sideways market. You could argue the market bounced off there, but I'm only looking for where the places we could make some pretty good determinations of changes in trend. And just have, that's run a little bit early. Okay, so we've got the, 4th of February. Market made a top on the 31st. That's a little bit too far to call a seasonal day hit. If you started to close your longs around about the 21st and think about going short, you'd be happy. Now, I want to go back and trade through this period. Now, once again, not really a good long trade out of there, but if you closed your shorts, you would have been pretty happy. Early February, market turned there. Another little low. All right, closing out your position. So I'm thinking about trading into my seasonal dates as well as trading out of them. And you could go back and do this. There's another, not a bad little turn. So turned on the March seasonal date, 22nd of March. The market, took off like a rocket. Now, I'm not going to go through and do all of that for you. Or do all of that. So I'll just come back to camera. I'm not going to do all of that, but does that sort of give you a bit of a foundation? Now, that'll probably take you half an hour to do all the way back to Newcrest Mining on its whole history. And then what you can start to do is you could use a whole lot better color coding system than I've done there. You could maybe color code your 90-degree turns as being a particular color. You can then start to identify the 45-degree turns as being another color. You might even want to give them individual colors, and then you can just go back and pick and say, all right, well, what's the highest frequency? If red is 21 March and green is, 22nd June, what are the dates that are giving me, don't make them early, middle, late month dates. Pick 3 colors or pick colors that are different to the colors we're using for time by degrees already. but that's probably the quickest way that I've ever been able to work out whether or not a market does relate to its seasonal dates. And I think with the example in 2009, going back and taking a look at what is around the birth of the contract, if it's anywhere near as good as that moving through the middle of this, I think we should be, very much comfortable to watch our seasonal dates. So, as I said, that's something that's worthwhile. Now, if you did that exercise and you do it completely from going back to the start of the contract on Newcrest Mining and the same for the Aussie dollar, what do you think by doing that manual process that you could learn from, A, it's going to give you which are the most prevalent seasonal dates, but what also is it going to teach you by doing that manually? Nothing? What might it teach you if you had to go back and do all of that stuff manually? Yeah, the pattern or the personality? Yeah, it's personality, absolutely. I'm thinking even more specifically. You're going to start to remember the historical tops and bottoms, which Des has nailed. So where are the major turns in this market? You're just going to start to see dates and prices because you're working with the market, and that's going to start to give us better anchors to play with going forward. But for me, that's a really good lesson to do manually. The tool is time cycle analysis, and if you do that on your market, I think you'll learn a whole lot more about it. So that's something I'd commend you to do a little bit of work on, and I'll be looking forward to having it. I'll try and, if my week shan't be as hectic as it was last week with false starts, so I should have some time to obviously throw at catching up on the work I said I would do for you as well as this work. So I look forward to sort of sharing notes and formats as to what we might come up with. Could we do the same thing with the Aussie dollar? Yes. What I'd like to throw into your head, though, is which was a point I was going to make. Would it be worthwhile knowing? Obviously, we're in 2009. Would it be worthwhile knowing what the seasonal dates did in '99? If we're looking now at a master time cycle approach, if you had for example, if the around early November was really important in '99 and '89 on Newcrest Mining, maybe we could, as we're running into the current seasonal date or the next one in our list, maybe that's going to produce something of note for us. So I'll leave that as a bit of a clue for you guys. You can go away and take a look at it. What I want to do now is quickly do the same thing with Newcrest Mining. Aussie dollar, the other market we're looking at. So setting up the time cycle analysis tool, it's really, as I mentioned, probably the easiest way to do this work. Setting it up to being 45 solar degrees. Kicking it off in 2009, we'll start it on our seasonal date in December of 2008. We'll use the 22nd. We'll wear these relatively loosely. So once again, the market load in the 2nd of February, I'd be pretty comfortable to say that that's close enough to trading into that date. Not a great hit there in March, not a great hit early May. 21 June, well, the market did make a little bit of a low on there, but how tradable it was. Obviously, that August top from this year is certainly one to keep me interested. September top from this year, well, the market sort of held on that, fell away a little bit before it, picked up and made a top on the 22nd, fell away and then got really strong. What I also like to see is, well, if that was a top in the seasonal date, you'd be thinking there, all right, well, it could be a top here and it's run 45 degrees from the previous top and maybe we're expecting a lower top here. Did it give me a lower top entry? No, well, it's given me an outside reversal day, okay, so that would get me thinking, and then it's just poured through that top. So based upon that picture right there, if I come back to you guys and I say, all right, well, 45 degrees prior gave me a top and the market at least sold off. In this case, 22nd of September was the top, gave me 2 days down. In the context of the swing chart, it's still up. Would I expect, now that this market's broken out of that seasonal date, what could I expect this market to do? I could expect this market to be screaming at me it's time to go long, and then I could maybe wait for a higher bottom out the other side. Big snapback there, outside day, down day. Now it's taken off out the other side. And if it gave us the first higher bottom above there, where we are now, October, there's our ABC trade. So first higher bottom as it broke through the seasonal date, and that one's produced a small return at this stage, could go on to produce a whole lot more. So keeping in mind that knowing what our seasonal dates, I try not to make things too hard. If I know that the market works with seasonal dates, I'm not going to try and reinvent the wheel. Now, I could take this back, as I said, to the birth of the contract. And obviously get a guide as to, maybe I'll pick on the run out from here. I would go back to the birth of the contract and start from those important dates. I'll put it on the 22nd of March. All right, so just sort of rolling through here. Well, no major turn there, no major turn there. A little higher bottom there. So I'd be interested if that's an ABC, which it's not. That was calling that ABC. Market ran very strongly out of there. So even though it wasn't a turn as far as a major low, it certainly did give us a tradable run. It then ran into 45 degrees later, it gave us another low. 45 degrees later, not much. We'll argue that the 20th of December was a turn. Little double bottom, average out those double bottoms. You'll probably find early February, market took out from there. 22nd of March, no. Good little top there. Good little bottom there. All right, so not a bad top there. Not a bad low there. I'm glad currencies don't respond to Gann's work. There's a low there in December. Anyway, I'm comfortable with the work that we're doing there. So that's really got me encouraged that seasonal dates will be one to keep us interested in. So you guys don't need too much coaxing as well. That's looking okay as far as the seasonal date work there. So go back and get a feel, a familiarity with your market and Newcrest and the Aussie dollar, and get a working understanding of what seasonal dates are generally going to give you the better changes in trend. But I'm blown away when I look at a market like that, the Aussie dollar, many years after, Gann started doing all this stuff, the rules are still working. So I guess if you're looking at a currency market, they're heavily traded, and obviously they don't have boundaries, so to speak, if you're talking FX, but they still seem to follow the rules of vibration and natural law. So, those are things that are obviously pretty interesting. So final discussion I guess I'm going to have for tonight, I'll pick up the balancing time stuff, I think, in our next session. We've got a confidence now that the seasonal dates are working well. The next thing we want to do is start to get market specific. So this is a lesson that I don't generally do too much at Gann Mastery within the lesson I do on time by degrees, because there's some aspects to it that make it a little bit challenging. But what we can now start to look at is that the birth of the contract will provide a vibration to us in the same way that the seasonal dates do. So if I tackle the two markets of our choosing, which is obviously NCM and the Aussie dollar, I could use the birth of the contract as starting point, and then we could run our degrees out from there. So I'm actually going to get rid of the time cycle analysis tool. I'm going to go back to the first date that the contract started trading, assuming that this is the correct date. I'm doing, as I said, I'm waiting on some queries still from the exchanges, but from my mail, that's pretty solid on where we are. 13th of January 87. That means we could use the 13th of January 2000 and every year as an anchor point. So if I put a vertical line here, and I go and pick on the 13th of January, that's going to be my starting point. All right, that's going to be my anchor for the year ahead. And what I can actually do is I could run out degrees from the birth of the contract. So you can do this obviously with the Gann emblem. You can do it with the time by degrees tool. I'll pick on the time by degrees tool using the 13th of January as your starting point. And you do this obviously using every year. Well, 45 degrees, pretty much, into that low, that would have been about, 50 degrees. 60 degrees didn't give you too much of a turn. 90 degrees from the birth of the contract would have given you not a bad top to trade into. So if you were, trading through that period there, jumping out with your profits on the 12th of April would have made you feel pretty clever. The 29th of May, well, the market topped on the early part of June, so that would have got you looking in the right place. 180 degrees from bottom to bottom, so that's going to be about 179 degrees from the birth of the contract. 240 degrees, and what we've got here is we've got 240 didn't give us much. What we've got is 270 degrees giving us this current run in the market. So it looks to me that obviously it's broken through that. So the 16th of the 10th was a bit of time pressure based upon time by degrees off the birth of the contract. It's done essentially, it hasn't even paused there. We did get a reversal that's it's shot through, so that tells me that it's not likely going to produce a major change in trend here. I'd be looking obviously in the early part of January, as another area to watch, and we could pick this up and go back to the 13th of January the year before, and I'll have a look and see whether or not that was giving me any. It's always good when it starts with a top or a bottom, but anyone spotted what I've spotted there, which is from the birth of the contract 180 degrees later. We got what is the all-time high. 180 degrees later, all-time high. Interestingly enough, 180 degrees from the birth of the contract this year, we got a major low. So just purely for my curiosity's sake, I'll go back even another year. I'll see whether 180 degrees gave us anything important there. So well, that's going to be a little bit more than 180 degrees, but not a huge amount more. 189 between friends. How's that sound? Now, I'll ask you, if we pull these apart, is that a sort of correction that would make some money? Is that a sort of correction would make some money? And then in this year, we've actually got pretty strong movement to the upside. So if I label those 1, 2, and 3, had those dates to watch, which we now know 180 degrees from the birth of the contract is going to be positioning us around about the middle of July. That for me is going to be a pretty strong place to keep an eye on going forward. So I'm really excited. So I've obviously learned something new about this market tonight as well. So in the last 3 years, now if it continues to go back and prove to be successful around middle of July, if 180 degrees from the birth of the contract's producing major changes in trend, I absolutely just tell you to tattoo on your forehead that obviously the same time next year is going to be a place to watch for a major change in trend. Who's relatively happy with that work so far? Just purely looking at the birth of the contract so far. Hard to get a show of hands. I know Noel asked for that on Saturday. By a show of hands, who's happy? I'm very, very happy about that. That's got me pretty juiced actually about the Aussie dollar. So now, if I say to you guys, we now start putting together, so taking off my trading hat for 2 seconds, we now put a forecasting hat on. What if we start doing some work where we do balancing time, interim time frames, ranges, master time cycles, squaring highs, squaring lows, and what if we start getting some work now that pushes us out to July next year? What I've been able to do is I've already got an idea that the market's turning there. Now, if we were to put together a forecast without fear nor favour, and all of our things happen to line up in July, do you know what? Bingo. All right, that's half the battle done. That's what we're looking for, Elizabeth. Yeah, clusters. We're looking for all of those things to come together. So because I've done this work, it's in the mental memory. I now know that that's an area that I should be watching for. So as I start putting together a forecast on this market, and you're going to obviously do it with me, we're going to start to see, look, are there things pushing us into July? And if they are, that's kind of like the square peg going into the square hole. You know that's a favoured place of this market. But as I said, I'm excited by that, but I need to validate it a little bit further. All right, last thing we'll do is we'll take a look at the same thing on Newcrest Mining. So, I haven't saved that chart, by the way. I did. All right, if I go back to kicking off here on the start of Newcrest Mining, we've got the 4th of June 87. So final thing we'll do is we can stick a horizontal, or sorry, commonly known as a vertical line on the 4th of June 2009. That would be relatively random, wouldn't it? 3rd of June was the top. Yeah, anyway. We'll bang some time by degrees on there. And we're currently about 135 degrees. So 45 we've got to turn, 60 we've got to turn, 90 we didn't get anything, and we're 135 degrees. So 180 degrees is going to push us into the early part of December. What I'll do is I'll see, you know, obviously not enough data this year to really make that work. I'll go back to last year. I'm excited though that the top of the year, that big top in the middle there was the 4th of June. So am I looking primarily at 45 and 90? Oh, multiples of 30 as well, Linda. Absolutely. Like, you know, all 12. I'm just trying to keep it simple as far as if I have 12 up there, I'll probably find that I'm going to end up with pretty much everything. But yeah, 30-degree increments, 60-degree increments, they're the ones. But I tend to look at 45, 60, 90 as my main drivers. Then the sort of 210s and 330s and those sorts of ones tend to, you know, be not less convincing, but, you know, less of a concern for me. I'll obviously use them if they're working, but if they're not working, I tend not to worry too much. So off the birth of the contract dates, we saw the top come in, yeah, 38, 39 degrees, stretching the friendship. First lower top came in 45, another lower top came in at 60 degrees. we're 90 degrees there. If you closed out your shorts there, do you know what? You'd be a little bit dirty, but you probably would still be relatively happy with the profit. 135's worked well. 180, well, the market isn't a major low there, but what did it do after there? It shot off like a rocket. 240 was a good turn. 270 wasn't much. 360 we know is working pretty well. 450, etc., etc. We already know. All right, well, that's 2 years worth of work. It's not as spectacular, I think, as the Aussie dollar work, but we'll do one more year. 4th of June. Oh, the load here in early June, and then sort of started to get going. I've still got that Gann emblem on there somewhere. Where have I got that? Okay. All right, so 90 degrees worked very well. So bottom to bottom, 90 degrees, market took off. If you're trading out of the 5th of September, you were pretty happy. 135, market got moving again. 180 was a little turn, nothing major. 240, not major. Oh, what about that? That's your father. 270 degrees gives you the top of the market. Hope that's got you excited, got me excited. So from the birth of the contract, you could have picked the top of the market using 270 degrees. 360, the market tanked. 450, pretty close to a low. 540, 630. Yeah, there's some work for us to continue going. So what I'd like you guys to not only go back and measure some seasonal date work, but I'd also like you to go back and start looking at the birth of the contract and how it might impact our work going forward. But there's a fair amount of work in that. So as I said, I don't want to introduce 5 other things tonight, because if we get this stuff done well, we'll get a real vibration for this market and we'll get a real heartbeat of what it's providing. So if I throw it to you that there's some work in front of you there and you can go and put that into practice, we'll talk about the results come next week. But on that note, I guess I'm happy to hand it across to you guys now if you've got any questions, comments or queries, but I think that's enough for us tonight. You've got a little bit of homework there, and we've certainly made some investigations into our market going forward. So the floor is yours, as they say. Yeah, that's fine, Des. I actually, let's do it this way. So, yeah, that's for you. So, yeah, so questions, comments, queries. Oh, sorry, Annie, if you missed the update, my kind of, it's not as melodramatic as the first time I explained it. Oliver missed his, he didn't have the operation, is the long and the short. He spiked the temperature 5 minutes before he was due to go into surgery. And they cancelled it because of it. It's because it's too much of a risk for a variety of reasons, which I won't bore you to tears with. We got him home that day at 2 o'clock, and he was laughing and happy and smiley and giggly, and he hasn't had a temperature since. So all I said earlier in the night is he's clever. So he knows where he wants to be and where he doesn't want to be. Okay, but thank you for asking. Thanks, Elizabeth. Thanks, Christine. Thanks, Glenn. Richard said the birth of the contract and the birth of the currency. Can you use both? Yeah, it's called Murphy's Law. Yes, you could, Richard. I'd be interested to see your results. Now, when you're saying the birth of the currency, I'm assuming you're saying going all the way back to when Australia got its own dollar. I fancy that probably would have some resonation. Have a crack and let me know how it works. Thanks, Robert. Thanks, Jose. Thanks, Key. Thanks, Graham. I'm glad we're learning lots. Thanks, Stephen. All doing good. Thanks, the other Graham. We've got a couple of Grahams. So thanks, gents. Thanks, Ron. I'll get the forum bits worked out. Thanks, Debbie. I know you're having problems posting pictures and all that stuff. We'll definitely work on that. Thanks, Lynn. But we've definitely got some food for thought. We're going to get cracking into all of that sort of good stuff from now on. All right, everybody. Well, I think that's everybody who's managed to say hello or goodbye. Thanks, Darren, and thanks for our discussion earlier. And yeah, thanks, everybody. Thanks, Wayne. And I'll catch everybody next week. So yeah, we're all systems go for next week. So Linda's saying, thanks, and had some time analysis charts already set up using time. So I'll tidy up a bit more. Okay, perfect. All right, and we'll chat about the results come next week. But good session tonight, guys. Thanks, everybody, and be well. Thanks, Richard, and catch you all next Tuesday night. So take care, guys. Recording. So look, good evening everybody, and welcome to, as I said, session 4 of our Ultimate Gann course coaching. So I guess thinking about it tonight, sort of what are we about a third of the way through? So we're sort of at the 25 or 33% point of our. G'day Neil. We're at the 25 or 33% entry level, you might suggest, of our time together. So obviously I want to sort of take stock of what we've achieved so far. I've got some stuff that I'm pretty excited to show you tonight, mainly on Newcrest mining, because I must admit that's sort of been where most of my focus has been with doing some work over the last week. I do want to commend everybody in the class as well. There's certainly been some good work coming through with regards to people doing some work on seasonal dates, etc. I guess, look, I'm also keen to see that work as well. I guess we'll have to find a way that I can sort of make that available, an email address for people to send that stuff to. I guess the only reason I'm interested in it is I'm looking to be able to collate it all, I guess, and turn it into something that's very workable as we get towards the end of our time here. So for no other reason that I might be able to bring it together in a format that all becomes workable. Obviously, I got some stuff from Des, and thanks for that. And I know some of the other people have been doing some work there as well. So obviously, if we can collaborate on all of that work, it just makes life a little bit easier. I must admit, I'm struggling a little bit as well. I sort of forget how much work it is to bring up a new market, and how much I guess time it's taking to do some of the research that's involved. And look, I guess it's important to note that some of you sort of are saying, yeah, you're getting caught up and finding Tuesday comes pretty quickly, and I'm finding the same thing as well. But I don't have a simple or an easy way to say to you, yeah, you've just got to find a way to make it happen. But I guess there's two ways you can look at this. If you're impatient, well, obviously you've got to find the time, or if you're obviously aware that you do have some time limitations, I guess you could look at this as a program that's bringing up a couple of markets, and by the end of our 12 sessions together, we'll be in place where we've got a very, very good outlook as to how we can trade these two markets. Now, if that doesn't mean that we get to take a dozen trades between now and then, well, it's not lost work. It's just work that's going to be obviously a little bit of time in preparation. I would note that we did talk last week about the first lower swing top on Newcrest mining, and we're going to look at that tonight and see whether or not it was tradable. It was difficult to trade, but it certainly was tradable. It's a little bit hard to say stick your hand up if you took the trade, but I know some people have, and I know a few other people who, like myself, who might have been able to do something with it as well. So that was certainly, it's been quite a profitable trade, that first lower swing top trade. And I've got some work tonight that might have helped us, I guess, pick that a little bit tighter. We had that balancing time work on Newcrest mining, but obviously, there's a few other things that are going on there as well. And tonight's focus is to get back into the timeframes. I guess we were encouraged by the work of seasonal dates and birth of the contract work on both of our markets. And last week we did a quick review on the Aussie dollar contract specification. So hopefully our markets are certainly finding or feeling a little bit more approachable. I guess we'll do a quick little wrap up as well on what the markets have done over the last few days. So obviously we've had a relatively strong sell-off on the last couple of sessions. That's not particularly phasing me with regards to the market. It's actually shaping up quite well for potentially one last dash or one last run into November. But obviously it'll need to get going from somewhere where we are looking and understanding that early November could end up being a low as well. But at this stage, I'd be quite comfortable to see the markets continue to sell off maybe tonight, keeping in mind that we haven't seen, we've only seen 3 sessions down on the Dow in a row. We've not seen 4, so we haven't yet got that overbalance in time that we spoke about in our first weeks together. So maybe another session down tonight, followed by a decent recovery. That last little surge, kind of like David's 1855 call. Don't ever think the market couldn't get up to that 50% level on the market. It certainly could. It's going to need to get going. But I guess I was skeptical, I guess, of markets being able to move so quickly in such a short period of time. But I guess in the latter years of my focus, I always do remember David's 89 call. I've certainly seen oil move dramatically over the last week or two. So markets can do some pretty crazy things when they need to. So stick to your time and price alignments, and if they're strong, then the market will act like a magnet, and the market will find a way to get there. But the work I want to do tonight obviously backs up what we've been doing, which some of you have obviously come up with a lot of time frames, and I guess that was a discussion that we've had in the past. Is we get all these numbers, but what do they actually mean, and what's working, what's not working? I've had a little bit of a plot around particularly on Newcrest mining, and I've found some stuff that I think like it's textbook stuff. It's it's good enough to put it in the Ultimate Gann course manual. When I show you some of the stuff and show you how well it's been working, you get blown away by the timeframes and how they're repeating, and then just looking at sort of things like 50%, etc., and how important they've been. So we've got a lot to get through tonight. But in the process, I guess, of and dealing with the guys on the Wednesday night group as well, I guess some of the things that that people are finding is that with our discussions, etc., they're sort of saying, well, look, it doesn't have to be, they're surprised with the simplicity, I guess I would say, of some things that we're looking at in the market, and sort of getting some clarity. And I think it's actually, I guess what I'm enjoying about it is that we get to spend, a session and then have a week's break. So you get to sort of, spend some time digesting the work, and then hopefully if you're backing it up with some work at home, which I know a lot of you are doing, and once again, I know some of you aren't finding the time, and as I said, I don't have a great solution from that, other than the fact that you've got to get in there and find a way and talk about programming some regular study time. And even if it's 10 minutes a day, even if it's an hour on a Saturday, whatever you've got to do to make that happen, I'd encourage you to do so, because you want to get the maximum benefit from the time here. But I guess looking at a lot of the individual techniques in isolation, you start to see how simplistic and how powerful just a simple 50% retracement with balancing time, or a 50% retracement into a seasonal date. I guess some of the work that, I forget whether it was done by someone in this group or the other group, sort of looked at the Aussie dollar, went through and analysed a lot of the ABC trades on that, and we came up with some pretty good conclusions. And I guess some of the conclusions were that point Cs tend to get broken by only a very small amount and then turn around and go back the other way. The 50% points were hard to hit, and often they fell just short. So there was some, I guess, some good intelligence that came into trading around those. So I guess probably if we made a bit of a generalisation at the moment, I think you'd be more comfortable to ABC trade on Newcrest mining than you would on the Aussie dollar. I think the Aussie dollar is probably better set up for trading time and price alignments off the bigger picture. So looking for seasonal date turns, and then trading it aggressively off your swing chart with some of your more advanced rules. But it's probably not your classics ABC market, but it's certainly a good swing trading market. Getting in on a tight entry and then maybe managing it on a bigger picture, trailing stops under swing bottoms, those sorts of things, I think are some good work that we've picked up to date already on the Aussie dollar. But as I said, I've got some stuff tonight, which I want to sort of mainly focus on Newcrest mining, and then hopefully we can balance that out over our coming weeks and make sure that we spend some time as well on the Aussie dollar. I guess probably in the back of my head, I'm starting to already, even though we're only into our fourth session, to start to ask the question, how many sessions I'm going to need to leave at the end to construct a practical forecast, I guess, and to sort of discuss what trading plan we could implement in this market. And it probably sounds a lot, but I think to practically construct a forecast, knowing what we know about the market, it's probably going to at least be 2 sessions, maybe 3, and then obviously maybe even writing a trading plan will be a session on its own. So with that in mind, I want to make sure that we don't cut the end of our time, the process short, but then also making sure that we spend the appropriate time on each of the techniques, keeping in mind we haven't yet touched on third dimension work, we haven't done master time cycles, we haven't got into some of the smaller detail on time by degrees, so we haven't done angles, we haven't done squaring time and price, we haven't squared a range of high or low, we also haven't put boxes and squares into the market as well. So for all of those things, we've still got plenty to keep us interested and entertained. So it's just finding that balance between how long is it, how long to leave at the end to put together this practicality or in a practical sense, and then making sure we cover off on the theory. So as I said, trying to break it into bite-sized pieces. We'll do our normal market review, which is obviously to take a look at the markets as they've unfolded over the last week since we last got together, taking a look at the major markets in particular, and then obviously focusing on Newcrest and the Aussie dollar, taking a look at where they're positioned and were there any trading opportunities. Aussie dollar less so, but Newcrest mining, there was definitely a off the back of gold coming off, obviously going into that little bit of a sideways pattern, and then obviously coming to the downside in the last few sessions. There's definitely been not a bad setup along the way there. So how could we have potentially taken that? Were you on it? Were you not? What were you looking at? And I guess just reading some of your comments as I was just getting organised in the back end. If you weren't on the the eyes on the price, so to speak, if you weren't sort of watching for that first lower top, then it was very, very difficult for you to be looking to get anything out of that move. So it very much is a case of making sure you are on top of what you need to be on top of, and just every single day getting in and checking the Aussie dollar market as well as Newcrest mining. So it's only 1 in the evening and then 1 in the morning, which is obviously makes it a little bit easier given our time commitments. So I'd be interested to get some feedback from you guys when we get to that discussion, and to sort of see how you saw that. Did you see it as an entry? Did you not see it as an entry? Did you attempt an entry and couldn't get one away? All of those sorts of things I'd be interested in, or otherwise did it just sort of did it just come and go and you kind of blinked and you went, hang on a second, and then woke up and looked at it and thought, hang on a second, that was pretty good. So all of those are you know, are possible outcomes. Obviously, the most profitable one was to trade it, but you know, that being said, it wasn't the easiest trade. It wasn't a vanilla ABC trade or anything like that. So we need to be on top of, I guess, of what's transpired and use that as a learning little tool for next time round. So that's our plan of attack for tonight. I guess I'll move into the important things, which is obviously to give you a bit of an agenda, as well as to remind you of our financial services license obligation. We at Safety in the Market through Investment Educators Australia hold a financial services license, and obviously in putting together tonight and all of our coaching classes and workshops and everything that we do at Safety in the Market, we've not taken into consideration your individual or personal financial objectives. Obviously, we're looking to guide you in a general sense only, providing information to you that you might find relevant. Obviously, we'll be dealing with current markets, and in doing so, any of the information that we talk about is not meant to be as a recommendation to trade. You need to evaluate that in line with your own outcomes, and obviously discussing with a licensed financial advisor if necessary would be a pertinent step. So all of those things are obviously a repetition of what we've done in the past, but as you understand, we'll do that each and every single week. All right, so tonight's session, you know, I won't even try and forecast the time. Every time I sort of start preparing these, I think, oh yeah, I'm sure it'll only be, you know, 60 minutes, and then, you know, I think it couldn't possibly go longer than an hour and a half, and then 2 hours later we sort of get close to getting done. So what I'm going to talk about tonight is obviously that market update, whereby we'll look at the major indexes and also the gold market, only because that's been particularly important in our setups. Obviously, we'll do a review of our markets, meaning Newcrest Mining and the Aussie dollar. I just want to have a quick discussion on the seasonal date stuff and to see what conclusions we can draw at this stage, if any. I know some of you have done some work, and as I said, I'm going to start to push you more and more to have discussions rather than me just, you know, sort of pushing things out. At this stage, I'm probably, you know, I'd only be guessing to see how things are sitting with you. Now, obviously, you give me positive comments at the end of each session saying it was good, etc. But you know, I'm going to start to want a little bit more from that, only to make sure that the barometer's pointed in the right direction and that we're heading in our right way. Because there's no point getting to the end of these 12 weeks and then finding, or 12 sessions, and then finding that it hasn't met the mark, or you're a little bit, you know, not sure with what to do with this information. That would be probably the most upsetting thing for me, is to get to the end of 12 sessions and you're like, well, that's great, but I don't really know what that means, or I don't really know what that means to me, and I'm not real sure what I'm meant to do with that. So how we overcome those questions is, I guess, to have conversations along the way. You guys are, you know, you've got to challenge the framework, and you've got to sort of rattle the cage where it needs to be, and I'll do the same to you, and then it leaves you understanding, well, I've asked the questions that I need to ask, or I understand what I need to understand, and you've sort of proven it to your own satisfaction, which is very important. I guess picking up, we've already talked about balancing time, and I guess for me, this was something we were planning on doing last week, but obviously time didn't permit, is just being able to set up some time frames. Now, interestingly enough, I set you all a bit of a task, which was to go and pick the major turning points and pick the time frame from that. And obviously a lot of numbers came from that, but then there wasn't, I guess, not a massive follow through as to what numbers were working. Now, one of the things I guess I've given you an interesting lead to see whether you draw some conclusions is just by taking the turning points out of the software is probably not always going to be the most accurate, because there's a couple of tops and bottoms I'm going to show you tonight that probably would have been missed on those turning points tools, particularly if you're using a 2 or a 3 month swing top or swing bottom. And what you'll find is that because of how the software calculates those, they might actually be the physical top or the true top, but we may actually have a different top or bottom to make us a little bit more, you know, make it a little bit more useful for us. So you'll see a couple of those examples tonight. We're actually getting in and pulling that apart is pretty relevant, and I'll just want to check to see whether or not some of the numbers that I've come up with, without sort of going back through the posts on the discussion boards, because obviously there's a lot of those, and that's fantastic. I guess that's starting to take on a life of its own, and it makes it hard for me to catch up a little bit on some of that, but really quickly here. But, someone trying to come into the room, and I just need to make sure that they're meant to be here. This is once again just reminding everybody not to enter as a guest. Otherwise, I get caught with having to check email list, which I didn't actually have up tonight, just thinking everybody would be able to get in okay. There's a couple of others that I let in as well tonight as guests. Make sure you don't log in as a guest, everybody, because this means that I have to then slow down a little bit and do what I'm about to do now, which is to look at that person in. There we go. So, all right, so back to you guys just on that. Okay, so in sort of discussing that, we've sort of, we looked at some numbers and we came up with a lot of numbers, and I'd just be interested for you guys to throw out some of the numbers that you've seen working there on Newcrest Mining, and then I guess we'll see whether they match up, because I think I've found a couple of really strong numbers that I think we can use going forward, particularly for building a roadmap for this market into next year. They're big enough numbers to give us some very, very good insights as to where we might expect some major turns, particularly in 2010. So what we'll also do is I'll show you the techniques that I use to not only find them, but also, more importantly, how to validate them. And then I guess we're going to sort of talk about where percentages of those numbers come in. And I guess we're going to take those timeframes not just from a balancing time perspective, but then we're also going to use them from an interim time perspective. So this is where I guess I start to pull apart this idea of we come up with a number in a market, we find that it's got some relevance, and then what we need to start doing is working out under what circumstances or what other circumstances it becomes very relevant to us. So one of the things that I've seen a few people doing is that you're starting to use timeframes as prices as well, which I think is fantastic. Anytime a number appears in a market on a somewhat regular basis, I'm very comfortable to use that in terms of price as well as time, time and then turning it into price. So we might make a square or something out of those numbers. I'll leave it simple, and we'll check a couple of those tonight, and I've not yet done that, just to see whether or not we've got something to work with. Because if I find a time frame's repetitive and then you apply that same time frame in price, and then you get some hits in terms of price, you know you've got pretty much a prime number in that market that's going to give you tradable turns in terms of time and price as well. So that'll be our plan of attack, and just mainly sort of how do we firm up once we've got some numbers, how do we balance time with them, how do we turn them into interim timeframes. And I guess the challenge I'm going to put out to you guys is that how else will we use those numbers? And I guess one of the things that's pretty easy to understand is that I found one number that was working really well in terms of 100%, went back through the market, found a similar number that was working very well, or found what I thought was an independent number that was working pretty well, and then I actually just plugged it into a spreadsheet really quickly, and I worked out that one was actually half the other. And I guess it's easy when you're saying I can see 180 and then twice that's 360, but if I told you 291, and you're looking at 150% of that, you just see your number repeating, but you don't always instantly link the two together. So the challenge for us is to be able to link those numbers together, and the best way to do that is to perform a manual calculation. So that's our plan of attack for tonight. What I'll also do at this stage, I'll throw it open to you guys if there's anything that doesn't look on that list that you'd like to discuss tonight. I guess I'm happy to include that. I guess the only reason I want to ask that now is just so I can find the time to put it in there. Just I don't want to get to the end and say, oh look, I missed all of that, or we don't have time. So is there anything that's burning that people want to have a discussion or a squizzy about? And I'll get that on the list so we can make sure that it happens now. I have a cuppa. A nice cup of tea, that one. I've done well. All right, well, no one's got any burning questions or issues, so I guess we'll just go with my plan. Blake's already said he's happy with that, so thanks for that, Blake. But that'll be my plan of attack for tonight. We'll see how long it runs for, and like always, if there's any questions, jump in. But yeah, look, guys, I'm quite happy if we're all happy, but once again, I'm always inviting you to let me know what you need, what you don't need, what you want discussed further, and those sorts of things, because I think we've got to get. I think we've got a little bit of our rhythm going now, which is good, and I think each week we're making more and more investigations. But we've got to start drawing some conclusions on those, and we'll probably do that, around the halfway, three-quarter way point. We'll sort of conclude what are our important things to be watching and what works well in these markets, and then we can go forward and put together the practical forecast. But as I said, I just don't want to keep. Some of you have asked me that they're in the market already and they're long right now, and they want me to make the market go up. If I could do that, I wouldn't even bother with the education bit. I'd just tell people which way do you want it to go, and I could make the market go that way. But haven't yet learnt that skill, so I've got to work on that. So other than that, I think we'll stick with the plan that I've got. So all right, everybody. Well, I'm assuming that silence is a yes, so I'll go with our plan of attack. So what I'm going to do is I'll pause this camera. Remembering, I guess, just to remind you, I've only got one machine with me here. I'm not at home, obviously, so when I go into Profit Source, I don't actually get to see your questions. So when you type in the chat window, I'll only see that when I come out of Profit Source and back into the Adobe framework, but that's fine. I'll answer the questions as they come up, and if necessary, I'll jump back into the software and answer them for us. So we're not going to miss them, but just if you're typing and the question comes up and I don't answer it straight away, don't feel like I've ignored you. It's just a case I won't have seen it just yet. So that's our plan, and I'll pause this camera. And it's getting, I can see on the camera it's starting to get a little bit dark, but anyway, I'll do my best. I might have to light some candles or something, and we'll get Profit Source up, and we'll pull apart these markets, and we'll get a bit of an update as to where things are at. All right, so I'm just going to open a new price chart. We'll kick off with the share price index. All right, so as you can see, we've had 2 sessions down. We had a gap down on this morning, a gap down on the open on the last couple of days, and obviously a little bit more severe when compared to zoomed in too far. I guess we're starting to see this as a little bit more of a regular pattern. So we should probably see some sort of recovery overnight if it's following pattern. So if I called that sort of the 1-2 count and then followed by another up day, then we sort of got a 1-2 count. Wait, let me line those up exactly where I want them. Always the way. The joys of just the scaling in Profit Source. It's good for trading, but not always good for design. So I'll do this a different way. Rather than trying to delete that, let me open up a new chart. So we sort of saw the 1-2 count there. Then we have seen the same sort of 1-2 count there, followed by another 1-2 day movement there. So at this stage, we're not seeing anything other than these 2-day reversals. Obviously, tonight will be a big test for what this market can do, because we haven't yet seen anything that gets close, except for into this early October run. So 1, 2, 3. So we haven't had a really, other than that really strong push out into about the 15th of October, we've seen a real sort of sideways move since then. I guess in the context of that, though, we can't panic too much in terms of the pullback. If you're an investor, you'd be being told, just relax, it's all okay. There's nothing too sinister going on here. So if you look at it, the market's not quite on that 50% point yet. That'd be a good place to watch for a reversal if we do get a sell-off again tonight. If we saw the market pull back into that 50% point, 574 is the low. If you saw the market pull back and bounce off that tomorrow, 47.37, that for me will be a pretty important level. Just doing some very, very simple balancing time work or time trend analysis work, you could argue. We could sort of see where we're sitting in terms of time and price running down. So just to get an idea of time frames from bottom to top, we've run out about 10 days, and now we're in a situation where we've run down 12 days. So we're starting to overbalance in time a little bit, because we've run up 10 days quite strongly, but we've come back 12 now, and we haven't yet even come back 50%. So if this was a completely balanced market, it should have. This is a completely balanced market to the downside. We should have seen a double bottom at the 100% point a couple of days ago, but we haven't got anywhere close to that. So, the market is certainly not strong to the upside, but you couldn't argue that it's a raging bear market just yet. So this, to me, all could sort of signal the sign that we are just looking for a rebalance before we might be able to, to make some sort of surge. If we could get I guess I'm sort of drawing the perfect picture here is we get some sort of pullback into here, and we know that that's been sort of 12, 13 days down. If we could get, just purely prophesizing here, if we could get a low, in the next session or two, and we could run out about 10 days. Well, assuming that we've got A to B, and then we'll just call this a B to C, and let's assume we've got the same sort of scenario working here. We could well find ourselves a pullback into a 50% here, followed by a 10-day run. That'll give us the 8th of the 11th. So I guess just asking you guys, if I come back to camera, first and foremost, anything around the 8th of November that would get you remotely interested, if we're just analysing a smaller pattern. Yeah, seasonal date, Wayne and Blake. Yeah, Robert's just smiling, and he's absolutely. Well, seasonal date, Noel's forecast. Well, we'll go with seasonal date first, and obviously, yeah, Noel's had a little bit to say about that area as well. So it's nice to see that, I'm not completely across Noel's forecast. I've seen his bits and pieces, and I know it's all good work. But I guess something, you know, something that I tend to try and do is stay a little bit independent. I haven't sort of read everything that Noel's put together and just taken it as gospel. I always like to make sure that my work and the way that I try and analyze the market stacks up as well. Otherwise, you may as well, you know, you start believing everybody's press and you just start listening to too much. So trying to remain a little bit isolated is a good thing. I know particularly from, you know, you guys are trying to get as much information from us as possible. I guess where I'm at with what I do now is that I'm trying to get the least amount of information from everything. Linda's saying the pattern out of the 15th of October 07 is very similar. Yeah, we're going to have a look at the swing chart too, Gerald, and a couple of other things that I'm going to pull around as well. So let's get back into that. Wasn't plenty more to do in that area too. So one of the other things I was going to take a look at was purely just putting together a price work as well. So if we were assuming that that was going to be our level, and you know, we got let's say that 50% point just happened to come in. 100% is going to give us, you know, 5,064. 75% would be just under that 5,000 mark. So look, if we were to get anything that resembled some price action around about the 8th in that sort of zone there, I'm pretty comfortable that you know, we've got some things to keep us interested. Put it that way. So there's lots going on in this little environment, and look, that 50% point, which is important to note, that number, I think it was 47.37. Let's do it again to make sure I've got it key. This will be definitely a price that you guys need to be watching tomorrow, me as well, just to make sure that you're completely on top of whether the market has actually breached that level or whether it's still sitting on the north side of it. So 45.74. So yeah, 47.37. That'll be a price that you need to, you know, keep a fairly good eye on come tomorrow. And if we can stay on the north side of that, I guess I'm probably thinking there's a bit more to the upside. But if there's if it breaks through there, well, then we might have to reassess and have a bit of a thought as to where we might be heading. But as Gerald mentioned, always important for us to go and take a look at what's happening on the swing chart, because that's obviously our key and our guide. All right, so at the moment, what we've got is actually a downtrend on the one-day chart. So we've got lower tops, lower bottoms. We've seen the market repeat that swing of about 128. It's now done 126 points down. We're talking about, you know, it'd be interesting. All right, so double that would be 150, another 24 points off today's low. If we take a look, 24 points off today's low, 47.49. Yeah, that's going to get us pretty close into about 100% of that repeat on the range down. So 47.37 would get very close. It'd probably be a little bit past that. So if we saw 150 points down, so what I'm doing here is I'm taking that last previous swing down 75 points. I'm sort of taking 200% of that, or sorry, you know, doubling it, turning it into 150 points. And if we saw the market run down, you know, that 150 point range down, find around that 50% and then get some support back out the other way, we could obviously have that top that we're interested in coming in. Uptrend still exists on the swing chart, so obviously it's higher tops and higher bottoms. We are seeing that shrinking range though, and that's starting to tell us that we are getting a little bit weak to the upside. So the 1 day is down, the 1 week is up. The 2 days still uncertain. Okay, so we've got higher tops and lower bottoms, and the bet would be that the 3 day is still up, which it is. So we're getting a little bit of a mixture now as to what our trends. Oops, there's a candlestick chart. We don't want that. We're getting a mixture as to what our trends are. Now, I guess coming back to camera here. So Glenn's saying what was the last swing down? So 4735 is 66% of the all-time range. Fantastic. Thanks, David. That's another. So is that from all-time low to all-time high, or is that off a highs resistance code? Probably all-time low to all-time high. So yeah, so 4735, 4737, they're all good prices, I think, to be watching. And thanks, David. So that's the ranges resistance card off the all-time low to the all-time high. So certainly some prices there to be watching in the interim. But I guess one of the things that I've always, particularly when I'm thinking that there could be something relatively large on the horizon as far as things in the market, you'll often get the trends will get muddy, and the term I use is gets muddy as it leads in. So what you get 2 weeks ago, 3 weeks ago, we had clear 1 day, 2 day, 3 day, 1 week charts were all up, and obviously things were looking fantastic. Obviously, it takes a while for the weekly and the 3 day charts to catch up, so you're never too sure you're the right way until they catch up, and then you obviously get a real big surge in the market like we've had. But what we're going to see is if we get something happening in the near future, particularly on the basis of a top, we're really going to have to be tight on our 1 day, and probably our 2 day chart is really going to be the one that's going to help us the most. 3 days and weeklies, unfortunately, do take a little bit long to turn, so we're just going to have to be cautious of that. one of the other things that I've been sort of talking about the whole time, and actually been talking about for 3 or 4 months across all the classes I'm doing, and just to people in general, I will be really sweating on the fact that we get 4 days down. So I'm waiting on that overbalancing time that David talks about very importantly in the ultimate Gann course. So we've only had 3 days down on most of the index markets at any one stage, and so getting that 4th day down would be a real sign that maybe the market has made a decision that it doesn't want to keep playing to the upside. So at this stage, though, we'd have to argue that it could just be this current little move down is just a pullback into what would be a really nice sweet spot in terms of time and price and potentially time for a run out into the next little pressure date, which we're watching. Okay, so Darren said, why isn't 3 an overbalance if it typically does 2? Well, it has actually done 3 out of the March low, I guess is what I'm arguing. So I'll show you on a chart what I mean there, Darren. So let me jump back into profit source. It's typically doing 2 down at the moment, which I agree with because obviously we saw that. But as you can see here, we've done 2 days up, 1 day up, 2 days down, 1 day up, 2 days down. Here we had 3 days down, 2 days, 2 days, 2 days. But as you can see, it got serious when we had 1, 2, 3, 4 days down, and then 1, 2, 3, 4 days down. Then we overbalanced and went back out the other way. But really what I'm arguing is that, it's done 3 days down on a relatively regular basis, okay, more so than obviously than 2 days. So there's only 2 there, 2 there, 1, 2, 3, 4, 5, or sorry, 4 days down there. Obviously they're running into lows, but I guess that'll just give me a sign that the market has probably broken step with trying to be to the upside, because we're getting sort of just 4 days down. That was the only time that we actually came up with any decent short trade this year. If I go back and pull apart that little run there, that was probably the only decent short run we had as far as trading from that top on the 30th of June down into the 8th of July low. That was the only decent short trade if you're waiting for lower tops. If you got out of that top there on the 12th of June, you were happy. But really, that 4 days down was a signal that this market was struggling. So 2 days down, market took off. 2 days down, market took off. 3 days down, market still had enough courage and strength to get higher. 2 days down, 2 days down, 2 days down. 3 days will obviously be a consideration, but as I said, 3 days is only going to bring us into the 50% point. So I'll be really stretching for that 4th day down to give me this sort of confirmation anyway that that we might be time to get seriously short. So just let me come back out of there. Yeah, so I can see a question now, Darren, where you said you've seen the odd 3-day reversal as well. But what you've got to argue is after the 3-day reversals, what's the market typically done? And the market's typically, launched back up to the upside. So does that explanation, just that one towards the end there, does that give you a bit more clarity there? Helps you out a little bit? That's why I'm looking for 4 days rather than 3? Yep, no problem. Perfect. All right, so let's get back into our other couple of markets. I think we've got quite a little. Look, we're doing well as far as the share price index is concerned. I think many of you have got a bigger picture view, which is good. And now what we're trying to do is step into that smaller picture. So measuring, it's 10 days up, 12 days to the side at the moment, hasn't hit 50%. If it runs out in the next day or two and does another sort of 10 days up and does 100%, well, we're going to be very close to, around about that 5,000 target around about the seasonal date. So I think all of that sort of work is good because it gets you sharp in with what the market's actually telling you. Obviously, we need to keep, aligned as well with what the other markets are doing, and we've done some work with the with the S&P and looked at where the market's been turning. S&P market's obviously a little bit different, whereby we've seen a couple of days down. That day there, which was the 23rd of October, is hardly a great sign in the market. It is an update by definition, but the open close reversal was pretty poor, followed by obviously some sort of recovery, strong sell off again. Keep in mind, though, we are very much in a similar situation to the share price index. We are giving back very little in the gains on the bigger side. 50% points obviously going to be key here as well. Time counts are going to be a little bit different in the S&P, though, running into this little sort of range. If we look at that, it's been about 18 days up. So I guess we'd be watching for a 9-day pullback, which would sort of bring us into probably the end of the week, actually. So today, there's the 26, 27, 20. So 3 more trading days into around the 50%. Well, I'd probably think we're either going to probably be well, if it goes down another 3 or 4 days, we're probably well through that 50%. Hard to see that just sort of, running down here, sitting here and going sideways for 3 days and then rallying up again. But I guess if we look at that 18 days up, and if we add that to, let's say, the 29th, that'd give us the 17th. But I guess what I'm looking at now is maybe saying, all right, well, what's the half interval? So if we get 9 days up, what I'm saying here is I'm now looking at that as an ABC. But instead of projecting maybe the time to run exactly, another 18 days up somewhere out here to the 1140 point level, if we only see a 50% move, if we take our A to B time frame and we take half of that, as far as wherever this market, let's say it lows here, even if we get a variety of places, but if we only get half of that time frame move, where that arrow down, and let's assume we're only going to get half that time frame, well, we might be looking at a double top perspective off that 50%, about 8 days, 9 days running up. Well, there you go. You've got sort of that November period as well, and then obviously if it gets through that early November period, well, later in the month, could be 17th of November, somewhere around there, might end up giving something else to watch. But first and foremost, it's got to get through that seasonal date in early November, and if this pulls back far enough, you might expect it to a 50% would give you that sort of double top. So not being as strong on the S&P 500 as I am on the SPY as far as prices is concerned. I don't know whether that level's proven in the past to be anything major significance. Going back here to see whether or not there's sort of old tops or old bottoms, which there really doesn't seem to be. You'd have to do some work on your price forecasting and resistance cards to see where that sits, because obviously, as was pointed out before, 66% of the all-time range and those sorts of things are coming in around that 47.35 point that we've got on the share price index. All right, so slightly different patterns between the two, but at least we've got a little bit of a map for both that we can keep an eye on and watch to see how that pans out. All right, so let's take a look at our swing charts. And we've also got a confirmed downtrend on the one-day swing chart, which is in line with what we've seen on the SPY 200. Weekly swing charts are still intact. Okay, so they're obviously heading to higher prices. 37.5 compared to 63.4. Obviously, we're nowhere near those levels of pullbacks. 47, even 40, we're close to. So really, this pullback in the bigger picture is quite small when you consider the runs out of March of this year. So 48, 53, 72. It's actually the smallest pullback we've had this year on the weekly chart. So maybe not something we need to get particularly concerned about yet. That's pretty symmetrical, that pattern. You'd like to see those sorts of higher tops, higher bottoms scenarios. There's definitely been worse trends in history than that. So once again, as I said, probably I'm not too panicked yet on the bearish side. We'll just have to see whether the market holds these levels of support. All right, we've got higher tops, lower bottoms. So we've got an uncertain 2-day chart, and we've got an up 3-day. So what we've got is a 1 being down, the 2 being uncertain, and the 3 and the weekly are up. So if you sort of gave them all the weighting, you'd still suggest that this market has got some strength to the upside, obviously in line with whether it can hold the major levels of support and resistance going ahead. So we should note that all of the index markets are approximately doing similar things as far as pullbacks to that 50% level. So there's not a lot of difference between that picture there on the S&P 500 with the market trying to get to that 50%. The share price index doing very similar things, trying to recover to its 50% point, which obviously we know is pretty important. So they're sort of doing very, very similar things. As we said, slightly different micro pattern, but one to keep us focused on. And as I said, we do have a little bit of a plan for both. Interesting, the Dow Jones, as I said, it's got to that mythical 10,000 point level, and then obviously stuck its nose, over on that day, over on that day, over on that day, under, then got back under, and then it sold off. But just using the Dow as a bit of a barometer, that 10,000 point level, we're nowhere near any sort of 50% pullback on that. So as you have to say, this at this stage just looks to be a pullback within a major move. Now, one of the things I'm obviously going to focus on if we get back to the S&P 500 is take a look at the volume. Now, we don't have the volume in for last night's session, but we are certainly below average on these volume here, so it's not really aggressive selling. I'd have to look at the share price index. Well, today the volume's actually skipped up. Obviously, yesterday there wasn't too much. Even on these down days here, there wasn't too much. So this has been the first above average volume day that's really been on the downside since, well, even, that probably these areas back here. So for about a month at least, that's probably the day that, a lot of the speculators probably jumping in and trying to, see whether or not there is anything in this bearish move and see where the convictions of the bulls and the bears lie. One thing I'll point out if I just come back, look, we're not the only, it's naive to think that we're not the only people out there that are betting on some more downside in the market. I must admit, most of the people I sort of talk to in the trading world that aren't necessarily Gann traders, a lot of people are very much, with a button on the sell type stuff. So I think one of the, if the market does get any sort of momentum on the downside, I think you'll find that there'll be a quick little, there'll be quite a solid move very, very quickly because, a quick little spurt, because I think a lot of people will join that selling and that could be just closing out their longs and locking in profit. And then there's obviously the people who are going to speculate, like we potentially could on the short side, actually opening positions, to profit on the downside. But it doesn't take a. I was having this chat to a variety of people, actually, including obviously my colleagues, and I just sort of said, look, if you weren't already long this market right now, that's where I'm starting to see the challenge ahead for this market. Is that if you weren't already long right now, so let's say you've missed this whole move on the way out, I just don't see if there's anything, and I'm trying to think as a mum and dad investor, as a fundamentalist, like I know there's return to business confidence and all of those sorts of things, but I just think if you haven't yet taken the plunge, out of the March low, out of the July low, out of the October low, I think if you haven't sort of pulled the trigger yet, you're probably, you're waiting for Christmas, really. You're waiting for, you're going to wait forever. So I'm really sort of trying to struggle who's going to do the heavy lifting, is my old saying for it. I just don't know whether the funds and whether they're, sure, there's a lot of money on the sidelines still and all of those things, but it's a very risk-adverse market at the moment. A lot of the money managers, in my mind, have got a view that they're going to try and lock in any of their returns that they've managed to pick up along the way. So I've just, using my internal, system testing engine, my gut testing engine, and just in general conversations with people and having some contacts around town, there is certainly a view that this market maybe, just maybe, and look, as I said, probably the problem I've got is that there's a bit too many people thinking it, and now I wonder whether I need to be thinking the other way. But there's a lot of people with a view that, some selling is due, and obviously a correction or a pullback, without calling it a correction, and how aggressive that might be, and obviously what's the catalyst. But I think what I'm trying to suggest to you is if it does come, I think the first little move, I think, is going to be the real sweet spot. If it is short-lived, you're going to want to be in that first little bit to the downside, because that's where the good dough is going to be made. And obviously, if it develops from there, we'll get plenty of opportunity. But just sharpen your pencil is really what I'm suggesting, and you're going to have to be really tight on this. And what I don't want us to be doing is missing it, in the sense of, we've talked about it this week, and then in a couple of weeks rolls downhill, and then we're sort of saying, oh, look what we might have done. So I guess just keeping that in the back of your mind is very critical, and how you're going to make the time at the appropriate times, how you're going to watch it, what's your routine going to be, what are you going to do to be around to make that happen. So just wanted to throw that out there as being something that you've got to start preparing for now, and obviously, know how you're going to tackle it. And look, if there's questions, on that as we go through tonight, make sure you ask me. All right, so let's jump back into profit source. I just want to have a look at the FTSE for a second, actually, because I must admit I haven't looked at the FTSE in a little while. I just wanted to see where it's sitting as far as that 50% retracement is concerned, because we know obviously what the North American markets are doing. So the London market's actually coming back and sort of finding some support on that. Is it ever? Bouncing. So it's had what was an old top becoming potentially a new bottom there. But anyway, that was just some food for thought. All right, let's go and check some of the markets that are impacting us. Obviously, the gold market. It's interesting because the gold market hasn't had that big a sell-off. It's had a lot of congestion between that sort of 1050, 1070 area. Last night, obviously, it did get some serious selling done underway, and obviously we sort of closed on its low there. But it's interesting when we take a look at Newcrest Mining. We've really seen next to nothing occur on the movement of gold, but obviously because it's an equity as well as being a gold, or based on the futures pricing, obviously it's also succumbed to the fact that the Dow's been off as well. So, therefore, we're starting to see here that Newcrest can do things that the gold market's not doing, and vice versa. So, once again, we're seeing less than a 50% pullback there. We've seen that sort of run out from low to high, about 19 days, and if we sort of look at where we are now, we've run out of about 12 days now. So we're past that 50% point, and we haven't really been able to breach that 50% point in price. So, you'd have to argue that once again we're just talking about a little pullback before we find some sort of support, maybe on that old top around 50%, and then we could be looking for some potential upside. So check our swing charts always, and they're going to be a barometer for us that gives us a good guide. So we've got a confirmed ever so slightly. Oops, keep pushing the wrong button. Slightly lower top, that is a lower bottom. So we are actually now in a confirmed downtrend on the gold market. We've got a strong weekly trend, so that hasn't changed over the course of our time. We still only have a pullback in terms of the weekly trend that is sort of on the smaller side in comparison to what we have seen. And the 2-day chart is uncertain. 3-day market is also up. So very similar sort of view. We've got 1 as being down, 2 as uncertain, 3 is being up, and the weekly trend is being up as well. And we'll look at the Newcrest Mining in just a second, but let's take a quick look at oil. We might also have a squeeze at the US dollar. See, oil's done, essentially nothing off that off that top. It's had a couple of sideways days. It's only had one down day, but that trend has been very, very robust. And running out of that low there, we've seen a really massive move. Swing charts are going to be, no prizes for guessing what the one-day chart's going to tell us, which is obviously higher tops, higher bottoms. Weekly chart is still uncertain, so we're getting some divergence from the other commodities and index markets. The two-day chart is strongly up, and the three-day chart is uncertain as well. So oil's been definitely moved a little bit away from the influences of some of the other equity markets, and for a while there they were actually interlinked, and then they stopped having a relationship, and then people think they're meant to be inverse, and they haven't had any of that as well. So it's been interesting times. Oil's kind of moved into the shadows a little bit in light of some of what the other markets are doing, particularly gold, and therefore some of the focus has moved away just marginally, which has meant that it's kind of doing some interesting things. So if you're going to argue a 50% target there, we're some way away from there, which would put it around that $90 level. Obviously, the US dollar is, or the dollar index, that's part of the reason why we got the sell-off on gold last night, is where some people are thinking, have we finally found a bit of a bottom in the US dollar? So we've had these little recoveries before we continued our sell-off. So not to suggest that it's going to be the major low for the year, etc. But it certainly might be finding a little bit of support in the short term, and that's obviously going to put some pressure back on gold and some of our other markets. And obviously now might be a good time. Oops, we won't look at the swing charts there. We'll just take a quick look now at our Aussie dollar. So it's obviously had a bit of a pause and a couple of down days. Looking at the retracement though, it's next to nothing in comparison. On the very big picture, it's certainly nothing. And sitting on that sort of 25% level, and if I pull it up to that next low, it's sitting right on that 50%. So I think we could be primed for, it's had a little false break. Big range day though, so it's a little bit hard to, display stops above there. If we look at the run up is about 9 days, and if we look at this little run down there, we're sort of halfway there. I'd sort of be comfortable to start thinking about that as a bit of an ABC trade. I know we've got that as not technically an ABC. I guess one of the things I'm doing is I'm ignoring those outside days. All right, so there's going to be a swing and a swing there. So there's straight out of your number one trading plan. That's ignoring outside days as part of your swing chart construction. Just take a look at what the volume's been doing. It's been pretty consistent through here, even though we've started to see sort of sideways moves. I guess that's one of the things we haven't checked is what is the sort of typical trading volume of, say, the Aussie dollar. It's about 60,000 contracts. That's plenty as far as the the sort of work that we're looking to do. So it's nice and liquid, which is good, and I definitely have that as a bit of a focus for where we might be looking as an ABC. Quickly, we'll check our swing chart work, and I'm concerned as well that you might have asked me a question, so I'm planning on I will get back to my questions so I can have a look, and then I'll just make sure you guys are all happy with what we've discussed. So we are seeing some shortening in the ranges. We are seeing some expansion on the way down. I think what we have to see here is how well it holds on that sort of, see, that's where that swing bottom is on that outside day. That level there around the 90.5 level, that's going to be obviously key to see whether this market is just acting as a, we'll call that swing bottom there a point A, that swing bottom there a point B, that swing bottom there a C, if it is going to be a swing bottom, and just ignoring that swing in the middle. If we did ignore that swing, so if we take out the outside day, we are actually seeing 0.22 or 0.288 plus 0.22022. You're actually seeing just a small contraction between from that, those combined two swings there with the previous upswing, but that was obviously quite a major swing. So we're seeing some slight shrinking on that range there, but we are seeing pretty much repetition. So I'm just going to, for the benefit of my own brain, I'm just going to get my calculator. So we've got 288 ticks plus 220. Right. Yeah, so it's 508, and that's obviously 539. So I guess just to sort of show you what I'm trying to achieve here, I'm actually ignoring that swing through the middle there, and what I'm trying to do is say, all right, well, that's 0.539, 0.0539, and then that next swing up there, if we ignore that swing, is actually going to be 0.508, 0.0508. So if we look at those two numbers, I'm as accepting of the fact that that range from there to there, and the next swing up is pretty much repeated. So it's not surprising we've seen some sort of a bit of a pullback on that note, and we'll just see whether or not the market can actually come in and give us a little 50% point there. Let's just get rid of that chart so I can get the lines off. The swing chart, obviously on the weekly, is clearly strongly up, and we are, obviously due a little bit of a pullback. You can see here, 797, 782, similar ranges there, 768. A little bit of a pullback, a lower swing top anyway, before we push higher would definitely be a not a bad plan of attack. Let's take a look at the 2-day chart, which is still up, and what I'm doing, as I said, is ignoring that little swing in the middle there on the 1-day chart anyway, and the 3-day chart as well is clearly up. So let me pop out of here, make sure there's no questions. All right, so sorry about that. Hi, Debbie. Let me come back to the camera. There we go. So Debbie said you're in the internet, or is it the broadcast? Well, look, I using my stuff, this same connection, I logged in and obviously had a look at Noel's stuff, etc. And you get that slight little delay, and then it picks up again. So I must admit, I sort of thought it was pretty good actually when I watched other people do it. I've watched the recordings and they're much the same. Darren's saying a bit the same, and he's getting lots of long pauses. Okay, Glenn's doing good. Graham's saying it's an issue. Yeah, okay, Debbie's switching computers. All right, how's everyone else travelling? So now that, okay, yeah, Richard's saying it's all good in Melbourne. Lynn's fine and Blake's all good. Yeah, okay, Wayne. All right, guys, I'll have to assume it's going okay because it seems to be obviously, rolling along all right for some. Look, it is a resource-hungry type, application in the sense of bandwidth. So I must admit it's pushing out okay. I've got a few things on here that tell me whether or not there's any connectivity issues or dropouts and those sorts of things. And the framework and the architecture is all looking okay from my end, and it's not ringing any bells. So, but I do accept that obviously, Linda's saying, okay, the next G wireless is okay. Yeah, Neil's okay. Robert's saying it pauses, but it's okay. So it's just that buffering. Okay, Elizabeth's good. What I would point out, if you're ever having any issues, our tech support guys are getting really good at troubleshooting this stuff because obviously we've got a lot of people these days driving and being a part of the online stuff. So, all right, Debbie, I'm with you on the fact that there's big pauses, but that to me sounds like a buffering issue on your end, and there are some things that the guys can actually step you through. Obviously, it's going to be hard for tonight because you're joining with me, but always contact tech support guys. That's our tech support at Hub. And they've got some things that they've sort of been tweaking with people, and it's been apparently working. So I'll go with those guys. But look, battle on if you can, and with all hope that the recording's taken care of as well. So yeah, that was something, Darren, that I got told works well. So what Darren said is you've got to clear your cache and your temp files for Internet Explorer. So if you know how to do that, well and good. Otherwise, that's something that our tech guys can take you through. But if you're a little bit tech savvy, clearing your cache and your temp files in Internet Explorer can actually be quite advantageous, I've been told. So thanks for that recommendation, Darren, because that is something I've heard our guys doing as well. All right, so I guess while we're having this slight break from using Profit Source, was everybody happy with the work that we did? Obviously, on the we've got a very much a picture for the share price index, a little roadmap there for for the S&P 500. Obviously, as I was saying, their gold's sold off, but it doesn't look to me to be the yearly top or anything silly like that just yet. Could well be actually, but I won't go that far actually. I just think it could be a little bit of a pause in the in where we're heading, and then we'll just have to take some direction there. Oil's been it's gone from being the darling of the market to obviously just being out there on its own and doing some interesting things. It's sort of it's getting its own little personality back as far as having some quirks and kinks in it, which is good because that always means it keeps me interested. But I guess what I want to do, before we jump into Newcrest mining while we're having a bit of a chat here, is everyone happy how I'm seeing that Aussie dollar at the moment, where we've had that run up? I forget the amount of days up. I'll have to go back and look. Days up, days down, back into a 50% pullback. Particularly ignoring those swings on the of those 2 outside days. So ignoring those 2 outside days because obviously they were mainly continuation days anyway. Not great in a trading sense, but in a swing creation sense, we're ignoring those 2 swings and we're just using that as a bigger picture ABC. All right, so okay, Gerald's happy. I'll leave you guys to it, Annie. I'll try not to read the properties and bits and move the slide to the left. That's helpful. Okay, great. So is everyone happy with how I'm seeing that Aussie dollar? Because I guess what I wanted to do is just, you can't discuss currencies without having a bit of a view on what pushes them around. So what's going to happen in early November? Thanks, Des. Thanks, David, and thanks, Elizabeth. What's going to happen in early November that's going to be potentially important to the Aussie dollar? if I throw that back to you guys, they did it a couple of years ago to much to people's disdain, but on Melbourne Cup Day anyway, where we can expect that we'll get an interest rate announcement, and yeah, interest rates up on Cup Day. And last time around they did that, I think it was a half a point move or whatever it ended up being, but obviously not very popular at the races. But all I'll say is that I think the Aussie dollar's already being priced in for an interest rate rise. But what can often happen is that yeah, look, I agree, Wayne. The US dollar might have a little bit more of a rally yet, but if they drop interest rates here early next month, then obviously we could definitely have some movement there. And it tends to always move prior to the announcement, and then if the announcement isn't what the market expects, it changes very, very quickly. So obviously that's why having stops and being relatively close to the market around about those, as David used to say, like the balance of payments days, obviously interest rate days on the Aussie dollar are obviously important. So I just want to put that in the back of your head. Interest rates are obviously going to be a big part of this, and that's you know, we're literally about a week or so, whenever the first Tuesday of next month is going to be. So we call it in the next 10 days or so as a window. That's going to be something that we need to keep a pretty good eye on. So that's something that, yeah, seeing that as a bigger picture ABC, watching that time frame, seeing if it holds on that 50% point, and I'll set that up for you in just a second. I might try and create a chart and we can have a bit of a play around with that. But that's kind of how I'm seeing that at this stage. Yeah, absolutely, Linda. I've got no issue trading that bigger picture ABC. And that's, I guess, you know, if push comes to shove, that's something I'm going to keep a little eye on now. I always forget to do this, so whilst I'll pause this camera, I'm actually going to log in and just to check the position of those markets. I'm just logging into my futures platform. We'll have a squeeze and see where the Aussie dollar's trading. Apologies for this. Just give me 2 seconds, and away we go. Right, that's just booting up. Let me just bring back the profit source screen. So I'll bring that up, and we'll just make this a bar chart again. So really what I was looking at there was holding on that 50% point there. We'll get this tuned up exactly. We'll best make it accurate. 8933 and 9282, and really sort of focusing on that as being a potential, get on the right days, ABC point. Now, straight away you can see one of the problems is going to be, how do I trade this? I can't get in by 33%. So what would be fantastic over the next, you know, in the next session would be some sort of inside day. Right now, some sort of inside day would be nice. Some colours. There we go. So some sort of inside day would be nice, and potentially, you know, even along the openers or something along those lines could well be a way to tackle that. So one of the things I was going to put in there was we've got days up, days down, 9 up. At the moment, we're sitting on about that 5 calendar days down. So to me, that's as good as 50%. That could be, you know, something that we're watching to unfold, and you know, purely just looking at an extension of time. If we ran out 9 days, we'd sort of be looking at the 4th of the 11th, and just having a guess. I'm just looking at my calendar, and the first Tuesday in November is the 3rd. So we'd be getting an interest rate announcement around about the 3rd or the 4th of November. So that'll give us some interesting discussion. So why don't I just save that as a GIF file, and I'll share that file with you guys now. Oh, where did that go? Not sure what happened there. It's vanished. Right, yeah, try that one instead. Making sure that's the right one. Which it is. There we go. All right. All right. So has everyone managed to grab that file? If you haven't, I'll bring it up a little bit later for you, but otherwise I'll just pull it down at this stage. All right. So that's sort of a little bit of a view on how I'm seeing the Aussie dollar right now, and just let me. I will check and see where we are on the actual contract. We're just getting some live pricing on that at the moment, and it's trading at 91.31. It looks like. All right, so loading up. All right, just let me bring back up profit source, and I'll just I'll put a horizontal line. So Richard's saying, last week I mentioned how you would talk about how to stay in an Aussie dollar contract. I'm not quite sure what you mean by stay in an Aussie dollar contract. Happy to talk about it, but it's just not ringing any bells for me. So let me just jump back into profit source. If you remember the context, Richard, just let me know and we'll have a chat about it. But that's where we are at the moment. I'll just clear up some of this 91.31, where that blue line is where our trading is. And nice thing is it's holding above that close. It's holding that 50%. So we'll just be, I guess, keeping an eye on that, watching how that unfolds. All right. So I'll bring up the live screen. Okay. Yep. Thanks, Richard. Volatility hits for the stops index currency. Okay. Cool. I'll make sure we have a chat about that. I guess I think I'm sort of coming back to me now. I guess what I was really thinking there is that trailing stops under swing bottoms. Some of the stuff we talked about at the moment, early tonight, where we sort of said that the traditional methods of sort of stock or index. I think stock index, obviously, from some of the stats I've seen, tends to perform a little bit better than, say, currency. So, you know, it can reverse relatively quickly, but also trailing stops under swing bottoms tends to work pretty well. But certainly I needed to put a little bit more work into it than just that. So I'll keep that churning in the back of my head and we'll see what I can come up with. All right, so Debbie's saying only getting a couple of words every now and then. Computer with Optus work a few parts of Optus. Maybe it's that. Not sure, Debbie. I'm just going to have to encourage you to battle on and see what you can do because, as I said, things seem to be. If you're only sort of getting, I'm not streaming any video at this stage. I'm not obviously putting any sort of pictures over the top of it with profit source. So if you're not picking up the audio, I'd have to suggest it's connectivity based at your end. So battle on. Let me know what I can do. Just let me show you the. I just want to show you the picture that we've got at the moment. That's not it. There we go. All right, so just zooming in now, that's the bar we're seeing at the moment. So at the moment, that's an end of day chart, which is fine. But we are looking like at the moment, based upon the current trade, where we could actually end up with that inside bar today. So that's obviously the bar that we're seeing as the last day on profit source. That most recent bar there, I can hopefully zoom in. No, that's about as far as it'll let me zoom in. And if I just look at an intraday chart, if I take a look at the 60-minute bar chart, about as close as I get to the market. Yeah, as you can see, we're sort of holding within sort of that range, but seeing a little higher bottom potentially there. So look, not talking about intraday entries at all, but it's holding above that close, and while ever it can hold above that previous day's close, I think you might have some scope for looking to the upside. So all of those, I guess, are just things that are some food for thought. So all right, so let me just pop back out. I will put the camera. So can I throw it back to you guys and just say, okay, based upon the Aussie dollar, just looking at the time, we've got to look at Newcrest, the previous trade that's been over the last week, and then do some of these time counts. So that'll definitely keep us busy. But Does that, I guess I want to be clear on what we're talking about here on the Aussie dollar, because I guess this is probably the first setup that I'm really seeing in the time that we've been together that's been on the night that we can talk about it. So is everybody sort of happy with what we're doing there, chopping out those couple of inside or outside days, making our own A to B range, sitting on a 50%, we're balanced in time, and just looking maybe potentially for a higher bottom entry there if we get a little inside day, maybe a cheeky intraday entry, but if you're not familiar with those, I guess I'll probably leave that out of the equation at this stage. But really, to get within limits, what we really need here is we need to be able to, I guess, pull apart a little inside day, and at the moment that's shaping up. As long as it holds above that close and holds above that 50%, there might be an entry in that for us. So if I throw that back onto you guys, how does that sit? Questions, comments, or queries? Gerald's agreeing, he's smiling, good. Linda's all good, all right. Richard's watching, yeah, Des is happy, good. While you're all sort of typing away, I've got to go and get another drink of water. I'm not at home, as you can see, so I'm not anywhere near anywhere as organised. All right, thanks for that. So, all right, so Lynn's good, Des is good. How do you manage your stop loss? Well, Neil's good. Well, Key, it's really going to be, you know, one of those personal decisions, I guess, as to how you're going to look to trade it, as far as, you know, what strategy would work best, because we probably don't know enough about the Aussie dollar yet. Something that's relatively, you do have an ABC to work off, but then you've got a choice of stock, currency, or index, depending on when you get in, depending on how you want to trail stops. So I'm going to let you guys make that determination. That's getting a little bit too specific at this stage with regards to sort of, you know, I'm sort of flagging that I think there's a setup. I think you guys then have the skill sets to be able to talk about or think through how you might best manage that. So I'll throw that back onto you guys at this stage, because I don't really have one in the top of my head right now. I'm more focused on getting an entry, and then we can, you know, look at what our best management technique might be in that stage. But if, you know, I'd be definitely giving it some breathing room initially anyway. I wouldn't be looking to choke the trade, but obviously as profits start to come to fruition, I'd be making sure we lock those in. So Elizabeth's saying, yeah, I'm still learning to trade currencies. Well, look, you know, at the end of the day, so am I. They're not, you know, they're not markets that I would say that I have a depth of experience in. For me, they're just trading like anything else. It's just another futures contract. But you know, in the world of specific currency trading, well, yeah, no, I'm a babe in the woods as far as compared to the other stuff I know. So, but that's fine. That's exciting. It's new. It's something for me to keep interested in and keep learning about as well. So I'm definitely enjoying it as well. So, all right. Well, based upon that, I want to jump in, take a look at Newcrest, and then finish off with obviously looking at some of this intermittent balancing time stuff, which I think is pretty exciting. So that's the plan from here. All righty. So back into profit source. And get that up and running. We'll take a look at the position of Newcrest Mining over the last few days, and what we had, we got together, where were we? A week ago, which I know the 19th. I think we were there. So since that's right, we're looking at the potential here for a first lower top. So what we had is the market jump up, but we saw the market come in, close that gap, but then give us that really strong open close reversal. So stalking that first lower top as an entry. Now, just to remind you, what did we have going for that as a top? Well, we had that, obviously, the balancing time, 180 days, 178, 118 day ranges running into there. I guess if you look at the couple of the signals we've had, obviously this market failed right at 50% or just under. So for me, you know, there was some time pressure there, that last swing up running into that price pressure as well. Obviously another long trade here, but you know what, you'd sort of argue that, you know, opened outside limits anyway. Whether you got filled on the long side, I hope you didn't. I wouldn't have been grabbing that as a long trade anyway. And then obviously looking for a short setup. Now, of course, there was no potential short setup there, only because we would be trading most likely against the weekly trend. So here's an opportunity where you're going to have to create your own ABC point. And obviously you're in a situation where you're looking for the potential for a first lower swing top. You're right outside your limits as it is, so you're looking at past the 33% entry. So obviously getting in was always going to be a challenge. The next day it did gap down. Whether or not you could get a short the openers entry away, I definitely would argue that wasn't the case. And as far as being able to sort of hang through there with regards to, you know, that close on that high. But look, one of the ways to tackle this, you know, you certainly, let's assume for 2 seconds that you did take an entry around the open on that day there. There's pretty much next to no chance you're going to run stops all the way behind C, because to me that's a fair amount of madness involved in that. Just purely being a bit more tight on the risk. I think running stops behind the close of our day here, or at least behind the gap, is certainly going to be a better place to be watching. So if we put together something like the risk and reward tool, so let's just play the devil's advocate. We'll say we got in on the open or very close to it, and let's just say for a second we're going to place stops behind the gap, which means about a 30-cent risk. Stops behind the open. Close on that day is 36.34, so 2 cents behind. And even if we're looking to make it to 100%, we're looking at about a 1.6 to 1 reward to risk, which is certainly not anything particularly exciting. But that would be just getting it to that 100% point, assuming that you're going to want to get a fair bit more out of that. So I'll just take that off at this stage. Next day, the market obviously gapped down, so you might have brought your stops down, in line with sort of now closing that gap or bring you just behind the 50%. A little inside day there, and then obviously this is what we've seen over the last couple of days. So obviously Monday's trade. Now, that was more to do with the fact that the Dow was down rather than the gold was down. Okay, so that was just that the Dow was sort of looking a little bit weak, and then overnight we saw the gold market go down, and then we saw that big further gap down. But if you were taking that trade and had you initially just accepted the risk that was on entry, placed some stops behind there, even if you managed it to 100%, which you'd be looking for a lot more out of this trade than just 100%, purely because you've got a bigger picture set up. At a 133%, and where we are today, based upon today's close, you're looking at about a 4 to 1. Sorry, my risk and reward tool keeps doing that. I haven't set up the account details, and so therefore it keeps asking me for prompting that every time I use the tool. But it's certainly been, I guess, a profitable trade to date. Had you sort of run stops all the way back behind, see there, even where we are today, you're looking at a 1.94, 2 to 1 reward to risk. So it was never going to be a case of placing stops so far behind behind that swing top. You'd always have to be behind that gap. You had a pretty good idea that gap was on the cards, okay, just looking at what the markets were doing and the leads we were getting from the overseas markets. You could have seen the match price on the 21st of the 10th. You could have been watching the pre-market and got a bit of a sense of where you might expect to see that open, and that could have got you on red alert to know that a gap was definitely on the cards past that $36 level, which was 50%. And then you would have had to weigh up whether or not it was worthwhile and suitable to risk. But there was definitely some things going for that as a top. You'd have to have traded it relatively aggressively, and so getting in around about that 50% more level does have some risks associated with it. And I'm not saying it was definitely a textbook entry there. The fact that it gapped down though, off that sort of 50% point balancing time, there was some harmony there. But if you missed that one, it's not, if I come back out of profit source, it's one of those things to understand that it's that one there's definitely on the higher end of your risk tolerance, and certainly a more adventurous trade there. So if you missed that one, I wouldn't be too panicked. So Linda's saying, could you have used the down range before the run up as a reference range? Absolutely. So let me do that for you. I'll jump back into profit source, and so what Linda's saying is, could we have used, get rid of these shorts, so could we be using that? Could we be using this current reference range in context from where we're expecting this market to run? Absolutely. And if that 33.13 level, that 100% point is going to put us right on top of that gap. So for me, that would be a very, very smart place to be looking to close out if you were short through that, using that as your reference range, and sort of you're looking now at if you're arguing that you're building your reference off that range on the way down, you are sort of actually getting in here by that 33% point. So big argument. We actually did talk about that as being an entry there when when it formed that little gap down, and then once again, had you placed stops just behind that gap there, you would have been stopped out on that day there. So bit of an hard ass to be placing stops all the way back here on that swing top, which is 37.24. And really what you've got to remember here is that whilst that's a good guide as a reference range, as Gann says, the safest place to sell is always going to be your first higher swing top. So, jumping into that smaller picture, and we'll see whether we can overlay or overlap these two. We're using that smaller range there. As you can see, you're getting a nice cluster there, which is the 50% point and the 100% point. And obviously when the market broke through there, it was obviously pretty weak to the downside. Couldn't come back up and close above that. And at this stage, obviously, we're considerably further down and looking for not really any other major clusters. 200%, 33.51, that's not a cluster, that's 20 cents apart. So that's definitely, not a lot of use to us in terms of clusters. But I agree with you there, Linda. This reference range here, If we just put a little orange line on it, that definitely could have been acting as a little guide. You could be using that as a speed angle. So that's sort of bringing us to where we might expect to find a little bit of a low in the market. So if we take a look at the run down there, we've sort of got 11 days down approximately. We're now getting very close to that level now. 11 days down. Oops. And remember, we were looking at that as 27 days up, 15 days down. So we only saw obviously half that upside range, and we might see that completion of that full downside range. I guess in terms of time, I'm thinking there. So if I just go back in and take a look at this bigger picture, I think you could be thinking to the as well as using this as a bit of a retracement tool. You know, you're sitting about 75%. So if we do get back to that area there, we'll have retraced about 3/4 of the range, and you know, that closing that gap is going to be a pretty big part to what this market, where it's going to be going forward. So would it be good to come back, maybe try and close that gap tomorrow and then find some support? Well, that could be a good place as well to start to look for a long trade back out the other side. So let's assume for 2 seconds it comes down there, sits on that level, repeats the range on the way down, which was that 100% level, around about that 33.13 level, gives you a key reversal or a hook reversal or an open close reversal somewhere around, you know, this area here. We might be then looking for a potential for a trade back out the other way, because that is starting now to look a little bit overextended. And this is kind of what this market does, is that it does a sort of an extension to the downside. And I'll be back to check your questions in a second. It does this sort of extension there. You've got about 125%, a little bit of congestion, then it zooms off to the other side. Now, if we get the same sort of pattern, we're going to sort of see certainly run past, you know, 150% now, 200% down to there, and then maybe it's going to, you know, to have a little bit of congestion before it takes off again to the upside. So definitely I'd be looking, if it gets down into this area here where I've sort of got that circle, it's probably a little bit low actually, somewhere around about that area there in the next couple of days, a little bit of congestion sideways, we might be looking for a bounce out the other way. All right, so Annie's saying good. I have seen that move on another gold stock. Lihir Gold did it recently. You know, some of you guys are telling me. So yeah, look, I think Lihir Gold and Newcrest Mining have a lot of sympathies. You know, they don't. You can't overlay them and say they're exact, but there's certainly a fair few things to them that give them some similarities there. I guess if I just come back to camera, about Newcrest Mining is obviously it's a high price stock, and also the turnover, etc. Lihir Gold's back down around $3 or wherever that is. I'd have to check it. $3.10. So your reference ranges and your percentage moves of the stock tend to become a little bit larger. Just purely because it's a smaller stock. Now, so it's got great depth and liquidity and all those things. There's no issues with trading it, but I'd actually just like those slightly higher price stocks when you come to those sorts of things. So absolutely, when I was looking at gold stocks for us to focus on, I did look at Lihir Gold, and part of that reason I went with Newcrest was obviously because of the price of the stock. All right, so what I want to do quickly is just take a look at where we are on the swing charts, and then what I'll do is I'll come back and we can have a chat about all of that and just put it into a bit of a plan. And then talk about what we might do from there, and then we can have a look at some of the timeframes that are working. So, all right. So what we've got is a confirmed downtrend on Lihir Gold. So sorry, on Newcrest Mining. How's that sound? So what we've got is about $3 range, about twice that range down. Would be looking for a good place to find some support. Sort of similar pattern here: lower top, lower bottom, lower top, lower bottom, lower top, lower bottom. Getting some sort of congestion, potential for a higher bottom. Then we might be in order, that blue swing there that I've got highlighted, that could be the sort of move we might be expecting on the way out. So they're the ones that I mentioned last week. Remember, they're the ones we sort of want to capture, those big overbought upswings to the upside and just trail stops effectively. So I think we are stalking a long trade setup. So get close to the market and look for some bigger picture reasons, and we can have a chat on the forum about them. But I definitely, maybe another day or two down, maybe a little bit of sideways, and then another upside swing would make me very, very happy in the world of Newcrest Mining. All right, confirmed uptrend. So remember here, 341, 416, 324. We are certainly seeing contraction to the upside, but you know, we're not seeing end of the world on the weekly swing chart as far as what it's giving back. So make sure you check your resistance cards as far as your lows, highs, and ranges resistance card for some areas for some support and resistance. The 2-day chart is also down, and the 3-day chart is up. So we've got weekly and 3-day up, 1-day and 2-day swing charts down. So that's giving us some perspective as far as trends are concerned. All right. All right, so let me pop out of here and come back to you guys. So I'll put it to you guys. Okay, Debbie, I understand. All right, so just to put the context of what we've just discussed, we sort of talked about the first lower swing top as being a potential for a short trade, and obviously how you might have traded it. Big gap down, obviously past 50%, not a clear short the open. There's lots of challenging, I guess, aspects to entry there. It did prove obviously the first lower top using both the previous rundown as well as the A to B range has been working as far as that gapping the right way as far as being short's concerned. Great risk and reward of about 4 to 1 where the market is currently had you place stops behind the gap as opposed to placing stops behind the swing top, which I don't think anyone would probably be thinking about doing. There's just too much risk in that. So obviously getting a cheeky entry away, even an intraday entry, if you could get a lower top away off the 60-minute bar chart or something along those lines on that day, might have given you a way to mitigate some risk. But at the end of the day, certainly it was a good profitable short trade, a more difficult trade to be in. And so as I said earlier, if you'd missed that one, I wouldn't be too busy, chastising yourself. I think what you might see, if the patterns that we're seeing consistently over this market, and obviously what you guys mentioned on the here gold as well, we might be due for another down day or two, somewhere along those lines, followed by some consolidation or congestion. I'd really be thinking about that area as maybe looking for a first high bottom trade or a reversal day. I'd be sweating a signal day somewhere around there. I'd be trying to back it up with some other time frame analysis, which is beyond the time that we have here. But where does time by degrees put us? Is there anything around the birth of the contract, seasonal dates, those sorts of things? We don't have a seasonal date. Is there anything from the birth of the contract that might be helping me? And all of those things, just to sort of start to sniff out. We are oversold to the short side, and obviously gold doesn't tell us that that we should have gone down this far. Is really what I'm suggesting, is that gold hasn't come off anywhere near the same percent that Newcrest has. Keep in mind that Newcrest not only gets bounced around by the gold price, but also the general financial market conditions. So the fact that we've seen the Dow and the S&P off as well, that's also impacted. And so just as quickly as that can be taken away as far as the value of the share price, I think we can definitely see that returning. So if we saw strength come back into the equity market in the form of the SPY and the S&P 500, and if we also saw some strength coming back into gold, I think you definitely want to be stalking a trade on the long side. And what we know is after these slightly oversold ranges to the downside, we do get that pretty massive boom $4 or $5 range back up to the upside. So trailing stops under swing bottoms or behind gaps, all those sorts of things might actually be one of the contenders for the best trade management techniques. So whilst it's a good short trade to learn from, I think it's definitely a good time to be thinking about the potential for a long, based upon what I'm seeing right now. But that's not a case of guaranteed definitely got to be long. Definitely got to have a signal. Don't just punt. But if you start get some strength returning to the equity market and the gold market at the same time, I think you'll see people return to this stock with a little bit of vigor. So the only thing I didn't check, just as I was having that discussion there, is just to take a look at what the volumes were telling us. And that's obviously going to be important as well to see whether or not it was really being kicked in the guts or whether people were just, walking away a little bit. So even through here, there really wasn't big volume. Obviously, the last couple of days, that's when the volumes kicked in. All right, so sort of nothing volume through here. And what's the pattern in the past telling us? Volume, I'm suggesting here that when it bottoms, sometimes it bottoms on some relatively low volume, and then it shoots back out on that high volume. That's not a huge amount of not a huge amount we can read from that, I guess is what I'm saying. If we could see even another down day tomorrow, but the volume fall away, but yeah, you're just going to have to read volume based upon the day. I can't draw too many conclusions about volume at this stage. All right, so back to you guys. So you tell me, based upon a little discussion on the short trade, and then obviously the discussion on the setup for a long coming in, based around an overextended range. Does that give you some food for thought as far as some work you can go away and A and do on that short trade, and B, keep your eyes on the prize for a long trade? All right, and he's encouraged, which is good. All right. I guess questions are good as well. So if you're happy, I'm happy. But as I said, if there's a question specifically, then let's address it now. So just to make sure that we're, yeah, Des is absolutely right. We're stalking this. We could get absolutely nothing out of this other than a bit of lost time. But it's stuff. One that I definitely, come next week, I'd like to be talking about, some potential for some upside or whatever, and maybe there's been a signal or whatever. So I just don't want us to be, hopefully looking at it as a academic case study. A practical one would be good. Jaron says you seem to make it all look so clear and straightforward. Well, I'm glad for that. I guess I try and think of, I laugh when people say that because I do actually wonder whether I make any sense whatsoever. But what I'd say is that that's my job at the end of the day, Darren. So I'm glad it is a little bit clearer. Yeah, good challenging opportunities, as Richard said. Gerald's saying, yep, do a paper trade. Linda's saying, what reference range would you be looking for? excellent question, and let's take a look. I think it would make, logical sense. I'm looking at the upside ranges over recent times. I could pull apart on that one. It's done about 75%. Maybe a last little ditch 50% run. I'm sort of pulling. I've got to sort of chuck this approximately where it might be. A 50% run, like if it's done 100%, 75% contracting into 50%. If I pop it on there, 50%. Let's say that is the bottom there. 50% will give you approximately that, a double top. And probably the better of the ranges. That's a bigger picture one, but probably a better of our ranges to be following would be wherever it does bottom, using that reference range in that last run. All right, which would certainly give us some 50% just under that top, 66, 75%, so on and so forth. But it's about that's a 571 reference range, so that's definitely, if you got half of that, you'd be pretty happy. And the previous reference range is previous one's 722, so that's probably a little bit overextended. I'd be using that second one, which is 571. Alrighty. So Wayne said, you mentioned earlier read day counts. Could you please elaborate? Sure. I'm trying to reference what I was saying at the time, Wayne. So memory like a sieve. When I was talking on NCM, so was I talking small picture or big picture? I guess what I was talking about, I think, was I've got some big day counts that we're going to do now, but I'm trying to think if there was one on the smaller. Yeah, big picture. Yeah, we're still going to do that, Wayne. So, okay, yeah. What was the reason for the potential short? Something about, okay, yep, I'm with you now. You probably remember when we talk about this example, why I thought that might be a relatively strong top was some balancing time work. That was 118 days bottom to top, and then we saw a 200% repeat. All right, and then balancing time from bottom to bottom, 178 days, which gave us the 15th. So that's what got me sort of searching around that area there as being an area to watch. And I guess just pulling apart some day counts or some short-term stuff, I was pulling apart the fact that, yeah, it's run up about 13 days up, and at the moment, it'll be about 13 days down. Today was 12, tomorrow will be 13. So, look, knowing what I know about balancing time, we've got 13 days up. And if we pull back into the top of that gap, 13 days down, I'd consider that a bit of a balancing time, 100% up, 100% down. It's done about 3/4 in price. We'd probably be due for a move higher. And let's just say from tomorrow's date, I ran out 13 days. Well, 13 days is going to give me, 13 days from where we are right now would give me the 9th. Now, remembering that the 9th, if I look at this calendar, I'll bring it up for you. I can't zoom in for you. The 9th is actually, or the 8th, which is the seasonal date, it's a Sunday. So you've got to remember that we can be looking here Friday the 6th or Monday the 9th. So some potential turns in the market. So they're ones to keep us interested. So I think that's a bit more work on some day counts, which hopefully that sharpens up our pencil as to why we were looking there. All right, so thanks, Glenn. All right, so what I'm going to do is get stuck in now to some work that I put together on balancing time and on interim timeframes. I guess I've got some stuff prepared, but I'll sort of start how I pull this together first. So this is on Newcrest Mining. I guess what I went and did, if I clean up this chart, I'll just bring up a new one. I went back and looked at sort of this run. Well, where did it really sort of get going from? You could argue that sort of back here in 1998 was really where this market started to take off, and then I started to sort of look at these moves, and I was thinking, all right, well, what sort of time frames are working? And you've got sort of top followed by top. You've got physical tops. You've got true tops. Are we getting some patterns that are repeating? Now, one of the things I asked you guys to do is go and put turning points on, and there's a 4-month turning point, and obviously it's picking some pretty major turns. Time frames from here to here, time frames from here to here. And one of the things that that came back, obviously, with you guys doing that work was that we had some 1100-day time frames, and we had some 200 ones, and we had thousands and bits and pieces. And I guess you guys tell me, but you know, one of the great challenges that I always had was that you got these time frames and you got lots of big numbers, but you just sort of had a list of them, and it was like, well, what do they really mean? You know, and finding ones that work once, well, that's great, but you know, like everything works once. You know, that's not a rule or a system. That's just a punt in the dark. So what I thought I'd do is, okay, well, what can I go and do to sort of just pull apart this market? So what I start doing is just pushing, pulling, and just getting time frames, and I just start layering. You know, and the chart gets very messy. Is probably the thing to describe it. When I start to see a few numbers working, I just suck those numbers out into an Excel spreadsheet, and then I start doing multiplications and divisions of those numbers just to see what's working, and then I try those back on the chart. So if I jump back into profit source and kind of, you know, rather than stalling the, you know, the inevitable, is to show you what I've come up with. I sort of started bringing together this sort of chart here. So as you can see, I've sort of, you know, got lots of time frames on there. I've got lots of lines, and it all looks a bit messy. And you know, there's lots of different areas here that I need to explain. So I guess what I did was sort of look at the most recent top in the market, and probably I made the call that I wasn't really interested, and I guess this is street smarts, is I wasn't really interested in finding any time frames from here to here, because the way I saw this market running out is we're looking for another major top, potentially another major bottom, and I wasn't going to get what I needed to call the next top, let's say out here. I guess making the call in my head is, let's say there's a top somewhere in the middle of next year. I'm just making that up, by the way, don't use that as gospel. What I was saying, let's say that was going to be a major top or a major bottom in the market. I didn't think these timeframes in here were going to give me what I needed. I needed to go back from that top, I guess, and start working out, you know, major reference points within the market. So what I've decided to do is, and not that I won't use these timeframes, but really when I'm pulling apart this sort of stuff, this is a fantastic run through here, by the way. This will actually be some homework for you for next week. From the 6th of March top down to the 24 October bottom, I want you to sort of pull out some work there. Hang on a sec. What month are we in? Well, we're in the month of October. So we saw a major low on the 24th of October last year. So what that day there? Well, that's the 27th. There's the 24th. So we're a couple of days out from 360-degree anniversary. So if we're looking at time by degrees working, that's just popped into my head as I was thinking. We're looking for some time by degree stuff to be working. Well, we're definitely in the area for, you know, 360 degrees and a bit. If we're looking for a top, and 180 degrees where we got a bottom. So I think you'd definitely be hunting out a low somewhere here in the very near future. That's a side note anyway. So I just want to come back to you guys there, because I think it's pretty profound what I've just given you, is that where I drew that rectangle over the market, I've ignored that, and you'd be saying, but that's current market stuff, and that's fantastic, and I, you know, too many of us get bogged down in there trying to find the time frame that's going to help me call the big top in the current cycle that we're in. And guess what? Because we're currently in a cycle, the number that we need probably hasn't manifested yet. So what we've got to do is we've actually got to go back out of the current cycle that we're actually in and go back to the last major reference point and actually work backwards from there. Does that make sense? I'm listening to what I've just said and going, hang on a sec, that must be ridiculous. It's clear in my head, but I don't think I'm explaining it very well. The current top that was back in March of last year has produced some sideways moves, some ups and downs, but we're still in that cycle, whatever the cycle is, and we've had to go back prior to the commencement of that cycle to find out the big time frames that are working, because we're not going to get it because we're in the cycle, or, you know, the cycle we're in hasn't completed yet. So does that sit well? Yeah, cool. Des says it's clear. Explain it back to me and we'll all be clear. But as I said, it's clear in my head, and I just want to make sure it's clear in yours, because I think half the problem is if you look in the wrong place, you won't find what you need. And you can't look in the current cycle if it hasn't completed yet, give you a number that you don't have, because it can't give you the number that you don't have because it's not there yet, if that makes sense. Yeah, Linda's put it fantastically there. We're looking for what hasn't happened yet. All right, fantastic, good. All right, well, I'll take that as people are with me. All right, so let's get back into this chart on profit source. So what I started to do was work backwards from here. So I picked on, obviously, this area here, which was this 14 June bottom. I picked on this 1st of February top. So what I did is I said, okay, well, let's pull out the time frame from there. So I got 764 days from top to top. So I guess I could probably call that reference top going backwards. That was number 1. And that became number 2 as far as the reference tops or bottoms that I was interested in. So once I got these time frames, 764, 631, now they didn't particularly jump out at me as being anything special. When I took a look at those two numbers, I took a look at 764, I had a look at 631, and what I did is I basically divided one by the other, And what I found, oops, don't want to cancel that. And what I found is that if you look at that as a ratio of that, I know I'm moving numbers around, it actually ends up being 82.5%. So 631 days is about 82.5% of 764. So I'm going to jump backwards and forwards a little bit between the chart and back to you guys, just to make sure I'm not missing any questions. But just be clear that these two numbers have a relationship of one's about 82.5%. So if I throw that back to you guys, does that and Stephen said come in late there. We were not late, but Stephen's made a good point where we're using the previous cycle as a reference for the current cycle, which is true. Taking those two numbers, 764, well, that's not a Gann number that I'm familiar with. 631, 630 is 630 degrees is definitely, you know, a number that we could argue. So that's 1 3/4 years in terms of degrees, okay? But if you saw a number that was, you know, and 720, yeah, there's not much to that. Would you be comfortable, though, that when you saw the two major reference ranges that ran into that top were at 82.5%, which is 7/8, okay? So straight away that got me encouraged that these timeframes, whilst they weren't necessarily particularly relevant numbers that I might have seen on the SPY or I might have seen on oil or gold or whatever, they were very, very good numbers because instantly I could measure a relationship between the two. So just between those two numbers, straight away I'm liking what I'm getting because of the relationship. And I'm not having to push hard at this stage. The real concern you've got is that if you're having to bash a square peg in a round hole at this stage and it's not fitting, but I'd have to say that that's a really clear and simple fit, and I'd be keen to make sure you're in agreement with that, that I'm not sort of fudging any of this stuff just to sort of make it look good. Are you all happy that, you know, making sure that the numbers add up? I did check that, but is everybody happy that, you know, those two numbers, you know, being 82, you know, it's 8.825916%, so it's pretty smack on. And within a tolerance, we're all looking pretty good. Okay, good. So we're on top of that. So let me pause this here, and I'll jump back into profit source. And what I got going for me was, okay, well, there's my two reference timeframes. So I'm moving backwards from here. And then when I started to go and have a little bit of a play around with the this next low, so I'm going to sort of, I've got a lot going on this chart. So I'm now going to sort of highlight this. It starts to get a little bit messy. But the area that I'm now trying to highlight to you is from point number 3, that low there, and I'll give you the date. The date here was the 10th of May 2004. So let me scoot back there, 10th of May 2004, so point number 3. What I might do is I'll put a square around that date just to make it really stand out. All right. Now, when I ran time frames off there to our point number 1 and point number 2, well, we got 632 days and 765 days. So I don't know about you, but I'd say 632 is pretty good as 631. 765 is pretty good as being 764. So we're out by 1 day. So really what we're seeing here is, yeah, it's not bad, is it, Glenn? I was a bit blown away as well. As I said, do you know what the example is it reminds me of? It reminds me of that 168.252 example that David gives us from 86.87, I think it is, trading on the share price index. Yeah, lost motion. Elizabeth, I'm not even bothered about lost motion. I'm just happy to call that pretty bloody good. So I'm going to draw you a little picture just to, I guess, really frame up what we're talking about. And I've got to make sure I've got the right tool here. Yeah, keep it for the next book. What we've got here is, that's not what I want. It's the wrong pen. That pen's better. We've sort of got a market that's run in a pattern like that, and what we saw was, actually I'm going to have to draw another one. So what we're seeing here is we actually go back to the chart, make sure I get this right, 632, 765. What we had here was 6.3, sorry, the drawing's a bit tough, 632, and then 765. And so what I'm talking about here is that point. So 632 up, 765, followed by 7, 7, 6, 4 days from top to top, and from, make it another color, from bottom to bottom ended up being 631. So that's a perfect example of top to top gave you bottom to bottom. Oh, sorry, bottom to top actually. That should line up there. 31 lines up there. So what we've got here is 632 from bottom to top gave you 631 bottom to top, 765 bottom to bottom, 764 top to top. Now I know that's a really rudimentary, pretty preschool type drawing, but that to me just got me, really excited that this market was obviously exactly where we needed it to be. And so yeah, I'm gonna definitely hang on to that. And I managed to get rid of the whole page now. And now if I go back into profit source, you start to get a bit more of a relevance to these numbers. So what we were saying here was, 632 from 0.3 to 0.1, 765 from 0.3 to 0.2, and then from 1, and we'll call this back here 0. So from 0 to 1, 764, 0 to 2, 631, 1 to 3, 632, 2 to 3, 765, and that's this perfect balancing time and interim time work. Now, jumping back in here, well, we came up with some other time frames that that I'm yet to sort of see any sort of real relevance to, but running out of the 2003 low, well, 423 days, 248 days, 364 obviously is close to what we're after, and then bottom to top was 612. I was sort of saying 612 to 630. Well, it's not quite there. So what I'd do is I'd go and put sort of 612 divided by 631, and I'd see whether or not they have a mathematical relationship, which they don't. They're sort of 97%. So that's sort of not giving me what I need. As I continued to move through here, I guess I started to see some other time frames come in. So 209 days from bottom to top. Interestingly enough, 764 popped back again. So if I sort of note that as being, get what number we're up to. I think we're up to 3. And then I zoom in. That's the problem with marking up the charts like this. This is where a hand-drawn chart is so much nicer because you don't have all of this rot on your chart. That's 0.3. All right, so 0.4 here. The low in 2001. So 0.4 back to the spike top here in 0.5. That was 764 days. So we've got 764, 765, and 764. So we've got 3 hits of that working for us at this stage. What also got me, I guess, pretty comfortable, 750 there, 625. So 625 I was arguing was, get back to where it is. So 625 I was going to argue was close enough to 632. It's only a week out. So another one of our reference timeframes that was working well for us was 6. Continued to pull this apart, and I actually came back in through this area here, and I actually found you know, 382, 383 days. I was looking at that sort of 764. Interestingly enough, though, I sort of had to average those triple tops. All right, so obviously there's triple tops there. So I took the average of the three, which was the one in the middle, running down to that true bottom, physical bottom. Then the market pushed out to that true top, sold off again. 382, 383. Well, that might seem obviously a little bit interesting. What I might show you really quickly though is that when I started putting some of these numbers in, well, hopefully you can now see the Excel spreadsheet that I've got up on my screen. So I started putting in here 631, 632, 764, 76. And so what I thought is, okay, well, I'll take 764 and I'll divide it by 2. So that gave me 382, 383. So I can tell you that those numbers there are just 50% of this sort of bracket of numbers here. So already I'm starting to see that 764, 382, and 631, 632 are all sort of numbers that they're probably the three numbers at this stage that I'm finding that are working the best as far as this is concerned. So what you would do at this stage is then you'd start to say, take some of these other numbers and see whether or not you could get percentages off, and I'm going to leave you guys to do a little bit of work on that. What I want you to really focus on, I guess, is these sort of three numbers here. Now, when I pop out of here, sorry guys, you've got questions, let me answer those for you. Gerald said, is this a perfect balance of time? Yes, in that example, that's about as perfect as it gets. Elizabeth saying lots of turns in October, that's great. Des is saying, with double tops and bottoms, is it relevant to take the average between the 2 points as a measure for counts in addition to the points themselves? Yes, it is, Des. You've just really got to find what's working best. Okay, and I'm thinking it's Lois. Okay, let me know if I'm wrong, Lois. Why do you call a true top and a physical top? So if you've never done a Gann mastery with me, obviously it's probably a discussion that you may not have had because it happens a fair bit on my market, so I make sure I have a chat about it. Let me draw I'll bring up a whiteboard again because it's worthwhile talking about. What you often see, let's say you see the market make a top, and see in Sydney, fantastic, and the market sort of comes off that top and it fluffs around a little bit, all right? Not as bad as what I'm drawing, but that'll do. It then comes back and makes a lower top, and that's where it really sells off from. All right, so this is a really convoluted example. So what you've got there is okay, happens to not do what I thought it was a highlight as opposed to. Oh, and then it deletes the whole lot. There you go. So what you've got is the market make a physical top, or sorry, true top, physical top, where it is actually the highest point, comes in and makes a slightly lower top, but that's where it really takes off from, and that's where we really like to trade from. So if you really said to me, where's the best place to trade, I'd have to say probably that's going to be a better place to trade from rather than physical top. So I kind of, Gann talks about these, David talks about them too. He argued that was the physical top, and that one there's the true top. Now, sometimes you can measure from bottom to bottom, and it will give you a physical top. Sometimes it will just say 2 points. I'm not even meaning bottom. Let's say you measure two reference ranges. That time frame might actually give you 764 days might end up giving you a true top rather than a physical top. And so you might think to yourself, I don't know how many times I've thought to myself, hang on a sec, there's a top in the market and I'm wrong. Before all this stuff unfolds, only to see that, yeah, you could have made some money on the short side, but really where you really wanted to get short was from what we call the true top. And we could argue that what we've got up here is what you could argue is the physical top. Now, these things occur on bottoms as well, and they're just a term that we can call physical tops and true tops, physical bottoms, true bottoms. Okay, so all you've got to do is you've got to measure between all of those, and you will actually find that there can be a little bit of a pattern and a little bit of a harmony going forward. So hopefully that's given you some information to work with there. All right, let me jump back into profit source because I want to sort of pick it up from here. So now that we've got some time frames that are working for us, so we've got some 764. What I would be thinking about doing, hopefully you're all in agreement that there's some stuff that's working there. I'd actually go all the way back to the birth of the market, and this is where I used to think to myself, hang on a sec, I've worked out the holy grail, only to find that 764 days has been operating since the day dot. So I'd be running 764 days off the birth of the contract. And this is where the time cycle analysis tool is very, very useful. So I can just set up the calendar day properties that I'm interested in. Now, you could also look for it in terms of trading days as well. Okay. But at this stage, what we're going to do is just run that as a calendar day tool. And so from the birth of the contract, we didn't see too much. So it gave us pretty much nothing. So then I'd pick it up and look, I'd added off that relatively major low here. And then I'd come forward. That's obviously a strong anchor point. I'd come forward and I'd say, well, did it do pretty well in calling it top? And would you believe that that 764 day count is already been, in the market even before we even sort of, picked it up many, many years before. 200%, well, that didn't give us too much. 300% was pretty close to the low. So I'm using this in a balancing time sense. 400% worked pretty well. 500%, oh man, how good is that? 600%, not far off the top. 700%, called another top. 800%, not bad or not fantastic. 900%, there's another turn. 1,000%, and 1,100% of that time frame gives us the 26th of the 6th next year, all right, which is very close to our seasonal date. So what I'm doing here, and I'm even going to jump off this chart. No, it's not oil. I'm going to jump off this chart now. I'm going to get a brand new chart open. What we've done is we've established 764 days is a time frame that's working. So now I go back to the birth of the, as soon as I can, as far as the data I've got, and I'm going to go and run it off major turns in the market, and I'm going to say, all right, has this been working? And what I'm doing here is all I'm doing is balancing time. All right. So that low, I'm going to make sure I'm starting right on the right date, which I'm not. There we go. The 26th, 23rd of the 6th, seasonal date. And all I'm going to do is I'm going to go in and note, did we get this repeating time frame give me much to work with? So we know we got a top. So all I do is I just go and mark these in with little turns, all right, or little dots, all right. I'd happily call that a turn. I'd happily call that a turn. That's just stellar. That I'd happily call a turn. That's pretty much a top there too. That's not a major bottom as far as one that sticks out, but I guess is there a tradable run through there? So I would argue that that's called a turn. You always got to zoom in and just check. Yeah, look, that one there I'm less happy about. I'd probably be happy if it was a low because there's not really a run out of there, so I'm not going to count that. I'm going to call that a miss. If you pull it a week either side, you'll get a, potentially, you could argue that, if it was stretching between friends, so I don't like it, so I just leave it out. And I'd be very happy that that's working. Now we've got a date already for next year that we could be watching, okay? Now that's just one use. All right, so let me come back and talk to you guys. All right. All right, so what I'm trying to do at this stage, just to be very clear, is I'm trying to validate the importance of 764 days, all right? So I found it working between some tops and some bottoms, and now I've taken it back to the beginning of my data, and off the first major low that this market's ever produced, we've got something working. So we're working this in terms of a balancing time set. So we're taking 100% multiples. Now, we're not going to get the time tonight to go and take a look at 50% multiples, but that would be definitely something that you'd be doing. Next thing I want you to do is you just pick that up and you move it to the next major point, and we'll see whether 764 keeps working. And if you keep doing that off half, maybe 3, 4, 5, 6 tops or bottoms, and you're getting good harmony, well then 764 becomes an interim time frame, a balancing time frame. We'll use it as a square. We'll use it as a price. So $7.64. There'll be lots of things we can do with this, but I'm impressed by it, but I'm not 1,000% sold on it because I want to see it working a little bit more. So let me jump back in and show you what I mean. All right, so let me pick up right back here in the this major top. Once again, need to anchor it correctly. There we have it. All right, so I'll zoom all the way back, and what I want to see is I want to see this working in terms of tops and bottoms. So I'd argue that and I haven't done this, so it's not contrived. I haven't just sort of made this up, just reset all the data. That's close without being epic. All right, so I'm not going to probably include that. That there is definitely going to be a hit for me. That there is also going to be a hit. That one's, yeah, the market did actually run out of there. So if you called that as a low and got that first high bottom, I think you'd be pretty happy. Oh man, does it get much better? Yeah, that one I'll leave. Yeah, not a bad tradable run through there. There's another major low. That's a physical low. Sorry, a true low rather than a physical. That one there, a bit of a top. Market did go pretty hard out of there. And, then it'll give us a date, 24th of September next year. So, interesting because we're talking about a number that's it's giving us a lot of seasonal dates, isn't it? 22nd, and now it's giving us the 24th. So, all right, we'll keep working. Be a reason. I'm trying to think 764. It's got to have some harmony with the seasonal dates. All right, next major turns. Well, obviously it's going to be probably that one there. So now what I'd start to do is have a bit of a play around, probably round it off that top there. That's not a bad top. That's a strong run out of that date. Not the eventual tops or bottoms. Oops, moved it. Get that tuned up again. Here we go. Let's plonk it on that top. Working backwards now, so that's not great. That's not great. That's out a little bit as well. That's very close to being a major low. And that's not great either. Not fantastic. So that one wasn't as impressive. Probably pick it up here and start to run it off. Definitely start to run it off things like the all-time low. So well, I know that one I've just picked there is not the all-time low, but you get my point. And we've got that set up. So now I'm going to start to look at. Yeah, that's not fantastic. That's a great top. No, that's a great bottom. Close. A little bit iffy though, so we won't mark that one. A little bit in nowhere there as well, but it is producing turns. And then the most recent one is that one there. All right. Let me come back to you. So, yep, okay, the speaker's working. Let me throw it open to you guys. Are you thinking 764 plus or minus as using as a, we've now used it as an interim time. So we've worked out where it exists in the market. We've placed it on some major dates, birthday contracts, etc. And now we've used it as an interim time. Do you think that's a number that is worthwhile keeping for our market? Knowing full well that if we run it off major tops or bottoms, then it's generally going to give us a pretty good turn. So I think it's a cracker, and yeah, it's just priceless. So it's great when you're putting it on major tops or bottoms and you're getting a 50% or better turn in the market. So that's one that you're going to absolutely have in your list of interim and balancing time frame numbers. Now, obviously that other one, which was which we won't get time to pull on tonight, which was the, sorry if I just find it because they're new in my head, 631, 632. You need to go and do the same thing with that. So less about the numbers, more about the process. Are you guys happy if I gave you that 764, 765 number, that 381, 382 number, which is obviously half, and that 613? Yeah, break it down to 50s and 25%, and that's going to give you lots of numbers to work with. But let's just be clear on the three numbers that I want you to focus on. Just write these down: 764, 631, and 382. 764. I'm sending it to nobody. There we go. Why don't I do that? So 764, 382, and 631. So if you go and take a look at those numbers, apply them across the market, use them in balancing time and interim time sensors, and use them any way that you can even think to use them, using in calendar days and maybe trading days and balancing time and running them off major tops or major bottoms and all those sorts of things. I think you'll start to find that you've got some food for thought. 50% of those numbers, 25% of those numbers, And that's really probably, if we could get those three numbers working really well, that's enough numbers, you know, at a good size to give us some long-range forecasting tools. And then we can tune it up with time by degrees, some smaller calendar day counts, which we'll pinch from the market as we get closer as well. But I'd have to say I was pretty happy with just that little bit of work that I'd done on the market. It didn't take me long at all to find those. And the more I pushed them on the market, the happier I got with them. And I think they're going to be good ones to work with. So if if you could even put together a very, very preliminary forecast, running on this market now, which is obviously 764 days off the all-time high. So 764 days off the all-time high would give you into next year, is going to give you about the 9th of April as a date to watch. So I could then start to think, all right, well, if I run back 382 days or whatever it is from the 9th of April, what do I end up getting? Well, not a lot there. So it does give you the seasonal date though, which is a top. And the other time frame, so I'm still not clear in my head, 631. I ran 631 days back from there. The 16th of July. The 16th of July was a top. And then I could probably start building together a perspective, maybe with some time by degrees. And I'm only doing some very preliminary 180 degrees back gives you approximately that top there. All right, well, we don't have any more work to do. We've just got the 9th of April next year. There you go. So 9th of April, everyone happy with that? 9th of April next year. Don't do anything until then. No, just joking, all right? I'm impressed by those numbers already. So there's plenty of stuff that we can pull apart there. But I think those three numbers, if you do the work on those, you've got to work those numbers, guys. You've really got to pull them apart, break them, stretch them, push them, crush them. All right, you've got to crunch the data, and if you do the work, you'll start to see, what we can do with that stuff. That's powerful stuff, that stuff right there. And that's some pretty good stuff to get us set up for the rest of the time. But you guys have got to do some work there. I don't want to, we could come up with 5 others, but at this stage, unless you do the work on that stuff, it doesn't become yours. So that's, I think, enough for you guys to pull that apart. All right. So let me just pop this out here. So happy to take some questions now if you've got some, but you've got some time frames to work with, and hopefully you've got some some food for thought. And who's remotely impressed? Who's just a little bit happy with those numbers and what's potentially in front of you to pull it apart? I hope you are, because I am. And I guess hopefully you've seen it done, now in a sense where you've seen it done, on a market that wasn't pre-prepared. Yeah, sure, Christine, that's fine. Please do that. Yeah, Des wants the price on the 9th of April too. All right, Des, I'll work hard for you this week. And the same process Linda said on the Aussie dollar, absolutely. So yeah, just push forward with the numbers and we'll come up with something. So, and it's not a market that, it just goes to show that the rules prove themselves, because it's not a market that, it's not a market that I know intimately well, and it's cool when you pull that apart and you see it's all just working. So yeah, I'm pretty happy too, Neil. And Wayne says, even though he hasn't been trading CFDs, well, just make Newcrest you one and only one you trade, and you probably do all right out of it. So anyway, guys, so look, on that, I guess I'm probably going to say that's enough for tonight, I think. Yeah, more smile from Gerald, which is good. So yeah, so I think that's enough for tonight, guys. I think we've made some major inroads, and oil 97.50 on the 12th of the 12th. All right, there you go. All right, the last episode of All Saints. Yeah, don't miss that, Annie. The life had come to an end. That's the reason I want to go too. I look forward to seeing, if you're in Melbourne and you want to come and say good day, I'm at the TT for the next couple of days of Trading Tactics. And yeah, more than happy to come up and say good day. I know a few of you are planning on being there, so come up and say good day in the morning, and I look forward to seeing you then. Any final questions, come and shoot off. Elizabeth said, how's my son? Yeah, he's fine. He's at home, and he's all fine. He surgery next month, so we'll worry about that in a few weeks. Must admit, it goes into a holding pattern now. I don't worry about it until I have to. So yeah, thanks, Christine. Thanks, Robert. Catch you in Sydney, Graham, next week. Fantastic. Thanks, Jose. Thanks, Darren. Oh, next week's Sydney Gann Mastery, isn't it? That's right. I keep forgetting about that. Yeah, see you tomorrow, Richard. See you, Key. Thanks, Elizabeth. And yeah, guys, some food for thought. I want you to, thanks, Lynn. I want you to be able to give me some stuff next week on those numbers, all right? So do some homework and give me some stuff you've come up with. Make it look easy. Well, years of practice, Robert. You guys, you guys will be able to do better than me. You just got to do a bit of work. That's all it is. All right. All right, everyone. Well, thank you for that. And so yeah, so no problem. Oh, no problem, Darren. I'm with you now. And thanks, Stephen. That's all perfect. And yeah, look, guys, good night. I think we covered some good ground and some plenty of food for thought. So go away and do some work with that. All right. Thanks, Gerald. Thanks, everybody. If there's any final questions. All right, so there we have it. With any luck. No? All right. I'm going to log out and then log back in because I'm a little bit worried that this is all a bit flaky at the moment. It's just taking a long time to close and open windows on my end. It's probably not a big issue on your end, but I'm just going to log out and log back. All right, everybody. We'll see whether or not that's resolved. I've got a couple of backup plans in case, but we'll see if that's a little bit better. So, welcome to session 5 of our Ultimate Gann coaching. So, as mentioned, everybody's been able to log in, and everything seems to be operating from your side. Okay. So, if for whatever reason I drop out or there seems to be an issue, just stay tuned, and I'll come back to you as quickly as I can. So, as some of you experienced in the past, I might need to log out and log back in. So, and if there's any difficulties from your end as well, just let me know. So. Yeah, thanks, Blake. Yeah, it just seems to need to log out and log in sometimes. The standard reboot functionality, as often explained by IT people. All right, well, welcome from a bit of a windy and blustery Adelaide. I'm actually down at Glenelg here for an event for the next couple of days. So obviously got in earlier today. So jet setting around the country delivering coaching as well. And obviously I plan to do coaching from every city that we teach in during our time together. No, that's not the plan, but it just seems that feels like that at the moment anyway. So obviously I've got a lot to discuss tonight, and there's been some comments, I guess, with regards to my discussion last week, both with the Tuesday and the Wednesday night group, just trying to get an awareness of how you guys are seeing the information. Obviously we've got a variety of people at different levels. So I've obviously had a couple of emails come through with people contacting me just saying where they saw the content and sort of benchmarking 4 weeks in and or 4 sessions in where they saw we're up to. So I'm always happy for that feedback, which is important. So from all accounts, everyone seems sort of a little bit, relatively happy with what we're doing and the work we're doing. But obviously, some are saying maybe we could pick it up a little bit in the pace. Some say we could slow it down a little bit. So it's always finding that middle road. But I guess what I always want to do is keep bringing us back to the importance and the understanding of what we're trying to achieve here is to not get too ahead of ourselves. Obviously, we're trying to break a market down. We're trying to apply the skills and the techniques from the Ultimate Gann course, and we're trying to apply them in a logical and methodical way. So I'd much rather do the little things well, and I'd much rather be, pacing slowly, as the saying goes. So be able to tackle these markets effectively rather than miss things that are pretty important. So last week we obviously did some work on some major timeframes. There was some stuff on the Aussie dollar that's come through as well. We were kind of watching for an Aussie dollar trade on the long side, and obviously that hasn't materialised. We were looking for a little 50% retracement in time and price. When I was speaking to you guys on the Tuesday night, we were waiting for an inside bar, and we actually got that the next day. What we didn't get though was a higher top, higher bottom day, so we actually never were filled on that trade. And it was actually during the Wednesday night class that we were actually watching it live, and it fell like a stone, and obviously didn't get us close to taking an entry. So Newcrest Mining, we obviously were talking about a potential long trade. We've since had another few days down, and obviously we've had an update today, and I want to talk about whether that was the potential for a signal, whether any of you guys thought that was a potential to get long. We were talking about a long trade, and what your expectations or your thoughts were. And obviously, if anyone wants to share their successes of their race horse prowess, maybe some of you did well today on the tracks. There was certainly plenty of faces and people I saw around, but if you managed to obviously back a winner on Melbourne Cup Day, well done to you. Someone asked me my tip earlier today, have you got a tip for the Cup? And I said, don't bet. And they didn't seem really impressed with that one. So they were hoping, I think, for something a little bit more usable when it comes to the racing market. As I've always said, I trade financial markets as pretty much as a day job. So I've always said that's enough risk in my life for me. I don't need to work out all the other bits and pieces as well. But obviously, it wouldn't be Melbourne Cup Day unless I mentioned it. So hopefully, you had an enjoyable day, and some places had a public holiday, etc. So hopefully your day was, as I said, enjoyable. All right. So as I said, plan of attack tonight is to take a quick look at, we'll take a detailed look at the Aussie dollar, Newcrest Mining. As I said, I'd like to keep the questions coming, keep the feedback coming as far as where you see the pace and what we could be working on and those sorts of things. Keep in mind we're coming up on that halfway mark, so I do certainly plan on the back end of our discussions being obviously moving at a slightly quicker pace, particularly when it comes to putting together some sort of practical forecast. So we're going to need to spend some time on that at the end, towards the end of our sessions, and obviously, open it up for you guys as far as Q&A. Now, obviously, Key, you posted me a question tonight on the discussion board, and I'm having a quick look at it, and obviously it's a detailed one, which is good. A little bit hard for me to just sort of paraphrase that in a real quick response. So what I'd like to do is have a good read of that and then come back to you. And obviously everybody else should take a look at that as well and get in there and see whether they've got anything to add. But as I said, if everybody's happy with content and direction, then that's fine. But obviously, if you've got suggestions or comments, happy to have them. And it's important you get them out there, because then I can certainly shape and mould what we need to be covering in our time together. So that's the plan of attack. I also want to do some work tonight with regards to master time cycles and give you a slight variation on how I use those. And things that I'm watching when it comes to bigger picture cycles. And I want to set up our two markets as far as in a time by degrees environment by really identifying what current vibrations are working best. So whether we're working, more in 30-degree periods, 45, whether we're seeing sort of square or triangle activity, whether the seasonal dates are being dominant, whether the birth of the contract dates are dominant, or whether we're seeing major tops or bottoms as being the anchors, as giving us the framework that we need. So really what I want to do is start to get some, I guess, more trading related knowledge about our markets. So being able to set up where they are in the current market. You guys would hopefully be keeping things like a time trend analysis chart, where we talked about keeping a swing chart in time. You guys should be able to tell me where we are positioned as far as, time, whether we're overbalancing to the downside, or let's say, for example, on Newcrest Mining, how many days have we done now in this current move? Is that greater than the previous major moves down? Remember, we were looking at a 26-day, 27-day upside movement, 16-day south side movement. Are we close to that? So they're things we might take a look at. But we should be combining and adding on top of the skills that we're learning or getting new information each week. But we should certainly be on track to apply what we've already discovered in our markets and not lose the benefit of those. So that's the plan for tonight, and I'll run through that again very quickly. So reminding you that we do hold a financial services license at Safety in the Market and through Investment Educators Australia. In providing the ultimate Gann coaching, we're not taking into consideration your personal financial situation. This is not to be deemed as personal or specific advice. It's only to be viewed as general advice with relationship to the materials you've got from David and the markets in general. We will be taking a look at, obviously, current financial market information. That's not to be construed as direct advice. If you were going to take action on any of this information, you would need to do so, obviously, with your own decision-making process or with the guidance of a licensed financial advisor. So they would be the ways that we'd encourage you to tackle that. Once again, any questions regarding that, please feel free to. Always contact me if you have any concerns or questions. All right, so in our session tonight, we'll get into it. We'll do our market update as we've been usually doing. People are finding that that's just been a useful part to our discussions, only because it's getting us to get into a routine and get into a habit of analysing a section of markets and getting into where we're seeing them, how the trades are looking, all of those sorts of things. We'll take a look at, obviously, what the index markets have been doing. They do play a big part, obviously, in what we're doing with regards to Newcrest Mining. We'll also take a look at, obviously, the interest rate discussion today, because obviously many would be aware that the Reserve Bank raised interest rates by 1/4%. And so obviously that would have an impact on the Australian dollar. As we talked about, I think the markets had already factored in a 1/4% rise. I think you'd really see the Aussie dollar rocketing as we speak if it was a 0.5% rise, but obviously as we didn't see that, and as I'm always reminding myself to log in before I start our sessions, I'm just logging into my live platform so I can actually give you an up-to-date figure on what the Aussie dollar and for example the gold markets might be doing. So I'll just get that up and running in the background so we can have a bit of a chat about that. So that little bit of inter-market analysis discussion. I know many of you might have attended things like the Hot Commodity Summit. Obviously might have a book called Inter-Market Analysis by John Murphy, which is a very good text. You should certainly be, I guess, doing some research on how currencies are affected as far as other markets are concerned. So in an inflationary cycle or in an interest rate movement, what would that do to currencies based in globally? So all of those things I think would be important discussions to have. We'll obviously do a review of our market, so we'll take a look at the potential setup that there was today on Newcrest Mining. We'll take a look at the Aussie dollar and see where they are in current markets. I guess as we're moving towards trying to understand where this market's going to be for the remainder of this year into next year, we should start to take a look and just see on a bigger picture according to master time cycles where things might be. Now, as I said, there's a slight bent on that, so I'm going to share some of the stuff that not only that you learn at, say, Gann Mastery or through the Ultimate Gann course, but also some of the stuff that you can apply in a little bit more of a lateral sense. Some of the stuff that Gann did, and some of the stuff that really David's talking about at an MFC Master Forecasting course level. I guess the other thing I said I wanted to do was set up our markets based on time by degree. So what we've done is we've looked at birth of the contract, and we know that that's obviously pretty strong on things like the Australian dollar. We know it's also pretty strong on Newcrest mining. I still don't feel we've got as detailed a depth of understanding, and I guess, as I mentioned from the start, some of the work's going to have to come from you guys as opposed to me just putting it together. I've got a lot of people obviously sending, through the discussion boards, there's people sort of sending in their cycles and their work, etc. I guess the thing that I'm finding with it though is that there's a lot of the work that's being done is good in the sense of the analytical work. So you're coming up with numbers and you're coming up with repetitions, or you're coming up with information. But I guess it's the conclusions that we're drawing from that. I guess we're getting a bit of raw data, but I think you've also, get in there and maybe try and apply some conclusions to that. So how could we take that raw data, people making decent conclusions in the sense of we see this, we see that, but how can we build that into our trading plan? How can we actually take best use of that information and build it into a system that actually becomes robust and tradable? Like it's nice to say, and I was looking in, get whether memory's a bit like memory like a sieve at the moment, but I'm just sort of taking a look at the discussion groups for both groups, and there's some work done through the week by someone in one of the groups for, might have been the Wednesday night group. No, like it's the Tuesday night group. So yep, by Des. Des has put some work together. Good work, and sort of listed a day count here from 118 all the way through to 1609 as far as day counts are concerned, and that's all pretty. And then there's obviously some charts in there, and I can see Linda, you've put some stuff in there, and sort of that 748 day time frame, 252 days, and so obviously that's looking pretty solid. Just taking a look at that chart, but it's just really a question of how do we take that information and make it useful, and how do we build some rules around it? So that's really what I'm starting to think about is we're getting information, but let's make the best use of it by knowing conclusions and rules that we can build into our two markets. So that's obviously something that I want to pick up tonight. So of course we're going to do a lot of driving from profit source. I'm also going to give you, I guess, the discussion on the master time cycles approach. I haven't put too many slides in there. I thought it'd be best just to show you from a practical perspective. So I want to set up both the Newcrest mining and the Aussie dollar based upon a master time cycle approach. So what that's going to mean is we're going to go and take a look at obviously what's remaining in 2009. So we'd need to look at the final quarter of 99, the final quarter of 89. There's some variations we might apply there as well, and then we want to take a look at 2010. So we're going to need to look at the 2000 market. We're going to need to look at the 1990 market, and that's by using those 10-year cycles, which are obviously quite important. So we'll do a lot of that in profit source, and we'll set some stuff up, and we'll make some conclusions. Okay. So that's our plan of attack for tonight. So if there's any questions before I jump into profit source, maybe now's a good time to throw them at me. But failing that, I'll jump into profit source, and we can have a chat about it. And, just taking a look. Welcome one of my colleagues who's just decided to jump in the background. Welcome aboard. And all right. So any questions before I jump into profit source? I guess is the question that I have for all of you guys. And if not, I'll assume that we're all happy, and I'll move into it. All right. So let me pause this camera first and foremost. And what I'll do is I'll jump into profit source. We'll do our quick market update. We'll take a look at where we are on Newcrest mining as well as the Aussie dollar, and then obviously start to do the work on the master time cycles, etc. Alrighty, so just jumping into profit source here now, and excuse me for 2 seconds. I just have to run across to the other side of the room and turn the air conditioning back on. It's got suddenly very hot here in Adelaide. So, I don't want to overheat while I'm doing all of this high-powered work, so we'll get cooled down. All right, so let's start with the share price index. So if this week hasn't been enough for you to keep you, I guess, a little bit on top of your emotions, we've seen, from a week ago, we've seen quite a lot unfold. So, we've got together Tuesday of last week. So in that time, we've broken out of that sideways range. So we were looking at, the market potentially holding some of these areas. We sort of potential for a little double bottom there, and the market had very clearly sort of started to trade in a bit of a sideways range there. And at that stage, last Tuesday night, everything was sort of, looking potentially, maybe like we were going to have a bounce. We did have some lower tops. We only did have 2 days down here, and I guess something that I'd point out to you is that we then got those extra 2 days down. We got those massive gap down on day 4 there. And obviously, based upon that information, you can remember back into really the first week that we got together, we were very, very I guess on top of the fact that we might be looking for a reversal if we got an overbalance in time. So that little area there really did make me stand up and I guess pay attention in the market, purely for the fact that that was the first time we've had a 4-day down movement since the middle of the year. And if you do remind yourself, on the share price index, we haven't had such a move down on the south side until this sort of period through here, which was in middle of June. And I guess one thing that I'm watching here is just a straight away as a comparison of the two cycles. Is I'd want to know exactly how many days that movement down from top to bottom was. So it ended up being 26 days down into about the 8th of July, and then from there it took off. So if I was applying the same sort of criteria, the challenge is going to be, well, which top are we going to use here? But if we pick on the obviously current high in that cycle, 26 days down is going to give us about the 10th of November, and I guess if you use that top from where it got going, you're going to be looking around the middle of November. But looking purely at a cycle, I'd have to compare one bear run to another bear run. So you'd be looking at the fact that the market could well travel down to about the 10th of the 11th, which obviously is pretty close to our seasonal date. So comparing previous runs to the current one, we're going to do that in time. Well, absolutely, we should also do it in price. I'm going to pick on that as being my A to B range. I'll pick that up, and what I'll do is I'll unlock that, and I'll drag it up to where the current market is. So I'll plonk it on the top here, and as you can see, we've already travelled about 75% of that move. So we've seen a pretty strong move down already to the, actually if I run it out the whole way, so we're 44.81 as far as that day count's concerned. I'd be interested to sort of get an idea as well, if we're just talking about 26 days, 50% of that would be about 13 days. That puts us halfway in the run there, so that's not particularly relevant. So if you're watching 26 days and 100%, well, 44.81 around about the 10th of November, but I think we'll either... It'd be hard work for it to just sit here for the next few days and spend another week basically going sideways and only drop another 40 points or 60 points. But I guess that overbalance in time was one that was really important for us to be watching. We haven't had 4 days down, as I said, since the middle of the year, and that was potentially a good signal for us to be going short. Now, when you then take a look at Friday's data, you had that key reversal, so the market tried to come up and close that gap. So the low is 46.82 on that day. The high on that day is 46.71. Low is 46.82. So you've got about an 11-point gap there. So hasn't come back and closed the gap. You've got your key reversal pattern there. And I know some traders that actually went short the close on that day there. So they use that as a closers rule, okay, entry. Failed to fill the gap. First potential for a lower top and getting short on that close signal on the day session. And then obviously hanging in the next night down, the Dow was down a couple of hundred. And then we take a look at today. We had a 70-point lead from memory from Wall Street on the Dow, etc. And our market hasn't necessarily reacted all that well to that news. And we've got we do have by definition an update, but it certainly wasn't the most convincing of updates. The market got pretty serious in terms of volume on the way down as well. So we've certainly seen the volumes picking up. And the last couple of days have been above average, but today was actually below average, but that might be a little bit of the Melbourne Cup influence as well. So I guess if I, how do you shift that point C? Okay, hi Lois, you have to unlock the manual ABC pressure points tool. So if you put your ABC point on there, I'll just come back to you guys. So if you've got an ABC manual highlight on the chart, you basically right click on C or one of the vertical lines, and horizontal lines, and you have to unlock it, and then you can pick up and move your C around. So that's all in the manual ABC pressure points properties or tools, and it's certainly being able to pick that up and move around is a pretty important thing, because it does enable you to get the market moving in the right way and to be able to measure the previous price cycles. So I guess what I wanted to just have a little bit of a discussion on now is that were you watching, or what did you think about when you saw those first 4 days down, and what did it make you think, and what was the psychology? Were you thinking it was just a double bottom? Because I know people who got long on that day as well. I've had some emails come through, not necessarily from this group, but I've had emails coming through of people saying, well, what did I do wrong? And I'm like, well, it was a double bottom, and maybe there was some harmony associated with it, but the market failed to fill the gap, and it gave you an outside or a key reversal pattern on that day. Generally not days I prefer to go long upon, but interested to know whether you were on top of it, or whether it's now just something you've gone, okay, fantastic, a bit of hindsight. And if you were thinking about it, what did it make you think? Linda's saying you got short Friday because of the time reasons for the October top. Yep, fantastic. And can I tell you, there's certainly some strong reasons why the 15th could be a top. So Darren's saying times overbalanced, look to go short. There were lots of ABC shorts on Friday to look through. Yeah, there was 23. I remember, because I looked at them over the weekend, and some of them were, I guess the great risk for the stocks was obviously getting in within limits and then managing risk, because obviously a lot of them opened outside limits and all of those sorts of things. But there was certainly lots of short trades on offer, particularly from Friday's market for Monday entries. Okay, so did anybody, obviously throwing it out there, you've seen obviously those overbalance in time as David describes it. Was anyone thinking it was a long? Anyone sort of sitting there going, okay, well, 4 days down, it's double bottomed, big overreaction, and then obviously the markets were up, and people were thinking the good times are here again. So I know that there's definitely a couple of ways to look at it, and I've met people who've looked at it both ways, and just trying to gain your appreciation. Yeah, absolutely, Ashley. And look, the seasonal date, and look, and this is where I guess part of me is you'll understand this comment as being important, which is why part of me sort of ignores or causes me to not listen to some of the things that my colleagues say, and accept him because he's in the room with us tonight and he's just excellent. So everything he says about soybeans I listen to. But I know Noel's been talking a lot about that early November stuff, and I don't disagree that it could still well be a reality. But I think what we found is a lot of people have just gone, it's impossible, the market will run up and it will make a top in early November. It could well shape up and be a low, and you're going to know that around the date in November. But at this stage, your system said an overbalance in time, 4 days down, lower top off the 15th of October, which also had some good harmony, as Linda mentioned. There's been some good money to be made on the short side. So definitely, this is an idea of, a good example of not falling in love with forecasts and trying to be traders and trying to get the most from the market. And that is not to say that this market could not rally and recover and spend. We are only today's the 3rd of November. We could go 3, 4, 5 days up easy from here, and the market could just it could rally 1,000 points, but it also could keep going down. Okay, yep, I agree with you there. So Glenn said it's 150% of the previous rundown. It's pretty close to a 50% retracement of the current section. I agree with all of that. So, if you're not already short, it might actually be a little dangerous to start getting short into the market. So I guess this is where and I know the SPY is not a market that we chose that would be one that we're following, but because obviously many of you are trading equities and CFDs, that's why I want to do a discussion on it, just to, we can sort of have it as our pseudo market hiding in the background. But it's really important to understand that you've got to trade what you see. And you've got to really rely on your own work, because I know a lot of people have just been in absolute disbelief that the markets would run down from where they were, assuming and just absolutely sold on the fact that there had to be a top in early November. And it's just a case of forming your own view, being able to trade what you see, and hopefully clearing your head of the other noise. And we did talk about that, independent to anything else that's out there in the market. We did say if you can see that 4 days down against the upward movement, we've got and not just sort of 4 days down overall, 2 days up, 2 days 2 days down followed by an up day followed by 2 days, 4 clear down days, and that's certainly given us that overbalancing time. Now, as I keep saying, it could be that one last leg, it could have one little jump up, and you might find it makes a really strong low in the next few days, and then we don't get a November event as far as a high. We could, what we'd be saying, thinking might have been a high, could now well end up being a low. But this is our great challenge when we deal with the work from David and the Ultimate Gann course, and is getting a little bit too tight on the forecasting bit and forgetting to trade what's in front of us. So I guess coming back to it though, is everybody happy that we've got the market 4 days down? It then attempted to fill the gap on the 5th day. It gave us a key reversal, failing to fill the gap. Is everybody confident or comfortable that a sell on close, using the closes rule, may have been a legitimate strategy in that environment? Okay, because remembering that the SPY does tend to gap a lot of it, we're certainly trading the the day only session rather than the 24 hours. But just making sure that even if you didn't get on that setup, that should be one that you can file away and say that's a really good textbook example of a short to close, and obviously hanging in there, key reversal, couldn't fill the gap. There's lots of different things that were all involved there. So so Lynn and Linda and Glenn are all happy. Hopefully the rest of you are all good, and because that was definitely a trade that was on the cards, and I kind of think that we did flag it a little bit, and Darren's good as well, which is great. So we did flag it, we did talk about it. Forget whether you traded or not, but certainly one that you can use as a textbook example. I was actually working in Sydney this week as well. There's actually a camp mastery on in Sydney, and Matt and Noel are handling that. I sort of was there on day one to do a little bit, and having a chat with Matt Barnes, who's obviously now is now officially in the speaking ranks. He's left Shooters now officially, and he's now as a contractor with us. But talking about how I can't remember the last time I used the closes rule, but I actually did use it in that situation to get short the market on that day. So obviously when the Dow was down 250 points on the Friday night, you feel pretty good about how you you took action there. So that's a really good example of going short the close. And I must admit, it's been many probably months since I've last used that sort of scenario to get in, because using the closes rule is not one that I would say it's not top of list. Openers definitely, but the closes rule tends to be one that I use less. So, and I'd be interested if if you've got a story to tell on the closes rule, or if it's something you have or haven't used. But it's certainly, whilst it's just an area that I don't use particularly a lot. So the fact that I've used it in recent times obviously means it's a good example to have a chat about. All right, so let's get back into profit source. So we've talked about that overbalance in time. We should also take a look and see what the swing chart's telling us for all of our markets. So let me just jump in here. So what we've seen is a scenario where we've got a sell on the close on that Friday, market's gap down. Today's obviously given us a bit of a weaker signal as well. No prizes as to what our swing chart's going to tell us, not a point swing. If I take a look at my swing chart, we're going to see a pretty clear picture of what the trends are, which is downtrend, lower tops, lower bottoms, 315, 160, 111, 65. So we are getting a little bit of a shortening on the ranges here, but keep in mind that the reason for that is that we managed to get that little swing there. We've also managed to see that swing bottom form today, but that little close there would be hard work to suggest that this market's all that strong as it sits right now. But the market could go very, very hard overnight, and we'll get some sort of bounce from that. The weekly swing chart has actually broken through the last couple of sessions. It's been clearly up now since the middle of August, but we are now starting to get a shrinking of the ranges: 809, 555, 326, 205, 389. We are seeing expansion now to the downside. So we've moved into an uncertain phase. Now that's the first time we've seen that in all the time we've been together, and so that's obviously something we need to respect as well. The 2 and the 3 day swing chart as well would be ones to watch as well. So the 2 day chart's uncertain, so you've got higher tops, lower bottoms, and we're going to probably see the 3 day as also changing. So we've had a very, very big shift in sentiment this week. We've seen the confirmation of a pretty intact downtrend, and we've also seen the 2, 3 and weekly charts all change sentiment from being what were, generally speaking, up to now moving into an uncertain phase. Now, if I go back to the weekly chart for just a second, one of the things we could be seeing, is take a look on a weekly chart. I'd have no problems here if it came back and made a swing bottom here and gave you a first lower swing top off the seasonal date. So that could be another thing that we could be watching, is instead of expecting the market to run up and give us fresh highs, we might actually get a lower swing top on our seasonal date in November. We could obviously see this market, run from, where we are to, 1,000,000 points as well. So I'm not trying to give a forecast per se, but just seeing how this market's unfolding. If we saw a little, the market come down, give us a higher swing bottom, sorry, a lower swing bottom, I should say, and then give us a lower top around about our seasonal date, and then give us an entry to go short, we could be seeing something along those lines. I'd be particularly watching, if that downswing's 389 points on the weekly chart, if you're looking at whatever half that range is, so that'd be about 190 points. We can see some sort of reaction around about 190 points into that level. That'll probably put us around about, the 47.50 mark. And I can set that up exactly. I'll make that a bar chart. I'll take off my drawn numbers. Wouldn't it be great if we could just draw the market like that, but unfortunately it doesn't let us. So if I'm taking that current swing range down and just sort of looking at where that might be on a weekly chart, assuming the market does give us a swing bottom there on a weekly chart, that 47.09, 4700 mark, well, that's now a new price target that I'd be watching. And I guess just to cover off what Glenn was saying as well, we're sort of running, considering our last section, there could be 2 ways that we could look at this section. Potentially we could be looking at it from the July low to where we are. And if you take a look at it from that perspective, it's really a pretty small pullback on a weekly chart. We're sitting somewhere around, probably 33% actually. So I'll tune that up. I'll put that on. So we're just, we're about 31, 32%. If you go and pick up and take a look at from that swing bottom where we push through that 50%. So that tells me that, that's a little bit weak in comparison. So the fact that we've broken through the 50%, it's only taken sort of 3 weeks to get there, sort of taken, 1, 2, 3, 4, 5, 6, 7, 8 weeks up. 3 weeks, down. Maybe if we were to get a 4th week somewhere through there, sitting on the 50%, but we've busted through that, so it's hard to get excited about finding support in the market. So that's why going to a bigger picture might be a little bit more relevant. And obviously running off the 3100 lows, 3111 lows of this year, taking a look at the retracement, we're still above the 25%, so it's really not what you consider a massive pullback at this stage. But certainly they would be areas that you'd be watching on your resistance cards and also lows resistance cards. You'd be running a square of 458. Now we haven't talked too much about squares just yet, and we'll pick up some information on that shortly. But all I'm suggesting is that they would all be things you'd be watching on the market right now. And look, it's really sort of saying it's looking a little bit weak, and it might need to come back a little bit more before it can find some support. So if you had to nail me to a wall right now, you probably might make a call that said maybe an early November low, followed by a movement out from there. Whether that would be a sustained movement to the upside, and that was going to be the start of the next move, potentially. And that would then give us the beginning of a third section. You've got one section here. Definitely got a second section there. So if you were sort of thinking that the market has to pull back, and if we use that Gann ABC pressure points tool again, if we sort of said it pulls back to 44.81 around that seasonal date, and then sort of shot out from there, you'd be comfortable to say we could well be into a third section and into next year. So that at this stage is certainly a possibility as well. The longer it sort of hovers around here, it's going to be very hard for this market to race up, make fresh highs, and then top around the seasonal date as well. So it's just an alternate view as to potentially what this market's capable of doing. So happy to take any questions on the share price index, because obviously I know it's a bit of an important one. It's certainly fresh in people's minds, and certainly very impacting on what we're doing here in this market. But an alternate view to potentially November being a top, and as I said, either could be the case. If you're strong on the date, then it very much would be a case of watching to see what was happening around it, and wait for your swing chart to give you a signal. So stay sharp is probably what I'm saying, and let the market prove to you what it wants to do around about our early November seasonal date, and then we can take stock from there. As much as the 15th of October had a lot of I know what Linda's saying there, and a lot of time by degree stuff, and there was also some stuff from the MF Summit that we talked about around about potentially for that October area. I guess the realities is that I personally was expecting, because where all the markets have been turning this year is they've been turning 6th of January, 6th of March. I'm thinking the US numbers here, 8th of July, 8th of June, 8th of July. All around those early in the month dates. So, my head was thinking, the next logical place for a big move to come from would be, that early in the month turn. But, we've seen put a high resistance card. Okay, so Gerald's saying, could I put a highest resistance card from the recent high? Okay, probably the 68.80 high would probably make a little bit more sense, Gerald. I'll do that when I go back in. But I can take a look at the recent highs, but they're going to give us opportunities to obviously think about where lows might come in. But all of those things are going to be part of your discussion, and I still think that early November date would be an area to be watching as well, because just seeing where the major turns in the market have been as far as the heartbeat or the momentum of our market. All right, Gerald. So I'll go in there and we'll take a look at highs resistance card. So I guess if I was doing a highs resistance card in the market here, the easiest one that I'd be applying it to would be the 68.80 top. So we'll get that set up correctly. 0 would be my starting date, or my end value, I should say. And if I take a look at the percentage levels, I need to put a few extra ones on here. I'll turn all these back on. It gets a little bit busy. So we've just moved through about 2/3 of the high, and and that's interesting that 87.5% of the high called that top. 75% of the high called that top. 50% wasn't a great signal. Obviously, the market fell through there, false broke, and went out the other way. If 87.5, 75% was working there on the way down, and I've just moved it back, then you might have been expecting 66% to be an area to be watching. But at this stage, it could be acting as a bit of support. But obviously, we've broken through there. We'd need to see it stick its nose up pretty quickly and get back to the upside there. Maybe 62.5%, the 4,300 mark. Maybe that could be an area to watch as well. So does that cover that question for you, Gerald, or were you thinking of another high? If you are, just give me the actual dates and prices, or the date would be perfect. Looking at, I've just had a suggestion from a wise trader, so I'll go and have a look at the 07 and the 09 range. If I jump back in and take a look at the 07 to the 09 range, what we're doing now is using the full cycle top and also the bear market low. And as you can see, we're sitting pretty comfortably right on that 37.5% point. So while we remain and hover around about that point, you'd have to argue that potentially that could be a very, very good place to watch for some support for that next little section up, per se. And, maybe another little run up to another price target. Maybe it's going to be a big run like we've seen the first two sections when you consider that 125%. So we're getting an extension, definitely, of ranges. So this market is picking up some strength. And if you're going to see the same thing run again, 125% gives you about 6,000 points. But once again, that's assuming that's a low and that this market is strong enough to run there. So, but that could be certainly acting as a little bit of support in the market at this stage. Okay, so Gerald said, can you print out the resistance data as a table? No, you can't. You have to fill in. You either have to have the Excel spreadsheet that does it, or you basically draw it on the chart itself. But there isn't a table of data that you can pull out a profit source per se. Just let me try something actually before I go saying you definitely can't. Just trying something here off the cuff. Trying to copy and paste it into an Excel spreadsheet, but that hasn't proven to be all that successful. So no, Gerald, you can't. You've either got to create it manually through an Excel spreadsheet or use the picture on profit source that we've been working on there. Okay, so that would be the way to tackle that. I'm not quite sure. You know, obviously having it in a table of data is fine, but yeah, that's what the Excel spreadsheet does that. And I know that they float around at Gann Masters and things like that. Worst case, I can always flick you one that there's a copy of. So. All right, so we've got obviously the other markets to have a pick apart. Tim's giving me some good stuff from the side here, talking about some angles, calling the October top and all of those sorts of things, which we might get a chance to cover off later. But I guess just trying to get stuck into the work that we do as generally speaking, just pull apart the swing chart information, see where we're up to. I think we've got some food for thought on resistance cards. Definitely the short trade. It was a possibility. It's just managing that accordingly, and then we'll just see where our other markets lie. So, as always, if you've got specific questions about the SPY, I am happy to handle those. But otherwise, we'll just keep plodding along. So, S&P 500 market. Interesting story here is that we didn't get 4 clear days down. We actually got an outside reversal day in the middle. So we've had sort of 2 days down, 1 day up, 3 days down. You could count that as being really, 1 day down, 1 day up, 4 days down. Really, in the context of a swing in a multi-day swing chart, but in the case of a 1 day chart, that's a continuation pattern. It's not a reversal outside day, so 3 days down, 1 outside day. Now we've had 2 days down. Certainly, last night's information was, last night's trade in the US, or the last session's trade, certainly is a little bit more of a bullish sentiment, close above the Friday's close, and obviously seeing where that sits, it certainly held a better bullish view than what our market was able to follow through today. Now we do obviously, we do have a confirmed downtrend. Interestingly enough, though, we're still 57 compared to 37.8, so we are getting a shortening of the ranges if that's where a swing bottom happened to come in. 26 is slightly larger than the previous upswings, and so therefore, if we were to see a low there, we are going to just get a shortening of the ranges. We could see a strong little skip up. The weekly chart in the US is actually still intact, so the uptrend still remains the same. It hasn't actually broken out of its confirmed weekly uptrend, and what we're seeing on the 2 and the 3 day chart. Similar picture to Australia, we do have an uncertain 2 day picture. Okay, in the US, higher tops, lower bottoms, but that weekly trend's still up, and the 3 day market is still up as well. So we are now starting to see some differences between the US market as well as the Australian market. So we've got a 3 day and a weekly uptrend that are confirmed, and the 2 day is being uncertain. The 1 day is down. Where in Australia we've got the 1 day as being down, the 2, the 3, and the weekly are all uncertain. So either we need to catch up with the US if it's going along, or our market's decided to do things a little bit differently and sort of take on its own attitude, so to speak. Looking at where it sits as far as a pullback's concerned, once again some retracement cards work. We're sitting at about 25% of that range, which is pretty much where we are in the Australian market as well. So we've had a pretty evenly balanced pullback in terms of the market moving higher, but we actually sort of got a little bit in front of the US as well, so I'm not surprised that we've given back a little bit extra compared to what they have done in recent times. So, the US here, we had that strong run out of July. We are seeing high bottoms forming through there. Certainly, they're slowing down a little bit. As you can see by the sections of the market, they're starting to round as far as the tops are concerned. They're not sort of spiky tops. But on the weekly chart, it'd be interesting to see where we sit on a repeating range here. So 75%. So in the Australian market, we'd actually seen 125% of that first range out on the weekly chart. Here in the US market, there's only been a 75% move, sitting back on that 50%. So interesting session ahead tonight to see where that ends up. So the SPY and the S&P 500 slightly different in the context of their trends and where they're sitting on the bigger picture. Just checking obviously where the run is here. Well, we haven't come back to sit on the 37.5% as we have done in Australia. So the Australian market's sitting equivalent on that 37.5%. Here in the US, it hasn't got back that far. So interesting. All right. So we'll take a look at our couple of other markets that we follow. So we'll take a look at the gold market, and we'll work backwards off the weekly chart because it happens to be up. So we'll check the trend on that. We had an up night last night, so the weekly chart is telling us that we're still, get everything set up, we're still in an uptrend on the weekly chart. The daily chart is uncertain, okay, so we are getting lower bottoms, and we do actually lower tops and lower bottoms. So it's actually in a downtrend, but as you can see here, $36.50 to the upside is certainly eclipsed the last two swings to the upside, 2007, 2530. So we could well be coming up to tackle some of these old tops, and that'll obviously be important for the work that we're doing on Newcrest mining. The 2-day chart, it's actually down as well, so it's still holding its view that the market's going lower. 3 days up, so a bit of a mixed bag there on the gold market, and so you've got downtrends on the 1-day chart, uncertain on the 2-day, but 3-day and weekly are still pointing to bigger picture uptrend movements. All right, final one we'll take a look at is obviously the oil market, downtrend on a 1-day chart, and seeing some contraction to the upside there. Around about that $80 mark, I always thought was going to be really hard work for this market to get through. It's sort of come up here and it's topped out at about 82, just underneath, and since sold off from there. So we are getting a bit of a recovery in the US dollar as well, so that could have a bit of a part to play. The weekly trend on oil is higher tops, lower bottoms. It's uncertain. We are coming back potentially though to sit on some of those old tops. Okay, so that'll be a test of support. And if we take a look at the 2-day and the 3-day chart, 2-day chart's up on oil, the nice big expanding upside range, and then the 3-day market's uncertain. Okay, so they're giving us just a little bit of a view on how we might see those markets. One of the ones that obviously we should check as well is the US dollar, and we'll just take a look at what it's been doing, just because if it's interplay with the what's that market? Gold. All right, so if I take a look at the US dollar, we actually have a first higher bottom potential setup. So we're just going to take a look on a 1-day chart. We have actually got the first higher bottom trade set up with a little inside bar. So that little inside bar has given the possibility of slightly lowering your risk, but your tops there 76.58. The tops are exactly the same, so you're not going to get a tighter entry there. It's probably sitting just on the 50% of that last downswing, actually a little bit further. Yeah, so it's approximately at 50%. It's sort of closed underneath that, but you might be viewing this. If you had some strong reasons why that was the low in the market, you could be maybe watching that as a first higher bottom trade, and the potential for this market to move a little bit higher. And if that's the case, gets back up and tests those old tops there at around that 77.6 level, you're definitely going to see gold come off a little bit, and you'll probably see the oil market follow. So and obviously the Aussie dollar will probably continue to struggle in that environment of an increasing US dollar. All right, so just let me quickly come back. So obviously that's once again a sort of a quick market recap. We've certainly done a bit more work on the SPY than we usually do, but just once again gets us thinking about trends, etc. Just remind you of the simplicity of doing that, and just to remind you, hopefully that's a routine that you're in now, being able to just know you pick up on changes as far as the subtleties. If something's changed, because you've been doing it every day, if the 2-day goes from being up to uncertain, it becomes quite easy to understand because you're watching it every day, so you notice the subtle changes. Wayne's telling me the US dollar has broken simple down trend line too. Yeah, so it is actually looking, like the US dollar's got a little bit of strength. I was sort of seeing early next year is probably the potential for something happening in the form of maybe a major low on the US dollar. So a little bit of upside at the moment, a little bit of a recovery, and then a final fallover would be happy in my books, Wayne. But yeah, most of the basic stuff that you look at on a trend lines and those sorts of things signal that the US dollar has picked up a little bit of strength. But I will note, I'll just pause this camera again. I will note though that the US dollar has been able to pick itself up a few times before it goes on to fall over again. So these little returns or these little rallies within the cycle on the way down have sort of been, there's been a few of them. All right, so if you follow all the way down off our top, you'll see that we've had, a few of these little recoveries whereby, the market has probably looked like it was gaining some strength and, looked like it was trying to break out old tops and those sorts of things, only to find that it was would fall over again. So it's certainly bullish in the very short term, but potentially that longer term picture is pointing us maybe to come down and, as we keep suggesting, maybe to test those lows in 2008. But time will tell. But first little high bottom trade is on offering at the moment, and I'll just go and check that actually based upon platforms open finally. I'll just go and see where it's actually trading now. 76,525. So I'll just open that up. 76,525. So we haven't broken out of that top yet. I'll see whether it's the high of the day actually has taken out that top. I want to see whether we've broken that high of that little inside bar. Probably I should share that with you while I'm doing it, rather than you guys sitting there in the dark. Just let me, I'll bring up that. Wrong one. Why don't I share the right screen? There we go. It's just loading up a chart for me. So if I go and get a little intraday chart, even then I can just see off the end of day chart there that it hasn't broken through that level. I'll just put a 60-minute bar chart up there. So we were looking for it to break 76, that top there. So it's come back and tested that top, and we're getting close there. But we would take entry if we're breaking through the inside day. That's 76,575 level. If it got above 5.8, 76.58, we could probably take an entry. That's confirmed as a high swing bottom. So at this stage, though, you're actually seeing, if you're looking at intraday ABCs, where I've got my little pointer there, that you could call that a point A. This on a 60-minute bar chart, a point B, and then a little point C there, and we're potentially seeing an ABC first high bottom. As you can see, been quite strong over the last couple of hours in that little 3-hour move there. But that's getting a little bit tight on intraday data there. But if it breaks out those tops, we're in a situation where profit source screen with you again. If it breaks out those tops at 76.58, well, we're going to see that confirmed as a higher swing bottom and the potential for some more upside, and that'd take it back up to that 77.5 level in terms of the old tops becoming potential resistance again. So interesting time. So that I don't know if anyone's trading the dollar index, but it is something that you can actually trade and put together. So all right, so we've had a good chat about those markets. I guess now it's important to go in and take a look at what our markets of choice are, which are obviously Newcrest Mining and the Aussie dollar. So let's get a look at those. So if we take a look at Newcrest Mining, we were sort of looking at it last Tuesday night back around here, and we were sort of thinking if we could get, as it fails to fill that gap, maybe if we could find a little higher bottom entry there, maybe the first high bottom, we might have some potential for some upside there. But the last few days have seen it definitely fall on over. You could argue that we've got a double bottom in play right now, and as you can see today, there was a long the opener signal. That's what I was referring to. It's come back and at lows 33.69, high 33. So the market did close that gap there, 33.67. They're about 2 cents off that low. So what I'm looking at there is where today's top was compared to that bottom. So we haven't technically filled the gap if we ignore the outside day for a second, but we do have that view where we said, all right, well, if we could maybe get a higher bottom trade, for example, out of that gap, well, we now got a double bottom. Now, I guess the way that I always look at double bottoms is I try and validate them with time and price reasons. So you'd want to see where that's sitting on the bigger picture. Let's take a look at how many days up, how many days down. So 17 days up, and that's calendar days, and we've basically got 17 days down. You could call that 18 days. So that's one way of looking at it, obviously the calendar day approach. Let's take a look at the trading day approach, because that's obviously going to take out any of the weekend issues. So we've got 13 days up, and then we've got 25. So we've got 12 days down, not including the top. So I'd pretty much validate that as being not a bad double bottom in terms of harmony as far as the balance up versus the balance down. We are seeing obviously that valid signal there if you were trading that purely as a double bottom. Now, can we firm up any price reasons why we like that double bottom? Based upon resistance cards and lows resistance cards and highs resistance cards and those sorts of things. So we'll take a look at that. Well, it's sitting on the 62.5% point. I'll just get that squared up. So the all-time high is 40.50, and we'll take a look at where it sits at low. All right, so the low price there is 16.55, And we're seeing that double bottom sitting right on that 62.5% point. Okay, so we do have some price support there in terms of a resistance card. I'll do a highest resistance card. Well, it's not sitting on anything, assuming the the high of 40.50, the low of 0. So we're nowhere near that. So that's not really helping us too much at this stage. A couple of other little ranges we could be looking at. Instead of, we could take a look at the low in October of last year and the high recently. We take a look at that, we're sort of sitting on about the 25% point. So the market sort of stuck its nose underneath that on 2 occasions and then pretty sharply moved back to the upside. So that's you could argue that's a little bit of support in play as far as price is concerned. We then take it to the next step, which is go into quite a short range here. So if I pick on the little short-term range there. So we're sitting on about, once again, 62.5 or 66.6%. So that double bottom, I'll turn off some of those lines just to clear up the picture that we're watching. We're sort of hovering around that, 62.5, 66.6% area for where that, from our range here, which was the August 21st low into the top, which was obviously on the 15th of October. And so the resistance cards seem to, in my mind, for those couple of ranges that we're looking at, do support the trade. We could probably also set up a lows resistance card off the low here in October of last year. I'll just move that in and get that set up properly. The low there was 16.55. All right, so certainly those tops were, in a good place. They were 125% of that low. The actual lows, this one back here in August and in July, they're all sitting on a good spot. These ones here, though, we've only got the 25, 50, 75%. They probably wouldn't. They might even be 87.5%, but you'd have to do a manual calculation for that. So when I'm not seeing that giving me much to work with, let's go back and play with the all-time low, which should always be one of the calculations that we've got running in our heads as far as this market's concerned. It's always going to be an area that's going to give us things to watch. So the all-time low here is back at $1.13. We'll see if I've got enough, which I don't. Nowhere near enough. I'll say 40.80. So looking at that, if I zoom into those double bottoms, pretty comfortable to say that they're acting as, okay, market closed one day below there, couldn't close that day, closed one day below there, and now we've seen the market react and hit that level. So 31.64 seems to be, a place to be watching in this market. So I'll just grab a quick calculator. Do some math. It's 28 times the low. So 31.64 there is 28 times the low of 28 multiples of $1.13. So we're definitely in a strong place there for a double bottom. So all of those things, lows resistance card, highs resistance card didn't give us too much. Some of the ranges resistance cards were working for us as well. So at this stage, you might argue that could well be a bit of a place that we could be watching for, for a little bit of an interim low. The market's moved away from that today and done so quite strongly. So I've just pushed the symbol tree button, so it's just going to try and load that up. All right, so sorry, I've just come back to your questions here, and Debbie's asked me why didn't I take it from the 2nd of October. So I'm not quite sure which. Sorry, because I've been in Profit Source, I don't actually see your question. So with the calendar day counts, okay, let me just quickly look at that. I won't go into Profit Source. I'll just open up a new chart. Why didn't I pick from the 2nd of October? Close 31.58. Okay, apologies there, Debbie. I've picked the wrong date purely because there's a 5-cent difference between the two, so you're absolutely right. So why don't I do the calculation based upon correct low? So it's 13 calendar days up top, and it's 18 calendar days down to the low. All right, so that's obviously not as balanced as we generally would have liked when I picked the wrong date. So there you go. Thanks for catching me on that. It is 9 days down, 9 trading days up, and then it's about 12 trading days down. So it's not the balance that that we would like to see as far as those 100% are concerned. Okay. You've also said here that it's 45 degrees from the 17th of the 9th. So if I go back to that November low and drag it back from there, yeah, it's exactly 45 degrees to that middle September top. It's about 30 degrees to the that 2nd of October bottom, and which obviously is the better one, I guess, to be using for our counts. If we go back to the little top in early August, it's about 86 degrees. So I'll do that on the chart for you just to make sure that we've all got the right information. So so look, from that perspective, it is a regulation double bottom, maybe not as firm on time as I did in the first instance. Obviously, look, I do look at that and I say, yes, there's a 5-cent difference, but I guess the fact that, I guess we're looking there physical bottoms and true bottom relationships. I'm looking at it thinking that first of those lows is where it really lowered, and then it obviously moved a little bit sideways before it took off. But you technically, to the letter of the law, we need to use the lowest point. But I guess I sort of, that one stuck out as maybe being one that just looked to me in my experience as being maybe one we could use. But keeping it simple and saying, yeah, we don't have as many days up as we do down. If I was going to put it to you guys, whether or not anyone was watching that as a potential setup, failing of getting into the market today, assuming that we're looking at that gold charts and it's telling us that we might have a little bit more to the upside, what would be the way to trade it, I guess, is having a chat. So Linda's saying previously it put in first high bottom, lower tops. Would you look for that? Yeah, Darren's answered my question, which is the first high bottom. I'm trying to work out what you're asking me here, Linda. So previously it's put in its first high bottom, lower tops. Would you look for that? Could you? My verbal shorthand is terrible, so I do know what it's like to sort of talk in riddles. But if you could flesh that out a little bit for me, just clear it up a little bit, I'll be able to answer it because I'm just not seeing exactly what you're asking me. And I know it's hard because after previous low and previous high, it put in the first high, bottom, and tops. Okay, let me have a look at the chart. So after the previous low, previous high, it put in the first high bottom and first high top. Yeah, apologies. I'm still struggling with what you're suggesting to me. So even if you just put it into sort of bullet points, maybe give me the tops and bottoms, just the dates and the prices, or just the dates even. That's fine, and I'll have a look at them and I'll bring them up. So I'll just deal with what Darren said there. The first high bottom trade is obviously one that we could be looking at now. I'll just jump back into profit source and I will come back and type in something for me, Linda, and I'll work with that. If we take a look at what we've been talking about on Newcrest mining, we know that it does these sort of interesting little moves where sometimes it will do a run and it doesn't give you a higher bottom. So here's the problem that we've got is that, and maybe this is what you're mentioning to me, Linda, the first high bottom we got after this run here was actually this one, and there really wasn't a lot of cream in that for us. If I go back to this move here, the first high bottom really didn't give us much cream at all, and actually probably would have got us stopped out before it did go higher. If we go back to this sort of run through here, it did give us a first high bottom, but that was probably the only decent high bottom trade we've had. That one there, sure, if you got that high bottom there was something in it. But remember we talked about if we're going to get into some of these overextended, what I'm really arguing here is that if we're going to get into some of these moves from here to here, picking on these as being tops and bottoms, maybe we're going to have to be a little bit more aggressive in our entry as opposed to waiting just for a higher bottom. Something like that long the openers off a double bottom might have been a better way to get in. Maybe if it gaps up in the next couple of days, maybe rather than waiting for a higher bottom setup, maybe you're going to have to use a setup that is a little bit more aggressive to getting in based upon gaps. Just looking at what it's previously done, it is struggling in my mind a little bit to give you that nice little first high bottom entry. So certainly be sweating on that. I'm not suggesting it can't do it in this case, but I'd be thinking, maybe there's, you got to be a little bit more aggressive with your entries. I guess I just want to take a bigger picture view as well, running back to here as we did that one, 66%. And I guess I want to take a look at just the time extension. So it's run 55 days from that bottom to that top. Thinking about sort of calling, I guess what I'm looking at now is can I start to find ways I could call that A, that B, and that's C as a bigger picture ABC trade. So we know that the market's run sort of 55 days up, and now what I need to understand is, okay, well, based on the range down, how far have we come down? So we're seeing 18 days down there. So all right, so start to think, 18 is a percentage of 55. Whether or not that has any harmony to it. I'm just doing the maths now. It's about 32, it's about 33%, 32.7%. So we've actually done about 2/3 in price, but we've actually done it in 1/3 of the time. So that is a little bit of an argument is maybe that is a little bit oversold to the south side. It's done 2/3 in price, but only 1/3 in the time. Maybe it's going to need to come back and do a little bit of a rebalance. And if it's 18 days down from there to there, we might expect a 9-day run, somewhere back up into that 50%, or forget the price just for a second. If time's going to rebalance, looking for that to do at least a 50% move back up, you're going to be looking at least maybe a 9-day move up if time's going to rebalance. So all of those could be areas to watch. But to me, as it sits right now, that's definitely sort of looking at the sentiment that I'm seeing there is more of an ABC in that. All right, so back to Linda's question after the previous low. That's what I was. Okay, no problem. All right, so fantastic. Great minds think alike, as they say. So I think there's, coming back to camera, was anybody, I'll just delete that just so I can make some room for questions. Was anybody watching that as a setup off the double bottom? Was anybody thinking that was a potential for an entry? Were you on top of the double bottom? Was it something that you're seeing now? Yeah, just want to throw it over to you guys as to whether we were watching it. Was it something that you're on top of? You missed it, playing golf at the Melbourne Cup, at the races? Okay. It's all right if you didn't take the trade. Look, there's 1,000 trades that we could have taken today that would have made money. What I'm trying to make sure of is that we're watching the process and that we're forming views. And yeah, that's okay if you missed, if you missed it as well. But it's just trying to get an idea of who was on it. So not going to jump in. Okay, so you thought about it. That's good. As long as we're thinking about it and we've got a view, and if you've got reasons to stay out, that's just as equally valid as finding reasons to stay in. Like I'm certainly not suggesting that everybody should have taken this trade, but it's just more of a case of thinking in the process and saying, all right, well, what's it telling me? What can I take away from that? Look, the market could get smashed again tonight and the long trade could look absolutely ridiculous. But at this stage, at where this tick of the clock is, the signal you got today, I think, is a valid one. And Key saying here, you saw the double bottom, you were looking at a pressure date using time by degrees in the 382-day time frame. Okay, because there was certainly some time by degrees there. It was 45 degrees back to the August top. So so Robert's saying the 4 days down made you second guess the trade. Fair enough. I'm with you on that. That could certainly maybe put you into that pause category, and then therefore making it a first high bottom opportunity. But would you be all in agreement that this market has proven to be a little bit challenging just trading first high bottoms? The market does skip away. So can I put it back onto you guys? If you do get a big push from gold overnight, for example, and you've got maybe a gapped open along the openers, knowing what this market can do without giving you a high bottom and racing, you might consider a low risk entry. You might consider a small position in the market whereby, if you could get a gap and you could get stops behind that gap, it might well have something in it for you. That's all I'm saying. Darren's saying it's challenging in more ways than just high bottoms. Yeah, absolutely. It's a market that's got a bit of volatility in it. But I'm looking at the picture on gold, and I'd have to say that that could have a little bit more upside. The US dollar is a bit of a concern as to whether or not it's going to depress gold prices. But if we get what we discussed a couple of weeks ago as well, is that the equity market and gold, whilst they're two big parts, or while they're independent parts of markets, unfortunately Newcrest mining has to be factored in with both. So if gold pricing goes up and then the Dow gets hammered by 500 points, well, you probably find that Newcrest will go with the Dow rather than the gold price because, as I said, it's a stock that people invest in. But if we were to see a bounce in the equity market and we were seeing just limited movements in gold, I still think you'd see a recovery in the equity price as well. So I think there's a lot of people out there who aren't prepared. I sort of said this in the class I was in yesterday. I sort of said, look, I don't think the bulls are ready to die just yet. I think many of them are seeing value in the market. They're seeing these depressed prices and they're saying, oh, Rio Tinto was $70 a week ago and it's $60 now. It's got to be cheap. So I still think there'll be some people out there willing to have a nibble and have a buy, and we'll see maybe whether or not they can pick up and do some of the heavy lifting this week. So anyway, certainly some food for thought. All right, so let me get back in and finish a little bit of the work that we're doing on Newcrest. And then we also need to take a look at the Aussie dollar. All right, so I'll just bring up another chart, just a fresh one. So we should take a look at what our swing charts are telling us. So what we've got here is a lower top, lower bottom situation. We are seeing a shortening of the ranges here though, 215 compared to 451, $1.29 compared to 211. So we are at a stage where we could be looking at an overbalance in price trade. Now it'd be about 1.5 times that, certainly not twice. But if you were to get a higher bottom trade, it would actually be an overbalance in price trade. So after this sort of scenario here, lower tops, lower bottoms, gave you that bang and then it took off. Maybe we're going to see another run down before we get a shoot back up. Time will tell. But to me, looking at where support and resistance comes in, that level of about 31.50, where those three swing bottoms are, if it comes back and tests that again, that's definitely good buying opportunities through that area there. We know it sits well on resistance cards, lows resistance cards, etc. It's still a weekly uptrend as opposed to a lot of what the other ASX 200 stocks are telling us. It hasn't actually broken that weekly swing bottom, so it's technically still in an uptrend. And if we take a look at the 2-day chart, we're in a downtrend on the 2-day chart. And the 3-day chart, I fancy, still heading higher, which it is too. So 1 day is down, 2 days down, 3-day and weekly are up. So if you're biasing to the bigger picture, well, you're going to see some potential setups to the long side. All right, so what we were saying there earlier as well is that the double bottom and running back from that low there to the August high gave you about 45 degrees. The bottom there is 70 degrees. That one there is about 86 degrees, 112, 120 degrees to that top. This little chart, you've got about 147, kind of getting close to 150, 161 degrees there. Back to that top, there's 180 degrees. 248, yeah, it's starting to stretch the friendship to that top there. 228, I'm trying to find 240. Yeah, it's a little bottom, but not a major one. Let's take a look where 270 was. Well, 270 sort of stuck in the middle of nowhere. 300 degrees. I'm just trying to find some harmony. One of the other ways I'll do it, I might just grab the time by degrees tool. So we're pretty close to 360 degrees. Well, the low came in on the 28th. There was a top that came in on the 10th, then another major low on the 21st. Maybe we're seeing this sort of pattern repeating. Maybe, if you'd argue that's a little double bottom, maybe we're going to see a little strong run out followed by a so that's kind of what we're seeing, a sell-off, potential for maybe a little double bottom and then maybe a high bottom out the other way. Time will tell, but yeah, 360 degrees wasn't a hit. 450 wasn't a hit. 540 was though. We've got here the end of April in 2008, but 630, 720. So you'd argue that the time by degrees harmony here wasn't fantastic. Is probably the best way to describe it. It was certainly there's a little bit 45, etc., but nothing particularly fantastic. Obviously, just picking up on what Key said with regards to those sort of those time frames. So it'd be interesting to sort of see that 745-day time frame, whether that was giving us anything to watch. Sorry, it was 754. Just let me bring up something. Yeah, 764. Thanks, Key. I was just trying to check my notes here. I've got a few time frames buzzing through my head at the minute. All right, yeah, 764 and 382. So let me 764, and just anchoring that on our current low in the market. Well, we didn't get, we did see a little top, around about that area, but really I couldn't really stretch that to being a hit. One of the things I was going to sort of ask you guys to do, which whether or not something that we did or not, or haven't talked about probably yet, is that we'll also take a look at 382 just to see whether or not that gave us much. And we actually, the 382 time frame, yeah, once again in a bit of middle of no man's land. If it was on that low there, that would make me significantly more happy. One of the things that I'd also be comfortable to do is take a look at that in trading days as well. It's not just a calendar day count, even though we picked it up from the calendar day setup. We could probably also take a look at that in terms of trading days as well. Just going to get that set up. So 382 trading days. Well, we're 3 or 4 trading days out from that low, and I'll do 764 trading days as well, running backwards, and it's not a fantastic hit either. So yeah, certainly that's telling us it's not going to be a major low, in terms of yearly bottom or anything like that, but not fantastic at this stage. Just let me pop out of here a second. Just pop back into profit source. Tim's telling me it's 180 trading days from the February top. So if we pick on, if I just set up my day counts again, and if I run trading bars back from below, as Tim's very, very rightly pointed out, is we're 180 days trading bars from our top there, 179, but we'll happily call that 180 days. So you do sort of line that up though to the next day. We're now looking at that lining up exactly with the top. So, you know, the reality is here is that maybe that is another lower top. It would sort of go against the grain of what the swing chart's telling us, but maybe that is going to form as a lower top and take us lower. That's where when you get sort of trying to pick a day, one or two either side. I'd like to think it's lining up with the firming up the double bottom rather than confirming it as a lower top, but time will tell. 330 is a bit of a hit, 360, yeah, so a little bit of harmony there on trading day counts as well. All right, so just checking if there's any questions. So I'll jump back into profit source and we'll take a look at the Aussie dollar. So where we were last Tuesday night when we were looking at the Aussie dollar was thinking that you know, we had that as a little bit of a 50% pullback in terms of time and price, and that may be offering us an entry to get long. And I remember us talking about that, saying, oh well, if we can get a little inside bar, because we couldn't technically take it because it was just fractionally outside our limits. So we're saying, oh, if we could get a little inside bar, that would enable us to maybe think about this as being an ABC trade. And we're talking about ignoring those outside days as the filter from your number one trading plan that ignores outside days in your swings. Now, it was really nice because it actually did give us a, actually no, we didn't have that because it was Monday night. That's what I was asking for. So I was saying, yep, look, if we could get a little outside day or a little inside day because we couldn't get in within limits. Then when I was talking to the guys on Wednesday night, the market had given us that little inside. It's actually technically a down bar, but good enough as being an inside bar. So now we're looking at a new potential ABC. And as we were watching it, the market had, I was watching it live that night during the discussions, and it had sort of opened up above the close of the previous day, and it sort of had sort of trickled up a little bit, and it started sort of going a little bit higher. And then while we're watching it, it basically just did that. So it really took off and altered to the downside. So it really made that you know, potential for a long trade. It was pretty much invalidated. Came back and broke through the lower point A as well. And since then we've had some pretty volatile times. So obviously a big rocket back up the next day, followed by an inside bar all the way back down. So definitely, you know, we're having a look at it now instead of a small picture ABC trade. I guess we're now starting to think about maybe a bigger picture ABC trade. So if I look at it sort of sitting there, we are still above the 50% point. If I start to think about the amount of trading bars up and trading bars down, so if we look at that on the way up, it's 13 bars up and we're 20, you know, so what's that, 11 bars down. Sorry, not 11, I can't add up. 9 bars down would be a better way to describe it. So you've got 13 up and 9 bars down in terms of trading bars. In terms of calendar days, we've got 19 calendar days up, 15 calendar days down, sitting on the 50%. So we are sort of seeing maybe, you know, time is starting to catch up. If we could get holding that 50% in the next few days, maybe we do have some potential for some greater upside. Now, if you were going to call that an ABC long trade, I'm now suggesting that that's the bigger picture that we're watching. You know, whether or not we can jump in as it breaks through that top and then manage it accordingly, that'd put us at high that day is 90.87. I'm just going to jump online and I'll jump into my platform and just take a look and see what the price is showing us. We'll log back in really quickly. Just going to let it battle away here. Yeah, it's back under 90 cents, so I've got it at 89.26 is where it's currently trading. So current price I've got it trading at is 89.26, so I'll just put a vertical line or a horizontal line. Try that again. All right, so yeah, it's trading back down on its low. So not a huge chance of that getting filled, particularly on the upside if we were seeing that as an ABC long trade. But if we look at the bigger picture of where it sits, as far as swing charts are concerned, I mean, we're still going to see that we've got an uncertain trend on the one-day swing chart. So we've broken back down underneath those two recent swing bottoms anyway. So you'd argue maybe a lower top could be coming along in a short period of time. The weekly chart is still screamingly to the upside. So the retracement is less than 50%, as we mentioned. So we haven't really, maybe we'd come back and sit on one of these old tops. Maybe that would certainly be an area that we could be watching. But that uptrend is very much intact. You are still getting that expansion. You're getting some slight expansion to the downside as well. But given what the news and the interest rates, you might expect it to come back and test some of those support levels and then find some support and kick off again. Two-day swing chart's uncertain. And the three-day chart's up. So once again, we've got the whole focus of our bigger timeframes shifting, staying consistent. So our bigger timeframes, 3 days and weeklies, like they are in Newcrest mining and the equity markets in the US anyway, are pointing to more upside. But the shorter term cycles or trends of the 1 and the 2 day chart are obviously pointing to some south movement at this stage. So that little ABC trade that I was sort of watching there falls into the category of what we were watching last week. Now, as I said, I think the market had already priced in a 0.25% rate rise here in Australia. And obviously, therefore, they weren't particularly, what was expected, really. So people weren't getting out of control excited about the Aussie dollar. What would be some of the other things that are going to cause our market to, the Aussie dollar market to weaken? If the US dollar continues to get strong and if we get a falling in commodity prices, they're all going to sort of trickle into the effect of forcing that Aussie dollar lower. So if we get a little short-term rally in the US dollar followed by, gold prices and oil prices doing the same sort of thing, well, not a rally, but a bear rally, or sorry, a bear movement, we could see a lower top coming up for our Aussie dollar. But really, other than that, I don't see too much of a setup in that market right now. The fundamental factors are obviously out in play, but they're not moving this market around too much. I would have thought if the market was excited about the interest rate rise, we would have seen a move within sort of 6 to 12 hours after that, but that hasn't eventuated. So I think that's kind of going to be, flogging a dead horse there. So that's sort of come and gone, and I don't think we need to worry too much about that. Now we've got to get back and just watch the technicals and tackle it accordingly. So, alrighty, so there we have it. There's, I guess, the couple of markets where sort of stalking a potential entry on Newcrest mining to the upside, assuming that double bottom remains strong. Maybe a higher bottom entry, maybe gaps, etc. could be another way about it. The safest entry is going to be obviously waiting for the higher bottom, and given the market and the volatility, maybe that will be the better way to trade it. If the aggressive nature of what Newcrest mining can do could well give you, if gold keeps moving, as I said, it'll all be underpinned on a bit of a recovery on equity and gold. But if you woke up tomorrow and found that both those markets were up, you're going to see a gap in that market, and maybe along the opener signal stops behind the gap might be a way going forward. So what I want to do is throw back to you guys on our two markets and say, look, where does that, how do you sit with that information? And obviously if there's any questions on that. We all seem pretty either satisfied or all sitting okay. Great, Darren's happy, no questions, that's good. Questions are good, but if you're all happy as well, I'm happy to push on. We've sort of spent 90 minutes now pretty much pulling apart charts, and I could keep going as well. And this will become our great challenge as each week goes on. So yeah, Wayne, we can probably do that. So Wayne said, cool, Linda's starting to see some of the stuff in advance, which is cool, excellent. Well, that's always a good light bulb moment. They're always good times. So yeah, look, so I was about to say, and Darren says keep going. Then the great challenge is that each week I want to sort of talk about new information and new ways to look at the market. But the problem is going to be is that if we every week try to apply every single part of our knowledge base to a market, just reading the chart and applying all of those things would be painstaking because it's the number of hours of work. I guess the challenge lies is that you guys need to be keeping, and I don't quite know how, rather than, I could run it like at school and sort of make you submit homework, but I don't know whether you guys are keeping up to date as far as charts are concerned and having each week as we talk about new information and we talk about things, you guys need to recreate these charts. You need to be updating them on a regular basis, knowing how many days up and how many days down and all of those sorts of things are very, very important things. And so we should be able to build on those without having to recreate them from scratch is, I guess, my hope. And we can just add to them each week. All right. Some are saying homework's fine. And then I'll get the lobby that says homework's not fine. Lynn's saying here, that's right, Gerald. You've got to repeat these things to make them better. Lynn's saying happy to watch gold tonight and look for openers tomorrow. Fantastic, Lynn. Well, let us know. I'll definitely be watching it. So let us know how that works, and we can have a chat about it during the week. I want to sort of address Wayne's question there, where he says, can we look at the day counts and the forum comments from Des on the Aussie dollar. Now, here's, I guess, the great challenge that I have is that Des, you know, in his fantastic work, if I just go back into the forum, he's given us, there's probably 25 day counts there. Now, you've got 118, 141, 146, 164, 168, 178, 188, 209, 217, 251, 252, 253, 254. I guess whilst I'm happy to look at all of them, the great challenge for me lies in the fact that I want to be able to split out 3 or 4 time frames that work, and ultimately, you know, all those time frames are up there now. Des has thrown them out there. I guess it's up to us as a group to go back and validate them, post some charts. And this is what I was saying earlier about, whilst the analytical work is good, what conclusions can we draw? Now, if I rolled in and said to everyone, here's a list of 25 time frames, knock yourself out, most people probably don't have a framework to deal with that amount of information and turn it into something that's useful. So that's where I put it back onto you guys. Why don't we take the following week, and then why don't we next Tuesday night pick up those time frames, and you guys hopefully, and I'll have done the work as well, and I'll take a look at them and say, well, these are the ones I think are doing well, and the ones that I would make higher on my list of priorities, like we did with 764 in Newcrest Mining, rather than trying to, you know, sort of place a lesson on every single one of those day counts. Now, if I look at some of those numbers, and I'm just flicking between screens, some of those numbers, yeah, 118, well, guess what? That's 120 in terms of the time frame. Well, 168, well, that's David Square. 188, yeah, close to, 178, that's 180 days, so we know to look for that one. 252, which is obviously trading days in a year. Looking at 356, that's as good as, 360. I'm looking at some of the other time frames here. Trying to think, and the other thing that's coming in my head as I'm looking at these, I'm thinking some of these are bound to be multiples of others. So 382 times 2, what's that going to give me? 880, is that a number that's hiding there already? See, 880 is about a quarter of that's 220. 210, 220, and we've got a number here that's 217. 1254. Well, I know that time frame from the SPY, and there's also as a price. So looking at these, it's they're all good information. Now, Linda's gone in there as well, and you found 748 calendar days, and I'm just taking a look at that chart now. And you've spotted an area, lots of areas where 748 seems to be rolling in. I will make a comment, which I sort of said, how do you post a chart? You just attach it in the forum, okay? There's a little box there that says attach a chart or attach an item. I can't remember which one's which. Lois, I know best thing you can do is, I know you're in class with Matt and Noel at the moment. Go and ask Matt tomorrow in the at Gann Mastery in Sydney, and he'll be able to help you out, okay? So rather than trying to show everybody how to do it and move backwards and forwards, make sure you go and ask Matt tomorrow, and he'll spend some time and he can tell you exactly how to post a chart. And if anyone else needs a hand, there's some instructions on the forum that you can read, which are a little bit hard to dig up, or just contact Trading Tutors and they'll be able to give you a hand and explain to you how to do that. But I guess when I'm looking at that, I'm looking at, and I've got my train of thought, I'm looking at, that's right, at Linda's work. And so the number there was 748 calendar days. So what I want to do is, that's one I guess we can have a decent chat about. What I found with that number is that it seems to have some good repetition, not just for calling tops or bottoms, but giving us trades. And that's a great challenge. And I know there's some Excel spreadsheet programs out there that suck out all of these time frames between turning points, but what they don't tell you is were there other instances where it worked, where it didn't happen to be a primary turning point. So what I'm saying is it might give you 748 days between tops and bottoms, but you might also use that in a variety of other ways. But just to help Wayne with your legitimate question, and to obviously take a look at the work that Linda's done, let's jump in and I'll take a look at that 748-day time frame on the Aussie dollar, and let's go through how we can maybe firm that up as being a really exciting time frame to watch, or whether it's a time frame that's it's acceptable, or whether it's and I'm certainly looking at the work Linda's done, and for me it makes a lot of sense. But first and foremost, as I showed you last week, what I like to do is get up the time cycle analysis tool, which for me is perfect to be able to throw in a time frame like 748 days and have it moving across the market in a way that is on a relatively large scale. I can see pretty quickly whether or not it's working. So first thing I do is I'd run it off the most recent top in the market, and I'd see, well, look, 748 days prior, well, we didn't really get too much. Now, that just might mean that this cycle is yet to roll out. If I drag it back to the low in the market here, well, it did give us, a day or two. It gave us the 4th of September. But if you were looking sort of around that area for, the market to get going from, well, you're only 2 days off what was a relatively strong turn. But in terms of a primary turning point, where I'm going to put a circle there, where I put the circle there, that really wouldn't stand out as a primary turning point. But from a trading perspective, if you got long out of there, you'd be relatively happy with the move. So, all right, so just sort of picking it up and pushing it around. I'm sort of dragging it backwards and forwards from major tops, major bottoms, sort of top to top there. So that sort of sticks out as being not a bad one. Top to, bottom to bottom. So looking at these major lows here. So that to me is definitely a hit. I'll just sort of get that tuned up right on the low point there. Drag it forward. Just sort of see where we're hitting here. And yeah, we're sort of a couple of days out from that. So that for me is definitely a hit. Okay, so 748 days. That's more of a forecasting, maybe not so much a trading turn, but more of a forecasting turn. Sometimes there you go, from a top back to a top. That's working for me. If I go and pick on top to bottom, fantastic. See, that's exactly the sort of what we want to see here. There's a major low in the market, which is sort of in June of 06, and giving us what is the all-time high. So any sort of time frame that helps me call the major tops and major bottoms. I could put this on a weekly chart, and that might help us, but the problem is it's going to approximate the days. Whenever you have a weekly chart on, it will always consider that I'm running from a Friday to a Friday, rather than from, say, the top could be on a Monday, it could be on a Tuesday, the bottom could be on a Thursday. So just picking up, pushing it, moving it through the market. There's definitely some harmonies there, and certainly some stuff that we can go and work with. There we've got a bottom to bottom. So you've got in this case, you've got a bottom to a top. So you're sort of seeing a 200% repeating of that. Now, if I was a betting man and bet on the horses, let me tune that up. If I'm seeing that working as well as it is, this will just give you something to work into next year with. So if I'm interested, there's 15th of June. About 748 days later, we've got a low on the 28th of June. All right, so we're a week out there, but it's a tolerance over 784 days. It's less than 1%. Market top came in a few days early there, so we might need to tune this time frame up a little bit, 15th of the 7th. And if I go and take a look at where this pushes me into, well, it gives me the early part of August in 2010, and straight away I could maybe pull that back a couple of days like we've been seeing, so maybe make it the 4th of August. And first thing I'd do is I'd think, well, what happened a year ago? So just using standard anniversary work. If I plonk that on there and I say, all right, 360 degrees, we got a top in the 4th of August, yeah? So 4th to the 6th of August. The market did run down from there. What's the higher of the two? The higher there is 84.45, 84.46. So yeah, the 4th of August, 2008. Sorry, 4th of August 2009. So 4th of August 2010. Maybe have a look at what happened a couple of years prior. Well, we didn't get much of a hit in early August then. And that could be maybe the basis for me starting to put together a forecast, only because of this repeating time frame, bottom to top, to giving us another date to take a look at in August of next year. Now, that's not going to be enough work to get you comfortable. I'd go back and sort of have a look at what's happened in August previously. There's the 25th of August, 17th of August. So I'm looking for now turns around the early August part, and if we're not seeing them regularly, well, maybe that's not going to be the place to watch. That's a little bit late. All right. But we'd also want to drag that time frame back to the beginning of our market, and just sort of see whether that's been in play for a long time now, as opposed to just something that we think we found in the near term. I'd be sort of keen to have a look at, all right, well, there you've got your low to high range, okay, so the first major run out, and that's always important for us to be watching. 748, just looking at it as a balancing time. There's certainly some work for us to focus on there. And then, yeah, you could sort of pick these up and drag them through and to see what sort of other time frames they're giving you off other major tops or bottoms. But for me, that's definitely, sorry, Darren's right, absolutely. That skipped my mind. August 8th is a seasonal date, and sort of a few days early each time, you can sort of make those adjustments. But all I'll say to Linda is that's definitely a time frame that I think's got merit on the Australian dollar. And, the next thing I'll be thinking is, what if I use half of that time frame? So if I very quickly said, all right, well, another way to check 50% at the same time, half of 748. Is 374, and if I pick that up and plonk it on major areas that we've seen in the market, let's run it back off the all-time high. We didn't get a hit there. We were out. 100% worked well. 150%, 200%, 250%. Yeah, they all seem to be running a little bit early actually, so that's something we could factor in. Anyway, that was just a quick idea off the top of my head. But that's one time frame. Look, it's solid. It doesn't blow me away, but it's certainly one that I think you could build some work around going forward. So if I go back and take a look at the work that Des has done, all of those timeframes, would need to have validated in the same way, and then you'd have to go through and say, well, which one of those makes more sense? Which one seems to be working a little bit better? And unfortunately, that means we're left with a fair amount of what we call the donkey work to do. But all good work, at the end of the day, you've got to prove these timeframes to your own satisfaction and be comfortable that they're working in that environment. All right, so questions, comments, queries at this stage. Obviously, we've just had a pretty good chat about our market, so I just want to make sure that we're all on the. So okay, 374 from the birth of the contract gave the all-time high. All right, I'll just have a quick squizzy at that. So 374. All right, so sorry, Wayne, you're saying 374 from the birth. So are we balancing time there? So we're taking 374-day multiples from the birth of the contract, and we're just saying that X amount percent of 374 gave us the all-time high. Is that what you're saying? Yeah, okay, great. So time cycle analysis, perfect. So, okay, well, that firms up very much in my mind that that's a good number. So that, that's just further cemented that that's a pretty good area that we could be watching, all right? So when you start to get some of these bigger timeframes working for you, I guess one of the things that, we haven't done yet on our markets, which is a session that's done, session 5 these days that's done at Gann Mastery, is actually on master time cycles. Now, it's an area that I tend to find absolutely, so robust and useful in my analysis on oil, and just looking at what it's done in previous cycles. Now, what we get you to do, generally speaking, as an exercise is we look at 10-year cycles on the Dow Jones. So if you were in 2009, you'd be having a look at what happened in 99 and 89 and 79 and 69. Now, in markets like the Dow Jones that had 100 years worth of data, or getting on close to that, that gives you a great amount of research to buffer against. Now, if you're like Tim and you've got soybeans data going back to, wherever, and just on that, Tim, I haven't forgotten your message on the soybeans data. I'll get back to that one shortly. It skipped my mind, but it's just come back to me while I'm thinking about it now. If you've got a lot of soybeans data going back a serious amount of time of history, then you can go back and look at it. But we've got a slight problem in our Newcrest mining and our Aussie dollar markets is that we don't have 150 years worth of history. We've only got, maybe 30 years at best. So one of the things, I guess, to understand, I'd be interested to know why you think we look at, say, a 10-year cycle. What makes 10 years? Is it the fact that it's a decade? Or what about 10 years from a mathematics perspective makes it important, and how can we draw a correlation to some of our other work? So if I throw it back to you guys with regards to why is 10 years so important? All right, just because we say so. It seems like people look at 10 years just because it is 10 years and it's something that we've talked about doing, but there is actually some deeper reasonings behind it. It's not just a case of 10 years for the sake of 10 years. Yep, 120 months is basically, yep. So Richard and Graham are absolutely where we need to be. So you've got 10 years equates to 120 months. Now we know 120 degrees is something that we look for. So in a market where you've got limited history, you can actually start to break those cycles down into smaller cycles. So I'm always looking at what happened 5 years prior, because that's going to give me a 60-month cycle, 180 months, 240 months, etc. But some of the other cycles that I look for as well is that we know how important, for example, 168 is. So the square of 168, 168 days as a day count. So if you look at half of that, you're actually going to get 84 months, which is 7 years. So we could be looking at a 5-year cycle, a 7-year cycle, a 10-year cycle. You could be looking at what happened at 90 weeks, 90 months, 90 years, those sorts of things, 30 weeks, 30 months, 30 years. Obviously, because they relate to degrees as well. So just understand there's a variety of ways that we can actually look at that. And it all comes, I guess, down to, again, sort of quotations, and I do forget the exact quote, but, it talks about from the Bible that, a day or a minute or a day or a week or a second or a year or 100 years is all the same, to the Lord type stuff. It's just one way of measuring a period of time, and, all of them can be, I guess, moved and pushed and pulled and crossed over. So, 1 week, 1 month, 1 year, they're all a cycle of some description. So I guess the other thing we look at as well is that we take a look at what sort of the predominant predominant market movement was in those years. So what we'd need to do is we'd need to go and take a look at what happened in 10 years ago, etc., to say, all right, well, what was the Aussie dollar doing in 2009? But I also want to do next year's work as well, because I'd start to be looking, we are in November, we should start to be looking at a master time cycle for the following year. So what I'm going to do is I'm going to get you guys to maybe take some notes along the way. So I'll tell you some of the things that I think are relevant to write down. I don't have a slide created. I'll do it all from the software, but I'll put up some notes as I'm driving along. But you'll need to make some notes along the way, and we can start to make some correlation as we go through. All right, so let me jump back into profit source. So we're looking at X amount of history on the Aussie dollar. We need to take a look at what 1999 did if we're going to look at what happened 10 years ago. So if I look at what happened in 99, we saw predominantly, and one of the easier ways to look at this is to look at it as a line chart. So if I was pulling on in 1999, I'd have to argue that it as far as a year was concerned, we started 99 down around here, we finished 99 there. Well, we certainly got a strong sell-off into 2000, but at this stage of the run, we'd have to say that it was a bullish year. So 99 was predominantly a bullish year. And where were the major tops or the major bottoms? Well, that's January of 2000, so we can't count that one. Now, the major tops, you've got to start to say, well, where would I have most enjoyed trading out of? And, you could probably say the February top. And we might include a few here just to, I guess, give us a bit of a sense of what we're doing. So that February top's obviously got some context to it because, you've got a very sharp fall out of there, lower tops, lower bottoms. Certainly this May top, there was a little bit in that as well, but whether or not that was as crystal clear to trade, and you could probably say here even this top in August might have seen the sort of the biggest move down. So if I was going to sort of put a couple of years in there, or a couple of months I should say for tops, probably that August top. Now if we're going to pick on some lows, where would we sort of state the lows as being important lows? Well, I'd say probably that low there in February as well as being a major low, and then also the low here in the higher bottoms, did it come back and break? Where's the bigger move? So I swear sometimes I get a little arrow line tool and just see, well, what was the bigger move? The November bottom was obviously a bigger move. So if I was going to pick on 2 years, they were 2 months of the year. So you're probably saying the February top, the August top, and then you had the February low, followed by the November low. All right, so that's 1999 in a snapshot. I'll just save these as some files for myself for later, so I don't have to do the work again. All right, so there's 99. We should also go and take a look at what happened 89. All right, so 1989 looks to me to be a bearish year. So we know that 89 ended up being a February top. And then we saw the market sort of end a lot lower in December of that year. So it's a bearish year. And major tops, obviously the February area. So February's shaping up as being obviously some places to watch. February top. And as far as the lows concerned, they're going to be a bit hard to pick. Probably just for sheer volatility out of the June low. But really, it got pretty sideways through maybe the October low as well. Maybe that one there. That's probably got a better trading run through there. That was going to be probably a higher bottom, but then a pretty sharp fall. So yeah, that's a bit of a hard one. I'd have to say, yeah, the lows aren't really all that great to choose from. You are talking about a 72-cent to a 78-cent range. We'll stick with two. We'll stick with June. We'll also stick with a late October. All right, so that really doesn't, we haven't got any further data back from that. So we've only got sort of 2 years to play with there. So what we could probably go and do, and I'll just jump out of there, trade from April. So I'm now April low from Elizabeth. All right, so I'm back to you guys like April. So obviously that was 99, I fancy, rather than 89. I'm just back looking at your questions now. Take a look at 99 again. All right, the April low, yeah. I did miss that one. There you go. No, I'll agree with you there. I'll move that to being an April low. All right, so I'm with you now. I've caught up everybody, so I'll happily call that an April low. All right. All right, so yeah, so I'm back with you guys now. All right, so we've pulled that April out. Yep, perfect. Thanks, Mark and Debbie. I've got that handled. All right, so keeping moving. So we'll take a look at if there's any correlation there. Now, there's one other way that you can actually do this in the software, which I've been known to do in the past, which is to actually have this as a split screen. So I'll put one over the other, and I'll put the Aussie dollar up top and bottom. And what we try and do is, if you start to move the chart around, you'll actually, it mucks up the scales a bit. So you actually have to scroll back, because I've actually mucked up the charts. There we go. So if you scroll back without getting into the chart first, it actually scales for you. So what you've got to do is just find the year that you're interested in. So if I'm comparing 2009, I'll put 2009 down on the bottom, and we'll take a look at 89 on the top. Unfortunately, you can't get the two charts to move together. And so therefore it means that you're having to, yeah, it'd be lovely if you could, but you can't. So now that I've found 99, what I do is I actually then start to scroll in and just see whether or not I can put one over the top of the other, and just see whether or not we can line up anything that's occurred this year in terms of 2009 and 99. So I'm trying to line up the two together. Always a bit of a fiddly game. All right, so we know in 99 we had a predominantly, it was just a bullish year. 2009 certainly been a lot more bullish. What you can actually do is sort of look to see whether you're getting any, once again, the crosshair tools don't line up. But here in 99 we saw a top on the 11th of May. In 2009 we saw a top on the 11th of May. We saw a bottom on the 1st of the 6th. Saw a top on the saw a top on the 3rd of the 6th. We saw a bottom here on the 1st of the 6th. We then saw a market run out and make another top on the 6th of July. We saw the market run down here and make a low on the 13th of July. We'll see what low that is. That's the 21st, so that doesn't exactly line up. And just moving forward in 99, well, we saw the market low on the 30th of August. 2009, well, we saw the market make a low early September, late August. So I'll just scroll in there. It ended up being the 2nd of September here in August of 99. It was the 30th of August. It then ran out and gave us a top on the 5th of October. And in this case, it ran out, made a small top on the 8th of October. Next major area that it ran down from 5th of October, it ran down and gave us a low on the 3rd of December. So at this stage, maybe we could expect it to run down into the 3rd of December before we get a little kick along. Now, same thing we could do is take a look at 89. You obviously can't do 3 years sitting all on top of each other, but all we're doing here is lining up what's happened in 89, see whether or not there's any correlation to the current year. If I scroll this back in. So tops were formed here in the early part of February. We had the top here come in on the 88.8. That's 88.8. So we'll call that the top. That's the 8th of February. We saw the 1st of February, and then the 8th of February was a little double top. This year we saw the 2nd of February as being a bottom, okay, and market came back and kind of double bottom there before it took off. Other major turns in 1989, well, we saw a June 15 low, and in 2009 we saw June 15 as being nothing, okay, so we don't have a correlation there. So June 15 really was nothing. It wasn't much of a low at all. It was just in the middle of nowhere. Taking a look at then ran out into the latter part of December. Once again, we've sort of got the 12th of December. We know that from 99 we saw early December as being an area to watch before the market, where it gave us another turn. So at this stage we could be lining up, these years and saying, okay, well, where do they look now? That alone, actually, I'm back to your charts now. Okay, so Richard's telling us the rba.gov.au has monthly Aussie dollar, US dollar data from 1970 and daily data from the 12th of the 12th, 83. So opening up another chart here. All right, so okay, just checking out our birth of contract. So from the 12th of 1283, that would be obviously not as the futures contract. That would obviously be the obviously just a straight FX comparison. So this is, I guess, where we do have a problem with currency work, is that we can often have data that relates to the birth of the contract futures wise, but it might have actually been trading as a cross rate pair prior to that. I might actually have a chat to my good mate Matt Barnes about that, and he might have a way that he handles it, because I know he does use the futures data to analyse information, and we'll go from there. So, Graham, I'm not sure what year the Aussie dollar floated. About 83, which is why we have daily data. It was officially set by the government. I think they're being adjusted once a month. Okay, well that could be what you're referring to there. That once a month figure where it was adjusted, was artificially adjusted by the government. So let me look into that data. So I'll take a look and see what we can come from, and if it's worthwhile using, I'll find a way to make that work for us in our analysis. But at this stage, we can only roll with the information that we've got in Profit Source, which is the birth of the contract from the Chicago Mercantile Exchange. So, and I'll trust all you guys who, in 1983, I was in 3rd grade. So I must admit my current market information in 3rd grade wasn't particularly good. I wasn't really following the movements and the virtues of the Aussie dollar. I think I got paid 20 cents pocket money back in 1983. So things have definitely improved since then. But I know that we'd have to adjust it for inflation and things like that. I was probably earning a fortune in 3rd grade. I just didn't know it. So there we have it. So, all right. So we've been able to set, I guess, a little bit of a basic pattern for those years in 99 and 89, and set, I guess, an idea of where things are going. So 6th of December is the float date. Oh, there you go. I'll have to do I'll do some research. We'll see if we can clear that up. But I guess what we really want to do is get a view as to what happened in 2000 and 1990, because I guess they're probably more likely going to be a guide for us running into the next part of next year. Because whilst we can sort of draw some correlation with what we've seen so far, we're probably better off to build a bit of a roadmap into next year. All right, so let's take a look at the Aussie dollar in 1990. So the Aussie dollar in 1990 was a bullish market when, just let me turn that back into a bar chart, a line chart. All right, so 1990 you could argue is a pretty volatile year. We started sort of here in 1990, we made highs in August, highs in October, and it actually finished the year at the end of December pretty much flat. Now, you'd have to say that, the angle of that line is actually down. So you'd argue it's technically a bearish year, but you'd have to say it's pretty flat. I think what you'd also say it's pretty volatile. You're seeing sort of some pretty large swings in the currency there. So if the same model was going to hold true, you'd say the first half of the year was predominantly, the first quarter was bearish, followed by a second quarter that was bullish, third quarter that was bullish, and a fourth quarter that was bearish. With the major volatility falling into the second half of the year. Major low obviously was March, another good one there in May. Major top would probably be in October. That top in August, whilst good, but there's the physical high, probably the true top, you'd argue, came in October. So, October for a high, May or March for a low would probably be the way that we could look at that. We can then skip forward to 2000. I do remember what the Aussie dollar was doing in 2000 because I was actually travelling that year. I remember going to Canada to go skiing, and I remember how poor our Australian dollar was, and how I was very upset that it was paying a lot more than I really wanted to be. So in 2000, we saw the market was pretty much a very bearish type phenomenon. First half of the year, followed by a bit of a recovery through the third quarter, second quarter, and then sell off into a low. So we've got a bit of a difference opinion there. We've got a bullish. Well, no, we don't really. We've got two bearish years for the Aussie dollar in both 2000 and 1990. Now, as far as a major high is concerned, I think January stands out as being pretty easy to follow. Not a lot of prizes there for that one. As far as lows are concerned, you could probably pick on a couple there. You could probably say May was one to watch. Certainly some good trading out of there, and certainly November as being an area to watch as well. So what we need to sort of come up with is, are we getting any correlation between 2000 and 1990 as far as months are concerned? So if I go back to 1990, well, we've got November popping up again. Sorry, October in this case. So October here, November in the next decade, and we've sort of got March and May being the places to look for here. So Scrolling forward, you've got October, March and May in a bearish year. And in 2000, well, you've got bearish year, followed by November rather than October, but you do have a May event, all right? So if I was building a roadmap, I'd already, if I was building a roadmap, I'll get to your questions in just a sec, guys. I'll come back to that. So I know you've been busy typing and I've been busy looking at other things. So the roadmap would be saying definitely for me, bearish year into next year on the Aussie dollar, followed by potentially some sort of May event. Now, what we would need to do, because we've only got really 2 decades to compare against, I'd be going back and have a look at what happened 5 years prior. So 2005 and 1995, and we can take a quick look at those, but I'll let you guys do a little bit of homework on that. So just let me go back to the top. Graham saying, okay, Darren said it was 6th of December. Graham said well before that. Wikipedia, well, that's always, you know, not a bad source, I find. So December of 83, Linda says, if follows 1990 should give you lots of trading opportunities. I agree there. Darren said, okay, you mean 82 article was written in 2003, floated 20 years before. 83, typing too quick and not checking. Don't worry, Darren, I've been known to do that on a few times too. No worries, yeah, all good, guys. So, yeah, we know that we're pretty much looking around that 83 area anyway. Now, we've only got data in the software from 87, so maybe there's, you know, an argument for seeing what we can find as far as the 83 data is concerned. So, I guess what we'd sort of point out, though, is that, you know, just drawing some very basic, you know, conclusions from our work is that we could expect a bearish year, potentially next year, on the Aussie dollar. We may be expecting May as being an area to watch for some sort of turn. We're not expecting tops or bottoms. And we know that October and November could be also an area for us to watch. Now, as we start to build a forecast, if we run out of all of our time frames and we get time by degrees and all of that sort of stuff, and we get something that's pointing into May of next year or maybe even October/November, that's going to start to really resonate in the sort of forecasting work that we want to achieve, because it's lining up with what we would consider to be, you know, the master time cycle. Now, the other thing that we could probably pick up and do at this stage is to check those 5-year increments. If I jump back into profit source, so we're going to go and take a look at 2005, and we'll also go and take a look at 1995. So if we look at 05, well, once again, we've got a bearish year. The bearish years are pretty much kicking off early in the year, all right? So they're sort of starting early in the piece. Oops, I've gone too far. So, yep, there we go. So definitely a bearish year in 2005. Major lows, well, July, I guess you could argue. September was not a bad top. Obviously, March was not a bad top. So they would be areas, March to be watching, you know, September to be watching. December obviously produced not a bad low as well. But straight away, I'm getting, you know, March, September, December, June. You know, so for me, the seasonal dates seem to be working pretty well in this year. So that could start to form the basis of some opinion. So that's 05, and let's take a look at 95. All right, well, 95 proved to be also a bearish year. So we've got a strong correlation with bearish years, okay? So bearish year, July low, October high, and early in the year we saw the market sort of coming under pressure, at least the first quarter. But first and foremost, what I'd be thinking is that we could have a relatively strong finish to the dollar for the end of the year, okay? Because that's kind of what our roadmaps tell us from 89 and 99. But certainly watching from the early part of next year, first quarter has generally been pretty weak for the Aussie dollar, followed by, generally speaking, bearish conditions in 2010. So if you're planning on taking that overseas holiday based on master time cycles work, I'd be paying that up front and locking it all in US dollars today type stuff, or, you know, maybe some other currency. Maybe the US dollar is not going to be that strong either. But just purely putting together that master time cycle work, that tells us that we've got a bearish influence that we could be expecting based upon our work. Now, because of our limited data, we could also maybe look at 7 years, which is 84 months, 14 years, 168 months, etc. But that'll be something else that I can pick up a little bit later. What about a 3-year cycle? I won't say no, Robert, but I'd much rather a slightly bigger view. Is there a particular reason why you're thinking a 3-year cycle? Obviously, 3 is a number, and, you know, there's lots of different aspects that we could talk about that. But I find we're talking master time cycle work, Gann really like 20 and 30, 10, 20, 30-year cycle. What about odds and evens? 10, 20, 30-year cycles. When he's talking about master time cycle, he's really looking at big picture stuff, and I try and stick with that because, 3 years is just, we've got 36 months, which is, I guess, 360 months, you could argue. if you pop the 0 on the end. But no, I must admit 3 is not an area that I do a lot of work on. 5 is probably the limit to that work that I do on master time cycles. You read it in one of the books. Okay. Well, if you find the quote or the passage or the information or where it comes from, happy to do some research on it and see whether or not I'm missing something there as well. But I must admit 3 years is not an area. You could have a guess, and I reckon Tim could probably. What's the paragraph and page number, Tim? And which book is it? Tim's with us online tonight, so if anybody knows it, Tim knows it. So I'll see whether he wants to type me a message. He's probably hitting the bookcase now. We've stumped him. This will be a first. Everyone, write this date down. This is the date that's it's like a sale of the century question. In which book did Gann speak about the 3-year cycle? Tim's busily trying to research that as we speak. I can't actually see Tim. I'm imagining him running around his collection of books right now, going, "I'm sure it's here. I'm sure it's here. I'm sure it's here." He'll come in just a second, and he will have a page number or a quote anyway. He'll know where to look. So I'll see whether he comes back with something. All right. So we don't really have much conclusions at this stage, but really what I wanted to do to start was getting us thinking about that master time cycle approach. So just taking a quick squiz at the time, and obviously thinking of some work that you guys can pick up. I'd like you to do the same sort of work on Newcrest mining. So we've spent a lot of time focusing on Newcrest. He's missed the question. He was on the phone. That's okay, Tim. Robert was talking about a 3-year cycle for master time cycles. He said he'd read it in a book somewhere, and I said, I'm sure you'd probably know the paragraph and the page number and which book, because I don't recall it off the top of my head, and I don't use a 3-year cycle all of that much. Tim's just saying he'll check, so we'll stand by for Tim's response. But we've done much of our work's been on Newcrest mining, so I'm glad that we were able to sort of tackle some stuff on the Aussie dollar tonight. Obviously, a little bit on the current market time by degrees thing we can pick up next week, or I'll post some stuff on the discussion board and see how we go. So that'll be a plan of attack for next week. All right, but definitely get in there and do some time cycle analysis work on Newcrest mining. Master time cycle work on Newcrest mining and the Aussie dollar, and just put it into a little table. If you've got your Gann mastery manual, using that as a table, just a standard spreadsheet. Just put in what's the major high, what's the major low, was it bullish, was it bearish, and what sort of influence that can give us. But I think it's interesting to note that all 4 of the years that we checked on the Aussie dollar were all bearish. So generally, with that sort of strong correlation, we could expect, and I think as Linda said, definitely some strong trading opportunities into 2010 as far as the Aussie dollar is concerned. So there we have it. So I do need to also mention, just as my head's ticking over, I'll have to let you know about next week as far as that's concerned, because we're meant to be into hospital next week with our son. So I'll need to firm that up and let everybody know. We'll assume that it's going ahead unless otherwise notified. So Debbie said, what might be the significance of an 80-year cycle? Yeah, look, 80-year cycles was something that Gann also was very, very keen to look at. Great challenge for us in our markets. If I had 80 years worth of data on the Aussie dollar and Newcrest mining, I'd definitely be using it. But yeah, an 80-year cycle is one that Gann definitely was keen to watch. And he liked 30-year cycles, 10, 20, 30-year cycles, and then even bigger. All right, Tim's actually given us the reference. He said in the commodities course, it always says watch for 3 years, 36 months. From any important top or bottom as changes in trend is likely to occur. This is from the forecasting grains by time cycles. All right, well, for those who are keen, go and test 3 years for me as well, and see what comes up with. I'll have a play around with it as well. But I must admit, it's not one that I've heavily used in the past, as I said, because I'm just trying to think those bigger pictures. All right, now you're absolutely you've been vindicated, Robert. All right, so look, I trusted you that you'd read it in one of Gann's books. I just not the walking encyclopedia, but yes. We all clapped him for his diligence, and as I said, I used to say at one stage when I grew up I want to be Sinan, but I'm now changing that. I want to grow up and be Sinan and also a bit of Tim. So yeah, thanks, Tim. All right, so I might call it quits at that stage. Obviously, yeah, no worries, Lois. A bit of brain explosion. Well, you've done well coming from a Gann mastery to do this. So I think we've covered some good food for thought tonight. Keep an eye on that Newcrest mining stuff. Obviously, I think, as I said, I think there's some good trading opportunities there. I think we just need to sharpen our pencils a little bit and get on top of some of that stuff. The Aussie dollar, I think we can probably say we're lacking a little bit of a signal at the moment. So what we'll do is wait for a little bit of a direction from that market and see where it's planning on heading over the current time. Looking at it at the moment, it's sort of trading a little bit lower at the moment. Yeah, it's just fluffing around really, so not a lot going on in that at the moment, and time will tell, I guess, but how the equity markets run out. So yeah, the US dollar is pushing a little bit higher, and so we, talking about that first high bottom trade as well on that market. But I think Newcrest Mining is definitely going to give you some food for thought over the coming days. Go in and do our master time cycle work on our two markets. So make sure you go back and take a look at not only Newcrest Mining but the Aussie dollar, and get a view and get a bit of a focus for if we start bringing in some dates for next year. Do they line up with the master time cycle approach, and what sort of year can we predominantly expect, be it bullish or bearish? So hopefully that that's given us enough to chew some data tonight, and give us a little bit more to pick up when we next meet. So thanks, Christine. That's my absolute pleasure. So as I said to everybody, thanks, Richard. Gerald, thank you. Thanks, Ron. Thanks, Elizabeth. So as I said, everybody, I'm just scrolling down here. Thanks, Linda. No, my pleasure. Thanks, Ron. I don't know about next week at this stage. So as I said, everybody, just sort of stand by, and I'll know a whole lot about next week. I think it should be okay, but I'll just have to check. So yeah. So thanks, Mark. Thanks, Key. Thanks, Darren, for your comments. I got your email too, so I'll action that too for you, Darren. Thanks.